These figures highlight the financial hurdles a SPIC is currently facing, which potential investors should consider carefully. Now, let's explore the opportunities. The transition to natural gas, while challenging, presents a significant opportunity for SPIC to modernize its operations and potentially reduce costs in the long term. This shift could position SPIC favorably in the market as environmental regulations tighten and demand for sustainable practices increases. On the flip side, we must consider the threats. Production issues have been a persistent challenge, and the transition to natural gas operations introduces additional risks. These factors could impact SPIC's ability to meet production targets and maintain profitability in the short term. In conclusion, investing in SPIC requires a balanced perspective. While there are clear challenges, including financial performance and operational risks, there are also promising opportunities through strategic shifts and dividend declarations. As always, assess your investment goals and risk tolerance before making a decision. Thank you for joining us in this analysis. If you found this video helpful, please like and subscribe for more insights into the financial world. Stay informed and happy investing. Welcome to the annual report presentation of Geo Financial Services Limited for the fiscal year 2023-24. Today we embark on a journey through JFSL's remarkable achievements, strategic initiatives, and future aspirations, all underpinned by our unwavering vision to lead in digital financial services. At the heart of JFSL's success lies a robust financial performance. This year, we proudly report a consolidated profit after tax of 1,605 crore, with earnings per share reaching 2.53. Our strong capital base, with a net worth of 1,039,148 crore, positions us as one of the most capitalized financial service platforms globally. These figures not only reflect our financial health, but also our commitment to delivering value to our stakeholders. Strategic partnerships have been pivotal in our growth narrative. Our joint venture with BlackRock, Inc. marks a significant milestone in democratizing investment and wealth management services in India. This collaboration is set to unlock an immense growth asset management sector, leveraging BlackRock's global expertise and JFSL's local insights. In our pursuit of innovation, JFSL adopts a digital-first approach, harnessing cutting-edge technology to offer seamless financial services. This strategy aligns perfectly with India's burgeoning digital economy, positioning us to capitalize on the vast opportunities it presents. As we look, our market potential is vast. JFSL is expanding its footprint across key lending, insurance, and is to drive financial inclusion and affordable financial, particularly targets in India. Navigating services not without its competitive market, FC, SBI, and innovation and subject to stringent regulatory requirements. These factors necessitate a proactive approach to risk management, ensuring that we remain resilient. Despite these challenges, JFSL stands as a compelling investment opportunity. Our robust financials, strategic joint ventures, and clear focus on digital financial services underscore our potential for growth, particularly in the asset management and lending spaces. Our commitment to financial inclusion further enhances our appeal, promising substantial returns for our investors. In conclusion, JFSL's journey is one of visionary leadership, innovation, and growth. We are poised to redefine the financial services landscape in India, driven by our mission to empower every Indian with accessible financial solutions. As we move forward, we invite you to join us in this exciting journey, confident in our ability to deliver sustained value and growth. Thank you for your attention and continued support. Together, let's build a future where financial services are not just a privilege, but a right for all.
Investing in HUDCO could be a promising opportunity. Their latest revenue figures show a robust rise to our 7,784.29 crore, with a profit after tax of Rs 116.74 crore, an impressive indicator of solid growth. They've sanctioned loans totaling Rs 386.55 crore, which is a staggering 235% increase. This kind of expansion is noteworthy. Plus, with an 8IA rating, the risk seems relatively low. However, it's essential to keep an eye on their rising debt levels. As an investor, it's crucial to align this potential with your own investment goals. Balancing risk and reward is key to making informed decisions. TGV SRAAC Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue has dipped to Rs 1,545.96 crore, and net profit has taken a significant hit, falling to Rs 60.29 crore. While the company has declared a Rs1 dividend, the declining profitability raises red flags. On a brighter note, their expansion into chloromethanes and solar initiatives could signal future growth. However, the risks associated with these ventures cannot be overlooked. It's essential to assess your risk appetite carefully before making any investment decisions. Balancing potential rewards against these challenges will be key to navigating this landscape. Ashoka Buildcon Limited is at a pivotal moment, showcasing impressive growth through major projects like a $150 million solar power plant and significant highway expansions. Their recent win of a Rs 662.55 crore contract for a link road to Navi Mumbai International Airport highlights their potential in a booming infrastructure sector. With the Indian government's strong focus on renewable energy, Ashoka Buildcon is well positioned to capitalize on this momentum. While we await detailed financials, their consistent project wins signal a robust stability and growth trajectory. For investors, this is a company to watch closely as it navigates the evolving landscape of infrastructure development in India. Jio Financial Services Limited presents a compelling investment opportunity. With a profit after tax of Rs 1,605 crore and a robust net worth of Rs 139,148 crore, JFSL is making waves in the financial sector. Their strategic partnership with BlackRock aims to democratize wealth management in India, tapping into a rapidly growing market. What sets them apart is their digital-first approach, which enhances accessibility for underserved segments of the population. This positions JFSL not just as a financial player, but as a catalyst for change in wealth distribution. With strong fundamentals and significant growth potential, investing in JFSL could be a smart move in today's dynamic market. Gallant Ispat Limited, or GAL, has truly made waves in the financial landscape for FY 2023-24. With an impressive 23.8% increase in EBITDA and a staggering 62.5% rise in PAT, GAL is clearly on an upward trajectory. This growth is driven by the surging demand from infrastructure projects, positioning GIL as a key player in the steel sector. What sets GIL apart is its unwavering commitment to sustainability. The company prioritizes clean energy and adheres to robust ESG practices, ensuring that growth does not come at the expense of the environment. With ongoing investments and a positive outlook, GIL presents a compelling opportunity for investors looking to capitalize on a company that not only excels financially, but also champions responsible business practices. Vodafone Idea Limited's FY 2023-24 report paints a nuanced picture for investors. Revenues have reached Rs 126,517 million, indicating slight growth. But the stark reality is that net losses have surged to Rs 312,184 million. This raises significant concerns, especially with debt now towering at Rs 276,298 million. The company is expanding its 4G services and gearing up for 5G, which is promising, yet the competitive landscape is fierce. Financial instability is a major red flag. As investors, we must tread carefully, weighing the potential of technological advancements against the backdrop of high debt and ongoing losses. This complex investment landscape demands a thorough evaluation before making any commitments. Investing in Southern Petrochemical Industries Corporation Limited requires a careful look at their recent performance. With revenue dropping to Rs 1962.16 crore and profit after tax down to Rs 87.91 crore, the numbers raise some red flags. They did declare a Rs 150 dividend, which is a positive sign, but we must consider the underlying issues. Production challenges and a heavy reliance on natural gas could pose significant risks moving forward. However, there's a glimmer of hope. Potential efficiency improvements might stabilize their operations. As you weigh these factors, think about how they align with your investment goals. It's a balancing act between risk and reward, and every decision counts. Madhav Infra Projects Limited has encountered significant hurdles in FY 2023-24. Standalone revenues have plummeted to Rs 363.09 crore, while consolidated revenues are down to Rs 466.51 crore. This sharp decline in revenue is mirrored by a notable drop in profit after tax. In light of these challenges, the company has opted not to declare dividends, instead choosing to retain earnings to fuel future growth. With a CARE BBB credit rating, the risks are becoming increasingly apparent. Although MIPL boasts a diverse project portfolio, external economic factors pose a real threat to project execution. Investors should remain vigilant as we navigate this complex landscape. Hyundai Motor India Limited is on the brink of a significant milestone with its first initial public offering over 142 million equity shares. This move is backed by Hyundai Motor Company, a global automotive leader, which adds a layer of credibility. However, potential investors should tread carefully. The absence of an existing market means future price movements are uncertain and inherent risks are involved. On the upside, HMIL has established a robust presence in India's automotive sector and is making strides into the electric vehicle market. This expansion could position them favorably as the industry evolves. Balancing these factors will be crucial for anyone considering this investment opportunity. Lemon Tree Hotels Limited has demonstrated remarkable growth, with a 23% increase in revenue, now reaching 1,076.8 crore. Their profit after tax has surged by 29%, even as they continue to invest in renovations. The company is strategically expanding, targeting over 120 hotels by FY 25, all while emphasizing sustainability and inclusivity. However, it's important to note that high debt levels could pose risks. As the hospitality sector rebounds, Lemon Tree Hotels presents a compelling investment opportunity. Yet potential investors should carefully weigh these risks against the promising growth trajectory. Investing in National Aluminium Company Limited, or NALCO, demands a thorough analysis of its 2023-24 annual report. Revenue has dipped slightly to Rs 13,149.15 crore, but here's the silver lining. Profitability has surged to Rs 2,059.95 crore. This indicates a remarkable resilience in challenging market conditions. The company has achieved record production levels and impressive export figures, showcasing its operational strength. However, we must remain cautious. The revenue decline and ongoing market volatility present notable risks. It's crucial to assess your investment strategy carefully, weighing these factors before making any decisions. Balancing potential rewards against risks is key in navigating this investment landscape. Shipping Corporation of India Land and Assets Limited has demonstrated remarkable financial growth, with revenues skyrocketing from a total 34 lakhs in 2021-2022 to an impressive 9894 lakhs in 2023-2024. While there was a dip in profits during 2022-2023, the rebound to Rs 330 lakhs showcases effective cost management strategies. The company's valuable real estate assets and commitment to maritime training position it strategically for long-term growth. Additionally, the declared dividend of R0.66 per share reflects a strong commitment to returning value to shareholders. This trajectory not only highlights the company's resilience, but also its potential for sustained success in the maritime sector. Considering investing in Oil India Limited? Let's break it down. For the fiscal year 2023-24, we saw a slight dip in standalone revenue to Rs 24,514.28 crore, while consolidated revenue fell to Rs 37,646.48 crore. Profit after tax also took a hit, landing at Rs 5,551.85 crore for standalone operations. Despite these short-term revenue concerns, the company remains profitable. What's particularly interesting is their strong dividend payouts and a growing focus on renewable energy, which could signal long-term potential. While the immediate numbers might raise eyebrows, the strategic shift towards sustainability could position Oil India Limited favorably in the evolving energy landscape. Keep an eye on this one. NPR Finance Limited's latest annual report paints a complex picture. Revenue has dropped significantly from Rs 1,274.33 lakhs to Rs 946.61 lakhs, primarily due to a decline in income from share sales and the closure of its wind power segment. However, amidst this decline, the company has managed to turn a profit of Rs 108.63 lakhs, marking a notable recovery from last year's loss. This turnaround suggests that cost management strategies are taking effect. Yet, we must remain cautious. The loss of Rs 258.23 lakhs raises red flags about sustainable income. Investors should carefully consider these dynamics, as the declining operational revenue could signal potential challenges ahead. Investing in Saj Hotels Limited's IPO could be an intriguing opportunity, especially with the tourism sector bouncing back post-pandemic. Their operational resorts, like Saj on the Mountains and Saj by the Lake, seem poised to generate steady revenue from bookings and dining. However, it's essential to approach this with caution. The financial data available is limited, and without any prior stock performance to analyze, we're stepping into somewhat uncharted territory. They're offering 42,050 shares, but we must consider the risks involved. Market acceptance is uncertain, and economic fluctuations could impact their growth. While the potential is there, it's crucial to weigh the excitement against the reality of these risks before diving in. Investing in Divyadan Recycling Industries Limited presents an intriguing opportunity within the expanding recycling sector. The company specializes in recycled polyester staple fiber, a product that meets the rising demand for sustainable materials. While we lack specific revenue and profit after tax figures, the potential for growth in this eco-conscious market is significant. However, it's crucial to approach this investment with caution. The absence of detailed financial data and the inherent uncertainties of the market could pose risks. Therefore, a thorough evaluation of both the opportunities and challenges is essential before making any investment decisions. Manba Finance Limited presents a compelling opportunity in the expanding non-banking financial company sector. Their draft red herring prospectus reveals consistent growth in vehicle financing and personal loans, which is promising. As the market for personal mobility continues to grow, Manba is well positioned to capitalize on this trend. However, it's important to approach this first public offering with caution. Investors should be mindful of the inherent risks, including market volatility and the lack of historical trading data. Balancing the potential for growth with these risks is crucial for making informed investment decisions. Investing in KRN Heat Exchanger and Refrigeration Limited is a decision that requires careful thought. The company is positioned in a growing sector focused on energy efficiency, which is promising. However, the absence of detailed revenue and profit after tax data raises some red flags. This lack of transparency can make it challenging to gauge the company's true financial health. The upcoming IPO certainly presents potential opportunities, but we must remain cautious. Market volatility can significantly impact new offerings, and it's essential to weigh the risks against. Staying informed and analyzing the available data will be crucial as we navigate this investment landscape. Proceed with caution and ensure you have all the insights before making any decisions. Hyundai Motor India Limited has truly set a benchmark in the automotive sector with its remarkable growth trajectory. In just 9 months ending December 31st, 2023, the company reported a staggering revenue from operations of Rs 21,579.11 million, largely fueled by robust vehicle sales. Looking at fiscal year 2023, total revenue soared to Rs 603,075.80 million, a significant leap from Rs 473,184.32 million in 2022. This impressive growth is a testament to Hyundai's strategic expansion and unwavering commitment to innovation. The strong demand for their vehicles underscores their focus on customer satisfaction, positioning them as a formidable player in the competitive automotive landscape. It's clear that Hyundai is not just keeping pace, but is actively shaping the future of the industry. Ola Electric Mobility Limited is truly making waves in the electric vehicle sector, and I couldn't be more excited about it. Their focus on eco-friendly transportation is not just a trend, it's a movement towards a sustainable future. While we may not have specific revenue figures from their draft red herring prospectus, the ambition to raise Rs 55,000 million through their IPO speaks volumes about their growth potential. The electric vehicle market is booming, and investing in Ola could be a golden opportunity for those who believe in the future of sustainable technologies. With their innovative approach and commitment to green mobility, Ola is positioning itself as a strong contender in this dynamic landscape. The future is electric, and Ola is leading the charge. Investing in Diffusion Engineers Limited requires a careful approach. While we lack specific revenue and profit after tax figures, the company operates in welding consumables and heavy engineering, suggesting a diverse revenue stream. Their recent IPO signals potential growth, particularly in the booming infrastructure sector. However, the absence of historical stock performance means we should tread cautiously. It's essential to analyze industry trends and wait for detailed financial data before making any commitments. Remember, informed decisions are key in navigating the investment landscape. Proceed with diligence and patience. Investing in Western Carriers, India Limited presents an intriguing opportunity. Their IPO is offering over 28 million shares at Rs 172 each, aiming to raise nearly Rs 5,000 million. This company operates in the rapidly growing logistics sector, providing a range of services that cater to diverse needs. However, it's essential to note that they lack a market history, which introduces potential volatility. While the promise of infrastructure developments is enticing, it's crucial to weigh these risks carefully. Are you ready to explore this opportunity, or will the uncertainty hold you back? The decision lies in balancing potential rewards against the inherent risks. Ola Electric Mobility Limited is set to launch its IPO, offering 808 million equity shares and aiming to raise around Rs 6,145 crore. This move comes at a pivotal time in the electric vehicle sector, which is experiencing rapid growth, fueled by government incentives for green energy. While the potential for growth is substantial, it's crucial to consider the risks involved. The EV market is competitive, and stock volatility can be a concern for investors. If you believe in the future of electric vehicles and are prepared to navigate the inherent risks of an IPO, Ola could be a valuable addition to your investment portfolio. Just remember to keep a close eye on their financials after the listing to ensure it aligns with your investment strategy. Investing in Orient Technologies Limited could be an intriguing opportunity. They're offering over 10 million equity shares at Rs 206 each, aiming to raise funds for expansion in the rapidly growing IT infrastructure and cloud computing sector. This is an area that's booming, and their focus here is promising. However, it's essential to tread carefully. the lack of prior performance data raises some red flags, and the competitive landscape is fierce. While the potential for growth is enticing, it's crucial to conduct a thorough analysis before diving in. Balancing optimism with caution could be the key to making a smart investment decision. ECOS, India. Mobility and Hospitality Limited is set to launch an IPO of 18 million equity shares, aiming to raise $6,012 million. While the mobility sector is on the rebound post-pandemic, it's crucial to note that this offering primarily benefits existing shareholders rather than fueling new growth initiatives. As an investor, you need to weigh the potential gains from a recovering industry against the inherent risks of a first-time public offering. The market is buzzing with optimism, but remember, the IPO landscape can be unpredictable. Ensure your investment strategy aligns with your risk tolerance and long-term goals before diving in. Investing in Premier Energies. Limited IPO presents an intriguing opportunity in the solar energy sector. With an impressive offer size exceeding $28,000 million and a share price of $450, this company is well positioned to capitalize on the growing demand for renewable energy. Their robust manufacturing capabilities give them a competitive edge, but it's essential to consider the risks involved. Notably, a significant portion of the IPO shares is allocated to existing investors, which means that not all the funds raised will be directed towards growth initiatives. While the renewable energy market holds great promise, it is also characterized by volatility. As an investor, weighing these factors is crucial before diving in. Gala Precision Engineering Limited is set to offer 3,174,416 equity shares at Rs 529 each, aiming to raise around $1,679.27 million. This company operates in diverse sectors like automotive, construction, and renewable energy, showcasing significant growth potential. However, as this is their inaugural public offering, investors should tread carefully. The absence of historical performance data raises questions, and the relatively high share price adds another layer of complexity. It's crucial to weigh the promising prospects against the inherent risks before making any investment decisions. Remember, informed choices are the best choices in the world of investing. Investing in Brainbees Solutions Limited, known as First Cry, offers a compelling opportunity in the thriving baby products market. With an IPO size of nearly $42 billion, this includes fresh equity shares aimed at fueling growth, alongside an offer for sale that benefits existing shareholders. First Cry is strategically positioned to capitalize on rising incomes and the booming e-commerce landscape, making it a strong contender in a competitive space. However, potential investors should carefully consider the risks involved. Market competition is fierce, and a significant portion of the shares will primarily benefit current stakeholders. Balancing these factors is crucial for making an informed investment decision. The National Stock Exchange of India has truly outdone itself in the 2023-24 annual report. With a consolidated revenue of Rs 433 crores, we're looking at an impressive 28.74% growth. The profit after tax stands at Rs 8,305 crores, marking a solid 12.91% increase. These figures highlight the exchange's strong financial health. The EBITDA margin is a remarkable 70.73%, showcasing robust profitability that investors can trust. With a market capitalization soaring to Rs 382 lakh crores, the NSE is now the fourth largest stock exchange globally. It continues to lead as the largest derivatives exchange and dominates equity cash trades. Office Space Solutions Limited IPO is set to offer 15.6 million equity shares at Rs 383 each, amounting to nearly Rs 6 billion. As a frontrunner in India's co-working sector, Office serves a diverse clientele, from startups to established enterprises. However, it's crucial to note that a significant portion of this IPO involves existing shareholders liquidating their stakes. This raises important questions about the company's long-term growth potential. As an investor, you need to carefully weigh the promise of office against the competitive pressures in the co-working market. The landscape is evolving rapidly, and while the numbers look appealing, understanding the risks is essential. Edelweiss Financial Services Limited is currently offering 20 lakh secured redeemable non-convertible debentures, each priced at $1,000, totaling a substantial $2,000 million. These NCDs come with a CRISIL A+ Heart Watch negative rating, which signals potential risks that investors should be aware of. While the secured nature of these debentures provides a layer of safety, it's crucial to delve into the underlying assets backing them. The negative watch status suggests that there could be changes ahead that might impact their stability. Before making any investment decisions, take the time to thoroughly assess these factors. Understanding the risks involved will empower you to make informed choices in your investment journey. Hero Motors Limited is set to launch an IPO of up to Rs 9,000 million, with Rs 5,000 million earmarked for fresh issues. This move is backed by the esteemed Hero Group, positioning itself strategically in the booming automotive components and electric vehicle markets. The potential for growth here is significant, especially as the demand for innovative and sustainable solutions in transportation continues to rise. However, as with any investment, it's crucial to consider the risks involved. Market volatility and fierce competition could impact performance. So, while the prospects are promising, a careful evaluation of these factors is essential for any investor looking to capitalize on this opportunity. Investing in Oswald Pumps Limited offers a compelling opportunity, but it's crucial to dive into the details. Their IPO features a fresh issue of up to Rs 10,000 million, alongside an offer for sale from promoter Vivek Gupta. Operating in key sectors like agriculture and infrastructure, the company certainly has potential. However, we must acknowledge the risks involved. This is their first public offering, meaning there's no historical stock performance to analyze, which can make decision-making tricky. Additionally, a substantial portion of the funds raised will go to selling shareholders rather than fueling company growth. As investors, we need to weigh these factors carefully before jumping in. Investing in the International Gemological Institute India Limited is not a decision to take lightly. They're looking to raise 40,000 million, with 12,500 million earmarked for growth and 27,500 million coming from existing shareholders. The gemstone market is indeed thriving, but this is their first public issue, which adds a layer of uncertainty. Before you jump in, consider your risk tolerance. Are you comfortable with the potential volatility that comes with new ventures? While the allure of gemstones can be enticing, remember that every investment carries its risks. Do your homework. Weigh the pros and cons, and ensure that your financial strategy aligns with your comfort level. Proceed with caution. The glittering market can sometimes hide sharp edges. Unimek Aerospace and Manufacturing Limited is set to launch an IPO worth Rs 5,000 million, with half of that amount coming from new equity shares and the other half from an offer for sale. This company is diving into the aerospace components sector, focusing on the rapidly growing defense and aviation markets. The growth potential is certainly enticing, but it's important to tread carefully. This is Unimek's first public offering, and a significant portion of the funds raised will primarily benefit existing shareholders rather than fueling expansion. As an investor, it's crucial to assess your risk tolerance and stay updated on pricing details before making any commitments. Remember, info is key in the world of investing. Reliance Industries Limited has showcased remarkable financial growth in FY 2023-24, with a consolidated revenue of Rs 10,122 crore, marking a 2.6% increase, and a profit after tax of R79,020 crore, reflecting a solid 7.3% rise. The company is clearly on a strong operational trajectory. The retail and digital services segments are thriving, underscoring Reliance's robust market positioning. However, as potential investors, it's crucial to remain vigilant about global economic fluctuations and regulatory risks that could impact future performance. Staying informed and cautious can help navigate the complexities of this dynamic market landscape. NTPC Green Energy Limited is presenting an exciting investment opportunity, raising up to $100,000 million to expand its renewable energy footprint, particularly in solar and wind projects. With the backing of NTPC Limited and strong support from the Indian government, this venture is positioned for growth in a sector that's booming. However, as a first-time public offering, it's essential to consider the inherent risks, such as market volatility and increasing competition. Balancing these factors is crucial. The potential for sustainable growth in India's renewable energy landscape is immense, and with careful evaluation, this could be a strategic addition to your investment portfolio. Investing in Fabtech Technologies Limited could be a compelling opportunity. Their IPO is set to offer fresh equity shares, and the funds raised will directly support expansion in the burgeoning pharmaceutical engineering and clean room technology sectors. This is a market ripe for growth, driven by increasing demand for advanced healthcare solutions. However, it's essential to approach this investment with caution. As this is Fabtech's first public offering, it carries inherent risks and market uncertainties that could impact performance. While the potential for significant returns exists, due diligence is crucial. Balancing optimism with a clear understanding of the risks will be key for any financial analyst or advisor considering this opportunity. Casagrande Premier Builder Limited is set to launch an IPO worth Rs 11,000 million, blending fresh equity with an offer for sale. This is a significant move, especially for investors looking at the booming real estate sector in South India, with a strong focus on Tamil Nadu. The company has established itself as a key player, thriving in a competitive market. However, as with any investment, it's crucial to weigh the potential for growth against the inherent risks. Market volatility and economic shifts can impact performance, so thorough assessment is essential. Keep an eye on this opportunity, but remember to invest wisely. Ellenberry Industrial Gases Limited is making a significant move by re-entering the capital market with an IPO of up to Rs 4,000 million. Founded in 1973, this company has been a key player in producing essential industrial gases like oxygen and nitrogen, which are crucial for industries such as healthcare and steel manufacturing. The growth prospects look promising, especially with plans for expansion and debt repayment, signaling potential for future growth. However, investors should tread carefully. The company has a history of delisting, and competitive pressures in the market are ever present. Additionally, the substantial offer for sale by promoters raises some red flags. Balancing these factors will be essential for making an informed investment decision. Investing in PMEA Solar Tech Solutions Limited could be a game changer in the renewable energy sector. With a fresh issue of up to Rs 6,000 million and over 11 million shares available, this IPO stands out. The company focuses on solar plant components, positioning itself perfectly as India embraces sustainability. However, it's essential to tread carefully. This is their first public offering, and the competitive landscape is fierce. The promoters are selling shares, which suggests a partial exit strategy. While the potential for growth is significant, understanding the risks involved is crucial. This opportunity could align well with the growing demand for clean energy, but due diligence is key. Ather Energy Limited is making waves with its upcoming IPO, aiming to raise up to Rs 31,000 million to accelerate its growth in India's booming electric vehicle market. Backed by heavyweights like Hero MotoCorp, Ather is well positioned to capitalize on the increasing demand for sustainable transportation. However, let's not overlook the competitive landscape. Established players and new entrants are all vying for market share. This is Ather's first public offering, which adds an element of risk. As an investor, it's crucial to assess your risk tolerance carefully. Are you ready to ride the wave of innovation, or do you prefer to wait on the sidelines? The choice is yours, but the electric vehicle revolution is charging ahead. Investing in quality power. Electrical Equipments Limited could be a compelling opportunity for those eyeing the IPO market. With an impressive IPO size of Rs 2,250 million, this company is strategically positioned to meet the demands of India's expanding infrastructure. They specialize in manufacturing essential electrical equipment, which is crucial as the country continues to grow. What stands out is their commitment to expansion and a clear focus on reducing debt, which could enhance their financial stability. However, it's important to remain vigilant about cyclical risks that can impact the industry. Additionally, the promoter's partial exit raises some questions about long-term confidence. Investing in DAM Capital Advisors Limited is a decision that requires careful thought. They're offering 32 million shares from existing shareholders, but there's no fresh capital coming in for growth. While the investment banking sector is thriving, this IPO comes with its own set of risks. The lack of historical performance makes it hard to gauge future success, and the competition is fierce. Before diving in, it's crucial to assess your risk tolerance. Are you ready to navigate the uncertainties that come with this investment? Take a moment to weigh the potential rewards against the risks involved. Your financial future deserves that level of scrutiny. Regreen Excel EPC India Limited is stepping into the spotlight with an IPO that raises Rs 500 million in fresh equity. This company is positioned in the booming EPC sector, specifically targeting renewable energy projects. While the green energy market is on the rise, it's crucial to note that a significant portion of this IPO will benefit the promoters. As this is their first public offering, potential investors should carefully assess their growth plans and the current market conditions. If you believe in the future of sustainable energy and are willing to navigate the associated risks, this IPO could be an intriguing opportunity worth considering. Hexaware Technologies is set to launch an IPO with an impressive offer size of Rs 99,500 million. But there's a catch. This capital is coming entirely from promoter CA Magnum Holdings. This means no fresh funds for growth, which raises some red flags about future expansion. While Hexaware has a strong reputation in digital and cloud services, we need to tread carefully. The absence of new capital could limit their ability to innovate and compete. Plus, the potential for stock volatility is a real concern, especially with the promoter's exit looming. As investors, we must weigh these risks against the company's strengths before making any decisions. It's crucial to stay informed and cautious in this dynamic market. Ventive Hospitality Limited is launching an IPO to raise Rs 20,000 million through a fresh equity share issue. This strategic move is aimed at fueling our expansion in the hospitality and real estate sectors, focusing on premium properties in prime locations like Pune, Bengaluru, and the Maldives. As the hospitality industry rebounds post-pandemic, particularly in the luxury segment, our positioning is set to capitalize on this growth. However, it's essential to remain vigilant about occupancy rate fluctuations and economic sensitivities that could impact performance. Investing in Ventive means being part of a promising recovery journey in a dynamic market. Akums Drugs and Pharmaceuticals Limited is set to launch an IPO, offering over 10 million fresh equity shares to raise Rs 6,800 million. This company has carved a niche in contract manufacturing for major pharmaceutical firms, positioning itself in a sector that shows significant growth potential. However, as investors, we need to consider a few critical factors. The promoters are partially exiting, which raises questions about their long-term commitment. Additionally, new listings inherently come with risks, including market volatility and the company's ability to deliver on its promises. While the pharmaceutical sector is promising, it's essential to weigh these factors carefully before making any investment decisions. Sandstar Limited is set to launch an IPO with a substantial offer size of Rs 101.50 million, which includes fresh equity shares and an offer for sale by its promoters. Operating in the agro-processing sector, Sandstar specializes in maize-based products, a market that's experiencing significant growth. The funds raised will be pivotal for business expansion and debt repayment, positioning the company for long-term success. However, potential investors should be mindful of certain risks, such as the dependency on maize pricing and the promoter's partial exit from the company. Despite these concerns, the long-term growth potential in the maize products market makes this IPO an intriguing investment opportunity for those looking to tap into the agricultural sector. Vraj Iron and Steel Limited is set to offer 8.26 million equity shares, aiming to raise Rs 1,710 million to enhance its production capabilities. This is a significant move, especially as the company focuses on TMT bars and sponge iron, positioning itself strategically within the booming infrastructure sector. However, as an investor, it's crucial to weigh the cyclical nature of the steel industry. Market fluctuations can impact profitability, so understanding these risks is essential. While the growth potential is promising, staying informed about market dynamics will help you make a sound investment decision. Schloss Bangalore Limited is set to launch an IPO worth Rs 50,000 million, blending fresh equity with an offer for sale from its promoters. As a significant player in India's luxury hospitality sector, they stand to gain from the surge in tourism. However, it's essential to tread carefully. A substantial portion of the funds raised won't directly support company growth. This marks their first public offering, so we lack historical stock performance to guide our decisions. While the luxury market appears promising, we must remain vigilant about potential economic downturns and increasing competition. Investing here could be a gamble, so weigh the risks and rewards carefully. Investing in BMW Ventures Limited's upcoming IPO presents an intriguing opportunity. They're offering up to 2.34 core equity shares with a clear focus on expanding their financial services in Bihar. This region is experiencing significant growth, and BMW Ventures, promoted by the Kishore Puria family, is strategically positioning itself to capitalize on this momentum. However, it's essential to remember that this is their first public issue. While the potential for growth is enticing, it's crucial to weigh the risks involved. New ventures can be unpredictable, so thorough research and careful consideration are key before diving in. Keep an eye on this one. It could be a game changer in the market. Tata Consultancy Services has reported impressive revenue of Rs 240,293 crore for FY 2024, reflecting a solid 6.8% growth. With operating margins at a robust 24.6%, TCS showcases its strong profitability. The company is not just resting on its laurels, it's strategically focusing on emerging markets and sectors like manufacturing and healthcare. Their commitment to innovation is evident in their substantial investments in AI and cloud technologies, alongside training over 300,000 employees to stay ahead in the tech landscape. For investors, TCS stands out as an attractive opportunity, combining stability with growth potential in a rapidly evolving market. HDFC Bank's financial highlights for 2023-24 are truly impressive. With a balance sheet size soaring to Rs 17,623 crore, the profit after tax has surged to an astounding Rs 60,812 crore. This remarkable growth is further bolstered by the strategic merger with HDFC Limited, significantly enhancing its market position. Moreover, HDFC Bank is making substantial investments in technology, which not only streamline operations, but also improve overall efficiency. Their commitment to sustainability is commendable, positioning them as a forward-thinking institution. For investors, HDFC Bank presents a compelling opportunity, combining robust financial performance with a strong vision for the future. This is a bank that is not just growing, but evolving in a rapidly changing landscape. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to worth $408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to worth $408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. Bharti Airtel's financials for 2023-24 are impressive, showcasing a revenue of $499,924 million, marking an 8% year-on-year growth. Their EBITDA reached $794,458 million, reflecting a solid 10% increase, which is quite remarkable in today's competitive landscape. The net profit stands at $74,670 million, and the EBITDA margin is a robust 54.3%. This strong performance is underpinned by their aggressive 5G expansion and innovative digital solutions, positioning Airtel as a compelling investment opportunity. With these results, it's clear that Airtel is not just keeping pace, but is also setting the stage for future growth. Infosys has truly showcased remarkable financial health in FY 2024, with revenue soaring to $53,670 crore. It's clear that the company is on a solid growth trajectory. An impressive 8.9% increase in net profit reflects their effective management and strategic focus. The operating margin, standing strong at 20.7%, highlights their efficiency and resilience in today's competitive landscape. What's even more exciting is the 35.3% growth in dividends, signaling a commitment to returning value to shareholders. With strategic investments in AI and cloud technologies, Infosys is not just keeping pace, but is poised for substantial future growth. For investors looking for a compelling opportunity, Infosys is undoubtedly a choice worth considering. In the fiscal year 2023-24, Life Insurance Corporation of India has truly set a benchmark with remarkable financial performance. With a total income soaring to Rs 8.53 lakh crore and a net premium income of Rs 4.75 lakh crore, LIC's market presence is undeniably strong. They've paid out an impressive Rs 3.88 lakh crore to policyholders, settling over 22 million claims, which speaks volumes about their commitment to customer satisfaction. Their total assets now stand at Rs 52.85 lakh crore, showcasing solid financial health. Holding nearly 59% market share in first-year premiums, LIC continues to lead the industry. For investors, these figures not only highlight LIC's stability, but also its potential for growth in a competitive market. ITC Limited's 2023-2024 annual report showcases remarkable financial performance, with revenue surpassing our 69,446 crore and a profit after tax of our 20,122 crore. This impressive profitability underscores the company's strong market position. What sets ITC apart is its diversified portfolio across 12 segments, ranging from FMCG to hotels, which mitigates risks and enhances growth potential. Their unwavering commitment to sustainability is evident in their initiatives aimed at reducing carbon footprints and promoting responsible sourcing. Coupled with a focus on innovation, ITC is not just adapting to market changes, but leading them. For investors and financial analysts, this positions ITC as a compelling opportunity for long-term growth. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Larsen & Toubro has truly made waves in FY 2023-24, reporting a remarkable revenue of Rs 21,113 crore, which is a 21% increase from the previous year. Their profit after tax has surged to Rs 13,059 crore, reflecting a 25% growth. These figures are not just numbers, they signify a robust financial health and a promising future. With an impressive order book of Rs 75,809 crore, L&T is well positioned for sustained revenue generation. What sets L&T apart is its commitment to global diversification and sustainability, particularly through renewable energy projects. Their significant investments in digital transformation demonstrate a forward-thinking approach that aligns with modern market demands. Plus, a dividend of Rs 34 per share adds to the appeal for investors looking for solid returns. Coal India Limited's annual report for 2023-2024 is impressive, showcasing revenues of Rs 42,323.98 crore and a profit before tax of Rs 48,812.61 crore. This reflects robust earnings and a strong market position. With a 10% growth in coal production, the company continues to solidify its dominance in the energy sector. What's more, it has maintained a consistent dividend for 14 years, highlighting its financial stability. For investors, this represents a solid opportunity to engage with a key player in India's energy landscape. Plus, with ongoing sustainability initiatives and a target of 1 billion tons production by FY 2026, Coal India is not just about profits, it's about a sustainable future in energy. Vedanta Limited's FY24 integrated report reveals a compelling financial narrative. With revenues soaring to R141,193 crore and an impressive EBITDA margin of 30%, the company clearly demonstrates its robust financial health. Its diverse operations in zinc, oil, and aluminium position Vedanta as a formidable player in India's resource sector. What sets it apart is its commitment to ESG goals, particularly the ambitious target of achieving net zero emissions by 2050. This commitment not only enhances its market appeal, but also aligns with the growing investor focus on sustainability. However, potential investors should remain vigilant about risks, particularly commodity price fluctuations and debt management. Balancing these factors is crucial for making informed investment decisions in this dynamic landscape. Indian Oil Corporation presents a compelling investment opportunity. With a record profit of Rs 39,619 crore in FY 2023-24 and a solid debt-equity ratio of 0.66, the company clearly demonstrates its financial strength. Their ambitious vision for a $1 trillion valuation by 2047, with a strong focus on renewable energy and sustainability, signals significant growth potential. However, it's crucial to remain aware of risks such as oil price volatility and regulatory changes that could impact performance. By balancing traditional oil and emerging energy solutions, Indian Oil is positioning itself to deliver long-term value for investors. This strategic move could be worth considering for those looking to invest in a resilient and forward-thinking company. Bharat Petroleum Corporation Limited has showcased an impressive financial performance, reporting a revenue of Rs 5,993 crore and a net profit of Rs 26,859 crore. Their gross refining margin stands at $14.14 per barrel, the highest among public sector oil marketing companies, highlighting their operational efficiency. With a remarkable return on capital employed of 34.07%, BPCL is not just thriving but also generating strong cash flow. Strategically, they are investing Rs 1.70 lakh crore over the next 5 years, focusing on key sectors like refineries, gas distribution, and green energy. Their ambitious goal of achieving $2 GIA of renewable energy by 2025 positions them as a leader in India's biofuel initiative. VST Industries Limited has delivered impressive financial results, showcasing a revenue growth of nearly 10%. While net profit experienced a slight dip, the company remains committed to its shareholders with a robust dividend of Rs 150 per share. This reflects their strong market presence and dedication to enhancing their brand portfolio through innovation. Additionally, VST is making strides in sustainability, aiming for a remarkable 50% renewable energy mix by 2030. This commitment not only positions but also investor demand for sustainability. VST's focus on growth and sustainability makes it has revenue increase. It's important to address the net profit despite this decline. XSL continues to offer a healthy dividend of Rs 30 per share, which is a positive sign for investors. The company is strategically focusing on IT services and emerging technologies, positioning itself to tackle challenges such as cybersecurity threats and evolving regulatory landscapes. For potential investors, evaluating XSL's recovery strategy is essential, especially given the increasing demand in the IT sector. Understanding how they plan to navigate these challenges will be key to making informed investment decisions. SMC Global Securities Limited is offering non-convertible debentures, or NCDs, with a base issue size of Rs 7,500 lakhs, which can expand up to Rs 15,000 lakhs. These are secured instruments that have received strong ratings from CRISIL and ICRA, signaling low credit risk for investors. This means you can potentially earn a steady return while having some peace of mind about your investment. However, it's crucial to keep in mind that market volatility and regulatory changes can impact your returns. So, before diving in, make sure to assess your risk tolerance and stay informed about the market landscape. Investing wisely is key to making the most of opportunities like these. Investing in Muthoot Fincorp's non-convertible debentures, or NCDs, presents a compelling opportunity for those seeking stability. With a solid CRISIL AA stable credit rating, these instruments offer a high degree of safety, making them an attractive option for cautious investors. The base issue size is right 10,000 lakhs, with the potential to expand up to 35,000 lakhs, indicating strong market confidence. While these NCDs promise fixed returns, it's crucial to assess your risk tolerance. Remember, even safe investments come with their own set of risks. So, if you're looking for a reliable way to grow your wealth, Muthoot Fincorp's NCDs could be worth considering. Investing in Muthoot Mercantile Limited's non-convertible debentures, or NCDs, presents an intriguing opportunity for those looking to diversify their portfolios. With a base issue size of Rs 7,500 lakhs and the potential to double to Rs 15,000 lakhs, these secured instruments come with a rating of IND-BBB stable, which suggests moderate safety. However, it's essential to stay aware of the risks involved. Credit downgrades and legal challenges could impact your investment. If you're in the market for fixed income and are comfortable with some level of risk, these NCDs could align well with your investment strategy. Always do your due diligence before diving in. Andhra Paper Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue dipped to Rs 1,858 crore, largely due to a 41-day maintenance shutdown and escalating raw material costs. However, the company still managed to achieve total sales of 2,33,480 metric tons, showcasing resilience in challenging times. They proposed a Rs 10 dividend per share, reflecting a commitment to shareholder value. Strategic investments in technology and facility upgrades are on the horizon, aimed at boosting efficiency. Yet, the decline in short-term profitability raises important questions for investors. Balancing these challenges with the opportunities ahead will be crucial for making informed decisions. Chennai Petroleum Corporation Ltd has delivered an impressive consolidated turnover of Rs 79,272.25 crore for FY 2023-24, showcasing its pivotal role in India's energy landscape. With a refining capacity of 10.5 million metric tons per annum, it stands as a cornerstone of our energy sector. What truly sets CPCL apart is its commitment to sustainability. The company is making strides with green initiatives like the seawater desalination plant and various renewable energy projects. Additionally, the Cauvery Basin Refinery project is set to expand both capacity and product offerings, further strengthening its market position. And for investors, a generous 550% equity dividend is a testament to CPCL's robust financial health and dedication to rewarding shareholders. Glottis Limited, founded in 2004, has seen significant growth and transformation over the years. Transitioning from a partnership to a private limited company in 2022 marked a pivotal moment for us. Now, as we prepare for our IPO in 2024, we're excited to offer a fresh issue of Rs 2,000 million alongside shares from our promoters. However, potential investors should tread carefully. The market can be unpredictable, and operational uncertainties can impact our performance. It's crucial to assess these risks thoroughly before making any investment decisions. Understanding the landscape will empower you to make informed choices as we embark on this new chapter. Bajaj Finance has truly set a remarkable benchmark in FY 2024, showcasing a 34% increase in assets under management, now standing at an impressive Rs 330,615 crore. This growth is complemented by a 26% surge in profit after tax, reaching Rs 14,451 crore. What's even more compelling is their robust capital adequacy ratio of 22.52%, which reflects their strong financial health. Their effective risk management strategies are evident in their low NPAs, ensuring stability even amidst regulatory challenges. With a strategic focus on expanding both digitally and physically, Bajaj Finance is well positioned for future growth. As always, it's crucial to align your investments with your risk tolerance and financial goals. Tilak Ventures Limited is currently offering a rights issue of over 22 million shares at just Rs 2.20 each. This is an opportunity to support their working capital and future investments. Their recent financials indicate promising revenue growth, which is certainly encouraging. However, it's crucial to consider the risks involved. Ongoing CB investigations into insider trading and other regulatory violations could impact the company's stability. Before diving in, assess your own risk tolerance. Consulting a financial advisor can provide valuable insights tailored to your situation. Make informed choices and invest wisely. Swiggy IPO is gearing up for its initial public offering, aiming to raise a substantial Rs $37,500 million. This IPO includes fresh shares and an offer from major investors like Axel India and Tencent, highlighting the confidence in Swiggy's business model. With a significant market share in the food delivery sector, Swiggy has established itself as a key player. However, potential investors should tread carefully. The food delivery market is competitive and evolving, and there are inherent risks involved. It's crucial to assess these risks thoroughly and consult with financial advisors before making any investment decisions. Investing in an IPO can be exciting, but informed choices are essential for long-term success. Emerald Leisures Limited is presenting an intriguing opportunity with its rights issue of 1,212,400 equity shares, priced at Rs 12.50 each, which includes a premium of Rs 7.50. Eligible shareholders can purchase 2 shares for every one they own as of September 10, 2024. This move aims to bolster the company's finances by reducing debt and addressing general corporate needs. However, it's essential to weigh the risks involved. Internal disputes, ongoing litigation, and a partial commitment from promoters could impact the company's stability. Before diving in, assess your risk tolerance and consider consulting a financial advisor. This could be a pivotal moment for your investment strategy. Investing in M&B Engineering Limited's IPO is a decision that requires careful thought. With an offer size of Rs 6,530 million, this opportunity combines a fresh issue and an offer for sale. Established in 1981, M&B has built a reputation in construction and engineering. But this is their first foray into the public market. That alone raises significant market risks. As potential investors, it's crucial to assess your risk tolerance. Are you prepared for the volatility that often accompanies an IPO? Seeking expert advice can provide valuable insights and help navigate these uncertainties. Remember, while the potential for growth exists, so do the risks. Make sure you're informed before making any commitments. Investing in Highway Infrastructure Limited is a decision that requires careful thought. They're offering up to Rs 1,050 million through a fresh issue, plus an offer for sale of 31,000 equity shares from their promoters. This is their first public issue, which adds a layer of uncertainty to how the market will respond. We must consider the risks involved. Price discovery can be unpredictable, and IPOs are notoriously volatile. while the backing of prominent figures like Arun Kumar Jain and Anup Agrawal lends credibility. It's crucial to remember that the primary goal here is growth and debt repayment. As potential investors, we need to weigh the promise of returns against the inherent risks. It's a delicate balance, and due diligence is key. Proceed with caution and make informed decisions. HCL Tech's FY 2023-24 report showcases impressive financial performance, with revenues soaring to Rs 109,913 crore, marking an 8.3% increase. Their net income also climbed to Rs 15,702 crore, up 5.7%. This growth is particularly noteworthy given the current macroeconomic challenges. HCL Tech is excelling in digital engineering and AI sectors, positioning itself strategically for the future. Their commitment to sustainability and emerging technologies signals a promising trajectory for long-term growth. However, potential investors should remain cautious and consider current market risks. Consulting with financial advisors can help align investment strategies with personal goals, ensuring informed decisions in this dynamic landscape. Maruti Suzuki India Limited has truly outdone itself in the FY 23-24 annual report, with net sales soaring by 20% to an impressive Rs 378 million. It's clear that the company is on a robust growth trajectory. Even more exciting is the staggering 64% leap in profit after tax, now at 132,094 million. This reflects not just strong sales, but also efficient operations, as evidenced by an EBIT margin improvement to 9.9%. Investors should take note of the return on equity at 18.3%, coupled with a remarkable 39% increase in dividends, showcasing Maruti's commitment to delivering strong shareholder value. The company is not resting on its laurels. It's expanding production capacity and embracing sustainable technologies, solidifying its position as a leader in the automotive industry. This is a thrilling time to be part of Maruti's journey as it drives forward with innovation and growth. In FY 2023-24, Sun Pharmaceutical Industries Limited showcased remarkable financial growth, with total income reaching Rs 498,510 million, a 12% increase year-on-year. This impressive surge is complemented by a net profit of Rs 95,664 million, highlighting the company's robust operational performance. Sun Pharma's commitment to innovation is evident through substantial investments in research and development, particularly in specialty products. This strategic focus not only enhances their product portfolio, but also positions them favorably for future growth. While regulatory challenges persist, Sun Pharma's strong fundamentals and proactive approach suggest a promising trajectory ahead for investors. Adani Enterprises Limited has truly outdone itself in FY 2023-24, posting total income of Rs 98,282 crore, an impressive 41% increase year-on-year. This remarkable growth is underscored by a 32% rise in EBITDA, showcasing the company's robust operational performance. What's particularly exciting is Adani's strategic focus on green hydrogen, airports, and roads, positioning itself for sustainable growth in a rapidly evolving market. With a solid balance sheet and reduced debt, the company is not just thriving, it's laying the groundwork for long-term success. For investors, this is a compelling narrative of resilience and innovation that's hard to overlook. Kotak Mahindra Bank has reported impressive financial highlights for FY 2023-24. Total income has surged to an astounding Rs 94,273.91 crore, showcasing robust growth. The profit after tax stands at Rs 18,213.21 crore, reflecting the bank's strong performance. With a return on equity of 15.08%, it's clear that Kotak is delivering value to its shareholders. Additionally, the bank has improved its asset quality, which is a positive indicator of its financial health. However, as always, it's crucial to assess market conditions and your own risk appetite before making any investment decisions. Strong fundamentals are essential, but informed choices are key to successful investing. Titan's FY 2023-24 report is nothing short of impressive, with revenue skyrocketing to Rs 46,968 crore, a remarkable 22.4% increase. This growth is driven by stellar performances in key segments like jewelry and watches, showcasing the brand's strength and market appeal. What's even more exciting is Titan's commitment to international expansion and sustainability, positioning itself as a forward-thinking leader in the industry. However, as we celebrate these achievements, it's crucial for investors to remain vigilant. The market competition is fierce, and economic risks are ever present. Balancing optimism with caution will be key as we navigate this promising landscape. When considering an investment in ONGC, the financial metrics present a mixed yet promising outlook. Revenue has dipped to $1,384,021 million, which raises some eyebrows. However, net profit has seen a slight increase to $405,260 million, indicating operational resilience. The robust dividend of 2.45% is a strong signal for shareholder returns, showcasing the company's commitment to rewarding its investors. With a remarkably low debt-equity ratio of 0.02.1, ONGC demonstrates solid financial stability, which is crucial in today's volatile market. Their strategic focus on renewable energy and impressive exploration results suggest significant growth potential ahead. Yet investors should remain cautious of crude price fluctuations and rising operating costs that could impact profitability. Tata Motors has truly outdone itself in FY 23-24, achieving a record revenue of R437,928 crore, marking an impressive 26.6% year-on-year growth. The turnaround is remarkable, with profit after tax soaring to Rs 31,807 crore. Their EBITDA margin stands strong at 14.3%, and they generated a staggering 26,925 crore in free cash flow. The reduction in net automotive debt is a testament to their strengthened liquidity, positioning them for future growth. In the commercial sector, Tata Motors continues to lead with innovative new launches and a robust electric bus fleet. The EV segment is thriving, capturing an incredible 70% market share. Jaguar Land Rover also contributed to this success with impressive growth figures, with plans for a demerger. NTPC's 2023-24 annual report highlights a robust financial performance, with consolidated revenues soaring to Rs 177,687 crore. This impressive growth is underscored by a remarkable 25% increase in profit after tax, now at Rs 21,332 crore. The company's market capitalization has reached Rs 349 lakh crore, reflecting strong investor confidence. NTPC is also rewarding its shareholders with a dividend of Rs 7.75 per share. What's particularly exciting is NTPC's commitment to sustainability, aiming for 60 gigawatt of renewable energy capacity by 2032. Their international expansion is noteworthy too, with the launch of their first power station in Bangladesh. Axis Bank's performance in FY 2023-24 is nothing short of remarkable. With consolidated revenue soaring to Rs 1,47,845 crore and a record net profit of Rs 24,161 crore, the numbers speak volumes. The net interest margin has climbed to an impressive 4.07%, while return on assets stands strong at 1.84%. This growth is fueled by a significant expansion in both retail and corporate loan books, showcasing robust demand in the market. What's truly exciting is their commitment to a robust digital strategy, which positions them perfectly for future growth. Coupled with a healthy capital adequacy ratio of 13.74%, Axis Bank is not just thriving, it's set for remarkable expansion ahead. Avenue Supermarts Limited, or DMart, has truly showcased impressive financial growth in FY 2023-24. Their revenue surged to Rs 49,533 crore, marking an 18.41% increase, an impressive feat in today's market, EBITDA also saw a healthy rise of 12%, while profit after tax reached Rs 2,695 crore. Although there's been a slight dip in net profit margin, DMart's low debt equity ratio is a strong indicator of its financial stability. Coupled with their strategic expansion plans, DMart presents a compelling case for long-term investment. With these robust numbers, it's clear that DMart is not just surviving, but thriving in the retail landscape. Adani Green Energy Limited's FY 2023-24 annual report showcases impressive financial growth, with revenue soaring to Rs 7,735 crore, a remarkable 33% increase year-on-year. The EBITDA stands at Rs 7,222 crore, reflecting an outstanding 92% margin. This growth is complemented by a 35% expansion in operational capacity, now reaching 10,934 MMT. The company's ambitious target of $50 GW by 2030 positions it as a frontrunner in the renewable energy sector. While debt levels have improved, they still require vigilant monitoring, especially given the current market volatility. Overall, Adani's strategic initiatives and robust financial performance make it a compelling prospect for investors and analysts alike. Adani Ports and Special Economic Zone Limited has truly outdone itself in FY 2023-24. Revenue skyrocketed to Rs 26,711 crore, marking an impressive 28% increase. Even more remarkable is the EBITDA, which reached Rs 15,864 crore, showcasing a robust 71% margin. Net profit surged by 50%, hitting Rs 8,104 crore. Operationally, we handled a staggering 420 MMT of cargo, a testament to our efficiency and growth. Our strategic expansions into international ports are paving the way for even greater opportunities. Plus, our commitment to sustainability, aiming for carbon neutrality by 2025, positions us as a forward-thinking leader in the industry. While we celebrate these achievements, it's essential to remain vigilant about geopolitical risks that could impact global trade. The future looks bright, and we're excited to navigate it together. Ultratech Cement Limited has achieved remarkable financial growth for the year ending March 31, 2024. With a revenue of Rs 49,533 crore, that's an impressive 18.4% increase from last year. The profit after tax stands at Rs 6,905 crore, showcasing solid profitability and a robust EBITDA of Rs 13,282 crore, reflecting strong financial health. The company's strategic expansions, both domestically and internationally, are enhancing its capacity and market share, positioning it as a leader in the industry. Additionally, the dividend of Rs 2,021 crore highlights Ultratech's commitment to delivering value to its shareholders. This performance paints a compelling picture for investors, marking Ultratech Cement as a promising long-term investment opportunity. Asian Paints Limited has showcased remarkable financial growth for FY 2023-24. Their revenue climbed to Rs 35,494.73 crore, marking a modest 2.9% increase. But the standout figure is the profit after tax, which surged by an impressive 32.5% to Rs 5,557.69 crore. This indicates not just growth, but a significant boost in profitability. The EBITDA growth of 24.5% highlights their strong operational efficiency, a key factor for any investor to consider. With an earnings per share of Rs 56.95 and a track record of consistent dividends, Asian Paints emerges as a solid investment choice. However, it's crucial to keep an eye on market competition and economic conditions before making any decisions. Bajaj Finserv's FY 2023-24 results are impressive, showcasing a consolidated revenue of Rs 110,383 crore and a profit after tax of Rs 8,148 crore. This robust earnings growth highlights the company's strong financial health. Key players like Bajaj Finance L&T and Bajaj Allianz Insurance are making significant contributions, reinforcing their market position and consistent profitability. For investors, this could be an attractive opportunity. However, it's essential to weigh market conditions and potential risks before making any decisions. The financial landscape is dynamic, and informed choices are crucial for success. Bajaj Auto Limited has truly outdone itself in FY 2023-24, achieving a remarkable revenue of R110,383 crore and a profit after tax of Rs 148 crore. This impressive performance translates to enhanced earnings per share, showcasing our commitment to delivering strong shareholder value. The generous dividend of Rs 80 per share is a testament to our dedication to investors. As the leader in the Indian two-wheeler and three-wheeler markets, we're not just resting on our laurels. We're expanding our footprint globally. Our focus on sustainability and innovation, particularly in electric vehicles, positions Bajaj Auto for exciting future growth. With these solid foundations, the road ahead looks incredibly promising for all of us. Power Grid Corporation of India Limited has delivered impressive financial results for FY 2023-24, reporting revenues of Rs 45,843 crore and a profit after tax of Rs 15,573 crore. Their EBITDA reached Rs 40,119 crore, showcasing robust operational efficiency. With a remarkable 68% dividend payout ratio, investors can expect attractive returns. The company has expanded its infrastructure significantly, adding over 4,000 circuit kilometers of transmission lines and enhancing transformation capacity, achieving a stellar 99.85% transmission system availability. Moreover, Power Grid is committed to integrating renewable energy into its operations and is expanding its footprint globally across 23 countries. Nestlé India Limited has truly outdone itself in FY 2023-24, with revenue skyrocketing to an impressive Rs 242,754.8 million, an incredible 44.4% increase. This surge is a testament to the strong demand and robust market presence the company has cultivated. Even more exciting is the 64% jump in profit after tax, showcasing their effective cost management strategies. With an operating profit margin of 22% and earnings per share rising to Rs 40.79, it's clear that Nestlé is thriving. Their commitment to returning value to shareholders is evident with a dividend of Rs 8.50 per share, making it an attractive option for income-focused investors. However, we must keep an eye on potential risks like commodity price fluctuations and regulatory changes. Wipro Limited's financial performance for FY 2023-24 is nothing short of impressive. Consolidated revenues soared to Rs 243,938.9 million, a significant leap from Rs 168,969.6 million. This remarkable growth is mirrored in the profit after tax, which surged by 64.5% to reach Rs $39,328.4 million. And let's not overlook the earnings per share, which jumped from 24.79 to Rs 40.79. Wipro's strategic focus on digital transformation and sustainability is not just a trend, it's a game changer that solidifies its position in the market. This makes Wipro a compelling choice for investors looking for robust growth and innovation. The future looks bright, and I'm excited to see where this journey takes us. Mahindra & Mahindra Life has truly outdone itself in FY 2023-24. Standalone revenue surged to an impressive Rs 1,219 crore, reflecting a robust 17% growth. Consolidated revenue also saw a healthy rise, reaching Rs 139,078 crore, up 15%. The standout highlight? A staggering 64% jump in standalone profit after tax, soaring to Rs 10,718 crore. The automotive sector is thriving, with an 18.1% increase in volume, showcasing our resilience and market strength. Despite challenges, Mahindra proudly holds a 41.6% market share in tractors. Looking ahead, we're investing Rs 37,000 crore in future technologies, with a keen focus on electric vehicles and sustainability. This is not just growth, it's a commitment to innovation and a sustainable future. Hindustan Aeronautics Limited has achieved a remarkable milestone, reporting its highest ever turnover of Rs 28,162 crore, reflecting a solid 7% growth from last year. Even more impressive is the 57% surge in profit before tax, which has reached Rs 10,198 crore. Profit after tax also saw a significant increase of 31%, totaling Rs 7,595 crore. With a robust order book of Rs 94,129 crore, HAL is firmly positioned as a key player in India's defense sector. The company is not just resting on its laurels, it's actively expanding its production capabilities and enhancing research and development efforts. This strategic focus positions HAL for sustained growth and innovation in the future. For investors, this is a clear signal of HAL's strong market presence and potential for continued success. DLF Limited's FY 2023-24 financials are impressive, showcasing a consolidated revenue of Rs 6,958 crore, marking a 16% increase. This growth is complemented by a profit after tax of Rs 2,124 crore, which is a remarkable 34% rise. Their rental revenue stands strong at Rs 4,633 crore, highlighting the strength of their commercial portfolio. With strategic expansion plans on the horizon and a solid dividend increase, DLF is positioning itself as an attractive investment opportunity. However, it's essential to remain mindful of the inherent market risks. Overall, DLF's performance reflects a robust foundation for potential investors looking for growth in the real estate sector. Adani Power Limited has reported impressive financial results for FY 23-24, with total revenue soaring to Rs 60,281 crore, marking a remarkable 40% year-on-year increase. The company's profit after tax has skyrocketed by 94% to Rs 20,829 crore, showcasing its robust growth trajectory. EBITDA has also risen by an impressive 96%, reflecting strong operational efficiency across its plants. The average plant load factor improved to 65%, and power generation reached a staggering 79 billion units, a 48.5% increase from the previous year. With a net debt to EBITDA ratio of just 0.62x, Adani Power demonstrates solid financial stability, further bolstered by an upgraded credit rating of AA stable. Moreover, the company is committed to sustainability, with 72% of its capacity utilizing advanced technology. JSW Steel Limited's integrated report for FY 23-24 is truly impressive, with consolidated revenue hitting Rs 75,006 crore and an EBITDA of Rs 28,236 crore. The company demonstrates remarkable operational efficiency. Operating at 92% capacity, JSW is not just maintaining its performance, it's gearing up for significant expansion by 2030. Their manageable debt levels and strong commitment to sustainability position them as a frontrunner in green steel production. Plus, with a consistent dividend payout and a diverse market presence, JSW Steel emerges as an attractive long-term investment opportunity. Investing in JSW Steel means aligning with a leader in both profitability and sustainability. Tata Steel's FY 23-24 results present a mixed picture. Consolidated turnover fell to Rs 29,171 crore, while standalone turnover saw a slight dip to Rs 140,987 crore. Notably, consolidated EBITDA dropped to Rs 23,402 crore, contrasting with a rise in standalone EBITDA to Rs 31,004 crore. The company faced a consolidated net loss of Rs 4,910 crore, raising concerns among investors. However, Tata Steel is not standing still. The focus on expanding production capacity and achieving net zero emissions by 2045 is commendable. Significant investments in renewable energy signal a commitment to sustainability. Despite setbacks in Europe, Tata Steel's strategic direction suggests a promising long-term outlook, making it a company worth watching closely. In FY 2023-24, IRETA has truly set a benchmark in financial performance. With a gross loan book soaring to Rs 59,698.11 crore, we're looking at an impressive 26.81% growth. Loan sanctions also climbed by 14.63%, underscoring the robust market demand for renewable energy financing. The standout figure? A staggering 47.93% surge in profit after tax, reaching Rs 685.24 crore, which speaks volumes about their operational efficiency. Additionally, a net worth increase of 44.22% positions IRETA as a compelling investment opportunity. This balance of growth and effective NPA management makes it a prime candidate for investors seeking long-term gains in the renewable sector. Amanta Healthcare Limited is making significant strides in the pharmaceutical sector, particularly with their focus on sterile products like intravenous fluids. With an IPO of 1.25 crore shares, they're poised to attract investors eager to tap into the booming healthcare market. Their innovative production methods set them apart, positioning them for substantial growth. However, potential investors must consider the inherent risks. Market volatility and regulatory hurdles can pose challenges, especially for a first-time public offering. It's crucial to weigh these factors carefully as you explore the opportunities Amanta presents in this dynamic industry. In the financial year 2023-24, Indian Railway Finance Corporation Limited, or IRFC, has truly showcased impressive growth. Revenue surged to 26,644 crore, reflecting a robust 12.32% increase. The profit after tax also rose significantly to 6,412 crore, indicating a steady upward trend. With assets under management reaching an astounding 64,641 crore, IRFC demonstrates remarkable financial stability. What sets IRFC apart is its leasing model, which ensures consistent revenue streams, while its low-cost borrowing enhances overall profitability. This combination makes it a solid investment choice. Plus, with dividends of R1.50 per share, investors can look forward to attractive returns. Amata's FY24 financials are nothing short of impressive. With revenue from operations soaring to Rs 12,114 crore, we're looking at a remarkable 71% increase from last year. What's even more exciting is the turnaround in profitability, with a profit after tax of 351 crore, a significant leap from last year's losses. The key growth drivers are truly noteworthy. Food delivery revenue surged by 40%, while quick commerce skyrocketed by an astonishing 93%. Even with challenges surrounding Blinkit, Zomato's diversified model shines through. Their expanding delivery network and increasing store count position them as a formidable player in the market. This growth trajectory not only highlights resilience, but also makes Zomato an attractive option for long-term investment. In 2024, IRB Infrastructure Developers has truly solidified its leadership in India's infrastructure sector. With 72 toll plazas under our management, we've captured an impressive 10% of the national toll revenue, servicing over 1.3 million vehicles daily. Our strategic tariff revisions and a remarkable 17% CAGR in EPC growth have significantly bolstered our financial resilience. We lead the TOT market with a commanding 38% share and an order book of Rs 34,800 crore, positioning us strongly for future projects. Successful refinancing has lowered our debt costs, and our robust debt-to-equity ratio underscores our financial health. This solid foundation cements our position as a key player in the infrastructure landscape. Indian Infotech and Software Ltd presents a compelling investment opportunity, especially for those with a keen eye on stability. With over 42 years in the market, this company has demonstrated resilience. Recently, it reported a remarkable 50.7% increase in revenue, which is impressive, although net profits remain modest. What stands out is its low current liabilities, indicating a healthy balance sheet. However, potential risks arise from proposed expansions and related party transactions that could affect future performance. Shareholder returns are currently low, which might raise concerns for conservative investors. Yet for those willing to embrace a bit of risk, the growth potential here could be quite rewarding. In the 2023-2024 fiscal year, Indian Overseas Bank has truly outdone itself. Total business has soared past Rs 5 lakh crore, a testament to its robust growth. Deposits have surged to an impressive Rs 2.85 lakh crore, while advances have jumped nearly 20%. This isn't just growth on paper. Profitability has seen a remarkable boost, with net profit climbing by 26.54%. What's even more encouraging is the improvement in asset quality, with gross NPAs dropping to just 3.10%. This solid performance not only reflects the bank's resilience, but also positions IOB as a strong contender for future growth. For investors seeking stability in the banking sector, Indian Overseas Bank is emerging as an attractive option. In FY 23-24, NHPC Limited faced its share of challenges, yet we demonstrated remarkable resilience. Our total income slightly dipped to Rs 4.9 crore, primarily due to environmental factors affecting energy sales. However, we turned adversity into opportunity, with our diversified income from power trading soaring, showcasing our adaptability in a changing landscape. Our profit after tax of Rs 3743.94 crore reflects our commitment to effective cost management. As we continue to invest in major hydropower projects and expand our renewable energy footprint through solar and wind initiatives, we are not just weathering the storm, we are positioning ourselves for a brighter, sustainable future. Together, we are paving the way for growth and innovation in the energy sector. In the 2023-2024 fiscal year, NBCC India Limited has truly set a benchmark in the public sector construction arena. With a consolidated total income soaring to Rs 10,666.68 crore and a profit after tax of Rs 414.38 crore, our growth sort of remarkable. Our robust order book, standing at an impressive Rs 52,242 crore, reflects our unwavering commitment to infrastructure development. We take immense pride in our achievements, including the successful completion of 19,000 units in the Amrapali housing scheme, providing homes and hope to countless families. Our significant projects in Kerala further underscore our dedication to transforming landscapes and lives. As we continue to build the future, we invite you to join us on this inspiring journey of growth and innovation. In the 2023-2024 annual report, Taparia Tools Limited has truly set a remarkable benchmark. With a net revenue of Rs 83,766.86 lakh, we've seen an impressive 8.95% growth compared to last year. What's even more striking is the 37.88% surge in profit before tax, a clear indicator of our enhanced operational efficiency. We're not just focused on growth, we're committed to our shareholders as well. This year, we've maintained consistent dividends and announced a 4.1 bonus share issue, reinforcing our dedication to delivering value. Additionally, our strategic investments in mutual funds showcase our prudent cash management approach. It's a strong message that we're not just about numbers, we're about sustainable growth and shareholder satisfaction. In 2023-24, CB marked a transformative year for India's capital markets. Resource mobilization soared to an impressive Rs 11.8 lakh crore, reflecting a robust 20% growth. We witnessed 272 IPOs that collectively raised Rs 68,972 crore, showcasing a vibrant investment landscape. The mutual fund industry also made significant strides, doubling its assets to Rs 53.4 lakh crore, a testament to growing investor confidence. Innovations like the T+1 settlement cycle and the introduction of the social stock exchange highlight SEBI's dedication to enhancing market efficiency and inclusivity. These milestones not only strengthen our market framework, but also pave the way for a more resilient financial ecosystem. In the 2023-2024 annual report, Arcon International Limited has truly set the stage for remarkable growth. Our revenue has soared to Rs 12,287.85 crore, marking a significant 20.72% increase. This isn't just a number, it's a testament to our unwavering commitment and strategic vision. Profit before tax has reached an impressive Rs 155.54 crore, reflecting a robust 30.84% rise. We're not just celebrating these figures, we're sharing in the success of our stakeholders. With a total dividend of Rs 291.56 crore declared, we're ensuring that our investors reap the rewards of our hard work. Securing new contracts and achieving Navratna status positions us for even greater achievements ahead. In FY 23-24, Suzlon Energy Limited has truly set a benchmark in the renewable energy sector. We achieved an impressive 20% increase in revenue, reaching our 6,497 crore, while our EBITDA soared to our 1,029 crore, showcasing robust margins. The highlight? Our profit after tax skyrocketed by 428%, a testament to our exceptional financial recovery. With a record order book of 3.8 GW, we are not just participants but leaders in India's wind energy market. Our commitment to sustainability is unwavering, as we contribute to reducing over 53 million tons of CO2 annually. We're transforming our manufacturing units into eco-friendly buildings, embodying our vision for a greener future. This journey has not gone unnoticed. We've been honored with multiple awards, reflecting our dedication and innovation. Garuda Construction and Engineering Limited is making headlines with its upcoming initial public offering. Founded in 2010 and based in Mumbai, the company plans to raise capital by issuing 1.83 crore fresh equity shares, along with an offer for sale of 95 lakh shares, all at a face value of Rs 5 each. Mark your calendars. The bidding opens on October 8, 2024 and closes on October 10th. While this could be an exciting investment opportunity, it's important to remember that this is their first public offering. Active trading post-listing isn't guaranteed, so proceed with caution. Make sure to do your research before diving in. Pidilite Industries Limited has delivered an impressive financial performance for the year ending March 2024. Net sales reached Rs 11,118 crore, marking a solid 5.4% increase. Even more remarkable is the EBITDA, which surged to Rs 2,550 crore, reflecting a staggering 37.4% growth. This robust performance is further highlighted by a 42.6% jump in profit after tax, now standing at Rs 1,792 crore, showcasing the company's strong operational efficiency. Earnings per share have risen to Rs 35.39, while the book value per share has improved to Rs 163.9. Additionally, Pidilite has announced a notable dividend increase to Rs 16 per share, underscoring its commitment to enhancing shareholder value. Grasim Industries Limited has truly showcased remarkable growth in its 23-24 annual report. Total revenue surged to Rs 65,649 crore, fueled by a robust 16% increase in net sales. The cement segment, Ultratech, led the charge with an impressive Rs 38,460 crore, while our VSF and chemicals divisions also made significant contributions. With a profit after tax of Rs 4,289 crore and earnings per share at Rs 31.50, Grasim continues to demonstrate a strong financial position. We're rewarding our investors with a Rs 10 dividend per share, reflecting our commitment to shareholder value. Additionally, our substantial investments in expansion underscore Grasim's leadership in responsible industrial practices, positioning us for sustainable growth in the future. Bharat Electronics Limited has delivered an impressive financial performance for FY 23-24, reporting revenues of Rs 20,720 crore, marking a robust 14% increase from the previous year. The profit after tax surged by 17% to Rs 3,700 crore, fueled by high-margin projects that are driving profitability. With an order book of Rs 65,000 crore, BEL is strategically positioned for sustained growth in the coming years. Shareholders are reaping the benefits too, with an earnings per share of Rs 15.25 and dividends declared at an impressive 140% and 80%. Moreover, BEL's commitment to innovation shines through its investments in AI and IoT, alongside significant projects in both defense and non-defense sectors. SBI Life Insurance Company has truly outdone itself in FY 23-24, with a gross written premium soaring to Rs 814.3 billion. That's a remarkable 21% increase year on year. New business premiums have surged to Rs 382.4 billion, reflecting a robust 29% growth. Our assets under management have reached an impressive Rs 3,189 billion, marking a solid 27% rise. The value of new business stands strong at Rs 55.5 billion, while our embedded value has climbed to $582.6 billion. We've achieved a profit after tax of $18.9 billion, showcasing our resilience in a competitive market. With a solvency ratio of 1.96, we ensure stability for our stakeholders. Holding a 24.6% market share in new business premiums, SBI Life is not just growing, we're positioned for sustained success. LTIMindtree's annual report for FY 23-24 showcases remarkable financial growth, with total revenue soaring to 35,517 crore, reflecting a solid 7% increase. Our profit after tax has also risen impressively to 4,584.6 crore. A standout achievement this year is our record order inflow of USD 5.64 billion, underscoring our strong market position. While we experienced slight dips in profitability margins, our unwavering commitment to innovation and sustainability sets us up for long-term success. With a dedicated workforce of over 81,000 employees across 38 countries, we are focused on enhancing shareholder value through strategic initiatives and digital leadership. Trent Limited, Tata, has truly outdone itself in FY 2023-24. Can you believe a staggering 54.6% surge in revenue, bringing it close to 12,000 crores? That's not just impressive, it's a testament to their robust business strategy. And get this, profit after tax has doubled, soaring to 1,035 crores. This kind of growth isn't just a flash in the pan. It signals a company that knows how to capitalize on opportunities. With a solid dividend payout and smart debt management, Trent is not just surviving, it's thriving. For investors looking for a promising opportunity, Trent Limited is definitely a name to watch. The future looks bright, and this could be the right moment to jump on board. SolarWorld Energy Solutions Limited is stepping into the public market with an ambitious IPO aiming to raise $6,000 million. This company is entering a thriving solar energy sector in India, which is experiencing significant growth, fueled by strong government support for renewable initiatives. While there are inherent risks, such as market volatility and increasing competition, the management team brings a wealth of expertise that instills confidence in their strategy. For those who believe in the future of renewable energy, this IPO presents a compelling long-term investment opportunity. Investing in SolarWorld could mean being part of a sustainable future while potentially reaping financial rewards. Punjab National Bank's annual report for 2023-24 is nothing short of remarkable. With a staggering 228% increase in net profit, reaching Rs 8,245 crore, PNB stands tall as the leader among public sector banks. Their gross business has soared to an impressive Rs 23 lakh crore, reflecting robust growth and expansion. What's even more exciting is the improved asset quality and a solid capital adequacy ratio of 15.97%. This positions PNB as a strong contender in the banking sector, especially for investors looking for stability and growth. And let's not overlook their digital transformation journey. UPI transactions have surged by 56%, placing PNB at the forefront of digital payments. Skoda Tubes Limited, established in 2008 in Gujarat, is gearing up for its first IPO, aiming to raise Rs 2,750 million. They specialize in seamless stainless steel tubes, catering to industries like power and pharmaceuticals. While the stainless steel market shows promise, it's also highly competitive. One key point to consider is the lack of detailed financials, which makes assessing their financial health a challenge. This introduces a level of market risk for potential investors. However, if you have a positive outlook on the industry and can navigate the potential volatility, this IPO could present an intriguing opportunity. Keep an eye on Skoda Tubes as they enter the public market. Dr. Agarwal's Healthcare Limited IPO is intriguing for those eyeing the healthcare sector. With a strong focus on ophthalmology, it operates renowned eye hospitals across India and beyond. The IPO is aimed at expansion and debt reduction, signaling growth potential. As a first-time public issuer, they face market volatility and competition. The healthcare sector is evolving, particularly in eye care, driven by increasing demand. The brand's reputation is solid, and potential investors should scrutinize financial details. Kumar Arch Tech Limited, established in 1998, is making a significant leap by transitioning to a public company in 2024. They're aiming to raise $7,400 million through their IPO, with a substantial portion of that capital dedicated to growth and reducing debt. Specializing in manufacturing plastic and PVC products for the construction sector, they're positioned well as the industry continues to expand. However, potential investors should tread carefully. Market volatility and competition are real risks to consider. This IPO could represent a strategic investment opportunity, but it's crucial to conduct thorough research before diving in. Indigo has shown strong growth, with a 26.6% year-over-year revenue increase to $689,043 million. Their highest ever net profit of Rs. 81,725 million reflects a significant turnaround, supported by an 18.3% EBITDA and EPS of Rs. 212. With an 85.9% load factor and a fleet of 367 aircraft, Indigo is set for expansion with 985 new aircraft ordered. A cash balance of Rs. 203,769 million shows financial stability. They are operating 2016 daily flights to 121 destinations. While fuel price volatility and competition are risks, their strong fundamentals make it a promising outlook. Bank of Baroda has truly outdone itself in FY 23-24, with net profit skyrocketing by an impressive 168%. This surge is a clear testament to the bank's improved asset quality and a significant reduction in bad loans. Total income has also seen a remarkable rise of over 28%, primarily fueled by strong net interest income. What's even more exciting is the bank's success in lowering its non-performing assets, which enhances its financial stability. With a robust capital adequacy ratio and a keen focus on digital banking, Bank of Baroda is strategically positioned for future growth. However, as potential investors, it's wise to remain vigilant about macroeconomic conditions and competitive pressures. Investing in VMS TMT Limited presents an intriguing opportunity, especially with the surging demand for TMT bars in India's thriving construction sector. The government's initiatives are driving significant growth, making this a potentially lucrative investment. However, we must tread carefully. This is VMS's first IPO, which inherently brings volatility risks. The competition in the market is fierce, and fluctuations can impact performance. It's crucial to conduct a thorough analysis before diving in. Weigh the potential rewards against the risks and ensure you're making an informed decision. The landscape is promising, but due diligence is key. Vikram Solar Limited is making waves in India's solar energy sector with its upcoming IPO. Aiming to raise Rs. 15,000 million, significantly boost their manufacturing capacity and enhance their technology. Position module production. Energy markets and an increasing demand is not without its challenge. Price fueled impact against the promising outlook. Indogulf Crop Sciences Limited is stepping into the agrochemical sector with an ambitious IPO aiming to raise Rs. 2,000 million. This company is focused on developing crop protection products, which are crucial for enhancing agricultural yields. The market potential is certainly appealing, especially as global demand for sustainable farming solutions grows. However, it's essential to keep an eye on potential risks, such as regulatory hurdles and fierce competition in the industry. Before considering an investment, take a close look at their financial health and growth strategies. Understanding these factors will help you make a more informed decision in this promising yet challenging market. Aditya Infotech Limited, established in 1995, is set to launch an IPO aiming to raise Rs 13,000 million. Their financial highlights are impressive, showcasing strong revenue growth and solid profitability. However, as an investor, it's vital to dive deeper into key metrics like profit margins and return on equity. While the company has potential for expansion, we must remain cautious of market uncertainties and competitive pressures that could impact performance. Conducting thorough research and seeking professional advice is essential before making any investment decisions. This IPO could be a significant opportunity, but informed choices are crucial for success. Moritech Limited, established in 2005, has transformed into a public company with a significant focus on IT services. With an IPO offering of Rs 15,000 million, they are poised to drive growth through digital transformation, cloud services, and artificial intelligence. This is their first public issue, and while the growth potential is exciting, it's essential to consider the risks involved. Promoter divestment and increasing market competition could impact performance. If you believe in the future of IT and can navigate these uncertainties, investing in Moritech could be a strategic move worth exploring. Varandera Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs 12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Varandera Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs 12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Investing in Rahi Infotech Limited's IPO could be a promising opportunity, especially with the government's strong push for railway infrastructure in India. They're looking to raise Rs 4,200 million, which will be directed towards expansion and reducing debt, ultimately enhancing their financial health. However, it's important to remember that this is their first public offering, so we should brace ourselves for potential volatility in the stock price. Before making any decisions, take the time to thoroughly review their financials and the current market conditions. Look at their revenue growth, profit margins, and how they stack up against competitors. The railway sector is poised for growth, but like any investment, it comes with its risks. Sambhavi Steel Tubes Limited is making a significant shift from sponge iron to steel tube production, a move that could redefine its market position. With an IPO size of Rs 5,400 million, the company aims to enhance its manufacturing capabilities, boost working capital, and reduce existing debt. As investors, it's crucial to analyze the profitability trends. How has the transition impacted margins? Additionally, we need to scrutinize the debt levels. A reduction here could signal financial health. Finally, consider the market risks in this competitive sector. Understanding these dynamics will be key to making informed investment decisions as Sambhavi embarks on this transformative journey. Prostarm Info Systems Limited is gearing up for its IPO, marking a pivotal moment in its journey since 2008. This company has navigated through various name changes, demonstrating remarkable adaptability in the tech and power systems sector. As they aim to raise capital for growth, it's essential for potential investors to tread carefully. With no prior market history, the risks are significant. Scrutinizing their financials is crucial, as is assessing the credibility of the promoters behind the scenes. Understanding the market dynamics will also play a key role in your decision-making. While there are opportunities to seize, a cautious approach is vital. Investing is not just about potential gains, it's about informed choices. Midwest Limited is on the brink of an exciting IPO, aiming to raise our 2,500 million through fresh equity shares. Operating in the thriving natural stone sector, they specialize in granite and quartz, with ambitious plans to establish processing facilities in Andhra Pradesh. This growth potential is enticing, but it's crucial to recognize the uncertainties that come with an IPO. Investors must weigh the promise of expansion against risks like market dependence and liquidity issues. The natural stone industry is booming, yet a careful evaluation of Midwest Limited's financials and risk factors is essential before making any investment decisions. The opportunity is there, but due diligence is key. Globe Civil Projects Limited is set to make a significant move with its upcoming IPO, the first since 2002. This company has been a key player in the civil construction sector, focusing on essential infrastructure projects that drive economic growth. The IPO aims to raise capital for expansion and to tackle existing debt, which could position them for a robust future. However, potential investors should approach with caution. The market can be unpredictable, and execution challenges in large-scale projects can pose risks. It's crucial to weigh these factors carefully. As Jaro Institute of Technology Management and Research Limited prepares for its IPO, the excitement in the online education sector is palpable. With a fresh issue of R1,700 million and a significant offer for sale from promoter Sanjay Salunki, they're aiming to raise capital for growth. However, we must tread carefully. The online education market in India is fiercely competitive, with giants like BYJU's dominating the landscape. While the proceeds could enhance their technology and help reduce debt, the risks are substantial. Investors should weigh the potential for growth against the uncertainties that lie ahead. Proceed with caution. The path to success is anything but guaranteed. Investing in Niva Bupa Health Insurance Company demands a meticulous approach. First, let's dive into their financial performance. Analyzing profit margins and revenue growth reveals their operational efficiency and market viability. Are they consistently improving? Next, we must evaluate their market position. Are they gaining market share in a competitive landscape? This is crucial for long-term sustainability. Now, let's not overlook the risk factors. Regulatory challenges can significantly impact their operations, so understanding these risks is essential. Finally, we should scrutinize their management strategies and future growth prospects. How are they positioning themselves for the evolving healthcare landscape? Knowledge is indeed key in making informed investment decisions. Viney Corporation Limited is making waves with its IPO, marking a significant milestone since its inception in 1992. Specializing in auto ancillary components, the company is now poised to tap into the booming electric vehicle market. This IPO features a fresh issue aimed at raising 500 million, alongside an offer for sale by existing shareholders. While this move signals growth potential, the reduction of promoter stakes raises some eyebrows regarding their long-term commitment. As an investor, it's crucial to delve into the company's financial health, assess market risks, and evaluate the competitive landscape. With the electric vehicle sector on the rise, Viney Corporation could be a compelling opportunity, but thorough analysis is key to making an informed decision. All Time Plastics Limited is gearing up for an IPO, offering a fresh issue of up to Rs 3,500 million. Operating in the consumer plastics sector, they specialize in essential kitchenware and household items that are always in demand. This steady demand is certainly a positive sign for potential investors. However, it's crucial to weigh the competition in this space, as well as the company's reliance on key promoters who have been pivotal in its growth. Additionally, investing in a first-time public offering carries inherent risks. While the prospects look promising, a thorough analysis is essential before diving in. Understanding these dynamics will help you make an informed decision. Vikran Engineering Limited is on the brink of its initial public offering, aiming to raise Rs 9,000 million to fuel its growth and expansion. As a family-run business, it specializes in engineering, procurement, and construction contracts, perfectly positioned to benefit from India's ongoing infrastructure push. However, this being their first public issue, it's essential to consider the inherent market risks and uncertainties involved. While the sector outlook is promising, potential challenges in project execution could impact returns. Investors must carefully weigh these factors, balancing the excitement of a burgeoning industry against the realities of navigating a public market. Ajax Engineering Limited is gearing up for its IPO, offering 22.8 million equity shares, primarily through an offer for sale. While the construction sector is thriving, it's crucial to note that this IPO seems to favor the promoters more than the company's growth. As retail investors, we need to dig deeper. Look closely at the financial health of Ajax. Are they generating consistent profits? And pay attention to the promoter stake sales. These can significantly impact our potential returns. In a booming market, it's easy to get swept up in the excitement, but informed decisions are key to navigating this IPO landscape wisely. ETFs, or exchange-traded funds, are fascinating investment tools that allow you to buy shares representing a collection of assets, like stocks or bonds. They trade on the stock market just like individual stocks, which makes them incredibly easy to buy and sell. What's great about ETFs is that they track an index combining the benefits of mutual funds and stocks. This means you get lower costs, transparency, and flexibility. You can see daily holdings and trade anytime during market hours, which is a huge advantage. However, while most ETFs are generally safe, it's important to remember that specialized ETFs can carry specific risks. So, as you explore this investment option, keep in mind the balance between potential rewards and risks. ABB India Limited's 2023 annual report reveals an impressive financial trajectory, with revenues soaring to 10,147 crore, marking a remarkable 21.96% increase. This growth isn't just numbers, it reflects our commitment to excellence and innovation. Profit after tax climbed by 22%, underscoring our robust profitability in a competitive market. The demand for electrification, motion, and automation is stronger than ever, positioning us perfectly for future opportunities. And let's not overlook the proposed dividend of Rs 29.3 per share, a testament to our dedication to delivering value to our investors. With these solid fundamentals, ABB is not just keeping pace, we're setting the stage for sustained success. HDFC Life Insurance Company Limited has showcased remarkable financial growth for the year ending March 31st, 2024. Premiums earned have risen by 9.63%, totaling an impressive Rs 630,858 million. This growth reflects our strong market position and customer trust. Investment income has surged to Rs 383,631.56 million, highlighting our effective asset management strategies. Net profit has also seen a significant increase of 15.34%, which enhances shareholder value and boosts earnings per share. We're proposing a dividend of Rs 2, a testament to our robust cash flow. While cash equivalents have decreased, our liquidity remains strong, ensuring we can navigate future challenges effectively. Power Finance Corporation has truly set a remarkable benchmark in FY 2023-24, with total income soaring to Rs 46,034 crore, that's a 16% increase, and profit after tax reaching a 14,367 crore, up by 24%. Their loan portfolio is expanding, particularly in renewable energy, reflecting a 14% growth. Even more impressive, NPAs have dropped to an 8-year low of just 0.85%. This solid capital base, combined with strategic international expansion, positions PFC as a compelling investment opportunity. For those focused on infrastructure and energy transition, PFC stands out as a robust choice in today's market. Avance. Financial Services Limited is making significant strides in the education financing sector. With a remarkable 22.2% growth in assets under management, it's evident that this market is thriving. The company's recent report of a 14.2% increase in net profit showcases their effective cost management strategies. Their strategic focus on education loans, particularly for international studies, positions them favorably for future expansion. However, we must also consider the rising borrowing costs and the implications of key investor exits through the IPO. These factors warrant careful attention as we navigate this dynamic landscape. Dev Accelerator Limited is stepping into the thriving co-working space market with its upcoming IPO, aiming to raise capital for expansion. Since 2017, this sector has gained significant traction in India, especially post-pandemic, as the demand for flexible workspaces has surged. This presents a remarkable opportunity for growth. However, as a first-time public offering, investors should be aware of the inherent risks, particularly in a competitive landscape. The company plans to enhance its network and technology, which could position it well for future success. Understanding the financial details is crucial for making informed investment decisions. Keep an eye on this IPO. It could be a game changer in the evolving workspace industry. Godrej Consumer Products Ltd has demonstrated impressive growth in FY 2023-24, achieving a 6% increase in revenue and an outstanding 21% rise in EBITDA. This growth is largely driven by their commitment to innovation and sustainability, including a bold goal of reaching net zero emissions by 2035. Their strategic focus on expanding into rural markets and launching new products positions them strongly within the competitive FMCG landscape. However, while the outlook is promising, investors should remain vigilant about economic sensitivities and the challenges posed by market competition. Overall, GCPL's proactive initiatives suggest a solid foundation for long-term success. Tata Power's FY 2023-24 report showcases impressive financial growth, with a 10% increase in revenue and a remarkable 26% rise in EBITDA. This performance underscores the company's commitment to sustainable energy, as it aims for a 70% green portfolio by 2030. Their strong credit ratings and effective debt management not only enhance their financial stability, but also make them an attractive option for investors. While regulatory risks exist, the long-term outlook for Tata Power remains promising, especially as the world shifts towards clean energy solutions. Investing in Tata Power could be a strategic move for those looking to support a greener future while benefiting from robust financial growth. Hindustan Zinc Limited's integrated annual report for FY 2023-24 paints a compelling picture of financial strength. The company has achieved significant revenue growth, showcasing remarkable market stability. Key metrics reveal a net profit that underscores operational efficiency, while the earnings per share reflect a solid return for investors. The robust EBITDA margin indicates strong profitability, and substantial dividend payouts highlight impressive cash flow management. Moreover, the company's strategic investments in expansion and sustainability signal a commitment to future growth. For investors seeking steady returns and responsible operations, Hindustan Zinc stands out as a promising opportunity. Hindalco Industries Limited stands out as a compelling investment opportunity in today's market. With its diverse revenue streams from aluminium and copper, the company demonstrates remarkable resilience, even in fluctuating economic conditions. The recent RR350 dividend is a testament to its commitment to shareholders, signaling a strong return on investment. However, it's crucial to keep an eye on market dynamics and raw material costs, as these factors can impact profitability. With strong leadership and a strategic focus, Hindalco is well positioned for long-term growth in the metals sector. This is a company that not only adapts but thrives, making it an attractive option for investors looking for stability and potential in their portfolios. Sunshield Chemicals Limited has showcased remarkable financial growth, with its net worth climbing from Rs5 367.22 lakhs in 2022 to an impressive Rs8 219.02 lakhs in 2024. This surge is underpinned by a revenue increase to Rs28 337.54 lakhs, highlighting strong market demand for its products. However, it's essential to note that the company's borrowings have also risen, now standing at Rs 8,547.33 lakhs. This increase in debt raises some caution flags. As investors, it's crucial to balance the excitement of growth with the potential risks that come from operating in this specialized sector. Careful consideration will be key to navigating these dynamics effectively. Andhra Cements Limited presents a mixed financial landscape for FY 2024. While the equity share capital remains steady, it's encouraging to see a significant improvement in net worth, bouncing back from negative figures in FY 2022. Revenue generation has resumed, signaling a much-needed operational recovery. However, the company is still grappling with losses, which underscores ongoing challenges in profitability. For investors, this scenario is a double-edged sword. On one hand, there are clear signs of recovery. On the other, the persistent losses remind us to tread carefully. It's essential to weigh these recovery indicators against the underlying risks before making any investment decisions. Tech Mahindra Limited's FY 2023-24 report is truly impressive. With a revenue of Rs 61,080 crore, we've seen a solid 5% growth from last year. This isn't just numbers. It's a testament to the company's resilience in a competitive market. The net profit stands at Rs 5,390 crore, showcasing our strong operational efficiency. What really excites me is the dividend payout of Rs 40 per share, reflecting our commitment to rewarding investors. Plus, with a low debt-to-equity ratio, Tech Mahindra is proving its stability and financial health. This combination of growth, profitability, and prudent financial management makes it an attractive investment option. Investing in Tech Mahindra feels like a smart move for a bright future. Ambuja Cements Limited has truly excelled in FY 2023-24, achieving a remarkable revenue of Rs 33,160 crore, fueled by an 8.1% increase in cement sales. Their operating EBITDA of Rs 6,400 crore showcases an impressive 22% margin, highlighting their operational efficiency. What stands out even more is their zero gross debt, which underscores their financial stability in a competitive market. With ambitious expansion plans on the horizon and a strong commitment to sustainability, including a target of net zero emissions by 2050, Ambuja is strategically positioned for long-term growth. For investors, this is a compelling opportunity to consider, especially in light of the evolving competitive landscape. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indie app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indie app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. Cipla Limited's integrated annual report for FY 2023-24 is truly impressive. Total income soared to Rs 26,249 crore, reflecting robust growth. The net profit of Rs 356 crore and an EBITDA margin of 20.3% highlight our operational strength and efficiency. This isn't just numbers, it's a testament to our commitment to excellence. With a dividend of Rs 13 per share, we're rewarding our investors while strategically investing in R&D to drive innovation. Cipla is not just keeping pace, we're setting the stage for future success. The outlook is bright, and I'm excited about what lies ahead for us and our investors. In FY 2023-24, GAIL India Limited has truly set a benchmark in financial performance, achieving a remarkable total income of Rs 198 crore and a net profit of Rs 7,937 crore. This translates to an earnings per share of Rs 17.65, showcasing our commitment to enhancing shareholder value. Our dedication to rewarding investors is evident with a dividend declaration of Rs 650 per share. With a robust debt-to-equity ratio of just 0.23, GAIL stands strong in its financial health. We are not just resting on our laurels. Our focus remains on expanding our natural gas infrastructure and investing in sustainable energy solutions. This strategic direction positions us well for future growth and stability, making GAIL a compelling choice for investors. In FY 2023-24, REC Limited has truly set a benchmark for financial excellence. Our total income has surged to an impressive Rs 214 crore, marking a remarkable 20% increase. Even more inspiring is our net profit, which has risen by 27% to reach Rs 19 crore. This isn't just growth, it's a testament to our unwavering commitment to robust performance. What excites me the most is our strategic focus on renewable energy financing. We've achieved an astounding 539% growth in project sanctions, positioning us as a leader in sustainable development. This is not just about numbers, it's about paving the way for a greener future. Together, we are not only driving financial success, but also making a significant impact on the world. Britannia Industries Limited's FY 2023-24 report showcases a solid 3.6% revenue growth, reaching Rs 16,986.08 crore. This growth is complemented by a 9.9% rise in operating profit, indicating strong operational efficiency. However, it's worth noting that profit after tax dipped by 2.7%, a point of concern amidst rising costs. The proposed dividend of Rs 1,770.38 crore underscores the company's commitment to its shareholders, reflecting confidence in its financial health. Strategic expansions and a focus on sustainability are positioning Britannia well for future growth, even as it navigates competitive market pressures and fluctuating raw material costs. Union Bank of India has truly outdone itself in FY 2023-24, achieving a remarkable total business of Rs 21.26 trillion, reflecting a solid growth of 10.31%. What's even more impressive is the net profit surge of 61.84%, reaching Rs 13,648 crore. This is a clear indicator of the bank's robust financial health. Asset quality is on the rise too, with gross NPAs down to 4.76%. This improvement showcases our commitment to maintaining a strong balance sheet. Our strategic investments in digital technology are paving the way for future growth, ensuring we stay competitive in a challenging economic landscape. With a solid capital base and a forward-looking approach, Union Bank is not just weathering the storm. We are positioning ourselves for exciting opportunities ahead. Macrotech Developers Limited, or LODA, is on an impressive trajectory for FY 23-24. We've achieved a remarkable revenue from operations of Rs 10,320 crore, marking an 8% year-on-year increase. Our pre-sales have soared to Rs 14,520 crore, showcasing the strong demand in the market. Profitability is also on the rise, with adjusted profit after tax climbing to Rs 1,610 crore, a significant 19% growth. What's more, we've successfully reduced our net debt from Rs 7,070 crore to Rs 3,010 crore, which greatly enhances our financial stability. Our commitment to sustainability is unwavering as we aim for net zero emissions by 2050. This is not just about growth, it's about building a sustainable future. Investors can feel confident in our direction and the robust foundation we're laying for continued success. Adani Energy Solutions Limited has reported impressive financial growth for FY 2023-24, with revenue from operations soaring to Rs 14,217 crore, marking a 17% increase. This robust performance is underpinned by a significant investment of Rs 17,000 crore in infrastructure, positioning the company for future expansion. They've also secured contracts for smart meters worth an impressive Rs 27,195 crore, highlighting their commitment to innovation. With improved debt metrics and a strong liquidity position, they are well equipped for growth, particularly in the renewable energy sector. However, it's crucial for investors to remain vigilant about potential regulatory and execution risks that could impact their competitive edge. Eicher Motors Limited has truly outdone itself in FY 2023-24, showcasing remarkable financial growth. Revenue from operations soared to Rs 16,535.78 crore, marking a solid 15% increase. But that's not all. Profit after tax skyrocketed by an impressive 37.31%, reaching Rs 4,001 crore. This isn't just about numbers. It reflects our unwavering commitment to innovation. With exciting new motorcycle launches and a strategic entry into the electric vehicle market, Eicher is not just keeping pace but setting the standard. This growth story is a testament to our dedication to enhancing market presence and delivering value to our investors. The future looks bright, and I'm thrilled to be part of this journey. Tata Consumer Products Limited has delivered impressive financial results for FY 23-24. Consolidated revenue reached Rs 15,206 crore, reflecting a solid 10% growth. The EBITDA saw a remarkable surge of 24%, climbing to Rs 2,323 crore, showcasing our operational efficiency. Even more encouraging, the group net profit increased by 29%, highlighting our strong profitability. Our commitment to innovation is evident, with over 100 new products launched, significantly enhancing our market presence. We're also prioritizing sustainability, aiming for leadership in the FMCG sector. Additionally, our expanded distribution network now reaches an impressive 4 million outlets, positioning us for continued growth and success. TVS Motor Company has showcased remarkable growth in FY 2023-24, reporting total revenue of Rs 31,925 crore, a 20.5% increase from the previous year. With a profit after tax of Rs 2,083 crore, up 40% and strong cash flow, the company is financially robust. Their two-wheeler sales surpassed 4 million, while electric vehicle sales soared by 101%. Strategic investments in EV technology and global expansion, coupled with a commitment to sustainability, position TVS as a leader in the automotive sector. Dr. Reddy's Laboratories Limited has shown significant financial growth for FY 23-24, with revenue reaching Rs 27,916 crores, marking a 14% increase year over year. The company demonstrates strong operational efficiency, reflected in an EBITDA margin of 29.7%. The profit after tax stands at Rs 7,187 crore, translating to an earnings per share of Rs 73.50. Investment in research and development is robust, with Rs 2,290 crore allocated, emphasizing innovation in biosimilars and complex generics. The company maintains a low net debt-to-equity ratio, ensuring financial flexibility. Strategic initiatives include partnerships with global firms. Adani Total Gas Limited has truly made a mark in FY 23-24, reporting a remarkable revenue of Rs 813 crore and a 23% surge in profit after tax. This growth is not just a number. It reflects their strategic pivot towards clean energy solutions, particularly in compressed biogas and LNG. By focusing on these sustainable alternatives, ATGL is positioning itself as a frontrunner in the city gas distribution sector. What's more impressive is their ability to maintain low debt levels, which is crucial for financial stability. However, as potential investors, it's essential to keep an eye on regulatory risks and the competitive landscape that could impact profitability. Despite these challenges, ATGL's commitment to sustainable solutions makes it a compelling option for those looking to invest in the future of energy. Cholamandalam Investment and Finance Company Limited has remarkable financial performance in FY 2023-24, with revenue soaring to Rs 19,680 crore, marking a 22% growth, and a net profit of Rs 3,173 crore, up 27%, showcasing robust profitability. Assets under management have surpassed Rs 53,618 crore, reflecting strong lending growth. The focus on digital transformation, with 98% of transactions now digital, enhances efficiency. Cholamandalam's diversified portfolio positions it as a solid investment opportunity. Zydus Life Sciences Limited has truly made waves in FY 2023-24, reporting a total income of Rs 19,550 crore, marking a solid 13% increase. The standout performer? Their U.S. formulations business, which surged by an impressive 17%. Even more striking is the net profit, which skyrocketed by 97%, reflecting their robust profitability. This growth is underpinned by a strong commitment to research and development, particularly in the biosimilar sector, positioning them for sustained success. However, as potential investors, it's crucial to weigh these achievements against the backdrop of regulatory challenges and fierce market competition. This balance will be key in assessing the long-term viability of this promising company. Havells India Limited has reported impressive financial results for FY 23-24, achieving total revenue of Rs 19,680 crore, marking a remarkable 22% growth. Their net profit surged to Rs 504 crore, translating to an earnings per share of Rs 23.15. While there has been some margin pressure, the company remains committed to its shareholders, declaring a total dividend of Rs 9.0 per share. Strategic expansions in smart home solutions and a strong focus on sustainability initiatives position Havells favorably for future growth. However, it's essential for investors to stay vigilant regarding competitive pressures and fluctuations in input costs. Overall, Havells is navigating the market landscape effectively, showcasing resilience and a forward-thinking approach. Dabur India Limited's FY 2023-24 report is nothing short of remarkable. We've achieved a consolidated revenue of Rs 12,404 crore and a net profit of Rs 1,543 crore, reflecting our robust growth trajectory. Our international business is thriving, contributing Rs 3,046 crore, which underscores our global presence and strength. Sustainability is at the heart of our strategy. We're committed to achieving net zero emissions by FY 2045 and have already recycled over 40,000 MT of plastic waste. This is not just about numbers, it's about making a positive impact. We're also expanding our footprint with 14 new product launches and reaching out to 122,000 villages in rural markets. Hero MotoCorp is on an incredible journey of growth in FY 23-24, achieving a remarkable total income of Rs 37,456 crore, marking an 11% increase. Our EBITDA has surged by 32%, driving a net profit of Rs 3,968 crore, an impressive 36% growth that underscores our resilience and market leadership. With a commanding 30.9% market share, we're not just participants in the industry, we're pioneers. Our commitment to electric mobility shines through with the Vita electric range and our zero waste initiatives, positioning us for a sustainable future. Strategic partnerships are fueling our innovation, ensuring we stay ahead of the curve. For investors, our consistent dividends reflect our dedication to delivering value. Shree Cement Limited is on an impressive growth trajectory in FY 23-24, with revenues soaring to Rs 19,586 crore, marking a remarkable 16% increase. Our EBITDA has surged by an astonishing 46%, reaching Rs 4,925 crore, while net profit after tax stands strong at Rs 2,468 crore. We're proud to maintain a cash-positive position and a robust market cap of Rs 92,741 crore. With a cement production capacity of 53.4 MTPA, soon to expand to 56.4 MTPA, we're not just growing. We're leading the industry in sustainability, with 55.9% of our energy coming from green sources. Our strong dividend payout reflects our confidence in the future, as we embark on ambitious plans for digital transformation and expansion into ready-mix concrete. Mankind Pharma Limited has truly outdone itself in FY 2023-24, achieving a remarkable total revenue of over 10,135 crore, an impressive 18% increase from last year. Our EBITDA has surged to over 2,550 crore, reflecting a phenomenal 33% rise, while profit after tax has soared to over 1,942 crore, marking a staggering 48% growth. This robust performance is backed by a strong balance sheet and net cash of Rs 260 crore, positioning us perfectly for future investments. We're strategically expanding our respiratory and cardiac portfolios, all while staying committed to sustainability. With these solid foundations, Mankind is not just growing, we're thriving and ready to seize new opportunities. Bajaj Holdings and Investment Limited has truly outperformed expectations in FY 2023-24. Total income skyrocketed to Rs 3,175.69 crore, a significant leap from Rs 1,937.01 crore. This impressive growth is mirrored in our profit before tax, which reached Rs 3,2082 crore, showcasing our robust operational performance. We're also pleased to announce an interim dividend of Rs 110 per share, reflecting our dedication to rewarding our shareholders. With substantial investments in Bajaj Auto and Bajaj Finserv, we maintain a cash-positive status and a debt-free balance sheet, which not only enhances our stability, but also positions us strongly for future opportunities. This is a testament to our strategic vision and commitment to sustainable growth. Divi's Laboratories Limited has demonstrated a robust financial performance in FY 23-24, reporting a total income of Rs 8,002 crore. While the profit after tax saw a dip to Rs 1,576 crore, the company remains debt-free, underscoring its financial stability. Notably, 52% of its revenue comes from Europe, highlighting its strong global presence and export capabilities. The commitment to sustainability is commendable, with significant reductions in greenhouse gas emissions. However, challenges persist, particularly with shrinking profit margins and reliance on specific markets. Overall, Divi's Laboratories is strategically positioned for future growth, making it an intriguing prospect for investors. Apollo Hospitals Enterprise Limited has truly set the stage for remarkable growth, reporting a total income of Rs 19,680 crore for FY 2023-24, marking an impressive 22% increase. The improved EBITDA and a solid 20% return on capital employed highlight the company's operational efficiency and profitability. What's more, the digital platform Apollo 24/7 has engaged over 33 million users, significantly enhancing healthcare accessibility across the nation. With a strong commitment to sustainability and substantial capital investments, Apollo is well positioned for continued success. However, as potential investors, it's wise to keep an eye on regulatory changes and market competition. The future looks bright, but staying informed is key. NHPC Limited's FY 2023-24 report shows a total income of 10,024.99 crore, a slight dip from last year. While profit after tax has decreased to R3,143.94 crore, the company continues to demonstrate resilience, generating an impressive 21,679 million units of power. NHPC's commitment to renewable energy and strategic projects positions it well for future growth. Investors should appreciate its solid financial standing and dedication to sustainability. However, it's crucial to remain vigilant about potential risks, including regulatory changes and challenges in project execution. Balancing these factors will be key for anyone looking to invest in NHPC's promising journey ahead. Shriram Finance Limited has showcased remarkable growth in FY 23-24, with total income soaring to Rs 34,998 crore, up from Rs 29,803 crore. Net interest income reached Rs 19,687 crore, fueling a PAT of Rs 7,990 crore, a 20% increase. With assets under management at Rs 24,062 crore and improved asset quality, the company is positioned for sustained success. Digital initiatives like the Shriram One Super App enhance customer experience, while a commitment to sustainability focuses on electric vehicle financing. Bosch Limited's performance for FY 2023-24 is nothing short of remarkable. With total revenue soaring to Rs 16,727 crore, we've achieved a robust 12% growth. Even more impressive is our profit before tax, which surged by 24.2%, showcasing the strength of our core operations. Our commitment to innovation shines through as we invest in cutting-edge digital solutions and sustainability initiatives, proudly achieving carbon neutrality. While we navigate global economic uncertainties and regulatory changes, our focus remains on leveraging our strengths to drive future growth. This is an exciting time for Bosch, and I'm thrilled about the journey ahead. Torrent Pharmaceuticals Limited showcased impressive financial growth in FY 2023-24, with total revenue reaching Rs 10,728 crore, a 12% increase from the previous year. Operating EBITDA grew by 19%, and profit after tax surged 33%, highlighting strong profitability. The company's strategic focus on product expansion and sustainability positions it for future success. IDBI Bank Limited has delivered impressive results for FY 2023-24, with net profits skyrocketing to Rs 5,634 crore, an astonishing 55% increase. This growth is mirrored in their total business, which has reached Rs 4.66 lakh crore, reflecting a robust 12% rise. The bank's improved return metrics highlight its operational efficiency, making it an attractive option for investors. Additionally, a solid capital position and strategic digital initiatives further enhance its appeal in the market. However, it's crucial for potential investors to stay vigilant about regulatory challenges and competitive pressures that could impact future performance. Overall, IDBI Bank is positioning itself strongly, but awareness of the broader landscape is essential for informed investment decisions. ICICI Prudential Life Insurance Company stands out with its robust financial health, showcasing impressive premium income growth and a stable net profit. Their high persistency ratios are a testament to excellent customer retention, which is crucial in today's competitive landscape. What's particularly exciting is their commitment to digital transformation, enhancing customer engagement and making services more accessible. Coupled with a diversified investment strategy, they're well positioned for long-term returns. However, as potential investors, it's essential to remain vigilant about regulatory and competitive challenges that could impact performance. JSW Energy Limited has truly demonstrated impressive growth in FY 2023-24, with total revenue soaring to Rs 11,941 crore, marking a 10% increase, and an EBITDA that has skyrocketed by 53% to Rs 5,837 crore. The company is clearly on a strong trajectory. Their commitment to renewable energy is not just a buzzword. They're targeting a robust 20 GW capacity by 2030. This ambitious goal is complemented by significant investments in energy storage and green hydrogen technologies, positioning them as innovators in the sector. However, while the outlook is bright, investors should remain vigilant about potential regulatory changes and the competitive landscape. Jindal Steel and Power Limited has truly demonstrated remarkable financial strength in FY 2023-24, with gross revenues down 115 crore and a profit after tax of Rs 5,943 crore. The numbers speak volumes. Their operational efficiency is highlighted by an impressive EBITDA of Rs 10,131 crore. What's particularly noteworthy is their commitment to sustainability and digital transformation, aiming for net zero carbon by 2047 while expanding their steel capacity. For investors, the manageable debt levels and robust cash flow are encouraging signs. However, it's essential to remain vigilant about potential market volatility and regulatory risks. In FY 2023-24, the Indian Hotels Company Limited demonstrated remarkable growth, achieving consolidated revenue of Rs 6,952 crore, marking a 17% increase from the previous year. This impressive performance is underscored by a 20% rise in EBITDA, showcasing our strong operational capabilities. What sets IHCL apart is our robust financial health. No net debt and over Rs 2,200 crore in cash reserves. This positions us strategically for future expansion and sustainability initiatives. As we look ahead, our focus remains on leveraging these strengths to capitalize on emerging opportunities in the hospitality sector. BHEL's FY 2023-24 report shows a revenue of Rs 22,921 crore, reflecting a steady growth from last year. While we see a slight dip in EBITDA and PAT due to accounting changes, the order book has surged to an impressive Rs 131,598 crore, indicating robust demand in the market. The company's strategic focus on renewable energy and digital transformation positions it well for future growth. However, investors should remain vigilant about regulatory risks and increasing market competition. Balancing these factors is crucial for making informed investment decisions in this evolving landscape. Cummins India Limited's FY 2023-24 report is nothing short of impressive. Revenue has surged to an astounding Rs 9,958.60 crore, marking a robust 16% increase. Even more remarkable is the profit after tax, which has soared by 40% to Rs 1,720.58 crore. This growth isn't just a number. It reflects a strong balance sheet and a commitment to sustainability that sets Cummins apart. With no significant debt, the company is in a prime position to capitalize on future opportunities. For investors looking for a solid and promising venture, Cummins is clearly a compelling choice. The future looks bright, and I'm excited to see where this journey takes us. ICICI Lombard General Insurance Company Limited has impressive financial growth in FY 2024. Net premium earned rose to Rs 168.66 billion, reflecting a 13.8% increase. Profit after tax also grew by 11%, reaching Rs 19.19 billion. Investment income surged 19.6%, enhancing overall stability. However, operating profit saw a decline, raising concerns. Despite this, the total assets climbed to Rs 633.09 billion, indicating robust expansion. The company declared a Rs 11 dividend per share, offering value to investors. CG Power and Industrial Solutions Limited has truly outdone itself in FY 2023-24. Standalone revenue surged to an impressive Rs 7,710 crores, marking a remarkable 16% increase. Even more exciting, profit before tax grew by 24%, showcasing their improved margins. With a debt-free status and a robust order book of R6,276 crores, CG Power is not just stable, but primed for future expansion. Their strategic move into semiconductor manufacturing opens up new avenues for growth. While there are always risks with new ventures, the company's strong financial health and clear growth strategy make it a compelling investment opportunity. This is a moment to watch closely. Max Healthcare Institute Limited has remarkable revenue growth in FY 23 to 24, driven by improved occupancy rates and higher average revenue per occupied bed. Stable profit margin and a recommended dividend of Rs 1.50 per share, the company showcases its commitment to shareholder value. The balance sheet remains robust, reflecting strategic investments in healthcare infrastructure. Expansion efforts and a focus on specialized services enhance market positioning, while digital initiatives aim to elevate patient care. Solar Industries India Limited has showcased impressive financial highlights for FY 2023 to 24. Revenue reached Rs 6,070 crore, while profit after tax grew to Rs 875 crore. With a solid net worth of Rs 3,306 crore, the company maintains a low debt profile. Proposed dividends of Rs 8.5 per share reflect shareholder value. Strategic investments in R&D and manufacturing expansion position Solar Industries favorably in the defense sector, bolstered by a robust order book of Rs 2,600 crore. United Spirits Limited reported impressive financial performance for FY 2023-24, with consolidated net sales reaching Rs 11,321 crore, a 14.2% increase. The focus on premiumization is evident as the prestige and above segment grew by 11.9%, generating substantial brand loyalty. Profit after tax stood at Rs 1,312 crore, reflecting a healthy 12.3% margin. Investors should note the significant sustainability initiatives, achieving 98.6% renewable energy usage. Growth prospects are strong. Motherson Sumi Wiring India Limited has truly excelled in FY 2023-24, reporting a remarkable revenue of Rs 8,328 crore, which is an impressive 18% increase year-on-year. The company's profit after tax stands at Rs 638 crore, showcasing its robust profitability. What's even more striking is the return on capital employed at 48%, indicating exceptional efficiency in resource utilization. Being debt-free not only reflects strong cash flow, but also allows for a generous 55% dividend payout to shareholders. MSWIL continues to lead the wiring harness market while strategically venturing into the electric vehicle segment, positioning itself for future growth. Indus Towers Limited has demonstrated impressive financial growth in FY 23-24. Total revenue reached Rs 86,006 million, marking a modest increase of 0.77%. However, the real highlight is the EBITDA, which surged to Rs 146,939 million, a remarkable 50% rise. Profit after tax nearly tripled, soaring to Rs 60,362 million. This growth is underpinned by a substantial investment of Rs 96,975 million in network expansion, adding around 27,000 macro towers. With a low debt-to-equity ratio of just 0.16, Indus Towers showcases strong financial stability. As a key player in the 5G rollout, the company is also committed to sustainability, having installed over 14,000 solar sites. In FY 23 to 24, IRCTC financial results soaring a remarkable 20%, 638.2%. Profit after tax reflects a clear of Rs 74,396 formidable key growth driving ticketing and rail near, with notable advancements in e-catering and digital ticketing enhancing customer experience. Colgate-Palmolive, India. Limited has delivered impressive financial results for FY 23-24. Net sales reached R5,644 crore, marking an 8.8% increase from last year. The EBITDA surged by 22.9% to Rs1,901 crore, while profit after tax rose by 20.1% to Rs1,320 crore. With a gross margin of 69.5%, the company showcases strong profitability. They've declared a total dividend of Rs58 per share, reflecting their commitment to shareholder returns. Innovations like Colgate Max Fresh with Ultra Freeze technology highlight their dedication to product development. Plus, their sustainability efforts, including the transition to recyclable tubes, demonstrate a forward-thinking approach. Polycab India Limited has reported growth for FY 23-24. Revenues surged to Rs 180,394 million, marking a 28% rise. EBITDA grew by 35% to Rs 24,918 million, and PAT increased by 41% to Rs 18,029 million. Strong EBITDA margin of 13.8% and dividend payout of 25.4%. Net cash position of Rs 21,408 million and Rs 8,580 million in capital expenditure for future expansion. Controls a 25-26% share in the wires and cables market and focuses on sustainability, recycling 87 million liters of water and using renewable energy. Lupin Limited's annual report for the year ending March 31st, 2024 showcases remarkable financial growth. Total income surged to Rs 16,384 crore, marking a solid 9% increase. Even more impressive, EBITDA soared to Rs 2,737 crore, reflecting a robust 20% rise. Our net profit jumped to Rs 1,068 crore, a testament to our operational efficiency and strategic initiatives. In a strong commitment to our shareholders, we proposed an Rs8 dividend per share. Additionally, with Rs 1,566 crore invested in research and development, we are doubling down on our focus in pharmaceuticals and specialty drugs. This investment not only enhances our product offerings, but also strengthens our global footprint, particularly in the US and Europe. Oracle Financial Services Software Limited has reported impressive financial results for FY 2023-24. Their consolidated revenue has reached Rs 63,129.61 million, marking a robust 12% increase from the previous year. Even more noteworthy is their net profit, which stands at Rs 22,193.62 million, reflecting a remarkable 23% growth. This strong performance underscores the effectiveness of their strategic focus on cloud solutions and innovation, driving both profitability and shareholder returns. Additionally, the company has declared an interim dividend of Rs 240 per share, demonstrating a solid commitment to rewarding investors. SRF Limited's FY 2023-24 report paints a challenging picture. Revenue has dipped to Rs 13,139 crore, reflecting a 12% decline driven by market pressures. The EBITDA has also taken a hit, falling 26%, while profit after tax has plummeted by 38%. However, it's not all bleak. Segments like technical textiles are showing resilience amidst these challenges. SRF's commitment to sustainability and its global reach remain crucial assets. As investors, it's essential to weigh these risks against the potential for growth in a complex landscape. The question is, can SRF navigate these turbulent waters and emerge stronger? Tube Investments of India Limited has shown solid financial health for FY 23-24, with revenues reaching Rs 7,611 crore, up 5% from last year. Profit before tax also saw a slight rise to Rs 970 crore. Notably, their return on invested capital remains robust at 54%. Free cash flow decreased to Rs 376 crore due to increased capital expenditures. It declared a total dividend of Rs 350 per share, reflecting shareholder value. Engineering division excelled, while the mobility division faced revenue challenges. In FY 2023-24, Indian Bank has truly outdone itself, achieving a remarkable total business of Rs 12.22 lakh crore. Can you believe it? Gross advances have surged by 13%, and our net profit has skyrocketed by an impressive 53%, reaching Rs 8,063 crore. This isn't just growth, it's a testament to our robust strategy and commitment to excellence. What's even more exciting is our improved asset quality, with gross NPA dropping to 3.95%. This reflects our dedication to maintaining a healthy balance sheet. And let's not forget about innovation. 87% of our transactions are now digital, showcasing our commitment to staying ahead in the tech-driven banking landscape. Burger Paints India Limited has delivered impressive financial results for FY 2023-24. Revenue surged to Rs 11,199 crore, marking a 6% increase. Even more remarkable, EBITDA soared by 25% to reach Rs 1,925 crore, while profit after tax jumped 36% to Rs 1,170 crore. This strong performance is further underscored by the declaration of a Rs 6.50 dividend per share, showcasing the company's commitment to enhancing shareholder value. In terms of market expansion, Burger launched 43 new products and established over 14,500 new retail touchpoints, significantly broadening its reach. Sustainability remains a core focus, with initiatives aimed at promoting low VOC products and renewable energy. Yes Bank Limited has demonstrated impressive growth in FY 2023-24, with a total income reaching Rs 13,209 crore, marking a 13.8% increase year-on-year. What's even more striking is the net profit, which surged by 74.4% to Rs 1,251 crore. This remarkable performance is underpinned by a significant improvement in asset quality, as evidenced by the GNPA ratio dropping to just 1.7%. The bank's strategic focus on digital initiatives and its commitment to sustainability are not only enhancing operational efficiency, but also positioning it as an attractive option for investors. While there are potential macroeconomic risks to consider, Yes Bank's robust fundamentals and forward-thinking strategies make it a compelling investment opportunity. Torrent Power Limited's FY 2023-24 report highlights a robust revenue of Rs 27,183 crore, reflecting a solid 5.8% growth. This impressive performance is underscored by a remarkable 27% surge in profit after tax, showcasing the company's resilience in a competitive market. With a strategic focus on renewable energy, Torrent Power has invested Rs 3,855 crore in capital expenditures, positioning itself for sustainable growth. Their balanced debt structure not only supports ambitious expansion plans, but also enhances financial stability. For investors, this combination of growth, profitability, and commitment to renewable energy makes Torrent Power a compelling investment opportunity. SBI Cards and Payment Services Limited has released its annual report for FY 2023-24, and there are some key financial highlights worth noting. They've declared an interim dividend of Rs 2.50 per share, which is a positive signal for investors looking for returns. However, what stands out is the projected related party transactions with the State Bank of India, estimated at a staggering Rs 28,000 crore. This raises important questions about compliance and transparency. As investors, understanding these financial dynamics is crucial for making informed decisions. The interplay between dividends and related party transactions could significantly impact the company's future performance, so it's essential to keep a close eye on these developments. Marico Limited's FY 2023-24 report is truly impressive. Revenue surged to Rs 11,199 crore, marking a solid 6% increase. Even more remarkable is the EBITDA, which climbed 25% to Rs 1,925 crore. Profit after tax soared by 36%, reaching Rs 1,170 crore. This strong financial performance is further highlighted by an interim dividend of Rs 9.50 per share, reflecting their commitment to shareholders. With an earnings per share of Rs 11.5 and a return on net worth of 38.8%, Marico demonstrates exceptional management efficiency. Their strategic focus on digital engagement and sustainability is noteworthy, showcasing significant water savings and a commendable 67.40% renewable energy usage. Aurobindo Pharma Limited's FY 2023-24 report showcases remarkable financial growth. Revenue has surged to Rs 29,002 crore, marking a 17% increase. Even more impressive, profit after tax has soared by 64%, reaching Rs 3,169 crore. This robust performance is backed by a strong balance sheet and minimal net debt, positioning the company favorably in the market. Investments in research and development, particularly in biosimilars, indicate a commitment to future growth. However, it's essential to remain vigilant about regulatory risks in key markets. Overall, Aurobindo Pharma is not just thriving today, it's strategically poised for sustained success in the coming years. UCO Bank's annual report for FY 2023-24 presents a mixed bag of financial highlights. Operating profit has seen a commendable rise to Rs 4,576 crore, marking a 5.43% increase. However, it's important to note that net profit has taken a hit, declining by 11.2%, primarily due to higher provisions. On a positive note, the bank has made strides in asset quality, with gross NPA decreasing to 5.53%. This improvement, coupled with robust digital initiatives and strategic lending, positions UCO Bank for future growth. Yet investors should remain cautious considering the risks associated with net profit declines and broader macroeconomic sensitivities. The Bank of India's annual report for FY 2023-24 is truly impressive. We've seen a remarkable net profit surge of 57%, reaching Rs 6,318 crore. This growth is a testament to our robust revenue performance, primarily driven by enhanced asset quality. Our capital adequacy ratio stands strong at 16.96%, ensuring stability for our stakeholders. Moreover, we're distributing a 28% dividend, reflecting our commitment to returning value to investors. One of the standout achievements is the reduction in our gross NPA ratio to 4.98%, showcasing our effective asset management strategies. Additionally, advances have grown by 13.52%, fueled by our strategic investments in digital initiatives. This solid performance positions us well for future growth and reinforces our commitment to delivering value. Persistent Systems Limited has achieved remarkable financial milestones for FY 2023-24, reporting a revenue of 1.186 billion, reflecting a robust growth of 14.5%. This impressive performance is further underscored by our profit after tax, which surged to Rs 10.9 billion, marking an 18.7% increase. Our commitment to delivering value to our stakeholders is evident in our decision to raise the total dividend to Rs 52 per share, up from Rs 50. These results not only highlight our strong financial health, but also reinforce our dedication to sustainable growth and shareholder returns. As we navigate the future, we remain focused on innovation and excellence, ensuring that we continue to create value for our investors and stakeholders alike. Muthoot Finance Limited has shown remarkable growth in FY 2023-24, largely fueled by its robust gold loan services. The company's decision to declare dividends underscores its dedication to rewarding shareholders. With strong asset quality and a commitment to prudent lending practices, Muthoot is not just expanding its branch network, but also investing heavily in digital initiatives to elevate the customer experience. While the focus on gold loans provides a solid foundation, it's crucial for investors to remain vigilant about potential risks, such as fluctuating gold prices and evolving regulatory landscapes. Staying informed is key to navigating this dynamic market. Alchem Laboratories Limited financial highlights for FY 23-24. Revenue of Rs 126,176 million. That's a 9.2% growth year-on-year. Profit after tax soared to Rs 17,958 million, an 82.5% increase. EBITDA margin improved to 17.7%, showing efficiency. Rs 40 dividend per share, reinforcing shareholder value. Its R&D investment of Rs 5,229 million focuses on biosimilars and generics, aligning with global healthcare trends. Indian market remains strong, contributing 68.4% of revenue, while non-US markets saw a remarkable 33.3% growth. PI Industries limited growth in FY 23-24, with revenue hitting Rs 6,235 crore and a profit after tax of Rs 992 crore. Their EBITDA margins reflect effective cost management. A Rs 4.5 dividend per share underscores their commitment to shareholders. Notably, Rs 300 crore was invested in R&D, enhancing their innovation in crop protection. Expansion efforts in Gujarat and Hyderabad bolster production capabilities. The company is focused on sustainability, aiming for reduced emissions and increased renewable energy use. MRF Limited's FY 2023-24 report showcases remarkable financial growth. Total income surged to Rs 24,186 crore, marking a 9.5% increase. Profit before tax soared to Rs 2,739 crore, while profit after tax reached Rs 241 crore. This impressive performance is further highlighted by a final dividend of Rs 194 per share, reflecting MRF's commitment to its shareholders. The company's strong export performance and efficient operations are commendable, as MRF continues to invest in technology and sustainability. However, it's essential for investors to remain vigilant regarding potential raw material price fluctuations and competitive pressures in the market. Balancing optimism with caution is key in navigating this dynamic landscape. Jindal Stainless Limited has demonstrated remarkable financial growth in FY 2023-24, with a consolidated revenue of Rs 38,562 crore. That's an impressive 8% increase from last year. Their EBITDA has surged by 31%, reaching Rs 4,704 crore, while profit after tax climbed 29% to Rs 2,693 crore. This robust performance is complemented by a stable debt-to-equity ratio of just 0.2, showcasing their strong capital management. Moreover, JSL is leading the charge in sustainability with India's first green hydrogen plant, significantly contributing to CO2 reductions. This commitment not only enhances their operational efficiency, but also positions them as a responsible player in the industry. Tata Communications Limited has reported a remarkable revenue growth of 21.9%, reaching Rs 20,969 crore for FY 2023-24. This is certainly a strong performance, particularly in the data segment, which alone contributed over Rs 17,000 crore. However, we must address the decline in profit after tax, which fell to Rs 968 crore from Rs 1,482 crore. This juxtaposition raises important questions about profitability trends amidst impressive revenue figures. The company's strategic acquisitions and emphasis on digital services signal a commitment to long-term growth potential, but investors should remain cautious. While the revenue surge is encouraging, the drop in profits suggests that operational efficiencies may need to be prioritized. General Insurance Corporation of India, or GIC Re, has showcased impressive financial performance for FY 2023-24. Gross premiums have surged to Rs 37,181.76 crore, a clear indicator of robust market demand. The profit after tax stands at Rs 6,497.30 crore, reflecting the company's stability and effective management strategies. Additionally, GIC Re's solvency ratio has improved to 3.25, signaling strong capital adequacy, which is crucial for investor confidence. However, it's important to note the increased underwriting losses, primarily driven by catastrophic events, which pose potential risks. This dual narrative of growth and caution is essential for investors to consider as they evaluate GIC Re's future prospects. L&T Technology Services, LTTS, growth in FY 23-24, reporting revenues of Rs 96,473 million, a 9.4% increase YOY. PAT of Rs 13,037 million, reflecting a 7.6% rise. It maintains an EBIT margin of 17.1%. Dividend of Rs 33 per share highlights a 41% payout ratio. Its strategic focus on mobility, sustainability, and high-tech segments positions it well in emerging markets. Investments in AI and digital technologies, alongside a global footprint with 22 design centers and 1,296 patents, signal innovation and commitment. Understanding differences between mutual funds and exchange-traded funds ETFs can really empower your investment choices. Mutual funds are purchased directly from the fund company and are traded at the end of the day. This means you won't see the price change throughout the day, which can be a bit limiting. On the other hand, ETFs trade like stocks, allowing you to buy and sell throughout the day, giving you more flexibility. When it comes to costs, mutual funds often come with higher fees and minimum investments, while ETFs typically offer lower expenses and greater accessibility. Plus, if tax efficiency is on your mind, ETFs usually manage capital gains better than mutual funds. If you value professional management and are okay with higher fees, mutual funds might be your go-to. But if you're looking for flexibility and lower costs, ETFs could be the smarter choice. Understanding these differences can help you make informed decisions that align with your investment goals. Hyundai Motor India Limited is set to launch its initial public offering on October 15, 2024. This is a significant opportunity, with up to 142 million equity shares available, all coming from its parent company, Hyundai Motor. As an investor, it's essential to dive into the prospectus and scrutinize the detailed risk factors outlined there. The shares will be listed on both the BSE and NSE, catering to various investor categories, which adds an interesting layer to the investment landscape. Remember, understanding the financial and operational details is crucial before making any decisions. This IPO could be a pivotal moment in the automotive sector, so stay informed and ready to act. India's tax and regulatory landscape for cryptocurrencies has seen some major shifts recently. In 2022, the government imposed a hefty 30% tax on gains from virtual digital assets. And here's the catch: no loss offsetting is allowed. So if you make a profit, be prepared to part with a significant chunk of it. Additionally, there's a 1% tax deducted at source, or TDS, on transactions exceeding Rs. 10,000. While trading in cryptocurrencies is legal, remember they aren't considered legal tender, meaning you can't use them for everyday transactions. On the horizon, the government is also exploring the introduction of a central bank digital currency, which could reshape the entire landscape. Staying informed is crucial, as these policies are likely to evolve further. Welcome to our overview of the Waaree Energies Limited Red Herring Prospectus. Waaree is a significant player in India's solar energy landscape, specializing in the manufacturing of solar modules and offering EPC services. Their upcoming IPO, set to kick off the bidding process on October 18, 2024, aims to boost production capacity and improve working capital. As investors, it's crucial to consider the potential risks, including market volatility and increasing competition in the sector. The prospectus provides a comprehensive look at Waaree's financial health, showcasing their management expertise and necessary legal disclosures. This is an exciting opportunity in a rapidly growing industry, but due diligence is essential to navigate the landscape effectively. Anlon Healthcare Limited, established in 2013, is making waves in the pharmaceutical sector, particularly with its focus on active pharmaceutical ingredients. Their upcoming IPO is set to raise funds through a fresh issue of 1.4 crore equity shares, which presents an intriguing opportunity for potential investors. The healthcare sector is on a growth trajectory, driven by increasing demand and innovation. However, it's crucial to dive deep into Anlon's financial performance, assess market risks, and understand their competitive positioning. Evaluating these factors will empower you to make informed investment decisions. As the healthcare landscape evolves, staying informed is your best strategy for navigating this promising yet complex market. In FY 2023-24, Steel Authority of India Limited achieved gross sales of Rs 1.04,545 crore, marking a modest 1% increase. This growth was fueled by higher sales volumes and favorable pricing. Notably, EBITDA soared to Rs 12,280 crore, up from Rs 9,379 crore, while net profit climbed to Rs 2,733 crore. However, total debt rose to Rs 36,315 crore, pushing the debt-equity ratio to 0.67. On a positive note, the company maintains a healthy interest coverage ratio of 2.64. With record crude steel production at 19.24 million tons, sales showcases robust growth. Yet it's essential to keep a close eye on that rising debt. Linda India Limited's annual report for FY 23-24 shows a robust total revenue of Rs 27,187 million, marking a solid 6.4% increase. The gases division led the charge with an impressive 10.2% growth, fueled by soaring demand in the market. While the project engineering division faced a slight decline, the overall EBITDA still rose by 7.2%, showcasing resilience in our operations. The company has declared a generous 120% dividend, reflecting our commitment to shareholder value. With a keen focus on digital transformation, Linda is set to enhance both operations and customer experience. Although we remain optimistic about India's economic outlook, we must stay vigilant regarding potential revenue pressures in certain divisions. Oberoi Realty Limited is showcasing a robust financial performance for FY 2023-24, with consolidated revenue climbing to an impressive Rs 4,49,578.53 lakh, marking a solid 7.23% growth. While standalone revenue faced a setback, the overall profit before tax surged by 11.32%. It's intriguing to see that despite a 30.80% drop in standalone profits, the company remains undeterred. Their commitment to expansion and the increase in dividends reflect a strong belief in long-term growth. This resilience and strategic focus make Oberoi Realty a compelling option for investors looking for stability and potential in a dynamic market. The future looks bright. Supreme Industries Limited has truly showcased remarkable financial strength, reporting a total income of Rs 10,251.98 crore for FY 23-24, a notable increase from Rs 9,283.35 crore. Their profit before tax stands at Rs 1,351.83 crore, and with a generous dividend of 1,500%, they are clearly prioritizing shareholder returns. What's particularly impressive is their commitment to sustainability, especially their initiatives towards renewable energy, which positions them well for future growth. However, potential investors should remain vigilant about the risks associated with fluctuating plastic demand and evolving regulatory landscapes. Balancing these factors is essential for making informed investment decisions. At IDFC First Bank's AGM for FY 2023-24, several key insights emerged that investors should note. While revenue and profit figures were not disclosed, the absence of a dividend signals a strategic focus on internal growth. This suggests that the bank is prioritizing reinvestment over immediate shareholder returns, which could bode well for long-term value. The appointment of experienced directors and auditors underscores a commitment to robust governance, ensuring that the bank is well positioned to navigate future challenges. Furthermore, the proposed Rs 5,000 crore debt issuance indicates ambitious plans for expansion, hinting at potential new projects or initiatives on the horizon. In FY 2023-24, Rail Vikas Nigam Limited achieved a remarkable turnover of Rs 21,732.58 crore, reflecting a solid 7.15% growth from the previous year. Profit before tax soared to Rs 1,939.40 crore, marking an impressive increase of nearly 18%. This robust performance is further underscored by a net worth rise of over 21%, showcasing the company's strong financial health. The board has proposed a dividend of Rs 2.11 per share, reaffirming its commitment to shareholders. With significant project execution, including 666 km of railway sections and 810 km of electrification, RVNL is not just maintaining, but expanding its infrastructure footprint. This growth trajectory positions RVNL as a key player in the railway sector, making it an attractive prospect for investors. Bharat Forge Limited has truly set a benchmark in financial performance. 2024, achieving consolidated revenues of Rs 15,682 crore. A standout highlight is the defense sector, where revenues surged fourfold to 1 crore, underscoring our strategic expansion in this critical area. Order wins totaling Rs 6,300 crore, of which Rs 4,494 crore comes from defense. Our growth prospects are exceptionally strong. Moreover, our executable order book currently stands at Rs 5,190 crore, providing robust earnings visibility for the next 3 years. This positions Bharat Forge not just as a leader, but as a formidable player in the defense landscape, ensuring sustained value for our investors. JSW Infrastructure Limited is on an impressive growth trajectory, showcasing a total income of Rs 1,032 crore, marking a remarkable 20% increase year-on-year. The net profit has surged by 55% to Rs 161 crore, reflecting our robust financial health. We've made significant strides in reducing our net debt from Rs 216 crore to a mere Rs 65 crore, positioning us for a strong future. As India's second largest private port operator, we currently manage 170 MTPA and have ambitious plans to expand to 400 MTPA by FY 2030. Our third-party cargo segment has also seen a phenomenal growth of 36%. Plus, our recent IPO raised Rs 2,800 crore, further boosting investor confidence. The Central Bank of India's Integrated Annual Report for 2023-24 showcases remarkable financial performance. With a net profit soaring to Rs 2,549 crores, that's a staggering 61.13% increase year-on-year. Total business growth stands at an impressive 10.34%. This bank is not just surviving, it's thriving. What's more, the improved asset quality and reduced NPAs signal a robust financial health, making it an attractive option for investors. The bank's commitment to digital transformation and sustainability further enhances its appeal, positioning it well for future growth. With these strong fundamentals, the Central Bank of India is definitely a contender worth considering in today's investment landscape. Welcome to our overview of the 16th Annual General Meeting of PB Fintech Limited, scheduled for September 27, 2024. Key highlights include the adoption of audited financial statements for the year ending March 31, 2024, and the reappointment of Mr. Alok Bansal as a director. Additionally, Mr. Dhruv Shringi is proposed as an independent director for 5 years. The meeting will also discuss the new employee stock option scheme, aiming to incentivize and retain talent. The Phoenix Mills Limited's 119th Annual General Meeting reveals remarkable financial performance for FY 2023-24. With operating revenues soaring to Rs 3,978 crores and a net profit of Rs 1,333 crores, our financial health is robust. Retail consumption has exceeded Rs 11,000 crores, reflecting a strong market demand. Our strategic expansion continues with the Phoenix Mall of the Millennium in Pune, enhancing our footprint. Additionally, we are committed to sustainability, sourcing 23% of our energy from renewable sources. This positions Phoenix Mills not just as a market player, but as a leader committed to growth and responsible business practices. Welcome to our overview of the 43rd Annual General Meeting of Thermax Limited, taking place on August 1, 2024. This year, we're excited to announce a proposed dividend of Rs 12 per share, reflecting our commitment to delivering value to our investors. We'll also be discussing the reappointments of key directors, ensuring strong leadership as we navigate the future. A significant focus will be on sustainability, as Thermax aims to enhance its commitment to renewable energy and innovative water treatment solutions. Our goal is to drive growth while prioritizing environmental responsibility, making us a forward-thinking choice for investors looking to make an impact. In FY 2023-24, Ashok Leyland achieved remarkable financial growth, with sales revenue reaching RA 38,367 crores, marking a solid 6% increase. Our EBITDA surged to RA 4,607 crores, a staggering 57% rise, showcasing our operational excellence. We recorded a net profit of Rs 2,618 crores, reinforcing our market leadership in the bus segment. Despite global challenges, our international sales thrived, demonstrating resilience and adaptability. We're also committed to sustainability, investing in green mobility solutions like electric buses and hydrogen trucks, aligning with our ambitious goals for 2030 and 2048. GMR Airports Infrastructure Limited has truly outdone itself in FY 2023-24, reporting a remarkable revenue of Rs 754.56 crores, a staggering 31.18% increase from last year. This growth is driven by a surge in air traffic and our strategic diversification of revenue streams. While we acknowledge the net loss of Rs 27.50 crores, it's important to recognize the ongoing investments in our infrastructure and the commitment to sustainability. Achieving net zero certification for Delhi Airport is a significant milestone, showcasing our dedication to a greener future. Despite the challenges of rising finance costs, our expansion plans are robust, positioning us for long-term success. Tata Elxsi Limited's integrated annual report for 2023-24 showcases remarkable financial growth, with revenues soaring to RI 3,552.1 crores, marking a solid 13% increase. Profit before tax has also seen a significant rise, reaching R 1,248.7 crores. What sets Tata Elxsi apart is its commitment to sustainability, with a bold goal of achieving carbon neutrality by 2030. The company is not just focused on the present, it's expanding its global footprint and driving innovation in automotive technologies. This combination of strong financial performance and a forward-thinking approach makes Tata Elxsi a compelling investment opportunity for those looking to align with a sustainable future while capitalizing on growth. Patanjali Foods Limited has reported a total income of R 31,962 crores for FY 2023-24, reflecting modest growth in a competitive market. Notably, the FMCG segment has surged to account for 30% of total revenue, showcasing the company's strategic shift towards diverse product offerings. Edible oils remain the cornerstone of their business, contributing Rs 22,038 crores. However, net profit saw a slight dip to Rs 765 crores, a point of concern for some investors. Despite this, Patanjali emphasizes sustainability and product expansion, positioning itself for future growth. This focus not only aligns with consumer trends, but also enhances their competitive edge in the FMCG landscape. Investors should keep a close eye on how these strategies unfold in the coming quarters. Buying a Rolls-Royce is more than just acquiring a vehicle. It's an affirmation of your journey, a tribute to your accomplishments. Each model, whether it's the majestic Phantom or the adventurous Cullinan, is a masterpiece of bespoke craftsmanship, tailored to reflect your unique style. The moment you slide into the sumptuous leather seats, you're enveloped in a world where luxury knows no bounds. The innovative engineering ensures a ride that is as smooth as it is powerful, a testament to a legacy that has stood the test of time. Owning a Rolls-Royce isn't merely about prestige. It's about celebrating the milestones that define you, embracing the extraordinary, and driving into a future that is as limitless as your ambition. Buying a Rolex transcends mere acquisition. It's a celebration of milestones. Each tick of the watch echoes the achievements, birthdays, or weddings that define our journey. It's not just about financial readiness. It's about recognizing the significance of this investment. A Rolex embodies unparalleled quality and craftsmanship, often becoming a treasured family heirloom passed down through generations. It's a symbol of success that not only enhances your confidence, but also opens doors for networking opportunities. Ultimately, it's about personal satisfaction, a well-deserved reward for your hard work and dedication. Wearing a Rolex is a reminder that you've earned every moment of success. Owning a Lursen yacht transcends mere acquisition. It's a statement of triumph. Each vessel is a masterpiece, meticulously crafted to reflect your unique journey and aspirations. Imagine celebrating a significant business milestone or a personal achievement aboard a yacht that embodies the pinnacle of luxury. With cutting-edge technology and unparalleled craftsmanship, every detail is tailored to your desires, ensuring an experience that redefines life at sea. This is not just about sailing, it's about creating a legacy, a sanctuary where every moment is infused with elegance and sophistication. A Lursen yacht is more than a vessel, it's the ultimate expression of your success. In FY 2023-24, SJVN Limited reported a total revenue of Rs 2,076.96 crores, a decline from Rs 3,282.50 crores. This drop reflects the challenges we faced this year, with profit after tax also decreasing to Rs 911.44 crores. However, amidst these hurdles, we generated an impressive 8,489 million units of power. This achievement underscores our unwavering commitment to renewable energy. Our expanding project portfolio and sustainability initiatives demonstrate our resilience and dedication to a greener future. We remain focused on overcoming obstacles and delivering value to our investors and shareholders. In FY 2023-24, Prestige Estates Projects Limited achieved an impressive revenue of Rs 94,253 million, a solid 7.5% increase that showcases our resilience and growth. Our EBITDA soared to Rs 40,466 million, reflecting a remarkable 59% growth, an indicator of our operational efficiency and strong market demand. Net profit before tax climbed to Rs 21,223 million, and earnings per share reached Rs 34.28, highlighting our commitment to delivering value to our shareholders. With record sales and a robust pipeline of ongoing projects, we are well positioned for a bright future. The momentum is undeniable, and I'm excited about what lies ahead for Prestige Estates and our investors. In FY 2023-24, ACC Limited reported a revenue of Rs 19,959 crores, reflecting a decrease from the previous year. However, the silver lining is the impressive surge in profit after tax, which reached Rs 337 crores, highlighting the company's operational efficiency. ACC is on an ambitious path, planning to expand its cement capacity to 140 MTPA by 2027-28. This growth is not just about numbers. It's coupled with a strong commitment to sustainability, aiming for net zero emissions by 2050. For investors, this dual focus on profitability and environmental responsibility positions ACC as a forward-thinking leader in the cement industry, ready to tackle future challenges while delivering value. In FY 2023-24, NICA achieved remarkable financial growth, with consolidated revenue hitting Rs 63,856 million, a 24% increase from last year. Our gross merchandise value soared to 124 billion, reflecting a robust 28% rise. EBITDA grew by an impressive 35%, and profit after tax surged by 90%. The beauty segment truly thrived, crossing the $1 billion mark, while our fashion division captured 20% of the premium women's market. On the international front, we launched NISA in the GCC, significantly enhancing our global footprint. These milestones not only demonstrate our strong market position, but also our commitment to delivering value to our investors. Adani Enterprises Limited is set to launch non-convertible debentures worth Rs 800 crore, and this could be a noteworthy opportunity for investors. With a credit rating of CARE A+ positive, these secured debentures offer a level of safety that's hard to overlook. Adani's robust presence in renewable energy and infrastructure further enhances their attractiveness. However, potential investors should tread carefully. The company faces legal and regulatory challenges that could impact its reputation and operations. It's essential to dive deep into the complete prospectus before making any decisions. Balancing opportunity with caution is key in today's financial landscape.
Welcome to our in-depth analysis of Southern Petrochemical Industries Corporation Limited, or SPIC, as we explore its investment prospects for the fiscal year 2023-24. In this video, we'll provide a comprehensive overview of SPIC's financial performance, potential risks, and opportunities, helping you make an informed investment decision. Let's begin with SPIC's strengths. Despite a challenging year, SPIC has maintained its commitment to shareholders by declaring a dividend of 1.50 per share. This move reflects a degree of financial resilience and a commitment to returning value to investors. Additionally, SPIC's strategic shift towards natural gas operations is a forward-thinking approach, aligning with global trends towards cleaner energy sources. However, it's crucial to acknowledge the weaknesses. SPIC reported a revenue drop to 1,962.66 crore and a profit after tax of 87.91 crore, both significantly lower than the previous year. These figures highlight the financial hurdles a SPIC is currently facing, which potential investors should consider carefully. Now, let's explore the opportunities. The transition to natural gas, while challenging, presents a significant opportunity for SPIC to modernize its operations and potentially reduce costs in the long term. This shift could position SPIC favorably in the market as environmental regulations tighten and demand for sustainable practices increases. On the flip side, we must consider the threats. Production issues have been a persistent challenge, and the transition to natural gas operations introduces additional risks. These factors could impact SPIC's ability to meet production targets and maintain profitability in the short term. In conclusion, investing in SPIC requires a balanced perspective. While there are clear challenges, including financial performance and operational risks, there are also promising opportunities through strategic shifts and dividend declarations. As always, assess your investment goals and risk tolerance before making a decision. Thank you for joining us in this analysis. If you found this video helpful, please like and subscribe for more insights into the financial world. Stay informed and happy investing. Welcome to the annual report presentation of Geo Financial Services Limited for the fiscal year 2023-24. Today we embark on a journey through JFSL's remarkable achievements, strategic initiatives, and future aspirations, all underpinned by our unwavering vision to lead in digital financial services. At the heart of JFSL's success lies a robust financial performance. This year, we proudly report a consolidated profit after tax of 1,605 crore, with earnings per share reaching 2.53. Our strong capital base, with a net worth of 1,039,148 crore, positions us as one of the most capitalized financial service platforms globally. These figures not only reflect our financial health, but also our commitment to delivering value to our stakeholders. Strategic partnerships have been pivotal in our growth narrative. Our joint venture with BlackRock, Inc. marks a significant milestone in democratizing investment and wealth management services in India. This collaboration is set to unlock immense growth potential in the asset management sector, leveraging BlackRock's global expertise and JFSL's local insights. In our pursuit of innovation, JFSL adopts a digital-first approach, harnessing cutting-edge technology to offer seamless financial services. This strategy aligns perfectly with India's burgeoning digital economy, positioning us to capitalize on the vast opportunities it presents. As we look to the future, our market potential is vast and promising. JFSL is expanding its footprint across key sectors such as lending, payments, insurance, and wealth management. Our mission is to drive financial inclusion by offering accessible and affordable financial solutions, particularly targeting underserved markets in India. This focus not only broadens our reach, but also aligns with our vision of inclusive growth. However, navigating the financial services landscape is not without its challenges. The competitive market, with established players like HDFC, SBI, and ICICI, demands constant innovation and agility. Moreover, as a systemically important financial services company, we are subject to stringent regulatory requirements. These factors necessitate a proactive approach to risk management, ensuring that we remain resilient and adaptable. Despite these challenges, JFSL stands as a compelling investment opportunity. Our robust financials, strategic joint ventures, and clear focus on digital financial services underscore our potential for growth, particularly in the asset management and lending spaces. Our commitment to financial inclusion further enhances our appeal, promising substantial returns for our investors. In conclusion, JFSL's journey is one of visionary leadership, innovation, and growth. We are poised to redefine the financial services landscape in India, driven by our mission to empower every Indian with accessible financial solutions. As we move forward, we invite you to join us in this exciting journey, confident in our ability to deliver sustained value and growth. Thank you for your attention and continued support. Together, let's build a future where financial services are not just a privilege, but a right for all.
Investing in HUDCO could be a promising opportunity. Their latest revenue figures show a robust rise to Rs 7,784.29 crore, with a profit after tax of Rs 116.74 crore, an impressive indicator of solid growth. They've sanctioned loans totaling Rs 386.55 crore, which is a staggering 235% increase. This kind of expansion is noteworthy. Plus, with an 8IA rating, the risk seems relatively low. However, it's essential to keep an eye on their rising debt levels. As an investor, it's crucial to align this potential with your own investment goals. Balancing risk and reward is key to making informed decisions. TGV SRAAC Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue has dipped to Rs 1,545.96 crore, and net profit has taken a significant hit, falling to Rs 60.29 crore. While the company has declared a Rs1 dividend, the declining profitability raises red flags. On a brighter note, their expansion into chloromethanes and solar initiatives could signal future growth. However, the risks associated with these ventures cannot be overlooked. It's essential to assess your risk appetite carefully before making any investment decisions. Balancing potential rewards against these challenges will be key to navigating this landscape. Ashoka Buildcon Limited is at a pivotal moment, showcasing impressive growth through major projects like a $150 million solar power plant and significant highway expansions. Their recent win of a Rs 662.55 crore contract for a link road to Navi Mumbai International Airport highlights their potential in a booming infrastructure sector. With the Indian government's strong focus on renewable energy, Ashoka Buildcon is well positioned to capitalize on this momentum. While we await detailed financials, their consistent project wins signal a robust stability and growth trajectory. For investors, this is a company to watch closely as it navigates the evolving landscape of infrastructure development in India. Jio Financial Services Limited presents a compelling investment opportunity. With a profit after tax of Rs 1,605 crore and a robust net worth of Rs 139,148 crore, JFSL is making waves in the financial sector. Their strategic partnership with BlackRock aims to democratize wealth management in India, tapping into a rapidly growing market. What sets them apart is their digital-first approach, which enhances accessibility for underserved segments of the population. This positions JFSL not just as a financial player, but as a catalyst for change in wealth distribution. With strong fundamentals and significant growth potential, investing in JFSL could be a smart move in today's dynamic market. Gallant Ispat Limited, or GAL, has truly made waves in the financial landscape for FY 2023-24. With an impressive 23.8% increase in EBITDA and a staggering 62.5% rise in PAT, GAL is clearly on an upward trajectory. This growth is driven by the surging demand from infrastructure projects, positioning GIL as a key player in the steel sector. What sets GIL apart is its unwavering commitment to sustainability. The company prioritizes clean energy and adheres to robust ESG practices, ensuring that growth does not come at the expense of the environment. With ongoing investments and a positive outlook, GEAL presents a compelling opportunity for investors looking to capitalize on a company that not only excels financially, but also champions responsible business practices. Vodafone Idea Limited's FY 2023-24 report paints a nuanced picture for investors. Revenues have reached Rs 426,517 million, indicating slight growth. But the stark reality is that net losses have surged to Rs 312,184 million. This raises significant concerns, especially with debt now towering at Rs 276,298 million. The company is expanding its 4G services and gearing up for 5G, which is promising, yet the competitive landscape is fierce. Financial instability is a major red flag. As investors, we must tread carefully, weighing the potential of technological advancements against the backdrop of high debt and ongoing losses. This complex investment landscape demands a thorough evaluation before making any commitments. Investing in Southern Petrochemical Industries Corporation Limited requires a careful look at their recent performance. With revenue dropping to Rs 1,962.16 crore and profit after tax down to Rs 87.91 crore, the numbers raise some red flags. They did declare a Rs 150 dividend, which is a positive sign, but we must consider the underlying issues. Production challenges and a heavy reliance on natural gas could pose significant risks moving forward. However, there's a glimmer of hope. Potential efficiency improvements might stabilize their operations. As you weigh these factors, think about how they align with your investment goals. It's a balancing act between risk and reward, and every decision counts. Madhav Infra Projects Limited has encountered significant hurdles in FY 2023-24. Standalone revenues have plummeted to Rs 363.09 crore, while consolidated revenues are down to Rs 466.51 crore. This sharp decline in revenue is mirrored by a notable drop in profit after tax. In light of these challenges, the company has opted not to declare dividends, instead choosing to retain earnings to fuel future growth. With a CARE BBB credit rating, the risks are becoming increasingly apparent. Although MIPL boasts a diverse project portfolio, external economic factors pose a real threat to project execution. Investors should remain vigilant as we navigate this complex landscape. Hyundai Motor India Limited is on the brink of a significant milestone with its first initial public offering over 142 million equity shares. This move is backed by Hyundai Motor Company, a global automotive leader, which adds a layer of credibility. However, potential investors should tread carefully. The absence of an existing market means future price movements are uncertain and inherent risks are involved. On the upside, HMIL has established a robust presence in India's automotive sector and is making strides into the electric vehicle market. This expansion could position them favorably as the industry evolves. Balancing these factors will be crucial for anyone considering this investment opportunity. Lemon Tree Hotels Limited has demonstrated remarkable growth, with a 23% increase in revenue, now reaching 1,076.8 crore. Their profit after tax has surged by 29%, even as they continue to invest in renovations. The company is strategically expanding, targeting over 120 hotels by FY 25, all while emphasizing sustainability and inclusivity. However, it's important to note that high debt levels could pose risks. As the hospitality sector rebounds, Lemon Tree Hotels investment opportunity, yet potential risks in growth trajectory. Aluminium or now a thorough analysis of its 2020 will slightly lower. But here's the silver profit to this indicates resilience conditions, the export figures, showcasing its operational strength. However, we must remain cautious. The revenue decline and ongoing market volatility present notable risks. It's crucial to assess your investment strategy carefully, weighing these factors before making any decisions. Balancing potential rewards against risks is key in navigating this investment landscape. Shipping Corporation of India Land and Assets Limited has demonstrated remarkable financial growth, with revenues skyrocketing from a total 34 lakhs in 2021-2022 to an impressive 9894 lakhs in 2023-2024. While there was a dip in profits during 2022-2023, the rebound to Ras in 330 lakhs showcases effective cost management strategies. The company's valuable real estate assets and commitment to maritime training position it strategically for long-term growth. Additionally, the declared dividend of R0.66 per share reflects a strong commitment to returning value to shareholders. This trajectory not only highlights the company's resilience, but also its potential for sustained success in the maritime sector. Considering investing in Oil India Limited? Let's break it down. For the fiscal year 2023-24, we saw a slight dip in standalone revenue to Rs 24,514.28 crore, while consolidated revenue fell to Rs 37,646.48 crore. Profit after tax also took a hit, landing at Rs 5,551.85 crore for standalone operations. Despite these short-term revenue concerns, the company remains profitable. What's particularly interesting is their strong dividend payouts and a growing focus on renewable energy, which could signal long-term potential. While the immediate numbers might raise eyebrows, the strategic shift towards sustainability could position Oil India Limited favorably in the evolving energy landscape. Keep an eye on this one. NPR Finance Limited's latest annual report paints a complex picture. Revenue has dropped significantly from Rs 1,274.33 lakhs to Rs 946.61 lakhs, primarily due to a decline in income from share sales and the closure of its wind power segment. However, amidst this decline, the company has managed to turn a profit of Rs 108.63 lakhs, marking a notable recovery from last year's loss. This turnaround suggests that cost management strategies are taking effect. Yet, we must remain cautious. The loss of Rs 258.23 lakhs raises red flags about sustainable income. Investors should carefully consider these dynamics, as the declining operational revenue could signal potential challenges ahead. Investing in Saj Hotels Limited's IPO could be an intriguing opportunity, especially with the tourism sector bouncing back post-pandemic. Their operational resorts, like Saj on the Mountains and Saj by the Lake, seem poised to generate steady revenue from bookings and dining. However, it's essential to approach this with caution. The financial data available is limited, and without any prior stock performance to analyze, we're stepping into somewhat uncharted territory. They're offering 50,000 shares, but we must consider the risks involved. Market acceptance is uncertain, and economic fluctuations could impact their growth. While the potential is there, it's crucial to weigh the excitement against the reality of these risks before diving in. Investing in Divyadan Recycling Industries Limited presents an intriguing opportunity within the expanding recycling sector. The company specializes in recycled polyester staple fiber, a product that meets the rising demand for sustainable materials. While we lack specific revenue and profit after tax figures, the potential for growth in this eco-conscious market is significant. However, it's crucial to approach this investment with caution. The absence of detailed financial data and the inherent uncertainties of the market could pose risks. Therefore, a thorough evaluation of both the opportunities and challenges is essential before making any investment decisions. Manba Finance Limited presents a compelling opportunity in the expanding non-banking financial company sector. Their draft red herring prospectus reveals consistent growth in vehicle financing and personal loans, which is promising. As the market for personal mobility continues to grow, Manba is well positioned to capitalize on this trend. However, it's important to approach this first public offering with caution. Investors should be mindful of the inherent risks, including market volatility and the lack of historical trading data. Balancing the potential for growth with these risks is crucial for making informed investment decisions. Investing in KRN Heat Exchanger and Refrigeration Limited is a decision that requires careful thought. The company is positioned in a growing sector focused on energy efficiency, which is promising. However, the absence of detailed revenue and profit after tax data raises some red flags. This lack of transparency can make it challenging to gauge the company's true financial health. The upcoming IPO certainly presents potential opportunities, but we must remain cautious. Market volatility can significantly impact new offerings, and it's essential to weigh the risks against the potential rewards. Staying informed and analyzing the available data will be crucial as we navigate this investment landscape. Proceed with caution and ensure you have all the insights before making any decisions. Hyundai Motor India Limited has truly set a benchmark in the automotive sector with its remarkable growth trajectory. In just 9 months ending December 31, 2023, the company reported a staggering revenue from operations of Rs 21,579.11 million, largely fueled by robust vehicle sales. Looking at fiscal year 2023, total revenue soared to Rs 603,075.80 million, a significant leap from Rs 473,184.32 million in 2022. This impressive growth is a testament to Hyundai's strategic expansion and unwavering commitment to innovation. The strong demand for their vehicles underscores their focus on customer satisfaction, positioning them as a formidable player in the competitive automotive landscape. It's clear that Hyundai is not just keeping pace, but is actively shaping the future of the industry. Ola Electric Mobility Limited is truly making waves in the electric vehicle sector, and I couldn't be more excited about it. Their focus on eco-friendly transportation is not just a trend, it's a movement towards a sustainable future. While we may not have specific revenue figures from their draft red herring prospectus, the ambition to raise Rs 55,000 million through their IPO speaks volumes about their growth potential. The electric vehicle market is booming, and investing in Ola could be a golden opportunity for those who believe in the future of sustainable technologies. With their innovative approach and commitment to green mobility, Ola is positioning itself as a strong contender in this dynamic landscape. The future is electric, and Ola is leading the charge. Investing in Diffusion Engineers Limited requires a careful approach. While we lack specific revenue and profit after tax figures, the company operates in welding consumables and heavy engineering, suggesting a diverse revenue stream. Their recent IPO signals potential growth, particularly in the booming infrastructure sector. However, the absence of historical stock performance means we should tread cautiously. It's essential to analyze industry trends and wait for detailed financial data before making any commitments. Remember, informed decisions are key in navigating the investment landscape. Proceed with diligence and patience. Investing in Western Carriers, India Limited presents an intriguing opportunity. Their IPO is offering over 28 million shares at Rs 172 each, aiming to raise nearly Rs 5,000 million. This company operates in the rapidly growing logistics sector, providing a range of services that cater to diverse needs. However, it's essential to note that they lack a market history, which introduces potential volatility. While the promise of infrastructure developments is enticing, it's crucial to weigh these risks carefully. Are you ready to explore this opportunity, or will the uncertainty hold you back? The decision lies in balancing potential rewards against the inherent risks. Ola Electric Mobility Limited is set to launch its IPO, offering 808 million equity shares and aiming to raise around R6,145 crore. This move comes at a pivotal time in the electric vehicle sector, which is experiencing rapid growth, fueled by government incentives for green energy. While the potential for growth is substantial, it's crucial to consider the risks involved. The EV market is competitive, and stock volatility can be a concern for investors. If you believe in the future of electric vehicles and are prepared to navigate the inherent risks of an IPO, Ola could be a valuable addition to your investment portfolio. Just remember to keep a close eye on their financials after the listing to ensure it aligns with your investment strategy. Investing in Orient Technologies Limited could be an intriguing opportunity. They're offering over 10 million equity shares at Rs 206 each, aiming to raise funds for expansion in the rapidly growing IT infrastructure and cloud computing sector. This is an area that's booming, and their focus here is promising. However, it's essential to tread carefully. The lack of prior performance data raises some red flags, and the competitive landscape is fierce. While the potential for growth is enticing, it's crucial to conduct a thorough analysis before diving in. Balancing optimism with caution could be the key to making a smart investment decision. ECOS, India. Mobility and Hospitality Limited is set to launch an IPO of 18 million equity shares, aiming to raise R6,012 million. While the mobility sector is on the rebound post-pandemic, it's crucial to note that this offering primarily benefits existing shareholders rather than fueling new growth initiatives. As an investor, you need to weigh the potential gains from a recovering industry against the inherent risks of a first-time public offering. The market is buzzing with optimism, but remember, the IPO landscape can be unpredictable. Ensure your investment strategy aligns with your risk tolerance and long-term goals before diving in. Investing in Premier Energies. Limited IPO presents an intriguing opportunity in the solar energy sector. With an impressive offer size exceeding R28,000 million and a share price of R450, this company is well positioned to capitalize on the growing demand for renewable energy. Their robust manufacturing capabilities give them a competitive edge, but it's essential to consider the risks involved. Notably, a significant portion of the IPO shares is allocated to existing investors, which means that not all the funds raised will be directed towards growth initiatives. While the renewable energy market holds great promise, it is also characterized by volatility. As an investor, weighing these factors is crucial before diving in. Gala Precision Engineering Limited is set to offer 3,174,416 equity shares at Rs 529 each, aiming to raise around R1,679.27 million. This company operates in diverse sectors like automotive, construction, and renewable energy, showcasing significant growth potential. However, as this is their inaugural public offering, investors should tread carefully. The absence of historical performance data raises questions, and the relatively high share price adds another layer of complexity. It's crucial to weigh the promising prospects against the inherent risks before making any investment decisions. Remember, informed choices are the best choices in the world of investing. Investing in Brainbees Solutions Limited, known as First Cry, offers a compelling opportunity in the thriving baby products market. With an IPO size of nearly Rs 42 billion, this includes fresh equity shares aimed at fueling growth, alongside an offer for sale that benefits existing shareholders. First Cry is strategically positioned to capitalize on rising incomes and the booming e-commerce landscape, making it a strong contender in a competitive space. However, potential investors should carefully consider the risks involved. Market competition is fierce, and a significant portion of the shares will primarily benefit current stakeholders. Balancing these factors is crucial for making an informed investment decision. The National Stock Exchange of India has truly outdone itself in the 2023-24 annual report. With a consolidated revenue of Rs 433 crores, we're looking at an impressive 28.74% growth. The profit after tax stands at Rs 8,305 crores, marking a solid 12.91% increase. These figures highlight the exchange's strong financial health. The EBITDA margin is a remarkable 70.73%, showcasing robust profitability that investors can trust. With a market capitalization soaring to Rs 382 lakh crores, the NSE is now the fourth largest stock exchange globally. It continues to lead as the largest derivatives exchange and dominates equity cash trades. Office Space Solutions Limited IPO is set to offer 15.6 million equity shares at Rs 383 each, amounting to nearly Rs 6 billion. As a frontrunner in India's co-working sector, Office serves a diverse clientele, from startups to established enterprises. However, it's crucial to note that a significant portion of this IPO involves existing shareholders liquidating their stakes. This raises important questions about the company's long-term growth potential. As an investor, you need to carefully weigh the promise of Office against the competitive pressures in the co-working market. The landscape is evolving rapidly, and while the numbers look appealing, understanding the risks is essential. Edelweiss Financial Services Limited is currently offering 20 lakh secured redeemable non-convertible debentures, each priced at Rs 1,000, totaling a substantial Rs 2,000 million. These NCDs come with a CRISIL A+ Heart Watch negative rating, which signals potential risks that investors should be aware of. While the secured nature of these debentures provides a layer of safety, it's crucial to delve into the underlying assets backing them. The negative watch status suggests that there could be changes ahead that might impact their stability. Before making any investment decisions, take the time to thoroughly assess these factors. Understanding the risks involved will empower you to make informed choices in your investment journey. Hero Motors Limited is set to launch an IPO of up to Rs 9,000 million, with Rs 5,000 million earmarked for fresh issues. This move is backed by the esteemed Hero Group, positioning itself strategically in the booming automotive components and electric vehicle markets. The potential for growth here is significant, especially as the demand for innovative and sustainable solutions in transportation continues to rise. However, as with any investment, it's crucial to consider the risks involved. Market volatility and fierce competition could impact performance. So, while the prospects are promising, a careful evaluation of these factors is essential for any investor looking to capitalize on this opportunity. Investing in Oswald Pumps Limited offers a compelling opportunity, but it's crucial to dive into the details. Their IPO features a fresh issue of up to Rs 10,000 million, alongside an offer for sale from promoter Vivek Gupta. Operating in key sectors like agriculture and infrastructure, the company certainly has potential. However, we must acknowledge the risks involved. This is their first public offering, meaning there's no historical stock performance to analyze, which can make decision-making tricky. Additionally, a substantial portion of the funds raised will go to selling shareholders rather than fueling company growth. As investors, we need to weigh these factors carefully before jumping in. Investing in the International Gemological Institute India Limited is not a decision to take lightly. They're looking to raise 40,000 million, with 12,500 million earmarked for growth and 2,750 million coming from existing shareholders. The gemstone market is indeed thriving, but this is their first public issue, which adds a layer of uncertainty. Before you jump in, consider your risk tolerance. Are you comfortable with the potential volatility that comes with new ventures? While the allure of gemstones can be enticing, remember that every investment carries its risks. Do your homework. Weigh the pros and cons and ensure that your financial strategy aligns with your comfort level. Proceed with caution. The glittering market can sometimes hide sharp edges. Unimek Aerospace and Manufacturing Limited is set to launch an IPO worth $5,000 million, with half of that amount coming from new equity shares and the other half from an offer for sale. This company is diving into the aerospace components sector, focusing on the rapidly growing defense and aviation markets. The growth potential is certainly enticing, but it's important to tread carefully. This is Unimek's first public offering, and a significant portion of the funds raised will primarily benefit existing shareholders rather than fueling expansion. As an investor, it's crucial to assess your risk tolerance and stay updated on pricing details before making any commitments. Remember, informed decisions are key in the world of investing. Reliance Industries Limited has showcased remarkable financial growth in FY 2023-24, with a consolidated revenue of R10,122 crore, marking a 2.6% increase, and a profit after tax of R79,020 crore, reflecting a solid 7.3% rise. The company is clearly on a strong operational trajectory. The retail and digital services segments are thriving, underscoring Reliance's robust market positioning. However, as potential investors, it's crucial to remain vigilant about global economic fluctuations and regulatory risks that could impact future performance. Staying informed and cautious can help navigate the complexities of this dynamic market landscape. NTPC Green Energy Limited is presenting an exciting investment opportunity, raising up to $100,000 million to expand its renewable energy footprint, particularly in solar and wind projects. With the backing of NTPC Limited and strong support from the Indian government, this venture is positioned for growth in a sector that's booming. However, as a first-time public offering, it's essential to consider the inherent risks, such as market volatility and increasing competition. Balancing these factors is crucial. The potential for sustainable growth in India's renewable energy landscape is immense, and with careful evaluation, this could be a strategic addition to your investment portfolio. Investing in Fabtech Technologies Limited could be a compelling opportunity. Their IPO is set to offer fresh equity shares, and the funds raised will directly support expansion in the burgeoning pharmaceutical engineering and cleanroom technology sectors. This is a market ripe for growth, driven by increasing demand for advanced healthcare solutions. However, it's essential to approach this investment with caution. As this is Fabtech's first public offering, it carries inherent risks and market uncertainties that could impact performance. While the potential for significant returns exists, due diligence is crucial. Balancing optimism with a clear understanding of the risks will be key for any financial analyst or advisor considering this opportunity. Casagrande Premier Builder Limited is set to launch an IPO worth $11,000 million, blending fresh equity with an offer for sale. This is a significant move, especially for investors looking at the booming real estate sector in South India, with a strong focus on Tamil Nadu. The company has established itself as a key player, thriving in a competitive market. However, as with any investment, it's crucial to weigh the potential for growth against the inherent risks. Market volatility and economic shifts can impact performance, so thorough assessment is essential. Keep an eye on this opportunity, but remember to invest wisely. Ellenberry Industrial Gases Limited is making a significant move by re-entering the capital market with an IPO of up to $4,000 million. Founded in 1973, this company has been a key player in producing essential industrial gases like oxygen and nitrogen, which are crucial for industries such as healthcare and steel manufacturing. The growth prospects look promising, especially with plans for expansion and debt repayment, signaling potential for future growth. However, investors should tread carefully. The company has a history of delisting, and competitive pressures in the market are ever present. Additionally, the substantial offer for sale by promoters raises some red flags. Balancing these factors will be essential for making an informed investment decision. Investing in PMEA Solar Tech Solutions Limited could be a game changer in the renewable energy sector. With a fresh issue of up to $6,000 million and over 11 million shares available, this IPO stands out. The company focuses on solar plant components, positioning itself perfectly as India embraces sustainability. However, it's essential to tread carefully. This is their first public offering, and the competitive landscape is fierce. The promoters are selling shares, which suggests a partial exit strategy. While the potential for growth is significant, understanding the risks involved is crucial. This opportunity could align well with the growing demand for clean energy, but due diligence is key. Ather Energy Limited is making waves with its upcoming IPO, aiming to raise up to $31,000 million to accelerate its growth in India's booming electric vehicle market. Backed by heavyweights like Hero MotoCorp, Ather is well positioned to capitalize on the increasing demand for sustainable transportation. However, let's not overlook the competitive landscape. Established players and new entrants are all vying for market share. This is Ather's first public offering, which adds an element of risk. As an investor, it's crucial to assess your risk tolerance carefully. Are you ready to ride the wave of innovation, or do you prefer to wait on the sidelines? The choice is yours, but the electric vehicle revolution is charging ahead. Investing in quality power. Electrical Equipments Limited could be a compelling opportunity for those eyeing the IPO market. With an impressive IPO size of $2,250 million, this company is strategically positioned to meet the demands of India's expanding infrastructure. They specialize in manufacturing essential electrical equipment, which is crucial as the country continues to grow. What stands out is their commitment to expansion and a clear focus on reducing debt, which could enhance their financial stability. However, it's important to remain vigilant about cyclical risks that can impact the industry. Additionally, the promoter's partial exit raises some questions about long-term confidence. Investing in DAM Capital Advisors Limited is a decision that requires careful thought. They're offering 32 million shares from existing shareholders, but there's no fresh capital coming in for growth. While the investment banking sector is thriving, this IPO comes with its own set of risks. The lack of historical performance makes it hard to gauge future success, and the competition is fierce. Before diving in, it's crucial to assess your risk tolerance. Are you ready to navigate the uncertainties that come with this investment? Take a moment to weigh the potential rewards against the risks involved. Your financial future deserves that level of scrutiny. Regreen Excel EPC India Limited is stepping into the spotlight with an IPO that raises $500 million in fresh equity. This company is positioned in the booming EPC sector, specifically targeting renewable energy projects. While the green energy market is on the rise, it's crucial to note that a significant portion of this IPO will benefit the promoters. As this is their first public offering, potential investors should carefully assess their growth plans and the current market conditions. If you believe in the future of sustainable energy and are willing to navigate the associated risks, this IPO could be an intriguing opportunity worth considering. Hexaware Technologies is set to launch an IPO with an impressive offer size of $99,500 million. But there's a catch. This capital is coming entirely from promoter CA Magnum Holdings. This means no fresh funds for growth, which raises some red flags about future expansion. While Hexaware has a strong reputation in digital and cloud services, we need to tread carefully. The absence of new capital could limit their ability to innovate and compete. Plus, the potential for stock volatility is a real concern, especially with the promoter's exit looming. As investors, we must weigh these risks against the company's strengths before making any decisions. It's crucial to stay informed and cautious in this dynamic market. Ventive Hospitality Limited is launching an IPO to raise $20,000 million through a fresh equity share issue. This strategic move is aimed at fueling our expansion in the hospitality and real estate sectors, focusing on premium properties in prime locations like Pune, Bengaluru, and the Maldives. As the hospitality industry rebounds post-pandemic, particularly in the luxury segment, our positioning is set to capitalize on this growth. However, it's essential to remain vigilant about occupancy rate fluctuations and economic sensitivities that could impact performance. Investing in Ventive means being part of a promising recovery journey in a dynamic market. Akums Drugs and Pharmaceuticals Limited is set to launch an IPO, offering over 10 million fresh equity shares to raise our $6,800 million. This company has carved a niche in contract manufacturing for major pharmaceutical firms, positioning itself in a sector that shows significant growth potential. However, as investors, we need to consider a few critical factors. The promoters are partially exiting, which raises questions about their long-term commitment. Additionally, new listings inherently come with risks, including market volatility and the company's ability to deliver on its promises. While the pharmaceutical sector is promising, it's essential to weigh these factors carefully before making any investment decisions. Sandstar Limited is set to launch an IPO with a substantial offer size of $101.50 million, which includes fresh equity shares and an offer for sale by its promoters. Operating in the agro-processing sector, Sandstar specializes in maize-based products, a market that's experiencing significant growth. The funds raised will be pivotal for business expansion and debt repayment, positioning the company for long-term success. However, potential investors should be mindful of certain risks, such as the dependency on maize pricing and the promoter's partial exit from the company. Despite these concerns, the long-term growth potential in the maize products market makes this IPO an intriguing investment opportunity for those looking to tap into the agricultural sector. Vraj Iron and Steel Limited is set to offer 8.26 million equity shares, aiming to raise Rs 1,710 million to enhance its production capabilities. This is a significant move, especially as the company focuses on TMT bars and sponge iron, positioning itself strategically within the booming infrastructure sector. However, as an investor, it's crucial to weigh the cyclical nature of the steel industry. Market fluctuations can impact profitability, so understanding these risks is essential. While the growth potential is promising, staying informed about market dynamics will help you make a sound investment decision. Schloss Bangalore Limited is set to launch an IPO worth Rs 50,000 million, blending fresh equity with an offer for sale from its promoters. As a significant player in India's luxury hospitality sector, they stand to gain from the surge in tourism. However, it's essential to tread carefully. A substantial portion of the funds raised won't directly support company growth. This marks their first public offering, so we lack historical stock performance to guide our decisions. While the luxury market appears promising, we must remain vigilant about potential economic downturns and increasing competition. Investing here could be a gamble, so weigh the risks and rewards carefully. Investing in BMW Ventures Limited's upcoming IPO presents an intriguing opportunity. They're offering up to 2.34 core equity shares with a clear focus on expanding their financial services in Bihar. This region is experiencing significant growth, and BMW Ventures, promoted by the Kishore Puria family, is strategically positioning itself to capitalize on this momentum. However, it's essential to remember that this is their first public issue. While the potential for growth is enticing, it's crucial to weigh the risks involved. New ventures can be unpredictable, so thorough research and careful consideration are key before diving in. Keep an eye on this one. It could be a game changer in the market. Tata Consultancy Services has reported impressive revenue of Rs 240,293 crore for FY 2024, reflecting a solid 6.8% growth. With operating margins at a robust 24.6%, TCS showcases its strong profitability. The company is not just resting on its laurels, it's strategically focusing on emerging markets and sectors like manufacturing and healthcare. Their commitment to innovation is evident in their substantial investments in AI and cloud technologies, alongside training over 300,000 employees to stay ahead in the tech landscape. For investors, TCS stands out as an attractive opportunity, combining stability with growth potential in a rapidly evolving market. HDFC Bank's financial highlights for 2023-24 are truly impressive. With a balance sheet size soaring to Rs 17,623 crore, the profit after tax has surged to an astounding Rs 60,812 crore. This remarkable growth is further bolstered by the strategic merger with HDFC Limited, significantly enhancing its market position. Moreover, HDFC Bank is making substantial investments in technology, which not only streamline operations, but also improve overall efficiency. Their commitment to sustainability is commendable, positioning them as a forward-thinking institution. For investors, HDFC Bank presents a compelling opportunity, combining robust financial performance with a strong vision for the future. This is a bank that is not just growing, but evolving in a rapidly changing landscape. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to Rs 408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to Rs 408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. Bharti Airtel's financials for 2023-24 are impressive, showcasing a revenue of Rs 499,124 million, marking an 8% year-on-year growth. Their EBITDA reached Rs 790,458 million, reflecting a solid 10% increase, which is quite remarkable in today's competitive landscape. The net profit stands at Rs 74,670 million, and the EBITDA margin is a robust 54.3%. This strong performance is underpinned by their aggressive 5G expansion and innovative digital solutions, positioning Airtel as a compelling investment opportunity. With these results, it's clear that Airtel is not just keeping pace, but is also setting the stage for future growth. Infosys has truly showcased remarkable financial health in FY 2024, with revenue soaring to Rs 53,670 crore. It's clear that the company is on a solid growth trajectory. An impressive 8.9% increase in net profit reflects their effective management and strategic focus. The operating margin, standing strong at 20.7%, highlights their efficiency and resilience in today's competitive landscape. What's even more exciting is the 35.3% growth in dividends, signaling a commitment to returning value to shareholders. With strategic investments in AI and cloud technologies, Infosys is not just keeping pace, but is poised for substantial future growth. For investors looking for a compelling opportunity, Infosys is undoubtedly a choice worth considering. In the fiscal year 2023-24, Life Insurance Corporation of India has truly set a benchmark with remarkable financial performance. With a total income soaring to Rs 8.53 lakh crore and a net premium income of Rs 4.75 lakh crore, LIC's market presence is undeniably strong. They've paid out an impressive Rs 3.88 lakh crore to policyholders, settling over 22 million claims, which speaks volumes about their commitment to customer satisfaction. Their total assets now stand at Rs 52.85 lakh crore, showcasing solid financial health. Holding nearly 59% market share in first-year premiums, LIC continues to lead the industry. For investors, these figures not only highlight LIC's stability, but also its potential for growth in a competitive market. ITC Limited's 2023-2024 annual report showcases remarkable financial performance, with revenue surpassing Rs 69,446 crore and a profit after tax of Rs 20,122 crore. This impressive profitability underscores the company's strong market position. What sets ITC apart is its diversified portfolio across 12 segments, ranging from FMCG to hotels, which mitigates risks and enhances growth potential. Their unwavering commitment to sustainability is evident in their initiatives aimed at reducing carbon footprints and promoting responsible sourcing. Coupled with a focus on innovation, ITC is not just adapting to market changes, but leading them. For investors and financial analysts, this positions ITC as a compelling opportunity for long-term growth. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Larsen & Toubro has truly made waves in FY 2023-24, reporting a remarkable revenue of Rs 21,113 crore, which is a 21% increase from the previous year. Their profit after tax has surged to Rs 13,059 crore, reflecting a 25% growth. These figures are not just numbers, they signify a robust financial health and a promising future. With an impressive order book of Rs 75,809 crore, L&T is well positioned for sustained revenue generation. What sets L&T apart is its commitment to global diversification and sustainability, particularly through renewable energy projects. Their significant investments in digital transformation demonstrate a forward-thinking approach that aligns with modern market demands. Plus, a dividend of R34 per share adds to the appeal for investors looking for solid returns. Coal India Limited's annual report for 2023-2024 is impressive, showcasing revenues of Rs 142,323.98 crore and a profit before tax of Rs 48,812.61 crore. This reflects robust earnings and a strong market position. With a 10% growth in coal production, the company continues to solidify its dominance in the energy sector. What's more, it has maintained a consistent dividend for 14 years, highlighting its financial stability. For investors, this represents a solid opportunity to engage with a key player in India's energy landscape. Plus, with ongoing sustainability initiatives and a target of 1 billion tons production by FY 2026, Coal India is not just about profits. It's about a sustainable future in energy. Vedanta Limited's FY24 integrated report reveals a compelling financial narrative. With revenues soaring to R141,193 crore and an impressive EBITDA margin of 30%, the company clearly demonstrates its robust financial health. Its diverse operations in zinc, oil, and aluminium position Vedanta as a formidable player in India's resource sector. What sets it apart is its commitment to ESG goals, particularly the ambitious target of achieving net zero emissions by 2050. This commitment not only enhances its market appeal, but also aligns with the growing investor focus on sustainability. However, potential investors should remain vigilant about risks, particularly commodity price fluctuations and debt management. Balancing these factors is crucial for making informed investment decisions in this dynamic landscape. Indian Oil Corporation presents a compelling investment opportunity. With a record profit of Rs 39,619 crore in FY 2023-24 and a solid debt-equity ratio of 0.66, the company clearly demonstrates its financial strength. Their ambitious vision for a $1 trillion valuation by 2047, with a strong focus on renewable energy and sustainability, signals significant growth potential. However, it's crucial to remain aware of risks such as oil price volatility and regulatory changes that could impact performance. By balancing traditional oil and emerging energy solutions, Indian Oil is positioning itself to deliver long-term value for investors. This strategic move could be worth considering for those looking to invest in a resilient and forward-thinking company. Bharat Petroleum Corporation Limited has showcased an impressive financial performance, reporting a revenue of Rs 5,993 crore and a net profit of Rs 26,859 crore. Their gross refining margin stands at $14.14 per barrel, the highest among public sector oil marketing companies, highlighting their operational efficiency. With a remarkable return on capital employed of 34.07%, BPCL is not just thriving but also generating strong cash flow. Strategically, they are investing Rs 1.70 lakh crore over the next 5 years, focusing on key sectors like refineries, gas distribution, and green energy. Their ambitious goal of achieving $2 GI of renewable energy by 2025 positions them as a leader in India's biofuel initiative. VST Industries Limited has delivered impressive financial results, showcasing a revenue growth of nearly 10%. While net profit experienced a slight dip, the company remains committed to its shareholders with a robust dividend of Rs 150 per share. This reflects their strong market presence and dedication to enhancing their brand portfolio through innovation. Additionally, VST is making strides in sustainability, aiming for a remarkable 50% renewable energy mix by 2030. This commitment not only positions them as a responsible player in the industry, but also aligns with the growing investor demand for sustainable practices. VST's focus on growth and sustainability makes it an intriguing option for investors looking for long-term value. Exchanging solutions. Limited has reported a notable revenue increase, reaching 19,625 lakhs this year. However, it's important to address the significant drop in net profit, which has fallen to 1,370 lakhs from our 4,490 lakhs. Despite this decline, XSL continues to offer a healthy dividend of Rs 30 per share, which is a positive sign for investors. The company is strategically focusing on IT services and emerging technologies, positioning itself to tackle challenges such as cybersecurity threats and evolving regulatory landscapes. For potential investors, evaluating XSL's recovery strategy is essential, especially given the increasing demand in the IT sector. Understanding how they plan to navigate these challenges will be key to making informed investment decisions. SMC Global Securities Limited is offering non-convertible debentures, or NCDs, with a base issue size of Rs 7,500 lakhs, which can expand up to Rs 15,000 lakhs. These are secured instruments that have received strong ratings from CRISIL and ICRA, signaling low credit risk for investors. This means you can potentially earn a steady return while having some peace of mind about your investment. However, it's crucial to keep in mind that market volatility and regulatory changes can impact your returns. So, before diving in, make sure to assess your risk tolerance and stay informed about the market landscape. Investing wisely is key to making the most of opportunities like these. Investing in Muthoot Fincorp's non-convertible debentures, or NCDs, presents a compelling opportunity for those seeking stability. With a solid CRISIL AA stable credit rating, these instruments offer a high degree of safety, making them an attractive option for cautious investors. The base issue size is right 10,000 lakhs, with the potential to expand up to 35,000 lakhs, indicating strong market confidence. While these NCDs promise fixed returns, it's crucial to assess your risk tolerance. Remember, even safe investments come with their own set of risks. So, if you're looking for a reliable way to grow your wealth, Muthoot Fincorp's NCDs could be worth considering. Investing in Muthoot Mercantile Limited's non-convertible debentures, or NCDs, presents an intriguing opportunity for those looking to diversify their portfolios. With a base issue size of Rs 7,500 lakhs and the potential to double to Rs 15,000 lakhs, these secured instruments come with a rating of IND-BBB stable, which suggests moderate safety. However, it's essential to stay aware of the risks involved. Credit downgrades and legal challenges could impact your investment. If you're in the market for fixed income and are comfortable with some level of risk, these NCDs could align well with your investment strategy. Always do your due diligence before diving in. Andhra Paper Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue dipped to Rs 1,858 crore, largely due to a 41-day maintenance shutdown and escalating raw material costs. However, the company still managed to achieve total sales of 2,33,480 metric tons, showcasing resilience in challenging times. They proposed a Rs 10 dividend per share, reflecting a commitment to shareholder value. Strategic investments in technology and facility upgrades are on the horizon, aimed at boosting efficiency. Yet, the decline in short-term profitability raises important questions for investors. Balancing these challenges with the opportunities ahead will be crucial for making informed decisions. Chennai Petroleum Corporation Ltd has delivered an impressive consolidated turnover of Rs 79,272.25 crore for FY 2023-24, showcasing its pivotal role in India's energy landscape. With a refining capacity of 10.5 million metric tons per annum, it stands as a cornerstone of our energy sector. What truly sets CPCL apart is its commitment to sustainability. The company is making strides with green initiatives like the seawater desalination plant and various renewable energy projects. Additionally, the Cauvery Basin Refinery project is set to expand both capacity and product offerings, further strengthening its market position. And for investors, a generous 550% equity dividend is a testament to CPCL's robust financial health and dedication to rewarding shareholders. Glottis Limited, founded in 2004, has seen significant growth and transformation over the years. Transitioning from a partnership to a private limited company in 2022 marked a pivotal moment for us. Now, as we prepare for our IPO in 2024, we're excited to offer a fresh issue of Rs 2,000 million alongside shares from our promoters. However, potential investors should tread carefully. The market can be unpredictable, and operational uncertainties can impact our performance. It's crucial to assess these risks thoroughly before making any investment decisions. Understanding the landscape will empower you to make informed choices as we embark on this new chapter. Bajaj Finance has truly set a remarkable benchmark in FY 2024, showcasing a 34% increase in assets under management, now standing at an impressive Rs 330,615 crore. This growth is complemented by a 26% surge in profit after tax, reaching Rs 14,451 crore. What's even more compelling is their robust capital adequacy ratio of 22.52%, which reflects their strong financial health. Their effective risk management strategies are evident in their low NPAs, ensuring stability even amidst regulatory challenges. With a strategic focus on expanding both digitally and physically, Bajaj Finance is well positioned for future growth. As always, it's crucial to align your investments with your risk tolerance and financial goals. Tilak Ventures Limited is currently offering a rights issue of over 22 million shares at just Rs 2.20 each. This is an opportunity to support their working capital and future investments. Their recent financials indicate promising revenue growth, which is certainly encouraging. However, it's crucial to consider the risks involved. Ongoing CB investigations into insider trading and other regulatory violations could impact the company's stability. Before diving in, assess your own risk tolerance. Consulting a financial advisor can provide valuable insights tailored to your situation. Make informed choices and invest wisely. Swiggy IPO is gearing up for its initial public offering, aiming to raise a substantial Rs 37,500 million. This IPO includes fresh shares and an offer from major investors like Axel India and Tencent, highlighting the confidence in Swiggy's business model. With a significant market share in the food delivery sector, Swiggy has established itself as a key player. However, potential investors should tread carefully. The food delivery market is competitive and evolving, and there are inherent risks involved. It's crucial to assess these risks thoroughly and consult with financial advisors before making any investment decisions. Investing in an IPO can be exciting, but informed choices are essential for long-term success. Emerald Leisures Limited is presenting an intriguing opportunity with its rights issue of 1,212,400 equity shares, priced at Rs 12.50 each, which includes a premium of Rs 7.50. Eligible shareholders can purchase 2 shares for every one they own as of September 10, 2024. This move aims to bolster the company's finances by reducing debt and addressing general corporate needs. However, it's essential to weigh the risks involved. Internal disputes, ongoing litigation, and a partial commitment from promoters could impact the company's stability. Before diving in, assess your risk tolerance and consider consulting a financial advisor. This could be a pivotal moment for your investment strategy. Investing in M&B Engineering Limited's IPO is a decision that requires careful thought. With an offer size of Rs 6,530 million, this opportunity combines a fresh issue and an offer for sale. Established in 1981, M&B has built a reputation in construction and engineering. but this is their first foray into the public market. That alone raises significant prepared for the volatile and IPO provide valuable insights and remember, while there exist many commitments, IPO inquires 150 million offer for sale of 31,000 equity shares from their promoters. This is their first public issue, which adds a layer of uncertainty to how the market will respond. We must consider the risks involved. Price discovery can be unpredictable, and IPOs are notoriously volatile. While the backing of prominent figures like Arun Kumar Jain and Anup Agrawal lends credibility, it's crucial to remember that the primary goal here is growth and debt repayment. As potential investors, we need to weigh the promise of returns against the inherent risks. It's a delicate balance, and due diligence is key. Proceed with caution and make informed decisions. HCL Tech's FY 2023-24 report showcases impressive financial performance, with revenue soaring to Rs 109,913 crore, marking an 8.3% increase. Their net income also climbed to Rs 15,702 crore, up 5.7%. This growth is particularly noteworthy given the current macroeconomic challenges. HCL Tech is excelling in digital engineering and AI sectors, positioning itself strategically for the future. Their commitment to sustainability and emerging technologies signals a promising trajectory for long-term growth. However, potential investors should remain cautious and consider current market risks. Consulting with financial advisors can help align investment strategies with personal goals, ensuring informed decisions in this dynamic landscape. Maruti Suzuki India Limited has truly outdone itself in the FY 23-24 annual report. With net sales soaring by 20% to an impressive Rs 378 million, it's clear that the company is on a robust growth trajectory. Even more exciting is the staggering 64% leap in profit after tax, now at 132,094 million. This reflects not just strong sales, but also efficient operations, as evidenced by an EBIT margin improvement to 9.9%. Investors should take note of the return on equity at 18.3%, coupled with a remarkable 39% increase in dividends, showcasing Maruti's commitment to delivering strong shareholder value. The company is not resting on its laurels. It's expanding production capacity and embracing sustainable technologies, solidifying its position as a leader in the automotive industry. This is a thrilling time to be part of Maruti's journey as it drives forward with innovation and growth. In FY 2023-24, Sun Pharmaceutical Industries Limited showcased remarkable financial growth, with total income reaching Rs 498,510 million, a 12% increase year-on-year. This impressive surge is complemented by a net profit of Rs 95,664 million, highlighting the company's robust operational performance. Sun Pharma's commitment to innovation is evident through substantial investments in research and development, particularly in specialty products. This strategic focus not only enhances their product portfolio, but also positions them favorably for future growth. While regulatory challenges persist, Sun Pharma's strong fundamentals and proactive approach suggest a promising trajectory ahead for investors. Adani Enterprises Limited has truly outdone itself in FY 2023-24, posting total income of Rs 98,282 crore, an impressive 41% increase year-on-year. This remarkable growth is underscored by a 32% rise in EBITDA, showcasing the company's robust operational performance. What's particularly exciting is Adani's strategic focus on green hydrogen, airports, and roads. positioning itself for sustainable growth in a rapidly evolving market. With a solid balance sheet and reduced debt, the company is not just thriving, it's laying the groundwork for long-term success. For investors, this is a compelling narrative of resilience and innovation that's hard to overlook. Kotak Mahindra Bank has reported impressive financial highlights for FY 2023-24. Total income has surged to an astounding Rs 94,273.91 crore, showcasing robust growth. The profit after tax stands at Rs 18,213.21 crore, reflecting the bank's strong performance. With a return on equity of 15.08%, it's clear that Kotak is delivering value to its shareholders. Additionally, the bank has improved its asset quality, which is a positive indicator of its financial health. However, as always, it's crucial to assess market conditions and your own risk appetite before making any investment decisions. Strong fundamentals are essential, but informed choices are key to successful investing. Titan's FY 2023-24 report is nothing short of impressive, with revenue skyrocketing to Rs 46,968 crore, a remarkable 22.4% increase. This growth is driven by stellar performances in key segments like jewelry and watches, showcasing the brand's strength and market appeal. What's even more exciting is Titan's commitment to international expansion and sustainability, positioning itself as a forward-thinking leader in the industry. However, as we celebrate these achievements, it's crucial for investors to remain vigilant. The market competition is fierce, and economic risks are ever present. Balancing optimism with caution will be key as we navigate this promising landscape. When considering an investment in ONGC, the financial metrics present a mixed yet promising outlook. Revenue has dipped to Rs 1,384,021 million, which raises some eyebrows. However, net profit has seen a slight increase to Rs 405,260 million, indicating operational resilience. The robust dividend of 2.45% is a strong signal for shareholder returns, showcasing the company's commitment to rewarding its investors. With a remarkably low debt-equity ratio of 0.02.1, ONGC demonstrates solid financial stability, which is crucial in today's volatile market. Their strategic focus on renewable energy and impressive exploration results suggest significant growth potential ahead. Yet investors should remain cautious of crude price fluctuations and rising operating costs that could impact profitability. Tata Motors has truly outdone itself in FY 23-24, achieving a record revenue of Rs 437,928 crore, marking an impressive 26.6% year-on-year growth. The turnaround is remarkable, with profit after tax soaring to Rs 31,807 crore. Their EBITDA margin stands strong at 14.3%, and they generated a staggering Rs 26,925 crore in free cash flow. The reduction in net automotive debt is a testament to their strengthened liquidity, positioning them for future growth. In the commercial sector, Tata Motors continues to lead with innovative new launches and a robust electric bus fleet. The EV segment is thriving, capturing an incredible 70% market share. Jaguar Land Rover also contributed to this success with impressive growth figures, with plans for a demerger. NTPC's 2023-24 annual report highlights a robust financial performance, with consolidated revenues soaring to Rs 177,608.87 crore. This impressive growth is underscored by a remarkable 25% increase in profit after tax, now at Rs 21,332 crore. The company's market capitalization has reached Rs 349 lakh crore, reflecting strong investor confidence. NTPC is also rewarding its shareholders with a dividend of Rs 7.75 per share. What's particularly exciting is NTPC's commitment to sustainability, aiming for 60 gigawatt of renewable energy capacity by 2032. Their international expansion is noteworthy too, with the launch of their first power station in Bangladesh. Axis Bank's performance in FY 2023-24 is nothing short of remarkable. With consolidated revenue soaring to Rs 1,47,845 crore and a record net profit of Rs 24,161 crore, the numbers speak volumes. The net interest margin has climbed to an impressive 4.07%, while return on assets stands strong at 1.84%. This growth is fueled by a significant expansion in both retail and corporate loan books, showcasing robust demand in the market. What's truly exciting is their commitment to a robust digital strategy, which positions them perfectly for future growth. Coupled with a healthy capital adequacy ratio of 13.74%, Axis Bank is not just thriving, it's set for remarkable expansion ahead. Avenue Supermarts Limited, or DMart, has truly showcased impressive financial growth in FY 2023-24. Their revenue surged to Rs 49,533 crore, marking an 18.41% increase, an impressive feat in today's market. EBITDA also saw a healthy rise of 12%, while profit after tax reached Rs 2,695 crore. Although there's been a slight dip in net profit margin, DMart's low debt equity ratio is a strong indicator of its financial stability. Coupled with their strategic expansion plans, DMart presents a compelling case for long-term investment. With these robust numbers, it's clear that DMart is not just surviving, but thriving in the retail landscape. Adani Green Energy Limited's FY 2023-24 annual report showcases impressive financial growth, with revenue soaring to Rs 7,735 crore, a remarkable 33% increase year-on-year. The EBITDA stands at Rs 7,222 crore, reflecting an outstanding 92% margin. This growth is complemented by a 35% expansion in operational capacity, now reaching 10,934 million. The company's ambitious target of $50 by 2030 positions it as a frontrunner in the renewable energy sector. While debt levels have improved, they still require vigilant monitoring, especially given the current market volatility. Overall, Adani's strategic initiatives and robust financial performance make it a compelling prospect for investors and analysts alike. Adani Ports and Special Economic Zone Limited has truly outdone itself in FY 2023-24. Revenue skyrocketed to Rs 26,711 crore, marking an impressive 28% increase. Even more remarkable is the EBITDA, which reached Rs 15,864 crore, showcasing a robust 71% margin. Net profit surged by 50%, hitting Rs 8,104 crore. Operationally, we handled a staggering 420 MMT of cargo, a testament to our efficiency and growth. Our strategic expansions into international ports are paving the way for even greater opportunities. Plus, our commitment to sustainability, aiming for carbon neutrality by 2025, positions us as a forward-thinking leader in the industry. While we celebrate these achievements, it's essential to remain vigilant about geopolitical risks that could impact global trade. The future looks bright, and we're excited to navigate it together. Ultratech Cement Limited has achieved remarkable financial growth for the year ending March 31, 2024. With a revenue of Rs 49,533 crore, that's an impressive 18.4% increase from last year. The profit after tax stands at Rs 6,905 crore, showcasing solid profitability and a robust EBITDA of Rs 13,282 crore, reflecting strong financial health. The company's strategic expansions, both domestically and internationally, are enhancing its capacity and market share, positioning it as a leader in the industry. Additionally, the dividend of Rs 2,021 crore highlights Ultratech's commitment to delivering value to its shareholders. This performance paints a compelling picture for investors, marking Ultratech Cement as a promising long-term investment opportunity. Asian Paints Limited has showcased remarkable financial growth for FY 2023-24. Their revenue climbed to Rs 35,494.73 crore, marking a modest 2.9% increase. But the standout figure is the profit after tax, which surged by an impressive 32.5% to Rs 5,557.69 crore. This indicates not just growth, but a significant boost in profitability. The EBITDA growth of 24.5% highlights their strong operational efficiency, a key factor for any investor to consider. With an earnings per share of R56.95 and a track record of consistent dividends, Asian Paints emerges as a solid investment choice. However, it's crucial to keep an eye on market competition and economic conditions before making any decisions. Bajaj Finserv's FY 2023-24 results are impressive, showcasing a consolidated revenue of Rs 110,383 crore and a profit after tax of Rs 8,148 crore. This robust earnings growth highlights the company's strong financial health. Key players like Bajaj Finance L&T and Bajaj Allianz Insurance are making significant contributions, reinforcing their market position and consistent profitability. For investors, this could be an attractive opportunity. However, it's essential to weigh market conditions and potential risks before making any decisions. The financial landscape is dynamic, and informed choices are crucial for success. Bajaj Auto Limited has truly outdone itself in FY 2023-24, achieving a remarkable revenue of Rs 110,383 crore and a profit after tax of Rs 8,148 crore. This impressive performance translates to enhanced earnings per share, showcasing our commitment to delivering strong shareholder value. The generous dividend of Rs per share is a testament to our dedication to investors. As the leader in the Indian two-wheeler and three-wheeler markets, we're not just resting on our laurels. We're expanding our footprint globally. Our focus on sustainability and innovation, particularly in electric vehicles, positions Bajaj Auto for exciting future growth. With these solid foundations, the road ahead looks incredibly promising for all of us. Power Grid Corporation of India Limited has delivered impressive financial results for FY 2023-24, reporting revenues of Rs 45,843 crore and a profit after tax of Rs 15,573 crore. Their EBITDA reached Rs 40,119 crore, showcasing robust operational efficiency. With a remarkable 68% dividend payout ratio, investors can expect attractive returns. The company has expanded its infrastructure significantly, adding over 4,000 circuit kilometers of transmission lines and enhancing transformation capacity, achieving a stellar 99.85% transmission system availability. Moreover, Power Grid is committed to integrating renewable energy into its operations and is expanding its footprint globally across 23 countries. Nestlé India Limited has truly outdone itself in FY 2023-24, with revenue skyrocketing to an impressive Rs 242,754.8 million, an incredible 44.4% increase. This surge is a testament to the strong demand and robust market presence the company has cultivated. Even more exciting is the 64% jump in profit after tax, showcasing their effective cost management strategies. With an operating profit margin of 22% and earnings per share rising to Rs 40.79, it's clear that Nestlé is thriving. Their commitment to returning value to shareholders is evident with a dividend of Rs 8.50 per share, making it an attractive option for income-focused investors. However, we must keep an eye on potential risks like commodity price fluctuations and regulatory changes. Wipro Limited's financial performance for FY 2023-24 is nothing short of impressive. Consolidated revenues soared to Rs 243,938.9 million, a significant leap from Rs 168,969.6 million. This remarkable growth is mirrored in the profit after tax, which surged by 64.5% to reach Rs 39,328.4 million. And let's not overlook the earnings per share, which jumped from 24.79 to Rs 40.79. Wipro's strategic focus on digital transformation and sustainability is not just a trend, it's a game changer that solidifies its position in the market. This makes Wipro a compelling choice for investors looking for robust growth and innovation. The future looks bright, and I'm excited to see where this journey takes us. Mahindra & Mahindra Life has truly outdone itself in FY 2023-24, Standalone revenue surged to an impressive Rs 1,219 crore, reflecting a robust 17% growth. Consolidated revenue also saw a healthy rise, reaching Rs 139,078 crore, up 15%. The standout highlight? A staggering 64% jump in standalone profit after tax, soaring to Rs 10,718 crore. The automotive sector is thriving, with an 18.1% increase in volume, showcasing our resilience and market strength. Despite challenges, Mahindra proudly holds a 41.6% market share in tractors. Looking ahead, we're investing Rs 37,000 crore in future technologies, with a keen focus on electric vehicles and sustainability. This is not just growth, it's a commitment to innovation and a sustainable future. Hindustan Aeronautics Limited has achieved a remarkable milestone, reporting its highest ever turnover of Rs 28,162 crore, reflecting a solid 7% growth from last year. Even more impressive is the 57% surge in profit before tax, which has reached Rs 10,198 crore. Profit after tax also saw a significant increase of 31%, totaling Rs 7,595 crore. With a robust order book of Rs 94,129 crore, HAL is firmly positioned as a key player in India's defense sector. The company is not just resting on its laurels, it's actively expanding its production capabilities and enhancing research and development efforts. This strategic focus positions HAL for sustained growth and innovation in the future. For investors, this is a clear signal of HAL's strong market presence and potential for continued success. DLF Limited's FY 2023-24 financials are impressive, showcasing a consolidated revenue of Rs 6,958 crore, marking a 16% increase. This growth is complemented by a profit after tax of Rs 2,124 crore, which is a remarkable 34% rise. Their rental revenue stands strong at Rs 4,633 crore, highlighting the strength of their commercial portfolio. With strategic expansion plans on the horizon and a solid dividend increase, DLF is positioning itself as an attractive investment opportunity. However, it's essential to remain mindful of the inherent market risks. Overall, DLF's performance reflects a robust foundation for potential investors looking for growth in the real estate sector. Adani Power Limited has reported impressive financial results for FY 23-24, with total revenue soaring to Rs 60,281 crore, marking a remarkable 40% year-on-year increase. The company's profit after tax has skyrocketed by 94% to Rs 20,829 crore, showcasing its robust growth trajectory. EBITDA has also risen by an impressive 96%, reflecting strong operational efficiency across its plants. The average plant load factor improved to 65%, and power generation reached a staggering 79 billion units, a 48.5% increase from the previous year. With a net debt to EBITDA ratio of just 0.62x, Adani Power demonstrates solid financial stability, further bolstered by an upgraded credit rating of AA stable. Moreover, the company is committed to sustainability, with 72% of its capacity utilizing advanced technology. JSW Steel Limited's integrated report for FY 23-24 is truly impressive, with consolidated revenue hitting Rs 175,006 crore and an EBITDA of Rs 28,236 crore. The company demonstrates remarkable operational efficiency. Operating at 92% capacity, JSW is not just maintaining its performance, it's gearing up for significant expansion by 2030. Their manageable debt levels and strong commitment to sustainability position them as a frontrunner in green steel production. Plus, with a consistent dividend payout and a diverse market presence, JSW Steel emerges as an attractive long-term investment opportunity. Investing in JSW Steel means aligning with a leader in both profitability and sustainability. Tata Steel's FY 23-24 results present a mixed picture. Consolidated turnover fell to Rs 29,171 crore, while standalone turnover saw a slight dip to Rs 40,987 crore. Notably, consolidated EBITDA dropped to Rs 23,402 crore, contrasting with a rise in standalone EBITDA to Rs 31,004 crore. The company faced a consolidated net loss of Rs 4,910 crore, raising concerns among investors. However, Tata Steel is not standing still. The focus on expanding production capacity and achieving net zero emissions by 2045 is commendable. Significant investments in renewable energy signal a commitment to sustainability. Despite setbacks in Europe, Tata Steel's strategic direction suggests a promising long-term outlook, making it a company worth watching closely. In FY 2023-24, IRETA has truly set a benchmark in financial performance. With a gross loan book soaring to over 59,698.11 crore, we're looking at an impressive 26.81% growth. Loan sanctions also climbed by 14.63%, underscoring the robust market demand for renewable energy financing. The standout figure? A staggering 47.93% surge in profit after tax, reaching IRFA 685.24 crore, which speaks volumes about their operational efficiency. Additionally, a net worth increase of 44.22% positions IRETA as a compelling investment opportunity. This balance of growth and effective NPA management makes it a prime candidate for investors seeking long-term gains in the renewable sector. Amanta Healthcare Limited is making significant strides in the pharmaceutical sector, particularly with their focus on sterile products like intravenous fluids. With an IPO of 1.25 crore shares, they're poised to attract investors eager to tap into the booming healthcare market. Their innovative production methods set them apart, positioning them for substantial growth. However, potential investors must consider the inherent risks. Market volatility and regulatory hurdles can pose challenges, especially for a first-time public offering. It's crucial to weigh these factors carefully as you explore the opportunities Amanta presents in this dynamic industry. In the financial year 2023-24, Indian Railway Finance Corporation Limited, or IRFC, has truly showcased impressive growth. Revenue surged to over 26,644 crore, reflecting a robust 12.32% increase. The profit after tax also rose significantly to our 6,412 crore, indicating a steady upward trend. With assets under management reaching an astounding Rs 464,641 crore, IRFC demonstrates remarkable financial stability. What sets IRFC apart is its leasing model, which ensures consistent revenue streams, while its low-cost borrowing enhances overall profitability. This combination makes it a solid investment choice. Plus, with dividends of Rs 1.50 per share, investors can look forward to attractive returns. Zomato's FY 23-24 financials are nothing short of impressive. With revenue from operations soaring to Rs 12,114 crore, we're looking at a remarkable 71% increase from last year. What's even more exciting is the turnaround in profitability, with a profit after tax of over 351 crore, a significant leap from last year's losses. The key growth drivers are truly noteworthy. Food delivery revenue surged by 40%, while quick commerce skyrocketed by an astonishing 93%. Even with challenges surrounding Blinkit, Zomato's diversified model shines through. Their expanding delivery network and increasing store count position them as a formidable player in the market. This growth trajectory not only highlights resilience, but also makes Zomato an attractive option for long-term investment. In 2024, IRB Infrastructure Developers has truly solidified its leadership in India's infrastructure sector. With 72 toll plazas under our management, we've captured an impressive 10% of the national toll revenue, servicing over 1.3 million vehicles daily. Our strategic tariff revisions and a remarkable 17% CAGR in EPC growth have significantly bolstered our financial resilience. We lead the TOT market with a commanding 38% share and an order book of Rs 34,800 crore, positioning us strongly for future projects. Successful refinancing has lowered our debt costs, and our robust debt-to-equity ratio underscores our financial health. This solid foundation cements our position as a key player in the infrastructure landscape. Indian Infotech and Software Ltd presents a compelling investment opportunity, especially for those with a keen eye on stability. With over 42 years in the market, this company has demonstrated resilience. Recently, it reported a remarkable 50.7% increase in revenue, which is impressive, although net profits remain modest. What stands out is its low current liabilities, indicating a healthy balance sheet. However, potential risks arise from proposed expansions and related party transactions that could affect future performance. Shareholder returns are currently low, which might raise concerns for conservative investors. Yet for those willing to embrace a bit of risk, the growth potential here could be quite rewarding. In the 2023-2024 fiscal year, Indian Overseas Bank has truly outdone itself. Total business has soared past Rs 5 lakh crore, a testament to its robust growth. Deposits have surged to an impressive Rs 2.85 lakh crore, while advances have jumped nearly 20%. This isn't just growth on paper. Profitability has seen a remarkable boost, with net profit climbing by 26.54%. What's even more encouraging is the improvement in asset quality, with gross NPAs dropping to just 3.10%. This solid performance not only reflects the bank's resilience, but also positions IOB as a strong contender for future growth. For investors seeking stability in the banking sector, Indian Overseas Bank is emerging as an attractive option. In FY 23-24, NHPC Limited faced its share of challenges, yet we demonstrated remarkable resilience. Our total income slightly dipped to Rs 10,024.9 crore, primarily due to environmental factors affecting energy sales. However, we turned adversity into opportunity, with our diversified income from power trading soaring, showcasing our adaptability in a changing landscape. Our profit after tax of Rs 3743.94 crore reflects our commitment to effective cost management. As we continue to invest in major hydropower projects and expand our renewable energy footprint through solar and wind initiatives, we are not just weathering the storm, we are positioning ourselves for a brighter, sustainable future. Together, we are paving the way for growth and innovation in the energy sector. In the 2023-2024 fiscal year, NBCC India Limited has truly set a benchmark in the public sector construction arena. With a consolidated total income soaring to Rs 10,666.68 crore and a profit after tax of Rs 414.38 crore, our growth story is nothing short of remarkable. Our robust order book, standing at an impressive Rs 52,242 crore, reflects our unwavering commitment to infrastructure development. We take immense pride in our achievements, including the successful completion of 19,000 units in the Amrapali housing scheme, providing homes and hope to countless families. Our significant projects in Kerala further underscore our dedication to transforming landscapes and lives. As we continue to build the future, we invite you to join us on this inspiring journey of growth and innovation. In the 2023-2024 annual report, Taparia Tools Limited has truly set a remarkable benchmark. With a net revenue of Rs 83,766.86 lakh, we've seen an impressive 8.95% growth compared to last year. What's even more striking is the 37.88% surge in profit before tax, a clear indicator of our enhanced operational efficiency. We're not just focused on growth, we're committed to our shareholders as well. This year, we've maintained consistent dividends and announced a 4.1 bonus share issue, reinforcing our dedication to delivering value. Additionally, our strategic investments in mutual funds showcase our prudent cash management approach. It's a strong message that we're not just about numbers, we're about sustainable growth and shareholder satisfaction. In 2023-24, CB marked a transformative year for India's capital markets. Resource mobilization soared to an impressive Rs 11.8 lakh crore, reflecting a robust 20% growth. We witnessed 272 IPOs that collectively raised Rs 68,972 crore, showcasing a vibrant investment landscape. The mutual fund industry also made significant strides, doubling its assets to Rs 53.4 lakh crore, a testament to growing investor confidence. Innovations like the T+1 settlement cycle and the introduction of the social stock exchange highlight SEBI's dedication to enhancing market efficiency and inclusivity. These milestones not only strengthen our market framework, but also pave the way for a more resilient financial ecosystem. In the 2023-2024 annual report, Arcon International Limited has truly set the stage for remarkable growth. Our revenue has soared to Rs 12,287.85 crore, marking a significant 20.72% increase. This isn't just a number, it's a testament to our unwavering commitment and strategic vision. Profit before tax has reached an impressive Rs 155.54 crore, reflecting a robust 30.84% rise. We're not just celebrating these figures, we're sharing in the success of our stakeholders. With a total dividend of Rs 291.56 crore declared, we're ensuring that our investors reap the rewards of our hard work. Securing new contracts and achieving Navratna status positions us for even greater achievements ahead. In FY 23-24, Suzlon Energy Limited has truly set a benchmark in the renewable energy sector. We achieved an impressive 20% increase in revenue, reaching Rs 6,497 crore, while our EBITDA soared to Rs 1,029 crore, showcasing robust margins. The highlight? Our profit after tax skyrocketed by 428%, a testament to our exceptional financial recovery. With a record order book of 3.8 GW, we are not just participants, but leaders in India's wind energy market. Our commitment to sustainability is unwavering, as we contribute to reducing over 53 million tons of CO2 annually. We're transforming our manufacturing units into eco-friendly buildings, embodying our vision for a greener future. This journey has not gone unnoticed. We've been honored with multiple awards, reflecting our dedication and innovation. Garuda Construction and Engineering Limited is making headlines with its upcoming initial public offering. Founded in 2010 and based in Mumbai, the company plans to raise capital by issuing 1.83 crore fresh equity shares, along with an offer for sale of 95 lakh shares, all at a face value of Rs 5 each. Mark your calendars. The bidding opens on October 8, 2024 and closes on October 10th. While this could be an exciting investment opportunity, it's important to remember that this is their first public offering. Active trading post-listing isn't guaranteed, so proceed with caution. Make sure to do your research before diving in. Pidilite Industries Limited has delivered an impressive financial performance for the year ending March 2024. Net sales reached Rs 11,118 crore, marking a solid 5.4% increase. Even more remarkable is the EBITDA, which surged to Rs 2,550 crore, reflecting a staggering 37.4% growth. This robust performance is further highlighted by a 42.6% jump in profit after tax, now standing at Rs 1,792 crore, showcasing the company's strong operational efficiency. Earnings per share have risen to Rs 35.39, while the book value per share has improved to Rs 163.9. Additionally, Pidilite has announced a notable dividend increase to Rs 16 per share, underscoring its commitment to enhancing shareholder value. Grasim Industries Limited has truly showcased remarkable growth in its 23-24 annual report. Total revenue surged to Rs 65,649 crore, fueled by a robust 16% increase in net sales. The cement segment, Ultratech, led the charge with an impressive Rs 38,460 crore, while our VSF and chemicals divisions also made significant contributions. With a profit after tax of Rs 4,289 crore and earnings per share at Rs 31.50, Grasim continues to demonstrate a strong financial position. We're rewarding our investors with a Rs 10 dividend per share, reflecting our commitment to shareholder value. Additionally, our substantial investments in expansion underscore Grasim's leadership in responsible industrial practices, positioning us for sustainable growth in the future. Bharat Electronics Limited has delivered an impressive financial performance for FY 23-24, reporting revenues of Rs 20,720 crore, marking a robust 14% increase from the previous year. The profit after tax surged by 17% to Rs 3,700 crore, fueled by high-margin projects that are driving profitability. With an order book of Rs 65,000 crore, BEL is strategically positioned for sustained growth in the coming years. Shareholders are reaping the benefits too, with an earnings per share of Rs 15.25 and dividends declared at an impressive 140% and 80%. Moreover, BEL's commitment to innovation shines through its investments in AI and IoT, alongside significant projects in both defense and non-defense sectors. SBI Life Insurance Company has truly outdone itself in FY 23-24, with a gross written premium soaring to Rs 814.3 billion. That's a remarkable 21% increase year on year. New business premiums have surged to Rs 382.4 billion, reflecting a robust 29% growth. Our assets under management have reached an impressive Rs 3,189 billion, marking a solid 27% rise. The value of new business stands strong at Rs 55.5 billion, while our embedded value has climbed to Rs 582.6 billion. We've achieved a profit after tax of Rs 18.9 billion, showcasing our resilience in a competitive market. With a solvency ratio of 1.96, we ensure stability for our stakeholders. Holding a 24.6% market share in new business premiums, SBI Life is not just growing, we're positioned for sustained success. LTIMindtree's annual report for FY 23-24 showcases remarkable financial growth, with total revenue soaring to Rs 35,517 crore, reflecting a solid 7% increase. Our profit after tax has also risen impressively to Rs 4,584.6 crore. A standout achievement this year is our record order inflow of USD 5.64 billion, underscoring our strong market position. While we experienced slight dips in profitability margins, our unwavering commitment to innovation and sustainability sets us up for long-term success. With a dedicated workforce of over 81,000 employees across 38 countries, we are focused on enhancing shareholder value through strategic initiatives and digital leadership. Trent Limited, Tata, has truly outdone itself in FY 2023-24. Can you believe a staggering 54.6% surge in revenue, bringing it close to Rs 12,000 crores? That's not just impressive, it's a testament to their robust business strategy. And get this, profit after tax has doubled, soaring to Rs 1,135 crores. This kind of growth isn't just a flash in the pan. It signals a company that knows how to capitalize on opportunities. With a solid dividend payout and smart debt management, Trent is not just surviving, it's thriving. For investors looking for a promising opportunity, Trent Limited is definitely a name to watch. The future looks bright, and this could be the right moment to jump on board. SolarWorld Energy Solutions Limited is stepping into the public market with an ambitious IPO aiming to raise Rs 6,000 million. This company is entering a thriving solar energy sector in India, which is experiencing significant growth, fueled by strong government support for renewable initiatives. While there are inherent risks, such as market volatility and increasing competition, the management team brings a wealth of expertise that instills confidence in their strategy. For those who believe in the future of renewable energy, this IPO presents a compelling long-term investment opportunity. Investing in SolarWorld could mean being part of a sustainable future while potentially reaping financial rewards. Punjab National Bank's annual report for 2023-24 is nothing short of remarkable. With a staggering 228% increase in net profit, reaching Rs 8,245 crore, PNB stands tall as the leader among public sector banks. Their gross business has soared to an impressive Rs 23 lakh crore, reflecting robust growth and expansion. What's even more exciting is the improved asset quality and a solid capital adequacy ratio of 15.97%. This positions PNB as a strong contender in the banking sector, especially for investors looking for stability and growth. And let's not overlook their digital transformation journey. UPI transactions have surged by 56%, placing PNB at the forefront of digital payments. Skoda Tubes Limited, established in 2008 in Gujarat, is gearing up for its first IPO, aiming to raise Rs 2,750 million. They specialize in seamless stainless steel tubes, catering to industries like power and pharmaceuticals. While the stainless steel market shows promise, it's also highly competitive. One key point to consider is the lack of detailed financials, which makes assessing their financial health a challenge. This introduces a level of market risk for potential investors. However, if you have a positive outlook on the industry and can navigate the potential volatility, this IPO could present an intriguing opportunity. Keep an eye on Skoda Tubes as they enter the public market. Dr. Agarwal's Healthcare Limited IPO is intriguing for those eyeing the healthcare sector. With a strong focus on ophthalmology, it operates renowned eye hospitals across India and beyond. The IPO is aimed at expansion and debt reduction, signaling growth potential. As a first-time public issuer, they face market volatility and competition. The healthcare sector is evolving, particularly in eye care, driven by increasing demand. The brand's reputation is solid, and potential investors should scrutinize financial details. Kumar Archtech Limited, established in 1998, is making a significant leap by transitioning to a public company in 2024. They're aiming to raise $7,400 million through their IPO, with a substantial portion of that capital dedicated to growth and reducing debt. Specializing in manufacturing plastic and PVC products for the construction sector, they're positioned well as the industry continues to expand. However, potential investors should tread carefully. Market volatility and competition are real risks to consider. This IPO could represent a strategic investment opportunity, but it's crucial to conduct thorough research before diving in. Indigo has shown strong growth, with a 26.6% year-over-year revenue increase to $689,043 million. Their highest ever net profit of Rs 81,725 million reflects a significant turnaround, supported by an 18.3% EBITDA and EPS of Rs 212. With an 85.9% load factor and a fleet of 367 aircraft, Indigo is set for expansion with 985 new aircraft ordered. A cash balance of Rs 203,769 million shows financial stability. They are operating 2016 daily flights to 121 destinations. While fuel price volatility and competition are risks, their strong fundamentals make it a promising outlook. Bank of Baroda has truly outdone itself in FY 23-24, with net profit skyrocketing by an impressive 168%. This surge is a clear testament to the bank's improved asset quality and a significant reduction in bad loans. Total income has also seen a remarkable rise of over 28%, primarily fueled by strong net interest income. What's even more exciting is the bank's success in lowering its non-performing assets, which enhances its financial stability. With a robust capital adequacy ratio and a keen focus on digital banking, Bank of Baroda is strategically positioned for future growth. However, as potential investors, it's wise to remain vigilant about macroeconomic conditions and competitive pressures. Investing in VMS TMT Limited presents an intriguing opportunity, especially with the surging demand for TMT bars in India's thriving construction sector. The government's initiatives are driving significant growth, making this a potentially lucrative investment. However, we must tread carefully. This is VMS's first IPO, which inherently brings volatility risks. The competition in the market is fierce, and fluctuations can impact performance. It's crucial to conduct a thorough analysis before diving in. Weigh the potential rewards against the risks and ensure you're making an informed decision. The landscape is promising, but due diligence is key. Vikram Solar Limited is making waves in India's solar energy sector with its upcoming IPO, aiming to raise $15,000 million. This funding will significantly boost their manufacturing capacity and enhance their technology, positioning them as a leader in high-efficiency solar photovoltaic module production. The renewable energy market is on the brink of explosive growth, fueled by strong government support and an increasing demand for clean power. However, potential investors should tread carefully. The landscape is not without its challenges. Price volatility and fierce competition could impact returns. It's essential to weigh these risks against the promising outlook for sustainable energy. Indogulf Crop Sciences Limited is stepping into the agrochemical sector with an ambitious IPO aiming to raise Rs 2,000 million. This company is focused on developing crop protection products, which are crucial for enhancing agricultural yields. The market potential is certainly appealing, especially as global demand for sustainable farming solutions grows. However, it's essential to keep an eye on potential risks, such as regulatory hurdles and fierce competition in the industry. Before considering an investment, take a close look at their financial health and growth strategies. Understanding these factors will help you make a more informed decision in this promising yet challenging market. Aditya Infotech Limited, established in 1995, is set to launch an IPO aiming to raise Rs 13,000 million. Their financial highlights are impressive, showcasing strong revenue growth and solid profitability. However, as an investor, it's vital to dive deeper into key metrics like profit margins and return on equity. While the company has potential for expansion, we must remain cautious of market uncertainties and competitive pressures that could impact performance. Conducting thorough research and seeking professional advice is essential before making any investment decisions. This IPO could be a significant opportunity, but informed choices are crucial for success. Mori Tech Limited, established in 2005, has transformed into a public company with a significant focus on IT services. With an IPO offering of Rs 15,000 million, they are poised to drive growth through digital transformation, cloud services, and artificial intelligence. This is their first public issue, and while the growth potential is exciting, it's essential to consider the risks involved. Promoter divestment and increasing market competition could impact performance. If you believe in the future of IT and can navigate these uncertainties, investing in Mori Tech could be a strategic move worth exploring. Varandera Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs 12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Varandera Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs 12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Investing in Rahi Infotech Limited's IPO could be a promising opportunity, especially with the government's strong push for railway infrastructure in India. They're looking to raise Rs 4,200 million, which will be directed towards expansion and reducing debt, ultimately enhancing their financial health. However, it's important to remember that this is their first public offering, so we should brace ourselves for potential volatility in the stock price. Before making any decisions, take the time to thoroughly review their financials and the current market conditions. Look at their revenue growth, profit margins, and how they stack up against competitors. The railway sector is poised for growth, but like any investment, it comes with its risks. Sambhavi Steel Tubes Limited is making a significant shift from sponge iron to steel tube production, a move that could redefine its market position. With an IPO size of $5,400 million, the company aims to enhance its manufacturing capabilities, boost working capital, and reduce existing debt. As investors, it's crucial to analyze the profitability trends. How has the transition impacted margins? Additionally, we need to scrutinize the debt levels. A reduction here could signal financial health. Finally, consider the market risks in this competitive sector. Understanding these dynamics will be key to making informed investment decisions as Sambhavi embarks on this transformative journey. Prostarm Infosystems Limited is gearing up for its IPO, marking a pivotal moment in its journey since 2008. This company has navigated through various name changes, demonstrating remarkable adaptability in the tech and power systems sector. As they aim to raise capital for growth, it's essential for potential investors to tread carefully. With no prior market history, the risks are significant. Scrutinizing their financials is crucial, as is assessing the credibility of the promoters behind the scenes. Understanding the market dynamics will also play a key role in your decision-making. While there are opportunities to seize, a cautious approach is vital. Investing is not just about potential gains, it's about informed choices. Midwest Limited is on the brink of an exciting IPO, aiming to raise $2,500 million through fresh equity shares. Operating in the thriving natural stone sector, they specialize in granite and quartz, with ambitious plans to establish processing facilities in Andhra Pradesh. This growth potential is enticing, but it's crucial to recognize the uncertainties that come with an IPO. Investors must weigh the promise of expansion against risks like market dependence and liquidity issues. The natural stone industry is booming, yet a careful evaluation of Midwest Limited's financials and risk factors is essential before making any investment decisions. The opportunity is there, but due diligence is key. Globe Civil Projects Limited is set to make a significant move with its upcoming IPO, the first since 2002. This company has been a key player in the civil construction sector, focusing on essential infrastructure projects that drive economic growth. The IPO aims to raise capital for expansion and to tackle existing debt, which could position them for a robust future. However, potential investors should approach with caution. The market can be unpredictable, and execution challenges in large-scale projects can pose risks. It's crucial to weigh these factors carefully. As Jaro Institute of Technology Management and Research Limited prepares for its IPO, the excitement in the online education sector is palpable. With a fresh issue of $1,700 million and a significant offer for sale from promoter Sanjay Salunki, they're aiming to raise capital for growth. However, we must tread carefully. The online education market in India is fiercely competitive, with giants like BYJU's dominating the landscape. While the proceeds could enhance their technology and help reduce debt, the risks are substantial. Investors should weigh the potential for growth against the uncertainties that lie ahead. Proceed with caution. The path to success is anything but guaranteed. Investing in Niva Bupa Health Insurance Company demands a meticulous approach. First, let's dive into their financial performance. Analyzing profit margins and revenue growth reveals their operational efficiency and market viability. Are they consistently improving? Next, we must evaluate their market position. Are they gaining market share in a competitive landscape? This is crucial for long-term sustainability. Now, let's not overlook the risk factors. Regulatory challenges can significantly impact their operations, so understanding these risks is essential. Finally, we should scrutinize their management strategies and future growth prospects. How are they positioning themselves for the evolving healthcare landscape? Knowledge is indeed key in making informed investment decisions. Viney Corporation Limited is making waves with its IPO, marking a significant milestone since its inception in 19 and is now poised to tap into the booming electric. This IPO features a fresh issue, say, a retention of promoter eyebrow to Dell financial health risks competitive. With the electric vehicle sector on the rise, Viney Corporation could be a compelling opportunity, but thorough analysis is key to making an informed decision. All Time Plastics Limited is gearing up for an IPO, offering a fresh issue of up to Rs 3,500 million. Operating in the consumer plastics sector, they specialize in essential kitchenware and household items that are always in demand. This steady demand is certainly a positive sign for potential investors. However, it's crucial to weigh the competition in this space, as well as the company's reliance on key promoters who have been pivotal in its growth. Additionally, investing in a first-time public offering carries inherent risks. While the prospects look promising, a thorough analysis is essential before diving in. Understanding these dynamics will help you make an informed decision. Vikran Engineering Limited is on the brink of its initial public offering, aiming to raise Rs 9,000 million to fuel its growth and expansion. As a family-run business, it specializes in engineering, procurement, and construction contracts, perfectly positioned to benefit from India's ongoing infrastructure push. However, this being their first public issue, it's essential to consider the inherent market risks and uncertainties involved. While the sector outlook is promising, potential challenges in project execution could impact returns. Investors must carefully weigh these factors, balancing the excitement of a burgeoning industry against the realities of navigating a public market. Ajax Engineering Limited is gearing up for its IPO, offering 22.8 million equity shares, primarily through an offer for sale. While the construction sector is thriving, it's crucial to note that this IPO seems to favor the promoters more than the company's growth. As retail investors, we need to dig deeper. Look closely at the financial health of Ajax. Are they generating consistent profits? And pay attention to the promoter stake sales. These can significantly impact our potential returns. In a booming market, it's easy to get swept up in the excitement, but informed decisions are key to navigating this IPO landscape wisely. ETFs, or exchange-traded funds, are fascinating investment tools that allow you to buy shares representing a collection of assets, like stocks or bonds. They trade on the stock market just like individual stocks, which makes them incredibly easy to buy and sell. What's great about ETFs is that they track an index combining the benefits of mutual funds and stocks. This means you get lower costs, transparency, and flexibility. You can see daily holdings and trade anytime during market hours, which is a huge advantage. However, while most ETFs are generally safe, it's important to remember that specialized ETFs can carry specific risks. So, as you explore this investment option, keep in mind the balance between potential rewards and risks. ABB India Limited's 2023 annual report reveals an impressive financial trajectory, with revenues soaring to 10,147 crore, marking a remarkable 21.96% increase. This growth isn't just numbers, it reflects our commitment to excellence and innovation. Profit after tax climbed by 22%, underscoring our robust profitability in a competitive market. The demand for electrification, motion, and automation is stronger than ever, positioning us perfectly for future opportunities. And let's not overlook the proposed dividend of Rs 29.3 per share, a testament to our dedication to delivering value to our investors. With these solid fundamentals, ABB is not just keeping pace. We're setting the stage for sustained success. HDFC Life Insurance Company Limited has showcased remarkable financial growth for the year ending March 31st, 2024. Premiums earned have risen by 9.63%, totaling an impressive R630 858 million. This growth reflects our strong market position and customer trust. Investment income has surged to Rs 383,631.56 million, highlighting our effective asset management strategies. Net profit has also seen a significant increase of 15.34%, which enhances shareholder value and boosts earnings per share. We're proposing a dividend of Rs2, a testament to our robust cash flow. While cash equivalents have decreased, our liquidity remains strong, ensuring we can navigate future challenges effectively. Power Finance Corporation has truly set a remarkable benchmark in FY 2023-24, with total income soaring to Rs 46,034 crore, that's a 16% increase, and profit after tax reaching a 14,367 crore, up by 24%. Their loan portfolio is expanding, particularly in renewable energy, reflecting a 14% growth. Even more impressive, NPAs have dropped to an 8-year low of just 0.85%. This solid capital base, combined with strategic international expansion, positions PFC as a compelling investment opportunity. For those focused on infrastructure and energy transition, PFC stands out as a robust choice in today's market. Avance. Financial Services Limited is making significant strides in the education financing sector. With a remarkable 22.2% growth in assets under management, it's evident that this market is thriving. The company's recent report of a 14.2% increase in net profit showcases their effective cost management strategies. Their strategic focus on education loans, particularly for international studies, positions them favorably for future expansion. However, we must also consider the rising borrowing costs and the implications of key investor exits through the IPO. These factors warrant careful attention as we navigate this dynamic landscape. Dev Accelerator Limited is stepping into the thriving co-working space market with its upcoming IPO, aiming to raise capital for expansion. Since 2017, this sector has gained significant traction in India, especially post-pandemic, as the demand for flexible workspaces has surged. This presents a remarkable opportunity for growth. However, as a first-time public offering, investors should be aware of the inherent risks, particularly in a competitive landscape. The company plans to enhance its network and technology, which could position it well for future success. Understanding the financial details is crucial for making informed investment decisions. Keep an eye on this IPO. It could be a game changer in the evolving workspace industry. Godrej Consumer Products Ltd has demonstrated impressive growth in FY 2023-24, achieving a 6% increase in revenue and an outstanding 21% rise in EBITDA. This growth is largely driven by their commitment to innovation and sustainability, including a bold goal of reaching net zero emissions by 2035. Their strategic focus on expanding into rural markets and launching new products positions them strongly within the competitive FMCG landscape. However, while the outlook is promising, investors should remain vigilant about economic sensitivities and the challenges posed by market competition. Overall, GCPL's proactive initiatives suggest a solid foundation for long-term success. Tata Power's FY 2023-24 report showcases impressive financial growth, with a 10% increase in revenue and a remarkable 26% rise in EBITDA. This performance underscores the company's commitment to sustainable energy, as it aims for a 70% green portfolio by 2030. Their strong credit ratings and effective debt management not only enhance their financial stability, but also make them an attractive option for investors. While regulatory risks exist, the long-term outlook for Tata Power remains promising, especially as the world shifts towards clean energy solutions. Investing in Tata Power could be a strategic move for those looking to support a greener future while benefiting from robust financial growth. Hindustan Zinc Limited's integrated annual report for FY 2023-24 paints a compelling picture of financial strength. The company has achieved significant revenue growth, showcasing remarkable market stability. Key metrics reveal a net profit that underscores operational efficiency, while the earnings per share reflect a solid return for investors. The robust EBITDA margin indicates strong profitability, and substantial dividend payouts highlight impressive cash flow management. Moreover, the company's strategic investments in expansion and sustainability signal a commitment to future growth. For investors seeking steady returns and responsible operations, Hindustan Zinc stands out as a promising opportunity. Hindalco Industries Limited stands out as a compelling investment opportunity in today's market. With its diverse revenue streams from aluminium and copper, the company demonstrates remarkable resilience, even in fluctuating economic conditions. The recent RR350 dividend is a testament to its commitment to shareholders, signaling a strong return on investment. However, it's crucial to keep an eye on market dynamics and raw material costs, as these factors can impact profitability. With strong leadership and a strategic focus, Hindalco is well positioned for long-term growth in the metals sector. This is a company that not only adapts but thrives, making it an attractive option for investors looking for stability and potential in their portfolios. Sunshield Chemicals Limited has showcased remarkable financial growth, with its net worth climbing from Rs5 367.22 lakhs in 2022 to an impressive Rs8 219.02 lakhs in 2024. This surge is underpinned by a revenue increase to Rs28 337.54 lakhs, highlighting strong market demand for its products. However, it's essential to note that the company's borrowings have also risen, now standing at Rs 8,547.33 lakhs. This increase in debt raises some caution flags. As investors, it's crucial to balance the excitement of growth with the potential risks that come from operating in this specialized sector. Careful consideration will be key to navigating these dynamics effectively. Andhra Cements Limited presents a mixed financial landscape for FY 2024. While the equity share capital remains steady, it's encouraging to see a significant improvement in net worth, bouncing back from negative figures in FY 2022. Revenue generation has resumed, signaling a much-needed operational recovery. However, the company is still grappling with losses, which underscores ongoing challenges in profitability. For investors, this scenario is a double-edged sword. On one hand, there are clear signs of recovery. On the other, the persistent losses remind us to tread carefully. It's essential to weigh these recovery indicators against the underlying risks before making any investment decisions. Tech Mahindra Limited's FY 2023-24 report is truly impressive. With a revenue of Rs 61,080 crore, we've seen a solid 5% growth from last year. This isn't just numbers. It's a testament to the company's resilience in a competitive market. The net profit stands at Rs 5,390 crore, showcasing our strong operational efficiency. What really excites me is the dividend payout of Rs 40 per share, reflecting our commitment to rewarding investors. Plus, with a low debt-to-equity ratio, Tech Mahindra is proving its stability and financial health. This combination of growth, profitability, and prudent financial management makes it an attractive investment option. Investing in Tech Mahindra feels like a smart move for a bright future. Ambuja Cements Limited has truly excelled in FY 2023-24, achieving a remarkable revenue of Rs 33,160 crore, fueled by an 8.1% increase in cement sales. Their operating EBITDA of Rs 6,400 crore showcases an impressive 22% margin, highlighting their operational efficiency. What stands out even more is their zero gross debt, which underscores their financial stability in a competitive market. With ambitious expansion plans on the horizon and a strong commitment to sustainability, including a target of net zero emissions by 2050, Ambuja is strategically positioned for long-term growth. For investors, this is a compelling opportunity to consider, especially in light of the evolving competitive landscape. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indi app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indi app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. Cipla Limited's integrated annual report for FY 2023-24 is truly impressive. Total income soared to Rs 26,249 crore, reflecting robust growth. The net profit of Rs 356 crore and an EBITDA margin of 20.3% highlight our operational strength and efficiency. This isn't just numbers, it's a testament to our commitment to excellence. With a dividend of Rs 13 per share, we're rewarding our investors while strategically investing in R&D to drive innovation. Cipla is not just keeping pace, we're setting the stage for future success. The outlook is bright, and I'm excited about what lies ahead for us and our investors. In FY 2023-24, GAIL India Limited has truly set a benchmark in financial performance, achieving a remarkable total income of Rs 194,198 crore and a net profit of Rs 7,937 crore. This translates to an earnings per share of Rs 17.65, showcasing our commitment to enhancing shareholder value. Our dedication to rewarding investors is evident with a dividend declaration of Rs 6.50 per share. With a robust debt-to-equity ratio of just 0.23, GAIL stands strong in its financial health. We are not just resting on our laurels. Our focus remains on expanding our natural gas infrastructure and investing in sustainable energy solutions. This strategic direction positions us well for future growth and stability, making GAIL a compelling choice for investors. In FY 2023-24, REC Limited has truly set a benchmark for financial excellence. Our total income has surged to an impressive Rs 46,214 crore, marking a remarkable 20% increase. Even more inspiring is our net profit, which has risen by 27% to reach Rs 14,19 crore. This isn't just growth, it's a testament to our unwavering commitment to robust performance. What excites me the most is our strategic focus on renewable energy financing. We've achieved an astounding 539% growth in project sanctions, positioning us as a leader in sustainable development. This is not just about numbers, it's about paving the way for a greener future. Together, we are not only driving financial success, but also making a significant impact on the world. Britannia Industries Limited's FY 2023-24 report showcases a solid 3.6% revenue growth, reaching Rs 16,986.08 crore. This growth is complemented by a 9.9% rise in operating profit, indicating strong operational efficiency. However, it's worth noting that profit after tax dipped by 2.7%, a point of concern amidst rising costs. The proposed dividend of Rs 1,770.38 crore underscores the company's commitment to its shareholders, reflecting confidence in its financial health. Strategic expansions and a focus on sustainability are positioning Britannia well for future growth, even as it navigates competitive market pressures and fluctuating raw material costs. Union Bank of India has truly outdone itself in FY 2023-24, achieving a remarkable total business of Rs 21.26 trillion, reflecting a solid growth of 10.31%. What's even more impressive is the net profit surge of 61.84%, reaching Rs 13,648 crore. This is a clear indicator of the bank's robust financial health. Asset quality is on the rise too, with gross NPAs down to 4.76%. This improvement showcases our commitment to maintaining a strong balance sheet. Our strategic investments in digital technology are paving the way for future growth, ensuring we stay competitive in a challenging economic landscape. With a solid capital base and a forward-looking approach, Union Bank is not just weathering the storm. We are positioning ourselves for exciting opportunities ahead. Macrotech Developers Limited, or LODA, is on an impressive trajectory for FY 23-24. We've achieved a remarkable revenue from operations of Rs 10,320 crore, marking an 8% year-on-year increase. Our pre-sales have soared to Rs 14,520 crore, showcasing the strong demand in the market. Profitability is also on the rise, with adjusted profit after tax climbing to Rs 1,610 crore, a significant 19% growth. What's more, we've successfully reduced our net debt from Rs 7,070 crore to Rs 3,010 crore, which greatly enhances our financial stability. Our commitment to sustainability is unwavering as we aim for net zero emissions by 2050. This is not just about growth, it's about building a sustainable future. Investors can feel confident in our direction and the robust foundation we're laying for continued success. Adani Energy Solutions Limited has reported impressive financial growth for FY 2023-24, with revenue from operations soaring to Rs 14,217 crore, marking a 17% increase. This robust performance is underpinned by a significant investment of Rs 17,000 crore in infrastructure, positioning the company for future expansion. They've also secured contracts for smart meters worth an impressive Rs 27,195 crore, highlighting their commitment to innovation. With improved debt metrics and a strong liquidity position, they are well equipped for growth, particularly in the renewable energy sector. However, it's crucial for investors to remain vigilant about potential regulatory and execution risks that could impact their competitive edge. Eicher Motors Limited has truly outdone itself in FY 2023-24, showcasing remarkable financial growth. Revenue from operations soared to Rs 16,535.78 crore, marking a solid 15% increase. But that's not all. Profit after tax skyrocketed by an impressive 37.31%, reaching Rs 4,001 crore. This isn't just about numbers. It reflects our unwavering commitment to innovation. With exciting new motorcycle launches and a strategic entry into the electric vehicle market, Eicher is not just keeping pace but setting the standard. This growth story is a testament to our dedication to enhancing market presence and delivering value to our investors. The future looks bright, and I'm thrilled to be part of this journey. Tata Consumer Products Limited has delivered impressive financial results for FY 23-24. Consolidated revenue reached Rs 15,206 crore, reflecting a solid 10% growth. The EBITDA saw a remarkable surge of 24%, climbing to Rs 2,323 crore, showcasing our operational efficiency. Even more encouraging, the group net profit increased by 29%, highlighting our strong profitability. Our commitment to innovation is evident, with over 100 new products launched, significantly enhancing our market presence. We're also prioritizing sustainability, aiming for leadership in the FMCG sector. Additionally, our expanded distribution network now reaches an impressive 4 million outlets, positioning us for continued growth and success. TVS Motor Company has showcased remarkable growth in FY 2023-24, reporting total revenue of Rs 31,925 crore, a 20.5% increase from the previous year. With a profit after tax of Rs 2,083 crore, up 40% and strong cash flow, the company is financially robust. Their two-wheeler sales surpassed 4 million, while electric vehicle sales soared by 101%. Strategic investments in EV technology and global expansion, coupled with a commitment to sustainability, position TVS as a leader in the automotive sector. Dr. Reddy's Laboratories Limited has shown significant financial growth for FY 23-24, with revenue reaching Rs 27,916 crores, marking a 14% increase year over year. The company demonstrates strong operational efficiency, reflected in an EBITDA margin of 29.7%. The profit after tax stands at Rs 7,187 crore, translating to an earnings per share of Rs 73.50. Investment in research and development is robust, with Rs 2,290 crore allocated, emphasizing innovation in biosimilars and complex generics. The company maintains a low net debt-to-equity ratio, ensuring financial flexibility. Strategic initiatives include partnerships with global firms. Adani Total Gas Limited has truly made a mark in FY 23-24, reporting a remarkable revenue of Rs 813 crore and a 23% surge in profit after tax. This growth is not just a number. It reflects their strategic pivot towards clean energy solutions, particularly in compressed biogas and LNG. By focusing on these sustainable alternatives, ATGL is positioning itself as a frontrunner in the city gas distribution sector. What's more impressive is their ability to maintain low debt levels, which is crucial for financial stability. However, as potential investors, it's essential to keep an eye on regulatory risks and the competitive landscape that could impact profitability. Despite these challenges, ATGL's commitment to sustainable solutions makes it a compelling option for those looking to invest in the future of energy. Cholamandalam Investment and Finance Company Limited has remarkable financial performance in FY 2023-24, with revenue soaring to Rs 19,680 crore, marking a 22% growth, and a net profit of Rs 3,173 crore, up 27%, showcasing robust profitability. Assets under management have surpassed Rs 53,618 crore, reflecting strong lending growth. The focus on digital transformation, with 98% of transactions now digital, enhances efficiency. Cholamandalam's diversified portfolio positions it as a solid investment opportunity. Zydus Life Sciences Limited has truly made waves in FY 2023-24, reporting a total income of Rs 19,550 crore, marking a solid 13% increase. The standout performer? Their U.S. formulations business, which surged by an impressive 17%. Even more striking is the net profit, which skyrocketed by 97%, reflecting their robust profitability. This growth is underpinned by a strong commitment to research and development, particularly in the biosimilar sector, positioning them for sustained success. However, as potential investors, it's crucial to weigh these achievements against the backdrop of regulatory challenges and fierce market competition. This balance will be key in assessing the long-term viability of this promising company. Havells India Limited has reported impressive financial results for FY 23-24, achieving total revenue of Rs 19,680 crore, marking a remarkable 22% growth. Their net profit surged to Rs 504 crore, translating to an earnings per share of Rs 23.15. While there has been some margin pressure, the company remains committed to its shareholders, declaring a total dividend of Rs 9.0 per share. Strategic expansions in smart home solutions and a strong focus on sustainability initiatives position Havells favorably for future growth. However, it's essential for investors to stay vigilant regarding competitive pressures and fluctuations in input costs. Overall, Havels is navigating the market landscape effectively, showcasing resilience and a forward-thinking approach. Dabur India Limited's FY 2023-24 report is nothing short of remarkable. We've achieved a consolidated revenue of Rs 12,404 crore and a net profit of Rs 1,543 crore, reflecting our robust growth trajectory. Our international business is thriving, contributing Rs 3,046 crore, which underscores our global presence and strength. Sustainability is at the heart of our strategy. We're committed to achieving net zero emissions by FY 2045 and have already recycled over 40,000 MT of plastic waste. This is not just about numbers, it's about making a positive impact. We're also expanding our footprint with 14 new product launches and reaching out to 122,000 villages in rural markets. Hero MotoCorp is on an incredible journey of growth in FY 23-24, achieving a remarkable total income of Rs 37,456 crore, marking an 11% increase. Our EBITDA has surged by 32%, driving a net profit of Rs 3,968 crore, an impressive 36% growth that underscores our resilience and market leadership. With a commanding 30.9% market share, we're not just participants in the industry, we're pioneers. Our commitment to electric mobility shines through with the Vita electric range and our zero waste initiatives, positioning us for a sustainable future. Strategic partnerships are fueling our innovation, ensuring we stay ahead of the curve. For investors, our consistent dividends reflect our dedication to delivering value. Shree Cement Limited is on an impressive growth trajectory in FY 23-24, with revenues soaring to Rs 19,586 crore, marking a remarkable 16% increase. Our EBITDA has surged by an astonishing 46%, reaching Rs 4,925 crore, while net profit after tax stands strong at Rs 2,468 crore. We're proud to maintain a cash-positive position and a robust market cap of Rs 92,741 crore. With a cement production capacity of 53.4 MTPA, soon to expand to 56.4 MTPA, we're not just growing. We're leading the industry in sustainability, with 55.9% of our energy coming from green sources. Our strong dividend payout reflects our confidence in the future, as we embark on ambitious plans for digital transformation and expansion into ready-mix concrete. Mankind Pharma Limited has truly outdone itself in FY 2023-24, achieving a remarkable total revenue of 10,135 crore, an impressive 18% increase from last year. Our EBITDA has surged to 2,550 crore, reflecting a phenomenal 33% rise, while profit after tax has soared to 1,942 crore, marking a staggering 48% growth. This robust performance is backed by a strong balance sheet and net cash of Rs 260 crore, positioning us perfectly for future investments. We're strategically expanding our respiratory and cardiac portfolios, all while staying committed to sustainability. With these solid foundations, Mankind is not just growing, we're thriving and ready to seize new opportunities. Bajaj Holdings and Investment Limited has truly outperformed expectations in FY 2023-24. Total income skyrocketed to Rs 3,075.69 crore, a significant leap from Rs 1,937.01 crore. This impressive growth is mirrored in our profit before tax, which reached Rs 3,2082 crore, showcasing our robust operational performance. We're also pleased to announce an interim dividend of Rs 110 per share, reflecting our dedication to rewarding our shareholders. With substantial investments in Bajaj Auto and Bajaj Finserv, we maintain a cash-positive status and a debt-free balance sheet, which not only enhances our stability, but also positions us strongly for future opportunities. This is a testament to our strategic vision and commitment to sustainable growth. Divi's Laboratories Limited has demonstrated a robust financial performance in FY 23-24, reporting a total income of Rs 8,002 crore. While the profit after tax saw a dip to Rs 1,576 crore, the company remains debt-free, underscoring its financial stability. Notably, 52% of its revenue comes from Europe, highlighting its strong global presence and export capabilities. The commitment to sustainability is commendable, with significant reductions in greenhouse gas emissions. However, challenges persist, particularly with shrinking profit margins and reliance on specific markets. Overall, Divi's Laboratories is strategically positioned for future growth, making it an intriguing prospect for investors. Apollo Hospitals Enterprise Limited has truly set the stage for remarkable growth, reporting a total income of Rd 19,680 crore for FY 2023-24, marking an impressive 22% increase. The improved EBITDA and a solid 20% return on capital employed highlight the company's operational efficiency and profitability. What's more, the digital platform Apollo 24/7 has engaged over 33 million users, significantly enhancing healthcare accessibility across the nation. With a strong commitment to sustainability and substantial capital investments, Apollo is well positioned for continued success. However, as potential investors, it's wise to keep an eye on regulatory changes and market competition. The future looks bright, but staying informed is key. NHPC Limited's FY 2023-24 report shows a total income of 10,024.99 crore, a slight dip from last year. While profit after tax has decreased to R 3,143.94 crore, the company continues to demonstrate resilience, generating an impressive 21,679 million units of power. NHPC's commitment to renewable energy and strategic projects positions it well for future growth. Investors should appreciate its solid financial standing and dedication to sustainability. However, it's crucial to remain vigilant about potential risks, including regulatory changes and challenges in project execution. Balancing these factors will be key for anyone looking to invest in NHPC's promising journey ahead. Shriram Finance Limited has showcased remarkable growth in FY 23-24, with total income soaring to Rs 34,998 crore, up from Rs 29,803 crore. Net interest income reached Rs 19,687 crore, fueling a PAT of Rs 7,990 crore, a 20% increase. With assets under management at Rs 24,062 crore and improved asset quality, the company is positioned for sustained success. Digital initiatives like the Shriram One Super App enhance customer experience, while a commitment to sustainability focuses on electric vehicle financing. Bosch Limited's performance for FY 2023-24 is nothing short of remarkable. With total revenue soaring to Rs 16,727 crore, we've achieved a robust 12% growth. Even more impressive is our profit before tax, which surged by 24.2%, showcasing the strength of our core operations. Our commitment to innovation shines through as we invest in cutting-edge digital solutions and sustainability initiatives, proudly achieving carbon neutrality. While we navigate global economic uncertainties and regulatory changes, our focus remains on leveraging our strengths to drive future growth. This is an exciting time for Bosch, and I'm thrilled about the journey ahead. Torrent Pharmaceuticals Limited showcased impressive financial growth in FY 2023-24, with total revenue reaching 10,728 crore, a 12% increase from the previous year. Operating EBITDA grew by 19%, and profit after tax surged 33%, highlighting strong profitability. The company's strategic focus on product expansion and sustainability positions it for future success. IDBI Bank Limited has delivered impressive results for FY 2023-24, with net profit skyrocketing to R 5,634 crore, an astonishing 55% increase. This growth is mirrored in their total business, which has reached R 4.66 lakh crore, reflecting a robust 12% rise. The bank's improved return metrics highlight its operational efficiency, making it an attractive option for investors. Additionally, a solid capital position, and strategic digital initiatives further enhance its appeal in the market. However, it's crucial for potential investors to stay vigilant about regulatory challenges and competitive pressures that could impact future performance. Overall, IBI Bank is positioning itself strongly, but awareness of the broader landscape is essential for informed investment decisions. ICICI Prudential Life Insurance Company stands out with its robust financial health, showcasing impressive premium income growth and a stable net profit. Their high persistency ratios are a testament to excellent customer retention, which is crucial in today's competitive landscape. What's particularly exciting is their commitment to digital transformation, enhancing customer engagement and making services more accessible. Coupled with a diversified investment strategy, they're well positioned for long-term returns. However, as potential investors, it's essential to remain vigilant about regulatory and competitive challenges that could impact performance. JSW Energy Limited has truly demonstrated impressive growth in FY 2023-24. With total revenue soaring to Rs 11,941 crore, marking a 10% increase, and an EBITDA that has skyrocketed by 53% to Rs 5,837 crore, the company is clearly on a strong trajectory. Their commitment to renewable energy is not just a buzzword. They're targeting a robust 20 GW capacity by 2030. This ambitious goal is complemented by significant investments in energy storage and green hydrogen technologies, positioning them as innovators in the sector. However, while the outlook is bright, investors should remain vigilant about potential regulatory changes and the competitive landscape. Jindal Steel and Power Limited has truly demonstrated remarkable financial strength in FY 2023-24. With gross revenue soaring to Rs 58,115 crore and a profit after tax of Rs 5,943 crore, the numbers speak volumes. Their operational efficiency is highlighted by an impressive EBITDA of Rs 10,131 crore. What's particularly noteworthy is their commitment to sustainability and digital transformation, aiming for net zero carbon by 2047 while expanding their steel capacity. For investors, the manageable debt levels and robust cash flow are encouraging signs. However, it's essential to remain vigilant about potential market volatility and regulatory risks. In FY 2023-24, the Indian Hotels Company Limited demonstrated remarkable growth, achieving consolidated revenue of Rs 6,952 crore, marking a 17% increase from the previous year. This impressive performance is underscored by a 20% rise in EBITDA, showcasing our strong operational capabilities. What sets IHCL apart is our robust financial health. No net debt and over Rs 2,200 crore in cash reserves. This positions us strategically for future expansion and sustainability initiatives. As we look ahead, our focus remains on leveraging these strengths to capitalize on emerging opportunities in the hospitality sector. BHEL's FY 2023-24 report shows a revenue of Rs 22,921 crore, reflecting a steady growth from last year. While we see a slight dip in EBITDA and PAT due to accounting changes, the order book has surged to an impressive Rs 131,598 crore, indicating robust demand in the market. The company's strategic focus on renewable energy and digital transformation positions it well for future growth. However, investors should remain vigilant about regulatory risks and increasing market competition. Balancing these factors is crucial for making informed investment decisions in this evolving landscape. Cummins India Limited's FY 2023-24 report is nothing short of impressive. Revenue has surged to an astounding Rs 9,958.60 crore, marking a robust 16% increase. Even more remarkable is the profit after tax, which has soared by 40% to Rs 1,720.58 crore. This growth isn't just a number. It reflects a strong balance sheet and a commitment to sustainability that sets Cummins apart. With no significant debt, the company is in a prime position to capitalize on future opportunities. For investors looking for a solid and promising venture, Cummins is clearly a compelling choice. The future looks bright, and I'm excited to see where this journey takes us. ICICI Lombard General Insurance Company Limited has impressive financial growth in FY 2024. Net premium earned rose to Rs 168.66 billion, reflecting a 13.8% increase. Profit after tax also grew by 11%, reaching Rs 19.19 billion. Investment income surged 19.6%, enhancing overall stability. However, operating profit saw a decline, raising concerns. Despite this, the total assets climbed to Rs 633.09 billion, indicating robust expansion. The company declared a Rs 11 dividend per share, offering value to investors. CG Power and Industrial Solutions Limited has truly outdone itself in FY 2023-24. Standalone revenue surged to an impressive Rs 7,710 crores, marking a remarkable 16% increase. Even more exciting, profit before tax grew by 24%, showcasing their improved margins. With a debt-free status and a robust order book of Rs 6,276 crores, CG Power is not just stable, but primed for future expansion. Their strategic move into semiconductor manufacturing opens up new avenues for growth. While there are always risks with new ventures, the company's strong financial health and clear growth strategy make it a compelling investment opportunity. This is a moment to watch closely. Max Healthcare Institute Limited has remarkable revenue growth in FY 23-24, driven by improved occupancy rates and higher average revenue per occupied bed. Stable profit margin and a recommended dividend of Rs 1.50 per share, the company showcases its commitment to shareholder value. The balance sheet remains robust, reflecting strategic investments in healthcare infrastructure. Expansion efforts and a focus on specialized services enhance market positioning, while digital initiatives aim to elevate patient care. Solar Industries India Limited has showcased impressive financial highlights for FY 2023-24. Revenue reached Rs 6,070 crore, while profit after tax grew to Rs 875 crore. With a solid net worth of Rs 3,306 crore, the company maintains a low debt profile. Proposed dividends of Rs 8.5 per share reflect shareholder value. Strategic investments in R&D and manufacturing expansion position Solar Industries favorably in the defense sector, bolstered by a robust order book of Rs 2,600 crore. United Spirits Limited reported impressive financial performance for FY 2023-24, with consolidated net sales reaching Rs 11,321 crore, a 14.2% increase. The focus on premiumization is evident as the prestige and above segment grew by 11.9%, generating substantial brand loyalty. Profit after tax stood at Rs 1,312 crore, reflecting a healthy 12.3% margin. Investors should note the significant sustainability initiatives, achieving 98.6% renewable energy usage. Growth prospects are strong. Motherson Sumi Wiring India Limited has truly excelled in FY 2023-24, reporting a remarkable revenue of Rs 8,328 crore, which is an impressive 18% increase year-on-year. The company's profit after tax stands at Rs 638 crore, showcasing its robust profitability. What's even more striking is the return on capital employed at 48%, indicating exceptional efficiency in resource utilization. Being debt-free not only reflects strong cash flow, but also allows for a generous 55% dividend payout to shareholders. MSWIL continues to lead the wiring harness market while strategically venturing into the electric vehicle segment, positioning itself for future growth. Indus Towers Limited has demonstrated impressive financial growth in FY 23-24. Total revenue reached Rs 86,006 million, marking a modest increase of 0.77%. However, the real highlight is the EBITDA, which surged to Rs 146,939 million, a remarkable 50% rise. Profit after tax nearly tripled, soaring to Rs 60,162 million. This growth is underpinned by a substantial investment of Rs 96,975 million in network expansion, adding around 27,000 macro towers. With a low debt-to-equity ratio of just 0.16, Indus Towers showcases strong financial stability. As a key player in the 5G rollout, the company is also committed to sustainability, having installed over 14,000 solar sites. In FY 23-24, IRCTC delivered impressive financial results, with revenues soaring to Rs 4,270 crore, a remarkable 20% increase. The EBITDA reached Rs 1,630.68 crore, showcasing a robust margin of 38.2%. Profit after tax climbed to Rs 170 crore, reflecting strong operational efficiency. Shareholders reaped the benefits with a total dividend of Rs 6.50 per share, a clear sign of the company's commitment to returning value. With a market capitalization of Rs 74,396 crore, IRCTC remains a formidable player in the market. Key growth drivers included catering, internet ticketing, and rail near, with notable advancements in e-catering and digital ticketing enhancing customer experience. Colgate-Palmolive, India Limited has delivered impressive financial results for FY 23-24. Net sales reached Rs 5,644 crore, marking an 8.8% increase from last year. The EBITDA surged by 22.9% to Rs 1,901 crore, while profit after tax rose by 20.1% to Rs 1,320 crore. With a gross margin of 69.5%, the company showcases strong profitability. They've declared a total dividend of Rs 58 per share, reflecting their commitment to shareholder returns. Innovations like Colgate Max Fresh with Ultra Freeze technology highlight their dedication to product development. Plus, their sustainability efforts, including the transition to recyclable tubes, demonstrate a forward-thinking approach. Polycab India Limited has reported growth for FY 23-24. Revenues surged to Rs 180,394 million, marking a 28% rise. EBITDA grew by 35% to Rs 24,918 million, and PAT increased by 41% to Rs 18,029 million. Strong EBITDA margin of 13.8% and dividend payout of 25.4%. Net cash position of Rs 21,408 million and Rs 8,580 million in capital expenditure for future expansion. Controls a 25-26% share in the wires and cables market and focuses on sustainability, recycling 87 million liters of water and using renewable energy. Lupin Limited's annual report for the year ending March 31st, 2024 showcases remarkable financial growth. Total income surged to Rs 16,384 crore, marking a solid 9% increase. Even more impressive, EBITDA soared to Rs 2,737 crore, reflecting a robust 20% rise. Our net profit jumped to Rs 1,068 crore, a testament to our operational efficiency and strategic initiatives. In a strong commitment to our shareholders, we proposed an Rs 8 dividend per share. Additionally, with Rs 1,566 crore invested in research and development, we are doubling down on our focus in pharmaceuticals and specialty drugs. This investment not only enhances our product offerings, but also strengthens our global footprint, particularly in the US and Europe. Oracle Financial Services Software Limited has reported impressive financial results for FY 2023-24. Their consolidated revenue has reached Rs 63,129.61 million, marking a robust 12% increase from the previous year. Even more noteworthy is their net profit, which stands at Rs 22,993.62 million, reflecting a remarkable 23% growth. This strong performance underscores the effectiveness of their strategic focus on cloud solutions and innovation, driving both profitability and shareholder returns. Additionally, the company has declared an interim dividend of Rs 240 per share, demonstrating a solid commitment to rewarding investors. SRF Limited's FY 2023-24 report paints a challenging picture. Revenue has dipped to Rs 13,130, reflecting a 12% decline driven by market pressures. The EBITDA has also taken a hit, falling 26%, while profit after tax has plummeted by 38%. However, it's not all bleak. Segments like technical textiles are showing resilience amidst these challenges. SRF's commitment to sustainability and its global reach remain crucial assets. As investors, it's essential to weigh these risks against the potential for growth in a complex landscape. The question is, can SRF navigate these turbulent waters and emerge stronger? Tube Investments of India Limited has shown solid financial health for FY 23-24, with revenues reaching R7,611 crore, up 5% from last year. Profit before tax also saw a slight rise to Rs 970 crore. Notably, their return on invested capital remains robust at 54%. Free cash flow decreased to Rs 376 crore due to increased capital expenditures. It declared a total dividend of Rs 350 per share, reflecting shareholder value. Engineering division excelled, while the mobility division faced revenue challenges. In FY 2023-24, Indian Bank has truly outdone itself, achieving a remarkable total business of Rs 12.22 lakh crore. Can you believe it? Gross advances have surged by 13%, and our net profit has skyrocketed by an impressive 53%, reaching Rs 8,063 crore. This isn't just growth, it's a testament to our robust strategy and commitment to excellence. What's even more exciting is our improved asset quality, with gross NPA dropping to 3.95%. This reflects our dedication to maintaining a healthy balance sheet. And let's not forget about innovation. 87% of our transactions are now digital, showcasing our commitment to staying ahead in the tech-driven banking landscape. Burger Paints India Limited has delivered impressive financial results for FY 2023-24. Revenue surged to Rs 11,199 crore, marking a 6% increase. Even more remarkable, EBITDA soared by 25% to reach Rs 1,925 crore, while profit after tax jumped 36% to Rs 1,170 crore. This strong performance is further underscored by the declaration of a Rs 6.50 dividend per share, showcasing the company's commitment to enhancing shareholder value. In terms of market expansion, Burger launched 43 new products and established over 14,500 new retail touchpoints, significantly broadening its reach. Sustainability remains a core focus, with initiatives aimed at promoting low VOC products and renewable energy. Yes Bank Limited has demonstrated impressive growth in FY 2023-24, with a total income reaching Rs 13,209 crore, marking a 13.8% increase year-on-year. What's even more striking is the net profit, which surged by 74.4% to Rs 1,251 crore. This remarkable performance is underpinned by a significant improvement in asset quality, as evidenced by the GNPA ratio dropping to just 1.7%. The bank's strategic focus on digital initiatives and its commitment to sustainability are not only enhancing operational efficiency, but also positioning it as an attractive option for investors. While there are potential macroeconomic risks to consider, Yes Bank's robust fundamentals and forward-thinking strategies make it a compelling investment opportunity. Torrent Power Limited's FY 2023-24 report highlights a robust revenue of Rs 27,183 crore, reflecting a solid 5.8% growth. This impressive performance is underscored by a remarkable 27% surge in profit after tax, showcasing the company's resilience in a competitive market. With a strategic focus on renewable energy, Torrent Power has invested Rs 3,855 crore in capital expenditures, positioning itself for sustainable growth. Their balanced debt structure not only supports ambitious expansion plans, but also enhances financial stability. For investors, this combination of growth, profitability, and commitment to renewable energy makes Torrent Power a compelling investment opportunity. SBI Cards and Payment Services Limited has released its annual report for FY 2023-24, and there are some key financial highlights worth noting. They've declared an interim dividend of Rs 2.50 per share, which is a positive signal for investors looking for returns. However, what stands out is the projected related party transactions with the State Bank of India, estimated at a staggering Rs 28,000 crore. This raises important questions about compliance and transparency. As investors, understanding these financial dynamics is crucial for making informed decisions. The interplay between dividends and related party transactions could significantly impact the company's future performance, so it's essential to keep a close eye on these developments. Marico Limited's FY 2023-24 report is truly impressive. Profit after tax soared by 36%, reaching R1,170 crore. This strong financial performance is further highlighted by an dividend of R950, reflecting the per share of R's 11.5 net worth of 38.8, exceptional management efficiency. Focus on digital sustainability, 67.40%. RBF revenue has surged. Impressive. Profit after tax has soared by 64%, reaching Rs 3,169 crore. This robust performance is backed by a strong balance sheet and minimal net debt, positioning the company favorably in the market. Investments in research and development, particularly in biosimilars, indicate a commitment to future growth. However, it's essential to remain vigilant about regulatory risks in key markets. Overall, Aurobindo Pharma is not just thriving today. It's strategically poised for sustained success in the coming years. UCO Bank's annual report for FY 2023-24 presents a mixed bag of financial highlights. Operating profit has seen a commendable rise to Rs 4,576 crore, marking a 5.43% increase. However, it's important to note that net profit has taken a hit, declining by 11.2%, primarily due to higher provisions. On a positive note, the bank has made strides in asset quality, with gross NPA decreasing to 5.53%. This improvement, coupled with robust digital initiatives and strategic lending, positions UCO Bank for future growth. Yet investors should remain cautious considering the risks associated with net profit declines and broader macroeconomic sensitivities. The Bank of India's annual report for FY 2023-24 is truly impressive. We've seen a remarkable net profit surge of 57%, reaching Rs 6,318 crore. This growth is a testament to our robust revenue performance, primarily driven by enhanced asset quality. Our capital adequacy ratio stands strong at 16.96%, ensuring stability for our stakeholders. Moreover, we're distributing a 28% dividend, reflecting our commitment to returning value to investors. One of the standout achievements is the reduction in our gross NPA ratio to 4.98%, showcasing our effective asset management strategies. Additionally, advances have grown by 13.52%, fueled by our strategic investments in digital initiatives. This solid performance positions us well for future growth and reinforces our commitment to delivering value. Persistent Systems Limited has achieved remarkable financial milestones for FY 2023-24, reporting a revenue of 1.186 billion, reflecting a robust growth of 14.5%. This impressive performance is further underscored by our profit after tax, which surged to Rs 10.9 billion, marking an 18.7% increase. Our commitment to delivering value to our stakeholders is evident in our decision to raise the total dividend to Rs 52 per share, up from Rs 50. These results not only highlight our strong financial health, but also reinforce our dedication to sustainable growth and shareholder returns. As we navigate the future, we remain focused on innovation and excellence, ensuring that we continue to create value for our investors and stakeholders alike. Muthoot Finance Limited has shown remarkable growth in FY 2023-24, largely fueled by its robust gold loan services. The company's decision to declare dividends underscores its dedication to rewarding shareholders. With strong asset quality and a commitment to prudent lending practices, Muthoot is not just expanding its branch network, but also investing heavily in digital initiatives to elevate the customer experience. While the focus on gold loans provides a solid foundation, It's crucial for investors to remain vigilant about potential risks, such as fluctuating gold prices and evolving regulatory landscapes. Staying informed is key to navigating this dynamic market. Alchem Laboratories Limited financial highlights for FY 23-24. Revenue of $126,676 million. That's a 9.2% growth year-on-year. Profit after tax soared to around $17,958 million, an 82.5% increase. EBITDA margin improved to 17.7%, showing efficiency. Rs 40 dividend per share, reinforcing shareholder value. Its R&D investment of $5,229 million focuses on biosimilars and generics, aligning with global healthcare trends. Indian market remains strong, contributing 68.4% of revenue, while non-US markets saw a remarkable 33.3% growth. PI Industries limited growth in FY 23-24, with revenue hitting Rs 6,235 crore and a profit after tax of Rs 992 crore. Their EBITDA margins reflect effective cost management. A Rs 4.5 dividend per share underscores their commitment to shareholders. Notably, Rs 300 crore was invested in R&D, enhancing their innovation in crop protection. Expansion efforts in Gujarat and Hyderabad bolster production capabilities. The company is focused on sustainability, aiming for reduced emissions and increased renewable energy use. MRF Limited's FY 2023-24 report showcases remarkable financial growth. Total income surged to Rs 24,186 crore, marking a 9.5% increase. Profit before tax soared to Rs 2,739 crore, while profit after tax reached Rs 241 crore. This impressive performance is further highlighted by a final dividend of Rs 194 per share, reflecting MRF's commitment to its shareholders. The company's strong export performance and efficient operations are commendable, as MRF continues to invest in technology and sustainability. However, it's essential for investors to remain vigilant regarding potential raw material price fluctuations and competitive pressures in the market. Balancing optimism with caution is key in navigating this dynamic landscape. Jindal Stainless Limited has demonstrated remarkable financial growth in FY 2023-24, with a consolidated revenue of Rs 38,562 crore. That's an impressive 8% increase from last year. Their EBITDA has surged by 31%, reaching Rs 4,704 crore, while profit after tax climbed 29% to Rs 2,693 crore. This robust performance is complemented by a stable debt-to-equity ratio of just 0.2, showcasing their strong capital management. Moreover, JSL is leading the charge in sustainability with India's first green hydrogen plant, significantly contributing to CO2 reductions. This commitment not only enhances their operational efficiency, but also positions them as a responsible player in the industry. Tata Communications Limited has reported a remarkable revenue growth of 21.9%, reaching Rs 20,969 crore for FY 2023-24. This is certainly a strong performance, particularly in the data segment, which alone contributed over Rs 17,000 crore. However, we must address the decline in profit after tax, which fell to Rs 968 crore from Rs 1,482 crore. This juxtaposition raises important questions about profitability trends amidst impressive revenue figures. The company's strategic acquisitions and emphasis on digital services signal a commitment to long-term growth potential, but investors should remain cautious. While the revenue surge is encouraging, the drop in profits suggests that operational efficiencies may need to be prioritized. General Insurance Corporation of India, or GIC Re, has showcased impressive financial performance for FY 2023-24. Gross premiums have surged to Rs 37,181.76 crore, a clear indicator of robust market demand. The profit after tax stands at Rs 6,497.30 crore, reflecting the company's stability and effective management strategies. Additionally, GIC Re's solvency ratio has improved to 3.25, signaling strong capital adequacy, which is crucial for investor confidence. However, It's important to note the increased underwriting losses, primarily driven by catastrophic events, which pose potential risks. This dual narrative of growth and caution is essential for investors to consider as they evaluate GIC Re's future prospects. L&T Technology Services, LTTS, growth in FY 23-24, reporting revenues of Rs 96,473 million, a 9.4% increase YOY. PAT of Rs 13,037 million, reflecting a 7.6% rise. It maintains an EBIT margin of 17.1%. Dividend of R33 per share highlights a 41% payout ratio. Its strategic focus on mobility, sustainability, and high-tech segments positions it well in emerging markets. Investments in AI and digital technologies, alongside a global footprint with 22 design centers and 1,296 patents, signal innovation and commitment. Understanding differences between mutual funds and exchange-traded funds ETFs can really empower your investment choices. Mutual funds are purchased directly from the fund company and are traded at the end of the day. This means you won't see the price change throughout the day, which can be a bit limiting. On the other hand, ETFs trade like stocks, allowing you to buy and sell throughout the day, giving you more flexibility. When it comes to costs, mutual funds often come with higher fees and minimum investments, while ETFs typically offer lower expenses and greater accessibility. Plus, if tax efficiency is on your mind, ETFs usually manage capital gains better than mutual funds. If you value professional management and are okay with higher fees, mutual funds might be your go-to. But if you're looking for flexibility and lower costs, ETFs could be the smarter choice. Understanding these differences can help you make informed decisions that align with your investment goals. Hyundai Motor India Limited is set to launch its initial public offering on October 15, 2024. This is a significant opportunity, with up to 142 million equity shares available, all coming from its parent company, Hyundai Motor. As an investor, it's essential to dive into the prospectus and scrutinize the detailed risk factors outlined there. The shares will be listed on both the BSE and NSE, catering to various investor categories, which adds an interesting layer to the investment landscape. Remember, understanding the financial and operational details is crucial before making any decisions. This IPO could be a pivotal moment in the automotive sector, so stay informed and ready to act. India's tax and regulatory landscape for cryptocurrencies has seen some major shifts recently. In 2022, the government imposed a hefty 30% tax on gains from virtual digital assets. And here's the catch: no loss offsetting is allowed. So if you make a profit, be prepared to part with a significant chunk of it. Additionally, there's a 1% tax deducted at source, or TDS, on transactions exceeding Rs 10,000. While trading in cryptocurrencies is legal, remember they aren't considered legal tender, meaning you can't use them for everyday transactions. On the horizon, the government is also exploring the introduction of a central bank digital currency, which could reshape the entire landscape. Staying informed is crucial, as these policies are likely to evolve further. Welcome to our overview of the Waaree Energies Limited Red Herring Prospectus. Waaree is a significant player in India's solar energy landscape, specializing in the manufacturing of solar modules and offering EPC services. Their upcoming IPO, set to kick off the bidding process on October 18, 2024, aims to boost production capacity and improve working capital. As investors, it's crucial to consider the potential risks, including market volatility and increasing competition in the sector. The prospectus provides a comprehensive look at Waaree's financial health, showcasing their management expertise and necessary legal disclosures. This is an exciting opportunity in a rapidly growing industry, but due diligence is essential to navigate the landscape effectively. Anlon Healthcare Limited, established in 2013, is making waves in the pharmaceutical sector, particularly with its focus on active pharmaceutical ingredients. Their upcoming IPO is set to raise funds through a fresh issue of 1.4 crore equity shares, which presents an intriguing opportunity for potential investors. The healthcare sector is on a growth trajectory, driven by increasing demand and innovation. However, it's crucial to dive deep into Anlon's financial performance, assess market risks, and understand their competitive positioning. Evaluating these factors will empower you to make informed investment decisions. As the healthcare landscape evolves, staying informed is your best strategy for navigating this promising yet complex market. In FY 2023-24, Steel Authority of India Limited achieved gross sales of Rs 1.04,545 crore, marking a modest 1% increase. This growth was fueled by higher sales volumes and favorable pricing. Notably, EBITDA soared to Rs 12,280 crore, up from Rs 9,379 crore, while net profit climbed to Rs 2,733 crore. However, total debt rose to Rs 36,315 crore, pushing the debt-equity ratio to 0.67. On a positive note, the company maintains a healthy interest coverage ratio of 2.64. With record crude steel production at 19.24 million tons, sales showcases robust growth. Yet it's essential to keep a close eye on that rising debt. Linda India Limited's annual report for FY 23-24 shows a robust total revenue of Rs 27,187 million, marking a solid 6.4% increase. The gases division led the charge with an impressive 10.2% growth, fueled by soaring demand in the market. While the project engineering division faced a slight decline, the overall EBITDA still rose by 7.2%, showcasing resilience in our operations. The company has declared a generous 120% dividend, reflecting our commitment to shareholder value. With a keen focus on digital transformation, Linda is set to enhance both operations and customer experience. Although we remain optimistic about India's economic outlook, we must stay vigilant regarding potential revenue pressures in certain divisions. Oberoi Realty Limited is showcasing a robust financial performance for FY 2023-24, with consolidated revenue climbing to an impressive Rs 4,49,578.53 lakh, marking a solid 7.23% growth. While standalone revenue faced a setback, the overall profit before tax surged by 11.32%. It's intriguing to see that despite a 30.80% drop in standalone profits, the company remains undeterred. Their commitment to expansion and the increase in dividends reflect a strong belief in long-term growth. This resilience and strategic focus make Oberoi Realty a compelling option for investors looking for stability and potential in a dynamic market. The future looks bright. Supreme Industries Limited has truly showcased remarkable financial strength, reporting a total income of Rs 10,251.98 crore for FY 23-24, a notable increase from Rs 9,283.35 crore. Their profit before tax stands at Rs 1,351.83 crore, and with a generous dividend of 1,500%, they are clearly prioritizing shareholder returns. What's particularly impressive is their commitment to sustainability, especially their initiatives towards renewable energy, which positions them well for future growth. However, potential investors should remain vigilant about the risks associated with fluctuating plastic demand and evolving regulatory landscapes. Balancing these factors is essential for making informed investment decisions. At IDFC First Bank's AGM for FY 2023-24, several key insights emerged that investors should note. While revenue and profit figures were not disclosed, the absence of a dividend signals a strategic focus on internal growth. This suggests that the bank is prioritizing reinvestment over immediate shareholder returns, which could bode well for long-term value. The appointment of experienced directors and auditors underscores a commitment to robust governance, ensuring that the bank is well positioned to navigate future challenges. Furthermore, the proposed Rs 5,000 crore debt issuance indicates ambitious plans for expansion, hinting at potential new projects or initiatives on the horizon. In FY 2023-24, Rail Vikas Nigam Limited achieved a remarkable turnover of Rs 21,132.58 crore, reflecting a solid 7.15% growth from the previous year. Profit before tax soared to Rs 1,939.40 crore, marking an impressive increase of nearly 18%. This robust performance is further underscored by a net worth rise of over 21%, showcasing the company's strong financial health. The board has proposed a dividend of Rs 2.11 per share, reaffirming its commitment to shareholders. With significant project execution, including 666 km of railway sections and 810 km of electrification, RVNL is not just maintaining, but expanding its infrastructure footprint. This growth trajectory positions RVNL as a key player in the railway sector, making it an attractive prospect for investors. Bharat Forge Limited has truly set a benchmark in financial performance for 2024, achieving consolidated revenues of Rs 15,682 crore. A standout highlight is the defense sector, where revenues surged fourfold to 1 crore, underscoring our strategic expansion in this critical area. Order wins totaling Rs 6,300 crore, of which Rs 4,494 crore comes from defense. Our growth prospects are exceptionally strong. Moreover, our executable order book currently stands at Rs 5,192 crore, providing robust earnings visibility for the next 3 years. This positions Bharat Forge not just as a leader, but as a formidable player in the defense landscape, ensuring sustained value for our investors. JSW Infrastructure Limited is on an impressive growth trajectory, showcasing a total income of Rs 4,032 crore, marking a remarkable 20% increase year-on-year. The net profit has surged by 55% to Rs 161 crore, reflecting our robust financial health. We've made significant strides in reducing our net debt from Rs 216 crore to a mere Rs 65 crore, positioning us for a strong future. As India's second largest private port operator, we currently manage 170 MTPA and have ambitious plans to expand to 400 MTPA by FY 2030. Our third-party cargo segment has also seen a phenomenal growth of 36%. Plus, our recent IPO raised Rs 2,800 crore, further boosting investor confidence. The Central Bank of India's Integrated Annual Report for 2023-24 showcases remarkable financial performance. With a net profit soaring to Rs 2,549 crores, that's a staggering 61.13% increase year-on-year. Total business growth stands at an impressive 10.34%. This bank is not just surviving, it's thriving. What's more, the improved asset quality and reduced NPAs signal a robust financial health, making it an attractive option for investors. The bank's commitment to digital transformation and sustainability further enhances its appeal, positioning it well for future growth. With these strong fundamentals, the Central Bank of India is definitely a contender worth considering in today's investment landscape. Welcome to our overview of the 16th Annual General Meeting of PB Fintech Limited, scheduled for September 27, 2024. Key highlights include the adoption of audited financial statements for the year ending March 31, 2024, and the reappointment of Mr. Alok Bansal as a director. Additionally, Mr. Dhruv Shringi is proposed as an independent director for 5 years. The meeting will also discuss the new employee stock option scheme, aiming to incentivize and retain talent. The Phoenix Mills Limited's 119th Annual General Meeting reveals remarkable financial performance for FY 2023-24. With operating revenues soaring to Rs 3,978 crores and a net profit of Rs 333 crores, our financial health is robust. Retail consumption has exceeded Rs 11,000 crores, reflecting a strong market demand. Our strategic expansion continues with the Phoenix Mall of the Millennium in Pune, enhancing our footprint. Additionally, we are committed to sustainability, sourcing 23% of our energy from renewable sources. This positions Phoenix Mills not just as a market player, but as a leader committed to growth and responsible business practices. Welcome to our overview of the 43rd Annual General Meeting of Thermax Limited, taking place on August 1, 2024. This year, we're excited to announce a proposed dividend of Rs12 per share, reflecting our commitment to delivering value to our investors. We'll also be discussing the reappointments of key directors, ensuring strong leadership as we navigate the future. A significant focus will be on sustainability, as Thermax aims to enhance its commitment to renewable energy and innovative water treatment solutions. Our goal is to drive growth while prioritizing environmental responsibility, making us a forward-thinking choice for investors looking to make an impact. In FY 2023-24, Ashok Leyland achieved remarkable financial growth, with sales revenue reaching Rs 38,367 crores, marking a solid 6% increase. Our EBITDA surged to Rs 4,607 crores, a staggering 57% rise, showcasing our operational excellence. We recorded a net profit of Rs 2,618 crores, reinforcing our market leadership in the bus segment. Despite global challenges, our international sales thrived, demonstrating resilience and adaptability. We're also committed to sustainability, investing in green mobility solutions like electric buses and hydrogen trucks, aligning with our ambitious goals for 2030 and 2048. GMR Airports Infrastructure Limited has truly outdone itself in FY 2023-24, reporting a remarkable revenue of Rs 754.56 crores, a staggering 31.18% increase from last year. This growth is driven by a surge in air traffic and our strategic diversification of revenue streams. While we acknowledge the net loss of Rs 27.50 crores, it's important to recognize the ongoing investments in our infrastructure and the commitment to sustainability. Achieving net zero certification for Delhi Airport is a significant milestone, showcasing our dedication to a greener future. Despite the challenges of rising finance costs, our expansion plans are robust, positioning us for long-term success. Tata Elxsi Limited's integrated annual report for 2023-24 showcases remarkable financial growth, with revenues soaring to Rs 3,552.1 crores, marking a solid 13% increase. Profit before tax has also seen a significant rise, reaching Rs 1,248.7 crores. What sets Tata Elxsi apart is its commitment to sustainability, with a bold goal of achieving carbon neutrality by 2030. The company is not just focused on the present, it's expanding its global footprint and driving innovation in automotive technologies. This combination of strong financial performance and a forward-thinking approach makes Tata Elxsi a compelling investment opportunity for those looking to align with a sustainable future while capitalizing on growth. Patanjali Foods Limited has reported a total income of Rs 31,962 crores for FY 2023-24, reflecting modest growth in a competitive market. Notably, the FMCG segment has surged to account for 30% of total revenue, showcasing the company's strategic shift towards diverse product offerings. Edible oils remain the cornerstone of their business, contributing Rs 22,038 crores. However, net profit saw a slight dip to Rs 765 crores, a point of concern for some investors. Despite this, Patanjali emphasizes sustainability and product expansion, positioning itself for future growth. This focus not only aligns with consumer trends, but also enhances their competitive edge in the FMCG landscape. Investors should keep a close eye on how these strategies unfold in the coming quarters. Buying a Rolls-Royce is more than just acquiring a vehicle. It's an affirmation of your journey, a tribute to your accomplishments. Each model, whether it's the majestic Phantom or the adventurous Cullinan, is a masterpiece of bespoke craftsmanship, tailored to reflect your unique style. The moment you slide into the sumptuous leather seats, you're enveloped in a world where luxury knows no bounds. The innovative engineering ensures a ride that is as smooth as it is powerful, a testament to a legacy that has stood the test of time. Owning a Rolls-Royce isn't merely about prestige. It's about celebrating the milestones that define you, embracing the extraordinary, and driving into a future that is as limitless as your ambition. Buying a Rolex transcends mere acquisition. It's a celebration of milestones. Each tick of the watch echoes the achievements, birthdays, or weddings that define our journey. It's not just about financial readiness. It's about recognizing the significance of this investment. A Rolex embodies unparalleled quality and craftsmanship, often becoming a treasured family heirloom passed down through generations. It's a symbol of success that not only enhances your confidence, but also opens doors for networking opportunities. Ultimately, it's about personal satisfaction, a well-deserved reward for your hard work and dedication. Wearing a Rolex is a reminder that you've earned every moment of success. Owning a Lursen yacht transcends mere acquisition. It's a statement of triumph. Each vessel is a masterpiece, meticulously crafted to reflect your unique journey and aspirations. Imagine celebrating a significant business milestone or a personal achievement aboard a yacht that embodies the pinnacle of luxury. With cutting-edge technology and unparalleled craftsmanship, every detail is tailored to your desires, ensuring an experience that redefines life at sea. This is not just about sailing, it's about creating a legacy, a sanctuary where every moment is infused with elegance and sophistication. A Lursen yacht is more than a vessel. It's the ultimate expression of your success. In FY 2023-24, SJVN Limited reported a total revenue of Rs 2,076.96 crores, a decline from Rs 3,282.50 crores. This drop reflects the challenges we faced this year, with profit after tax also decreasing to Rs 911.44 crores. However, amidst these hurdles, we generated an impressive 8,489 million units of power. This achievement underscores our unwavering commitment to renewable energy. Our expanding project portfolio and sustainability initiatives demonstrate our resilience and dedication to a greener future. We remain focused on overcoming obstacles and delivering value to our investors and shareholders. In FY 2023-24, Prestige Estates Projects Limited achieved an impressive revenue of Rs 94,253 million, a solid 7.5% increase that showcases our resilience and growth. Our EBITDA soared to Rs 40,466 million, reflecting a remarkable 59% growth, an indicator of our operational efficiency and strong market demand. Net profit before tax climbed to Rs 21,223 million, and earnings per share reached Rs 34.28, highlighting our commitment to delivering value to our shareholders. With record sales and a robust pipeline of ongoing projects, we are well positioned for a bright future. The momentum is undeniable, and I'm excited about what lies ahead for Prestige Estates and our investors. In FY 2023-24, ACC Limited reported a revenue of Rs 19,959 crores, reflecting a decrease from the previous year. However, the silver lining is the impressive surge in profit after tax, which reached Rs 337 crores, highlighting the company's operational efficiency. ACC is on an ambitious path, planning to expand its cement capacity to 140 MTPA by 2027-28. This growth is not just about numbers. It's coupled with a strong commitment to sustainability, aiming for net zero emissions by 2050. For investors, this dual focus on profitability and environmental responsibility positions ACC as a forward-thinking leader in the cement industry, ready to tackle future challenges while delivering value. In FY 2023-24, Nika achieved remarkable financial growth, with consolidated revenue hitting Rs 63,856 million, a 24% increase from last year. Our gross merchandise value soared to 124 billion, reflecting a robust 28% rise. EBITDA grew by an impressive 35%, and profit after tax surged by 90%. The beauty segment truly thrived, crossing the $1 billion mark, while our fashion division captured 20% of the premium women's market. On the international front, we launched NISA in the GCC, significantly enhancing our global footprint. These milestones not only demonstrate our strong market position, but also our commitment to delivering value to our investors. Adani Enterprises Limited is set to launch non-convertible debentures worth Rs 800 crore, and this could be a noteworthy opportunity for investors. With a credit rating of CARE A+ positive, these secured debentures offer a level of safety that's hard to overlook. Adani's robust presence in renewable energy and infrastructure further enhances their attractiveness. However, potential investors should tread carefully. The company faces legal and regulatory challenges that could impact its reputation and operations. It's essential to dive deep into the complete prospectus before making any decisions. Balancing opportunity with caution is key in today's financial landscape.
Welcome to our in-depth analysis of Southern Petrochemical Industries Corporation Limited, or SPIC, as we explore its investment prospects for the fiscal year 2023-24. In this video, we'll provide a comprehensive overview of SPIC's financial performance, potential risks, and opportunities, helping you make an informed investment decision. Let's begin with SPIC's strengths. Despite a challenging year, SPIC has maintained its commitment to shareholders by declaring a dividend of 1.50 per share. This move reflects a degree of financial resilience and a commitment to returning value to investors. Additionally, SPIC's strategic shift towards natural gas operations is a forward-thinking approach, aligning with global trends towards cleaner energy sources. However, it's crucial to acknowledge the weaknesses. SPIC reported a revenue drop to 1,962.66 crore and a profit after tax of 87.91 crore, both significantly lower than the previous year. These figures highlight the financial hurdles SPIC is currently facing, which potential investors should consider carefully. Now, let's explore the opportunities. The transition to natural gas, while challenging, presents a significant opportunity for SPIC to modernize its operations and potentially reduce costs in the long term. This shift could position SPIC favorably in the market as environmental regulations tighten and demand for sustainable practices increases. On the flip side, we must consider the threats. Production issues have been a persistent challenge, and the transition to natural gas operations introduces additional risks. These factors could impact SPIC's ability to meet production targets and maintain profitability in the short term. In conclusion, investing in SPIC requires a balanced perspective. While there are clear challenges, including financial performance and operational risks, there are also promising opportunities through strategic shifts and dividend declarations. As always, assess your investment goals and risk tolerance before making a decision. Thank you for joining us in this analysis. If you found this video helpful, please like and subscribe for more insights into the financial world. Stay informed and happy investing. Welcome to the annual report presentation of Geo Financial Services Limited for the fiscal year 2023-24. Today we embark on a journey through JFSL's remarkable achievements, strategic initiatives, and future aspirations, all underpinned by our unwavering vision to lead in digital financial services. At the heart of JFSL's success lies a robust financial performance. This year, we proudly report a consolidated profit after tax of 1,605 crore, with earnings per share reaching 2.53. Our strong capital base, with a net worth of 1,039,148 crore, positions us as one of the most capitalized financial service platforms globally. These figures not only reflect our financial health, but also our commitment to delivering value to our stakeholders. Strategic partnerships have been pivotal in our growth narrative. Our joint venture with BlackRock, Inc. marks a significant milestone in democratizing investment and wealth management services in India. This collaboration is set to unlock immense growth potential in the asset management sector, leveraging BlackRock's global expertise and JFSL's local insights. In our pursuit of innovation, JFSL adopts a digital-first approach, harnessing cutting-edge technology to offer seamless financial services. This strategy aligns perfectly with India's burgeoning digital economy, positioning us to capitalize on the vast opportunities it presents. As we look to the future, our market potential is vast and promising. JFSL is expanding its footprint across across key sectors such as lending, payments, insurance, and wealth management. Our mission is to drive financial inclusion by offering accessible and affordable financial solutions, particularly targeting underserved markets in India. This focus not only broadens our reach, but also aligns with our vision of inclusive growth. However, navigating the financial services landscape is not without its challenges. The competitive market, with established players like HDFC, SBI, and ICICI, demands constant innovation and agility. Moreover, as a systemically important financial services company, we are subject to stringent regulatory requirements. These factors necessitate a proactive approach to risk management, ensuring that we remain resilient and adaptable. Despite these challenges, JFSL stands as a compelling investment opportunity. Our robust financials, strategic joint ventures, and clear focus on digital financial services underscore our potential for growth, particularly in the asset management and lending spaces. Our commitment to financial inclusion further enhances our appeal, promising substantial returns for our investors. In conclusion, JFSL's journey is one of visionary leadership, innovation, and growth. We are poised to redefine the financial services landscape in India, driven by our mission to empower every Indian with accessible financial solutions. As we move forward, we invite you to join us in this exciting journey, confident in our ability to deliver sustained value and growth. Thank you for your attention and continued support. Together, let's build a future where financial services are not just a privilege, but a right for all.
Investing in HUDCO could be a promising opportunity. Their latest revenue figures show a robust rise to Rs 7,784.29 crore, with a profit after tax of Rs 116.74 crore, an impressive indicator of solid growth. They've sanctioned loans totaling Rs 386.55 crore, which is a staggering 235% increase. This kind of expansion is noteworthy. Plus, with the 8IA rating, the risk seems relatively low. However, it's essential to keep an eye on their rising debt levels. As an investor, it's crucial to align this potential with your own investment goals. Balancing risk and reward is key to making informed decisions. TGV SRAAC Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue has dipped to Rs 1,545.96 crore, and net profit has taken a significant hit, falling to Rs 60.29 crore. While the company has declared a Rs1 dividend, the declining profitability raises red flags. On a brighter note, their expansion into chloromethanes and solar initiatives could signal future growth. However, the risks associated with these ventures cannot be overlooked. It's essential to assess your risk appetite carefully before making any investment decisions. Balancing potential rewards against these challenges will be key to navigating this landscape. Ashoka Buildcon Limited is at a pivotal moment, showcasing impressive growth through major projects like a $150 million solar power plant and significant highway expansions. Their recent win of a Rs 662.55 crore contract for a link road to Navi Mumbai International Airport highlights their potential in a booming infrastructure sector. With the Indian government's strong focus on renewable energy, Ashoka Buildcon is well positioned to capitalize on this momentum. While we await detailed financials, their consistent project wins signal a robust stability and growth trajectory. For investors, this is a company to watch closely as it navigates the evolving landscape of infrastructure development in India. Jio Financial Services Limited presents a compelling investment opportunity. With a profit after tax of Rs 1,605 crore and a robust net worth of Rs 139,148 crore, JFSL is making waves in the financial sector. Their strategic partnership with BlackRock aims to democratize wealth management in India, tapping into a rapidly growing market. What sets them apart is their digital-first approach, which enhances accessibility for underserved segments of the population. This positions JFSL not just as a financial player, but as a catalyst for change in wealth distribution. With strong fundamentals and significant growth potential, investing in JFSL could be a smart move in today's dynamic market. Gallant Ispat Limited, or GAL, has truly made waves in the financial landscape for FY 2023-24. With an impressive 23.8% increase in EBITDA and a staggering 62.5% rise in PAT, GAL is clearly on an upward trajectory. This growth is driven by the surging demand from infrastructure projects, positioning GIL as a key player in the steel sector. What sets GIL apart is its unwavering commitment to sustainability. The company prioritizes clean energy and adheres to robust ESG practices, ensuring that growth does not come at the expense of the environment. With ongoing investments and a positive outlook, GIL presents a compelling opportunity for investors looking to capitalize on a company that not only excels financially, but also champions responsible business practices. Vodafone Idea Limited's FY 2023-24 report paints a nuanced picture for investors. Revenues have reached Rs 426,517 million, indicating slight growth. But the stark reality is that net losses have surged to Rs 312,184 million. This raises significant concerns, especially with debt now towering at Rs 276,298 million. The company is expanding its 4G services and gearing up for 5G, which is promising, yet the competitive landscape is fierce. Financial instability is a major red flag. As investors, we must tread carefully, weighing the potential of technological advancements against the backdrop of high debt and ongoing losses. This complex investment landscape demands a thorough evaluation before making any commitments. Investing in Southern Petrochemical Industries Corporation Limited requires a careful look at their recent performance. With revenue dropping to Rs 1962.16 crore and profit after tax down to Rs 87.91 crore, the numbers raise some red flags. They did declare a Rs 150 dividend, which is a positive sign, but we must consider the underlying issues. Production challenges and a heavy reliance on natural gas could pose significant risks moving forward. However, there's a glimmer of hope. Potential efficiency improvements might stabilize their operations. As you weigh these factors, think about how they align with your investment goals. It's a balancing act between risk and reward, and every decision counts. Madhav Infra Projects Limited has encountered significant hurdles in FY 2023-24. Standalone revenues have plummeted to Rs 363.09 crore, while consolidated revenues are down to Rs 466.51 crore. This sharp decline in revenue is mirrored by a notable drop in profit after tax. In light of these challenges, the company has opted not to declare dividends, instead choosing to retain earnings to fuel future growth. With a CARE BBB credit rating, the risks are becoming increasingly apparent. Although MIPL boasts a diverse project portfolio, external economic factors pose a real threat to project execution. Investors should remain vigilant as we navigate this complex landscape. Hyundai Motor India Limited is on the brink of a significant milestone with its first initial public offering over 142 million equity shares. This move is backed by Hyundai Motor Company, a global automotive leader, which adds a layer of credibility. However, potential investors should tread carefully. The absence of an existing market means future price movements are uncertain and inherent risks are involved. On the upside, HMIL has established a robust presence in India's automotive sector and is making strides into the electric vehicle market. This expansion could position them favorably as the industry evolves. Balancing these factors will be crucial for anyone considering this investment opportunity. Lemon Tree Hotels Limited has demonstrated remarkable growth, with a 23% increase in revenue, now reaching 1,076.8 crore. Their profit after tax has surged by 29%, even as they continue to invest in renovations. The company is strategically expanding, targeting over 120 hotels by FY25, all while emphasizing sustainability and inclusivity. However, it's important to note that high debt levels could pose risks. As the hospitality sector rebounds, Lemon Tree Hotels presents a compelling investment opportunity. Yet, potential investors should carefully weigh these risks against the promising growth trajectory. Investing in National Aluminium Company Limited, or NALCO, demands a thorough analysis of its 2023-24 annual report. Revenue has dipped slightly to Rs 13,149.15 crore, but here's the silver lining. Profitability has surged to Rs 2,059.95 crore. This indicates a remarkable resilience in challenging market conditions. The company has achieved record production levels and impressive export figures, showcasing its operational strength. However, we must remain cautious. The revenue decline and ongoing market volatility present notable risks. It's crucial to assess your investment strategy carefully, weighing these factors before making any decisions. Balancing potential rewards against risks is key in navigating this investment landscape. Shipping Corporation of India Land and Assets Limited has demonstrated remarkable financial growth, with revenues skyrocketing from a total 34 lakhs in 2021-2022 to an impressive 9894 lakhs in 2023-2024. While there was a dip in profits during 2022-2023, the rebound to Rs 330 lakhs showcases effective cost management strategies. The company's valuable real estate assets and commitment to maritime training position it strategically for long-term growth. Additionally, the declared dividend of Rs 0.66 per share reflects a strong commitment to returning value to shareholders. This trajectory not only highlights the company's resilience, but also its potential for sustained success in the maritime sector. Considering investing in Oil India Limited? Let's break it down. For the fiscal year 2023-24, we saw a slight dip in standalone revenue to Rs 24,514.28 crore, while consolidated revenue fell to Rs 37,646.48 crore. Profit after tax also took a hit, landing at Rs 5,551.85 crore for standalone operations. Despite these short-term revenue concerns, the company remains profitable. What's particularly interesting is their strong dividend payouts and a growing focus on renewable energy, which could signal long-term potential. While the immediate numbers might raise eyebrows, the strategic shift towards sustainability could position Oil India Limited favorably in the evolving energy landscape. Keep an eye on this one. NPR Finance Limited's latest annual report paints a complex picture. Revenue has dropped significantly from Rs 1,274.33 lakhs to Rs 946.61 lakhs, primarily due to a decline in income from share sales and the closure of its wind power segment. However, amidst this decline, the company has managed to turn a profit of over 108.63 lakhs, marking a notable recovery from last year's loss. This turnaround suggests that cost management strategies are taking effect. Yet, we must remain cautious. The loss of Rs 258.23 lakhs raises red flags about sustainable income. Investors should carefully consider these dynamics, as the declining operational revenue could signal potential challenges ahead. Investing in Saj Hotels Limited's IPO could be an intriguing opportunity, especially with the tourism sector bouncing back post-pandemic. Their operational resorts, like Saj on the Mountains and Saj by the Lake, seem poised to generate steady revenue from bookings and dining. However, it's essential to approach this with caution. The financial data available is limited, and without any prior stock performance to analyze, we're stepping into somewhat uncharted territory. They're offering 42,050 shares, but we must consider the risks involved. Market acceptance is uncertain, and economic fluctuations could impact their growth. While the potential is there, it's crucial to weigh the excitement against the reality of these risks before diving in. Investing in Divyadan Recycling Industries Limited presents an intriguing opportunity within the expanding recycling sector. The company specializes in recycled polyester staple fiber, a product that meets the rising demand for sustainable materials. While we lack specific revenue and profit after tax figures, the potential for growth in this eco-conscious market is significant. However, it's crucial to approach this investment with caution. The absence of detailed financial data and the inherent uncertainties of the market could pose risks. Therefore, a thorough evaluation of both the opportunities and challenges is essential before making any investment decisions. Manba Finance Limited presents a compelling opportunity in the expanding non-banking financial company sector. Their draft red herring prospectus reveals consistent growth in vehicle financing and personal loans, which is promising. As the market for personal mobility continues to grow, Manba is well positioned to capitalize on this trend. However, it's important to approach this first public offering with caution. Investors should be mindful of the inherent risks, including market volatility and the lack of historical trading data. Balancing the potential for growth with these risks is crucial for making informed investment decisions. Investing in KRN Heat Exchanger and Refrigeration Limited is a decision that requires careful thought. The company is positioned in a growing sector focused on energy efficiency, which is promising. However, the absence of detailed revenue and profit after tax data raises some red flags. This lack of transparency can make it challenging to gauge the company's true financial health. The upcoming IPO certainly presents potential opportunities, but we must remain cautious. Market volatility can significantly impact new offerings, and it's essential to weigh the risks against the potential rewards. Staying informed and analyzing the available data will be crucial as we navigate this investment landscape. Proceed with caution and ensure you have all the insights before making any decisions. Hyundai Motor India Limited has truly set a benchmark in the automotive sector with its remarkable growth trajectory. In just 9 months ending December 31st, 2023, the company reported a staggering revenue from operations of Rs 21,579.11 million, largely fueled by robust vehicle sales. Looking at fiscal year 2023, total revenue soared to Rs 603,075.80 million, a significant leap from Rs 473,184.32 million in 2022. This impressive growth is a testament to Hyundai's strategic expansion and unwavering commitment to innovation. The strong demand for their vehicles underscores their focus on customer satisfaction, positioning them as a formidable player in the competitive automotive landscape. It's clear that Hyundai is not just keeping pace, but is actively shaping the future of the industry. Ola Electric Mobility Limited is truly making waves in the electric vehicle sector, and I couldn't be more excited about it. Their focus on eco-friendly transportation is not just a trend, it's a movement towards a sustainable future. While we may not have specific revenue figures from their draft red herring prospectus, the ambition to raise Rs 55,000 million through their IPO speaks volumes about their growth potential. The electric vehicle market is booming, and investing in Ola could be a golden opportunity for those who believe in the future of sustainable technologies. With their innovative approach and commitment to green mobility, Ola is positioning itself as a strong contender in this dynamic landscape. The future is electric, and Ola is leading the charge. Investing in Diffusion Engineers Limited requires a careful approach. While we lack specific revenue and profit after tax figures, the company operates in welding consumables and heavy engineering, suggesting a diverse revenue stream. Their recent IPO signals potential growth, particularly in the booming infrastructure sector. However, the absence of historical stock performance means we should tread cautiously. It's essential to analyze industry trends and wait for detailed financial data before making any commitments. Remember, informed decisions are key in navigating the investment landscape. Proceed with diligence and patience. Investing in Western Carriers, India Limited presents an intriguing opportunity. Their IPO is offering over 28 million shares at R172 each, aiming to raise nearly Rs5,000 million. This company operates in the rapidly growing logistics sector, providing a range of services that cater to diverse needs. However, it's essential to note that they lack a market history, which introduces potential volatility. While the promise of infrastructure developments is enticing, it's crucial to weigh these risks carefully. Are you ready to explore this opportunity, or will the uncertainty hold you back? The decision lies in balancing potential rewards against the inherent risks. Ola Electric Mobility Limited is set to launch its IPO, offering million equity shares and aiming to raise around R6,500 crore. Fueled by potential for growth, the risk it is competitive. The vehicles and are prepared inherent risks of an valuable addition to your investment. Just remember to keep a close eye on their financials after the listing to ensure it aligns with your investment strategy. Investing in Orient Technologies Limited could be an intriguing opportunity. They're offering over 10 million equity shares at Rs206 each, aiming to raise funds for expansion in the rapidly growing IT infrastructure and cloud computing sector. This is an area that's booming, and their focus here is promising. However, it's essential to tread carefully. The lack of prior performance data raises some red flags, and the competitive landscape is fierce. While the potential for growth is enticing, it's crucial to conduct a thorough analysis before diving in. Balancing optimism with caution could be the key to making a smart investment decision. ECOS, India. Mobility and Hospitality Limited is set to launch an IPO of 18 million equity shares, aiming to raise R6,012 million. While the mobility sector is on the rebound post-pandemic, it's crucial to note that this offering primarily benefits existing shareholders rather than fueling new growth initiatives. As an investor, you need to weigh the potential gains from a recovering industry against the inherent risks of a first-time public offering. The market is buzzing with optimism, but remember, the IPO landscape can be unpredictable. Ensure your investment strategy aligns with your risk tolerance and long-term goals before diving in. Investing in Premier Energies Limited IPO presents an intriguing opportunity in the solar energy sector. With an impressive offer size exceeding R28,000 million and a share price of R450, this company is well positioned to capitalize on the growing demand for renewable energy. Their robust manufacturing capabilities give them a competitive edge, but it's essential to consider the risks involved. Notably, a significant portion of the IPO shares is allocated to existing investors, which means that not all the funds raised will be directed towards growth initiatives. While the renewable energy market holds great promise, it is also characterized by volatility. As an investor, weighing these factors is crucial before diving in. Gala Precision Engineering Limited is set to offer 3,174,416 equity shares at Rs529 each, aiming to raise around R1,679.27 million. This company operates in diverse sectors like automotive, construction, and renewable energy, showcasing significant growth potential. However, as this is their inaugural public offering, investors should tread carefully. The absence of historical performance data raises questions, and the relatively high share price adds another layer of complexity. It's crucial to weigh the promising prospects against the inherent risks before making any investment decisions. Remember, informed choices are the best choices in the world of investing. Investing in Brainbees Solutions Limited, known as First Cry, offers a compelling opportunity in the thriving baby products market, With an IPO size of nearly Rs 42 billion, this includes fresh equity shares aimed at fueling growth, alongside an offer for sale that benefits existing shareholders. FirstCry is strategically positioned to capitalize on rising incomes and the booming e-commerce landscape, making it a strong contender in a competitive space. However, potential investors should carefully consider the risks involved. Market competition is fierce, and a significant portion of the shares will primarily benefit current stakeholders. Balancing these factors is crucial for making an informed investment decision. The National Stock Exchange of India has truly outdone itself in the 2023-24 annual report. With a consolidated revenue of Rs 16,433 crores, we're looking at an impressive 28.74% growth. The profit after tax stands at Rs 8,305 crores, marking a solid 12.91% increase. These figures highlight the exchange's strong financial health. The EBITDA margin is a remarkable 70.73%, showcasing robust profitability that investors can trust. With a market capitalization soaring to Rs 382 lakh crores, the NSE is now the fourth largest stock exchange globally. It continues to lead as the largest derivatives exchange and dominates equity cash trades. Office Space Solutions Limited IPO is set to offer 15.6 million equity shares at Rs 383 each, amounting to nearly Rs 6 billion. As a frontrunner in India's co-working sector, Office serves a diverse clientele, from startups to established enterprises. However, it's crucial to note that a significant portion of this IPO involves existing shareholders liquidating their stakes. This raises important questions about the company's long-term growth potential. As an investor, you need to carefully weigh the promise of Office against the competitive pressures in the co-working market. The landscape is evolving rapidly, and while the numbers look appealing, understanding the risks is essential. Edelweiss Financial Services Limited is currently offering 20 lakh secured redeemable non-convertible debentures, each priced at Rs 1,000, totaling a substantial Rs 2,000 million. These NCDs come with a CRISIL A+ Heart Watch negative rating, which signals potential risks that investors should be aware of. While the secured nature of these debentures provides a layer of safety, it's crucial to delve into the underlying assets backing them. The negative watch status suggests that there could be changes ahead that might impact their stability. Before making any investment decisions, take the time to thoroughly assess these factors. Understanding the risks involved will empower you to make informed choices in your investment journey. Hero Motors Limited is set to launch an IPO of up to Rs 9,000 million, with Rs 5,000 million earmarked for fresh issues. This move is backed by the esteemed Hero Group, positioning itself strategically in the booming automotive components and electric vehicle markets. The potential for growth here is significant, especially as the demand for innovative and sustainable solutions in transportation continues to rise. However, as with any investment, it's crucial to consider the risks involved. Market volatility and fierce competition could impact performance. So, while the prospects are promising, a careful evaluation of these factors is essential for any investor looking to capitalize on this opportunity. Investing in Oswald Pumps Limited offers a compelling opportunity, but it's crucial to dive into the details. Their IPO features a fresh issue of up to Rs 10,000 million, alongside an offer for sale from promoter Vivek Gupta. Operating in key sectors like agriculture and infrastructure, the company certainly has potential. However, we must acknowledge the risks involved. This is their first public offering, meaning there's no historical stock performance to analyze, which can make decision-making tricky. Additionally, a substantial portion of the funds raised will go to selling shareholders rather than fueling company growth. As investors, we need to weigh these factors carefully before jumping in. Investing in the International Gemological Institute, India Limited is not a decision to take lightly. They're looking to raise 40,000 million, with 12,500 million earmarked for growth and 27,500 million coming from existing shareholders. The gemstone market is indeed thriving, but this is their first public issue, which adds a layer of uncertainty. Before you jump in, consider your risk tolerance. Are you comfortable with the potential volatility that comes with new ventures? While the allure of gemstones can be enticing, remember that every investment carries its risks. Do your homework, weigh the pros and cons, and ensure that your financial strategy aligns with your comfort level. Proceed with caution. The glittering market can sometimes hide sharp edges. Unimek Aerospace and Manufacturing Limited is set to launch an IPO worth $5,000 million, with half of that amount coming from new equity shares and the other half from an offer for sale. This company is diving into the aerospace components sector, focusing on the rapidly growing defense and aviation markets. The growth potential is certainly enticing, but it's important to tread carefully. This is Unimek's first public offering, and a significant portion of the funds raised will primarily benefit existing shareholders rather than fueling expansion. As an investor, it's crucial to assess your risk tolerance and stay updated on pricing details before making any commitments. Remember, informed decisions are key in the world of investing. Reliance Industries Limited has showcased remarkable financial growth in FY 2023-24, with a consolidated revenue of $10,122 crore, marking a 2.6% increase, and a profit after tax of $79,020 crore, reflecting a solid 7.3% rise. The company is clearly on a strong operational trajectory. The retail and digital services segments are thriving, underscoring Reliance's robust market positioning. However, as potential investors, it's crucial to remain vigilant about global economic fluctuations and regulatory risks that could impact future performance. Staying informed and cautious can help navigate the complexities of this dynamic market landscape. NTPC Green Energy Limited is presenting an exciting investment opportunity, raising up to $100,000 million to expand its renewable energy footprint, particularly in solar and wind projects. With the backing of NTPC Limited and strong support from the Indian government, this venture is positioned for growth in a sector that's booming. However, as a first-time public offering, it's essential to consider the inherent risks, such as market volatility and increasing competition. Balancing these factors is crucial. The potential for sustainable growth in India's renewable energy landscape is immense, and with careful evaluation, this could be a strategic addition to your investment portfolio. Investing in Fabtech Technologies Limited could be a compelling opportunity. Their IPO is set to offer fresh equity shares, and the funds raised will directly support expansion in the burgeoning pharmaceutical engineering and clean room technology sectors. This is a market ripe for growth, driven by increasing demand for advanced healthcare solutions. However, it's essential to approach this investment with caution. As this is Fabtech's first public offering, it carries inherent risks and market uncertainties that could impact performance. While the potential for significant returns exists, due diligence is crucial. Balancing optimism with a clear understanding of the risks will be key for any financial analyst or advisor considering this opportunity. Casagrande Premier Builder Limited is set to launch an IPO worth $11,000 million, blending fresh equity with an offer for sale. This is a significant move, especially for investors looking at the booming real estate sector in South India, with a strong focus on Tamil Nadu. The company has established itself as a key player, thriving in a competitive market. However, as with any investment, it's crucial to weigh the potential for growth against the inherent risks. Market volatility and economic shifts can impact performance, so thorough assessment is essential. Keep an eye on this opportunity, but remember to invest wisely. Ellenberry Industrial Gases Limited is making a significant move by re-entering the capital market with an IPO of up to $4,000 million. Founded in 1973, this company has been a key player in producing essential industrial gases like oxygen and nitrogen, which are crucial for industries such as healthcare and steel manufacturing. The growth prospects look promising, especially with plans for expansion and debt repayment, signaling potential for future growth. However, investors should tread carefully. The company has a history of delisting, and competitive pressures in the market are ever present. Additionally, the substantial offer for sale by promoters raises some red flags. Balancing these factors will be essential for making an informed investment decision. Investing in PMEA Solar Tech Solutions Limited could be a game changer in the renewable energy sector. With a fresh issue of up to $6,000 million and over 11 million shares available, this IPO stands out. The company focuses on solar plant components, positioning itself perfectly as India embraces sustainability. However, it's essential to tread carefully. This is their first public offering, and the competitive landscape is fierce. The promoters are selling shares, which suggests a partial exit strategy. While the potential for growth is significant, understanding the risks involved is crucial. This opportunity could align well with the growing demand for clean energy, but due diligence is key. Ather Energy Limited is making waves with its upcoming IPO, aiming to raise up to $31,000 million to accelerate its growth in India's booming electric vehicle market. Backed by heavyweights like Hero MotoCorp, Ather is well positioned to capitalize on the increasing demand for sustainable transportation. However, let's not overlook the competitive landscape. Established players and new entrants are all vying for market share. This is Ather's first public offering, which adds an element of risk. As an investor, it's crucial to assess your risk tolerance carefully. Are you ready to ride the wave of innovation, or do you prefer to wait on the sidelines? The choice is yours, but the electric vehicle revolution is charging ahead. Investing in quality power. Electrical Equipments Limited could be a compelling opportunity for those eyeing the IPO market. With an impressive IPO size of $2,250 million, this company is strategically positioned to meet the demands of India's expanding infrastructure. They specialize in manufacturing essential electrical equipment, which is crucial as the country continues to grow. What stands out is their commitment to expansion and a clear focus on reducing debt, which could enhance their financial stability. However, it's important to remain vigilant about cyclical risks that can impact the industry. Additionally, the promoter's partial exit raises some questions about long-term confidence. Investing in DAM Capital Advisors Limited is a decision that requires careful thought. They're offering 32 million shares from existing shareholders, but there's no fresh capital coming in for growth. While the investment banking sector is thriving, this IPO comes with its own set of risks. The lack of historical performance makes it hard to gauge future success, and the competition is fierce. Before diving in, it's crucial to assess your risk tolerance. Are you ready to navigate the uncertainties that come with this investment? Take a moment to weigh the potential rewards against the risks involved. Your financial future deserves that level of scrutiny. Regreen Excel EPC India Limited is stepping into the spotlight with an IPO that raises $500 million in fresh equity. This company is positioned in the booming EPC sector, specifically targeting renewable energy projects. While the green energy market is on the rise, it's crucial to note that a significant portion of this IPO will benefit the promoters. As this is their first public offering, potential investors should carefully assess their growth plans and the current market conditions. If you believe in the future of sustainable energy and are willing to navigate the associated risks, this IPO could be an intriguing opportunity worth considering. Hexaware Technologies is set to launch an IPO with an impressive offer size of $99,500 million. But there's a catch. This capital is coming entirely from promoter CA Magnum Holdings. This means no fresh funds for growth, which raises some red flags about future expansion. While Hexaware has a strong reputation in digital and cloud services, we need to tread carefully. The absence of new capital could limit their ability to innovate and compete. Plus, the potential for stock volatility is a real concern, especially with the promoter's exit looming. As investors, we must weigh these risks against the company's strengths before making any decisions. It's crucial to stay informed and cautious in this dynamic market. Ventive Hospitality Limited is launching an IPO to raise $20,000 million through a fresh equity share issue. This strategic move is aimed at fueling our expansion in the hospitality and real estate sectors, focusing on premium properties in prime locations like Pune, Bengaluru, and the Maldives. As the hospitality industry rebounds post-pandemic, particularly in the luxury segment, our positioning is set to capitalize on this growth. However, it's essential to remain vigilant about occupancy rate fluctuations. Investing in Ventive means being part of a promising recovery journey in a dynamic market. Outcomes, Drugs and Pharmaceuticals Limited is set to launch an IPO, offering over 10 million fresh equity shares to raise $6,800 million. This company has carved a niche in contract manufacturing for major pharmaceutical firms, positioning itself in a sector that shows significant growth potential. However, as investors, we need to consider a few critical factors. The promoters are partially exiting, which raises questions about their long-term commitment. Additionally, new listings inherently come with risks, including market volatility and the company's ability to deliver on its promises. While the pharmaceutical sector is promising, it's essential to weigh these factors carefully before making any investment decisions. Sandstar Limited is set to launch an IPO with a substantial offer size of $101.50 million, which includes fresh equity shares and an offer for sale by its promoters. Operating in the agro-processing sector, Sandstar specializes in maize-based products, a market that's experiencing significant growth. The funds raised will be pivotal for business expansion and debt repayment, positioning the company for long-term success. However, potential investors should be mindful of certain risks, such as the dependency on maize pricing and the promoter's partial exit from the company. Despite these concerns, the long-term growth potential in the maize products market makes this IPO an intriguing investment opportunity for those looking to tap into the agricultural sector. Vraj Iron and Steel Limited is set to offer 8.26 million equity shares, aiming to raise $1,710 million to enhance its production capabilities. This is a significant move, especially as the company focuses on TMT bars and sponge iron, positioning itself strategically within the booming infrastructure sector. However, as an investor, it's crucial to weigh the cyclical nature of the steel industry. Market fluctuations can impact profitability, so understanding these risks is essential. While the growth potential is promising, staying informed about market dynamics will help you make a sound investment decision. Schloss Bangalore Limited is set to launch an IPO worth $50,000 million, blending fresh equity with an offer for sale from its promoters. As a significant player in India's luxury hospitality sector, they stand to gain from the surge in tourism. However, it's essential to tread carefully. A substantial portion of the funds raised won't directly support company growth. This marks their first public offering, so we lack historical stock performance to guide our decisions. While the luxury market appears promising, we must remain vigilant about potential economic downturns and increasing competition. Investing here could be a gamble, so weigh the risks and rewards carefully. Investing in BMW Ventures Limited's upcoming IPO presents an intriguing opportunity. They're offering up to 2.34 core equity shares with a clear focus on expanding their financial services in Bihar. This region is experiencing significant growth, and BMW Ventures, promoted by the Kishore Puria family, is strategically positioning itself to capitalize on this momentum. However, it's essential to remember that this is their first public issue, While the potential for growth is enticing, it's crucial to weigh the risks involved. New ventures can be unpredictable, so thorough research and careful consideration are key before diving in. Keep an eye on this one. It could be a game changer in the market. Tata Consultancy Services has reported impressive revenue of R240,393 crore for FY 2024, reflecting a solid 6.8% growth. With operating margins at a robust 24.6%, TCS showcases its strong profitability. The company is not just resting on its laurels, it's strategically focusing on emerging markets and sectors like manufacturing and healthcare. Their commitment to innovation is evident in their substantial investments in AI and cloud technologies, alongside training over 300,000 employees to stay ahead in the tech landscape. For investors, TCS stands out as an attractive opportunity, combining stability with growth potential in a rapidly evolving market. HDFC Bank's financial highlights for 2023-24 are truly impressive. With a balance sheet size soaring to Rs17,623 crore, the profit after tax has surged to an astounding Rs60,812 crore. This remarkable growth is further bolstered by the strategic merger with HDFC Limited, significantly enhancing its market position. Moreover, HDFC Bank is making substantial investments in technology, which not only streamline operations, but also improve overall efficiency. Their commitment to sustainability is commendable, positioning them as a forward-thinking institution. For investors, HDFC Bank presents a compelling opportunity, combining robust financial performance with a strong vision for the future. This is a bank that is not just growing, but evolving in a rapidly changing landscape. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to worth 408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. ICICI Bank's integrated annual report for FY 2024 reveals remarkable financial growth, with a profit after tax soaring to worth 408.88 billion, a significant 28.2% increase year-on-year. This impressive performance is underpinned by their robust focus on digital transformation, as they now handle over 160 million transactions daily. Such efficiency not only enhances customer experience, but also positions ICICI Bank as a leader in the banking sector. Moreover, their strong balance sheet reflects prudent financial management, while their commitment to sustainability goals showcases a forward-thinking approach. For investors, ICICI Bank presents a compelling opportunity, combining solid financial results with innovative strategies that promise future growth. Bharti Airtel's financials for 2023-24 are impressive, showcasing a revenue of R1,499,124 million, marking an 8% year-on-year growth. Their EBITDA reached R790,458 million, reflecting a solid 10% increase, which is quite remarkable in today's competitive landscape. The net profit stands at R74,670 million, and the EBITDA margin is a robust 54.3%. This strong performance is underpinned by their aggressive 5G expansion and innovative digital solutions, positioning Airtel as a compelling investment opportunity. With these results, it's clear that Airtel is not just keeping pace, but is also setting the stage for future growth. Infosys has truly showcased remarkable financial health in FY 2024, with revenue soaring to Rs 53,670 crore. It's clear that the company is on a solid growth trajectory. An impressive 8.9% increase in net profit reflects their effective management and strategic focus. The operating margin, standing strong at 20.7%, highlights their efficiency and resilience in today's competitive landscape. What's even more exciting is the 35.3% growth in dividends, signaling a commitment to returning value to shareholders. With strategic investments in AI and cloud technologies, Infosys is not just keeping pace, but is poised for substantial future growth. For investors looking for a compelling opportunity, Infosys is undoubtedly a choice worth considering. In the fiscal year 2023-24, Life Insurance Corporation of India has truly set a benchmark with remarkable financial performance. With a total income soaring to Rs 8.53 lakh crore and a net premium income of Rs 4.75 lakh crore, LIC's market presence is undeniably strong. They've paid out an impressive Rs 3.88 lakh crore to policyholders, settling over 22 million claims, which speaks volumes about their commitment to customer satisfaction. Their total assets now stand at Rs 52.85 lakh crore, showcasing solid financial health. Holding nearly 59% market share in first-year premiums, LIC continues to lead the industry. For investors, these figures not only highlight LIC's stability, but also its potential for growth in a competitive market. ITC Limited's 2023-2024 annual report showcases remarkable financial performance, with revenue surpassing Rs 69,446 crore and a profit after tax of Rs 20,122 crore. This impressive profitability underscores the company's strong market position. What sets ITC apart is its diversified portfolio across 12 segments, ranging from FMCG to hotels, which mitigates risks and enhances growth potential. Their unwavering commitment to sustainability is evident in their initiatives aimed at reducing carbon footprints and promoting responsible sourcing. Coupled with a focus on innovation, ITC is not just adapting to market changes, but leading them. For investors and financial analysts, this positions ITC as a compelling opportunity for long-term growth. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Hindustan Unilever Limited's annual report for 2023-24 showcases a remarkable financial strength, with a revenue of Rs 59,579 crore and a profit after tax of Rs 10,114 crore. The EBITDA margin stands impressively at 23.8%, and earnings per share are at Rs 43.05, highlighting HUL's robust performance. With a market presence that reaches 90% of Indian households, HUL is not just a leader, but a household name. Their commitment to sustainability is evident as they aim for net zero emissions by 2039. Additionally, HUL is innovating in premium products and enhancing their digital commerce strategy. This blend of stable performance and forward-thinking positions HUL as a compelling choice for investors and shareholders alike. Larsen & Toubro has truly made waves in FY 2023-24, reporting a remarkable revenue of Rs 21,113 crore, which is a 21% increase from the previous year. Their profit after tax has surged to 13,059 crore, reflecting a 25% growth. These figures are not just numbers, they signify a robust financial health and a promising future. With an impressive order book of 475,809 crore, L&T is well positioned for sustained revenue generation. What sets L&T apart is its commitment to global diversification and sustainability, particularly through renewable energy projects. Their significant investments in digital transformation demonstrate a forward-thinking approach that aligns with modern market demands. Plus, a dividend of R34 per share adds to the appeal for investors looking for solid returns. Coal India Limited's annual report for 2023-2024 is impressive, showcasing revenues of Rs 42,323.98 crore and a profit before tax of Rs 48,812.61 crore. This reflects robust earnings and a strong market position. With a 10% growth in coal production, the company continues to solidify its dominance in the energy sector. What's more, it has maintained a consistent dividend for 14 years, highlighting its financial stability. For investors, this represents a solid opportunity to engage with a key player in India's energy landscape. Plus, with ongoing sustainability initiatives and a target of 1 billion tons production by FY 2026, Coal India is not just about profits. It's about a sustainable future in energy. Vedanta Limited's FY24 integrated report reveals a compelling financial narrative. With revenues soaring to R141,193 crore and an impressive EBITDA margin of 30%, the company clearly demonstrates its robust financial health. Its diverse operations in zinc, oil, and aluminium position Vedanta as a formidable player in India's resource sector. What sets it apart is its commitment to ESG goals, particularly the ambitious target of achieving net zero emissions by 2050. This commitment not only enhances its market appeal, but also aligns with the growing investor focus on sustainability. However, potential investors should remain vigilant about risks, particularly commodity price fluctuations and debt management. Balancing these factors is crucial for making informed investment decisions in this dynamic landscape. Indian Oil Corporation presents a compelling investment opportunity. With a record profit of Rs 39,619 crore in FY 2023-24 and a solid debt-equity ratio of 0.66, the company clearly demonstrates its financial strength. Their ambitious vision for a $1 trillion valuation by 2047, with a strong focus on renewable energy and sustainability, signals significant growth potential. However, it's crucial to remain aware of risks such as oil price volatility and regulatory changes that could impact performance. By balancing traditional oil and emerging energy solutions, Indian Oil is positioning itself to deliver long-term value for investors. This strategic move could be worth considering for those looking to invest in a resilient and forward-thinking company. Bharat Petroleum Corporation Limited has showcased an impressive financial performance, reporting a revenue of Rs 5,609,993 crore and a net profit of Rs 26,859 crore. Their gross refining margin stands at $14.14 per barrel, the highest among public sector oil marketing companies, highlighting their operational efficiency. With a remarkable return on capital employed of 34.07%, BPCL is not just thriving but also generating strong cash flow. Strategically, they are investing Rs 1.70 lakh crore over the next 5 years, focusing on key sectors like refineries, gas distribution, and green energy. Their ambitious goal of achieving $2 GI of renewable energy by 2025 positions them as a leader in India's biofuel initiative. VST Industries Limited has delivered impressive financial results, showcasing a revenue growth of nearly 10%. While net profit experienced a slight dip, the company remains committed to its shareholders with a robust dividend of Rs 150 per share. This reflects their strong market presence and dedication to enhancing their brand portfolio through innovation. Additionally, VST is making strides in sustainability, aiming for a remarkable 50% renewable energy mix by 2030. This commitment not only positions them as a responsible player in the industry, but also aligns with the growing investor demand for sustainable practices. VST's focus on growth and sustainability makes it an intriguing option for investors looking for long-term value. Exchanging solutions. Limited has reported a notable revenue increase, reaching 19,625 lakhs this year. However, it's important to address the significant drop in net profit, which has fallen to 1,370 lakhs from 4,490 lakhs. Despite this decline, XSL continues to offer a healthy dividend of Rs 30 per share, which is a positive sign for investors. The company is strategically focusing on IT services and emerging technologies, positioning itself to tackle challenges such as cybersecurity threats and evolving regulatory landscapes. For potential investors, evaluating XSL's recovery strategy is essential, especially given the increasing demand in the IT sector. Understanding how they plan to navigate these challenges will be key to making informed investment decisions. SMC Global Securities Limited is offering non-convertible debentures, or NCDs, with a base issue size of Rs 7,500 lakhs, which can expand up to Rs 15,000 lakhs. These are secured instruments that have received strong ratings from CRISIL and ICRA, signaling low credit risk for investors. This means you can potentially earn a steady return while having some peace of mind about your investment. However, it's crucial to keep in mind that market volatility and regulatory changes can impact your returns. So, before diving in, make sure to assess your risk tolerance and stay informed about the market landscape. Investing wisely is key to making the most of opportunities like these. Investing in Muthoot Fincorp's non-convertible debentures, or NCDs, presents a compelling opportunity for those seeking stability. With a solid CRISIL AA stable credit rating, these instruments offer a high degree of safety, making them an attractive option for cautious investors. The base issue size is right 10,000 lakhs, with the potential to expand up to 35,000 lakhs, indicating strong market confidence. While these NCDs promise fixed returns, it's crucial to assess your risk tolerance. Remember, even safe investments come with their own set of risks. So, if you're looking for a reliable way to grow your wealth, Muthoot Fincorp's NCDs could be worth considering. Investing in Muthoot Mercantile Limited's non-convertible debentures, or NCDs, presents an intriguing opportunity for those looking to diversify their portfolios. With a base issue size of Rs 7,500 lakhs and the potential to double to Rs 15,000 lakhs, these secured instruments come with a rating of IND-BBB stable, which suggests moderate safety. However, it's essential to stay aware of the risks involved. Credit downgrades and legal challenges could impact your investment. If you're in the market for fixed income and are comfortable with some level of risk, these NCDs could align well with your investment strategy. Always do your due diligence before diving in. Andhra Paper Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue dipped to R1,858 crore, largely due to a 41-day maintenance shutdown and escalating raw material costs. However, the company still managed to achieve total sales of 2,33,480 metric tons, showcasing resilience in challenging times. They proposed a Rs 10 dividend per share, reflecting a commitment to shareholder value. Strategic investments in technology and facility upgrades are on the horizon, aimed at boosting efficiency. Yet, the decline in short-term profitability raises important questions for investors. Balancing these challenges with the opportunities ahead will be crucial for making informed decisions. Chennai Petroleum Corporation Ltd has delivered an impressive consolidated turnover of Rs79,272.25 crore for FY 2023-24, showcasing its pivotal role in India's energy landscape. With a refining capacity of 10.5 million metric tons per annum, it stands as a cornerstone of our energy sector. What truly sets CPCL apart is its commitment to sustainability. The company is making strides with green initiatives like the seawater desalination plant and various renewable energy projects. Additionally, the Kaveri Basin Refinery project is set to expand both capacity and product offerings, further strengthening its market position. And for investors, a generous 550% equity dividend is a testament to CPCL's robust financial health and dedication to rewarding shareholders. Glottis Limited, founded in 2004, has seen significant growth and transformation over the years. Transitioning from a partnership to a private limited company in 2022 marked a pivotal moment for us. Now, as we prepare for our IPO in 2024, we're excited to offer a fresh issue of Rs 2,000 million alongside shares from our promoters. However, potential investors should tread carefully. The market can be unpredictable, and operational uncertainties can impact our performance. It's crucial to assess these risks thoroughly before making any investment decisions. Understanding the landscape will empower you to make informed choices as we embark on this new chapter. Bajaj Finance has truly set a remarkable benchmark in FY 2024, showcasing a 34% increase in assets under management, now standing at an impressive Rs 330,615 crore. This growth is complemented by a 26% surge in profit after tax, reaching Rs 14,451 crore. What's even more compelling is their robust capital adequacy ratio of 22.52%, which reflects their strong financial health. Their effective risk management strategies are evident in their low NPAs, ensuring stability even amidst regulatory challenges. With a strategic focus on expanding both digitally and physically, Bajaj Finance is well positioned for future growth. As always, it's crucial to align your investments with your risk tolerance and financial goals. Tilak Ventures Limited is currently offering a rights issue of over 22 million shares at just Rs 2.20 each. This is an opportunity to support their working capital and future investments. Their recent financials indicate promising revenue growth, which is certainly encouraging. However, it's crucial to consider the risks involved. Ongoing CB investigations into insider trading and other regulatory violations could impact the company's stability. Before diving in, assess your own risk tolerance. Consulting a financial advisor can provide valuable insights tailored to your situation. Make informed choices and invest wisely. Swiggy IPO is gearing up for its initial public offering, aiming to raise a substantial Rs $37,500 million. This IPO includes fresh shares and an offer from major investors like Accel India and Tencent, highlighting the confidence in Swiggy's business model. With a significant market share in the food delivery sector, Swiggy has established itself as a key player. However, potential investors should tread carefully. The food delivery market is competitive and evolving, and there are inherent risks involved. It's crucial to assess these risks thoroughly and consult with financial advisors before making any investment decisions. Investing in an IPO can be exciting, but informed choices are essential for long-term success. Emerald Leisures Limited is presenting an intriguing opportunity with its rights issue of 1,212,400 equity shares, priced at Rs 12.50 each, which includes a premium of Rs 7.50. Eligible shareholders can purchase 2 shares for every one they own as of September 10, 2024. This move aims to bolster the company's finances by reducing debt and addressing general corporate needs. However, it's essential to weigh the risks involved. Internal disputes, ongoing litigation, and a partial commitment from promoters could impact the company's stability. Before diving in, assess your risk tolerance and consider consulting a financial advisor. This could be a pivotal moment for your investment strategy. Investing in M&B Engineering Limited's IPO is a decision that requires careful thought. With an offer size of $6,530 million, this opportunity combines a fresh issue and an offer for sale. Established in 1981, M&B has built a reputation in construction and engineering. But this is their first foray into the public market. That alone raises significant market risks. As potential investors, it's crucial to assess your risk tolerance. Are you prepared for the volatility that often accompanies an IPO? Seeking expert advice can provide valuable insights and help navigate these uncertainties. Remember, while the potential for growth exists, so do the risks. Make sure you're informed before making any commitments. Investing in Highway Infrastructure Limited is a decision that requires careful thought. They're offering up to $1,050 million through a fresh issue, plus an offer for sale of 31,000 equity shares from their promoters. This is their first public issue, which adds a layer of uncertainty to how the market will respond. We must consider the risks involved. Price discovery can be unpredictable, and IPOs are notoriously volatile. While the backing of prominent figures like Arun Kumar Jain and Anup Agrawal lends credibility, it's crucial to remember that the primary goal here is growth and debt repayment. As potential investors, we need to weigh the promise of returns against the inherent risks. It's a delicate balance, and due diligence is key. Proceed with caution and make informed decisions. HCL Tech's FY 2023-24 report showcases impressive financial performance, with revenues soaring to Rs 109,913 crore, marking an 8.3% increase. Their net income also climbed to Rs 15,702 crore, up 5.7%. This growth is particularly noteworthy given the current macroeconomic challenges. HCL Tech is excelling in digital engineering and AI sectors, positioning itself strategically for the future. Their commitment to sustainability and emerging technologies signals a promising trajectory for long-term growth. However, potential investors should remain cautious and consider current market risks. Consulting with financial advisors can help align investment strategies with personal goals, ensuring informed decisions in this dynamic landscape. Maruti Suzuki India Limited has truly outdone itself in the FY 23-24 annual report. With net sales soaring by 20% to an impressive Rs 378 million, it's clear that the company is on a robust growth trajectory. Even more exciting is the staggering 64% leap in profit after tax, now at 132,094 million. This reflects not just strong sales, but also efficient operations, as evidenced by an EBIT margin improvement to 9.9%. Investors should take note of the return on equity at 18.3%, coupled with a remarkable 39% increase in dividends, showcasing Maruti's commitment to delivering strong shareholder value. The company is not resting on its laurels. It's expanding production capacity and embracing sustainable technologies, solidifying its position as a leader in the automotive industry. This is a thrilling time to be part of Maruti's journey as it drives forward with innovation and growth. In FY 2023-24, Sun Pharmaceutical Industries Limited showcased remarkable financial growth, with total income reaching Rs 498,510 million, a 12% increase year-on-year. This impressive surge is complemented by a net profit of Rs 95,664 million, highlighting the company's robust operational performance. Sun Pharma's commitment to innovation is evident through substantial investments in research and development, particularly in specialty products. This strategic focus not only enhances their product portfolio, but also positions them favorably for future growth. While regulatory challenges persist, Sun Pharma's strong fundamentals and proactive approach suggest a promising trajectory ahead for investors. Adani Enterprises Limited has truly outdone itself in FY 2023-24, posting total income of Rs 98,282 crore, an impressive 41% increase year-on-year. This remarkable growth is underscored by a 32% rise in EBITDA, showcasing the company's robust operational performance. What's particularly exciting is Adani's strategic focus on green hydrogen, airports, and roads, positioning itself for sustainable growth in a rapidly evolving market. With a solid balance sheet and reduced debt, the company is not just thriving, it's laying the groundwork for long-term success. For investors, this is a compelling narrative of resilience and innovation that's hard to overlook. Kotak Mahindra Bank has reported impressive financial highlights for FY 2023-24. Total income has surged to an astounding Rs 94,273.91 crore, showcasing robust growth. The profit after tax stands at Rs 18,213.21 crore, reflecting the bank's strong performance. With a return on equity of 15.08%, it's clear that Kotak is delivering value to its shareholders. Additionally, the bank has improved its asset quality, which is a positive indicator of its financial health. However, as always, it's crucial to assess market conditions and your own risk appetite before making any investment decisions. Strong fundamentals are essential, but informed choices are key to successful investing. Titan's FY 2023-24 report is nothing short of impressive, with revenue skyrocketing to Rs 46,968 crore, a remarkable 22.4% increase. This growth is driven by stellar performances in key segments like jewelry and watches, showcasing the brand's strength and market appeal. What's even more exciting is Titan's commitment to international expansion and sustainability, positioning itself as a forward-thinking leader in the industry. However, as we celebrate these achievements, it's crucial for investors to remain vigilant. The market competition is fierce, and economic risks are ever present. Balancing optimism with caution will be key as we navigate this promising landscape. When considering an investment in ONGC, the financial metrics present a mixed yet promising outlook. Revenue has dipped to Rs 1,384,021 million, which raises some eyebrows. However, net profit has seen a slight increase to Rs 405,260 million, indicating operational resilience. The robust dividend of 2.45% is a strong signal for shareholder returns, showcasing the company's commitment to rewarding its investors. With a remarkably low debt-equity ratio of 0.02.1, ONGC demonstrates solid financial stability, which is crucial in today's volatile market. Their strategic focus on renewable energy and impressive exploration results suggest significant growth potential ahead. Yet investors should remain cautious of crude price fluctuations and rising operating costs that could impact profitability. Tata Motors has truly outdone itself in FY 23-24, achieving a record revenue of Rs 437,928 crore, marking an impressive 26.6% year-on-year growth. The turnaround is remarkable, with profit after tax soaring to Rs 31,807 crore. Their EBITDA margin stands strong at 14.3%, and they generated a staggering Rs 26,925 crore in free cash flow. The reduction in net automotive debt is a testament to their strengthened liquidity, positioning them for future growth. In the commercial sector, Tata Motors continues to lead with innovative new launches and a robust electric bus fleet. The EV segment is thriving, capturing an incredible 70% market share. Jaguar Land Rover also contributed to this success with impressive growth figures, with plans for a demerger. NTPC's 2023-24 annual report highlights a robust financial performance, with consolidated revenues soaring to Rs 177,608.87 crore. This impressive growth is underscored by a remarkable 25% increase in profit after tax, now at Rs 21,332 crore. The company's market capitalization has reached Rs 349 lakh crore, reflecting strong investor confidence. NTPC is also rewarding its shareholders with a dividend of Rs 7.75 per share. What's particularly exciting is NTPC's commitment to sustainability, aiming for 60 gigawatt of renewable energy capacity by 2032. Their international expansion is noteworthy too, with the launch of their first power station in Bangladesh. Axis Bank's performance in FY 2023-24 is nothing short of remarkable. With consolidated revenue soaring to Rs 1,47,845 crore and a record net profit of Rs 24,161 crore, the numbers speak volumes. The net interest margin has climbed to an impressive 4.07%, while return on assets stands strong at 1.84%. This growth is fueled by a significant expansion in both retail and corporate loan books, showcasing robust demand in the market. What's truly exciting is their commitment to a robust digital strategy, which positions them perfectly for future growth. Coupled with a healthy 15.74% just expansion, or DMR, showcased in revenue surge to Rs 49,341 rise of 12%. Their tax and profit marks low debt equity ratio is a strong indicator of its financial stability. Coupled with their strategic expansion plans, DMart presents a compelling case for long-term investment. With these robust numbers, it's clear that DMart is not just surviving, but thriving in the retail landscape. Adani Green Energy Limited's FY 2023-24 annual report showcases impressive financial growth, with revenue soaring to Rs 7,735 crore, a remarkable 33% increase year-on-year. The EBITDA stands at Rs 7,222 crore, reflecting an outstanding 92% margin. This growth is complemented by a 35% expansion in operational capacity, now reaching 10,934 $. The company's ambitious target of $50 GW by 2030 positions it as a frontrunner in the renewable energy sector. While debt levels have improved, they still require vigilant monitoring, especially given the current market volatility. Overall, Adani's strategic initiatives and robust financial performance make it a compelling prospect for investors and analysts alike. Adani Ports and Special Economic Zone Limited has truly outdone itself in FY 2023-24. Revenue skyrocketed to Rs 26,711 crore, marking an impressive 28% increase. Even more remarkable is the EBITDA, which reached Rs 15,864 crore, showcasing a robust 71% margin. Net profit surged by 50%, hitting Rs 8,104 crore. Operationally, we handled a staggering 420 MMT of cargo, a testament to our efficiency and growth. Our strategic expansions into international ports are paving the way for even greater opportunities. Plus, our commitment to sustainability, aiming for carbon neutrality by 2025, positions us as a forward-thinking leader in the industry. While we celebrate these achievements, it's essential to remain vigilant about geopolitical risks that could impact global trade. The future looks bright, and we're excited to navigate it together. Ultratech Cement Limited has achieved remarkable financial growth for the year ending March 31, 2024. With a revenue of Rs 49,533 crore, that's an impressive 18.4% increase from last year. The profit after tax stands at Rs 6,905 crore, showcasing solid profitability and a robust EBITDA of Rs 13,282 crore, reflecting strong financial health. The company's strategic expansions, both domestically and internationally, are enhancing its capacity and market share, positioning it as a leader in the industry. Additionally, the dividend of Rs 2021 crore highlights Ultratech's commitment to delivering value to its shareholders. This performance paints a compelling picture for investors, marking Ultratech Cement as a promising long-term investment opportunity. Asian Paints Limited has showcased remarkable financial growth for FY 2023-24. Their revenue climbed to Rs 494.73 crore, marking a modest 2.9% increase. But the standout figure is the profit after tax, which surged by an impressive 32.5% to Rs 5,557.69 crore. This indicates not just growth, but a significant boost in profitability. The EBITDA growth of 24.5% highlights their strong operational efficiency, a key factor for any investor to consider. With an earnings per share of Rs 56.95 and a track record of consistent dividends, Asian Paints emerges as a solid investment choice. However, it's crucial to keep an eye on market competition and economic conditions before making any decisions. Bajaj Finserv's FY 2023-24 results are impressive, showcasing a consolidated revenue of Rs 110,383 crore and a profit after tax of Rs 8,148 crore. This robust earnings growth highlights the company's strong financial health. Key players like Bajaj Finance L&T and Bajaj Allianz Insurance are making significant contributions, reinforcing their market position and consistent profitability. For investors, this could be an attractive opportunity. However, it's essential to weigh market conditions and potential risks before making any decisions. The financial landscape is dynamic, and informed choices are crucial for success. Bajaj Auto Limited has truly outdone itself in FY 2023-24, achieving a remarkable revenue of Rs 110,383 crore and a profit after tax of Rs 8,148 crore. This impressive performance translates to enhanced earnings per share, showcasing our commitment to delivering strong shareholder value. The generous dividend of Rs per share is a testament to our dedication to investors. As the leader in the Indian two-wheeler and three-wheeler markets, we're not just resting on our laurels. We're expanding our footprint globally. Our focus on sustainability and innovation, particularly in electric vehicles, positions Bajaj Auto for exciting future growth. With these solid foundations, the road ahead looks incredibly promising for all of us. Power Grid Corporation of India Limited has delivered impressive financial results for FY 2023-24, reporting revenues of Rs 45,843 crore and a profit after tax of Rs 15,573 crore. Their EBITDA reached Rs 40,119 crore, showcasing robust operational efficiency. With a remarkable 68% dividend payout ratio, investors can expect attractive returns. The company has expanded its infrastructure significantly, adding over 4,000 circuit kilometers of transmission lines and enhancing transformation capacity, achieving a stellar 99.85% transmission system availability. Moreover, Power Grid is committed to integrating renewable energy into its operations and is expanding its footprint globally across 23 countries. Nestlé India Limited has truly outdone itself in FY 2023-24, with revenue skyrocketing to an impressive Rs 242,754.8 million, an incredible 44.4% increase. This surge is a testament to the strong demand and robust market presence the company has cultivated. Even more exciting is the 64% jump in profit after tax, showcasing their effective cost management strategies. With an operating profit margin of 22% and earnings per share rising to Rs 40.79, it's clear that Nestlé is thriving. Their commitment to returning value to shareholders is evident with a dividend of Rs 8.50 per share, making it an attractive option for income-focused investors. However, we must keep an eye on potential risks like commodity price fluctuations and regulatory changes. Wipro Limited's financial performance for FY 2023-24 is nothing short of impressive. Consolidated revenues soared to Rs 243,938.9 million, a significant leap from Rs 168,969.6 million. This remarkable growth is mirrored in the profit after tax, which surged by 64.5% to reach $39,328.4 million. And let's not overlook the earnings per share, which jumped from 24.79 to 40.79. Wipro's strategic focus on digital transformation and sustainability is not just a trend, it's a game changer that solidifies its position in the market. This makes Wipro a compelling choice for investors looking for robust growth and innovation. The future looks bright, and I'm excited to see where this journey takes us. Mahindra & Mahindra Life has truly outdone itself in FY 2023-24. Standalone revenue surged to an impressive Rs 1,219 crore, reflecting a robust 17% growth. Consolidated revenue also saw a healthy rise, reaching Rs 139,078 crore, up 15%. The standout highlight? A staggering 64% jump in standalone profit after tax, soaring to Rs 10,718 crore. The automotive sector is thriving, with an 18.1% increase in volume, showcasing our resilience and market strength. Despite challenges, Mahindra proudly holds a 41.6% market share in tractors. Looking ahead, we're investing Rs 37,000 crore in future technologies, with a keen focus on electric vehicles and sustainability. This is not just growth, it's a commitment to innovation and a sustainable future. Hindustan Aeronautics Limited has achieved a remarkable milestone, reporting its highest ever turnover of Rs 28,162 crore, reflecting a solid 7% growth from last year. Even more impressive is the 57% surge in profit before tax, which has reached Rs 10,198 crore. Profit after tax also saw a significant increase of 31%, totaling Rs 7,595 crore. With a robust order book of Rs 94,129 crore, HAL is firmly positioned as a key player in India's defense sector. The company is not just resting on its laurels, it's actively expanding its production capabilities and enhancing research and development efforts. This strategic focus positions HAL for sustained growth and innovation in the future. For investors, this is a clear signal of HAL's strong market presence and potential for continued success. DLF Limited's FY 2023-24 financials are impressive, showcasing a consolidated revenue of Rs 6,958 crore, marking a 16% increase. This growth is complemented by a profit after tax of Rs 2,124 crore, which is a remarkable 34% rise. Their rental revenue stands strong at Rs 4,633 crore, highlighting the strength of their commercial portfolio. With strategic expansion plans on the horizon and a solid dividend increase, DLF is positioning itself as an attractive investment opportunity. However, it's essential to remain mindful of the inherent market risks. Overall, DLF's performance reflects a robust foundation for potential investors looking for growth in the real estate sector. Adani Power Limited has reported impressive financial results for FY 23-24, with total revenue soaring to Rs 60,281 crore, marking a remarkable 40% year-on-year increase. The company's profit after tax has skyrocketed by 94% to Rs 20,829 crore, showcasing its robust growth trajectory. EBITDA has also risen by an impressive 96%, reflecting strong operational efficiency across its plants. The average plant load factor improved to 65%, and power generation reached a staggering 79 billion units, a 48.5% increase from the previous year. With a net debt to EBITDA ratio of just 0.62x, Adani Power demonstrates solid financial stability, further bolstered by an upgraded credit rating of AA stable. Moreover, the company is committed to sustainability, with 72% of its capacity utilizing advanced technology. JSW Steel Limited's integrated report for FY 23-24 is truly impressive, with consolidated revenue hitting Rs 175,006 crore and an EBITDA of Rs 28,236 crore. The company demonstrates remarkable operational efficiency. Operating at 92% capacity, JSW is not just maintaining its performance, it's gearing up for significant expansion by 2030. Their manageable debt levels and strong commitment to sustainability position them as a frontrunner in green steel production. Plus, with a consistent dividend payout and a diverse market presence, JSW Steel emerges as an attractive long-term investment opportunity. Investing in JSW Steel means aligning with a leader in both profitability and sustainability. Tata Steel's FY 23-24 results present a mixed picture. Consolidated turnover fell to Rs 229,171 crore, while standalone turnover saw a slight dip to Rs 140,987 crore. Notably, consolidated EBITDA dropped to Rs 23,402 crore, contrasting with a rise in standalone EBITDA to Rs 31,004 crore. The company faced a consolidated net loss of Rs 4,910 crore, raising concerns among investors. However, Tata Steel is not standing still. The focus on expanding production capacity and achieving net zero emissions by 2045 is commendable. Significant investments in renewable energy signal a commitment to sustainability. Despite setbacks in Europe, Tata Steel's strategic direction suggests a promising long-term outlook, making it a company worth watching closely. In FY 2023-24, IRETA has truly set a benchmark in financial performance. With a gross loan book soaring to 59,698.11 crore, we're looking at an impressive 26.81% growth. Loan sanctions also climbed by 14.63%, underscoring the robust market demand for renewable energy financing. The standout figure? A staggering 47.93% surge in profit after tax, reaching RFA 685.24 crore, which speaks volumes about their operational efficiency. Additionally, a net worth increase of 44.22% positions IRETA as a compelling investment opportunity. This balance of growth and effective NPA management makes it a prime candidate for investors seeking long-term gains in the renewable sector. Amanta Healthcare Limited is making significant strides in the pharmaceutical sector, particularly with their focus on sterile products like intravenous fluids. With an IPO of 1.25 crore shares, they're poised to attract investors eager to tap into the booming healthcare market. Their innovative production methods set them apart, positioning them for substantial growth. However, potential investors must consider the inherent risks. Market volatility and regulatory hurdles can pose challenges, especially for a first-time public offering. It's crucial to weigh these factors carefully as you explore the opportunities Amanta presents in this dynamic industry. In the financial year 2023-24, Indian Railway Finance Corporation Limited, or IRFC, has truly showcased impressive growth. Revenue surged to 26,644 crore, reflecting a robust 12.32% increase. The profit after tax also rose significantly to 6,412 crore, indicating a steady upward trend. With assets under management reaching an astounding 464,641 crore, IRFC demonstrates remarkable financial stability. What sets IRFC apart is its leasing model, which ensures consistent revenue streams, while its low-cost borrowing enhances overall profitability. This combination makes it a solid investment choice. Plus, with dividends of R1.50 per share, investors can look forward to attractive returns. Zomato's FY 23-24 financials are nothing short of impressive. With revenue from operations soaring to Rs 12,114 crore, we're looking at a remarkable 71% increase from last year. What's even more exciting is the turnaround in profitability, with a profit after tax of 351 crore, a significant leap from last year's losses. The key growth drivers are truly noteworthy. Food delivery revenue surged by 40%, while quick commerce skyrocketed by an astonishing 93%. Even with challenges surrounding Blinkit, Zomato's diversified model shines through. Their expanding delivery network and increasing store count position them as a formidable player in the market. This growth trajectory not only highlights resilience, but also makes Zomato an attractive option for long-term investment. In 2024, IRB Infrastructure Developers has truly solidified its leadership in India's infrastructure sector. With 72 toll plazas under our management, we've captured an impressive 10% of the national toll revenue, servicing over 1.3 million vehicles daily. Our strategic tariff revisions and a remarkable 17% CAGR in EPC growth have significantly bolstered our financial resilience. We lead the TOT market with a commanding 38% share and an order book of Rs 34,800 crore, positioning us strongly for future projects. Successful refinancing has lowered our debt costs, and our robust debt-to-equity ratio underscores our financial health. This solid foundation cements our position as a key player in the infrastructure landscape. Indian Infotech and Software Ltd presents a compelling investment opportunity, especially for those with a keen eye on stability. With over 42 years in the market, this company has demonstrated resilience. Recently, it reported a remarkable 50.7% increase in revenue, which is impressive, although net profits remain modest. What stands out is its low current liabilities, indicating a healthy balance sheet. However, potential risks arise from proposed expansions and related party transactions that could affect future performance. Shareholder returns are currently low, which might raise concerns for conservative investors. Yet for those willing to embrace a bit of risk, the growth potential here could be quite rewarding. In the 2023-2024 fiscal year, Indian Overseas Bank has truly outdone itself. Total business has soared past Rs 5 lakh crore, a testament to its robust growth. Deposits have surged to an impressive Rs 2.85 lakh crore, while advances have jumped nearly 20%. This isn't just growth on paper. Profitability has seen a remarkable boost, with net profit climbing by 26.54%. What's even more encouraging is the improvement in asset quality, with gross NPAs dropping to just 3.10%. This solid performance not only reflects the bank's resilience, but also positions IOB as a strong contender for future growth. For investors seeking stability in the banking sector, Indian Overseas Bank is emerging as an attractive option. In FY 23-24, NHPC Limited faced its share of challenges, yet we demonstrated remarkable resilience. Our total income slightly dipped to Rs 10,024.9 crore, primarily due to environmental factors affecting energy sales. However, we turned adversity into opportunity, with our diversified income from power trading soaring, showcasing our adaptability in a changing landscape. Our profit after tax of Rs 3743.94 crore reflects our commitment to effective cost management. As we continue to invest in major hydropower projects and expand our renewable energy footprint through solar and wind initiatives, we are not just weathering the storm, we are positioning ourselves for a brighter, sustainable future. Together, we are paving the way for growth and innovation in the energy sector. In the 2023-2024 fiscal year, NBCC India Limited has truly set a benchmark in the public sector construction arena. With a consolidated total income soaring to Rs 10,666.68 crore and a profit after tax of Rs 414.38 crore, our growth story is nothing short of remarkable. Our robust order book, standing at an impressive Rs 52,242 crore, reflects our unwavering commitment to infrastructure development. We take immense pride in our achievements, including the successful completion of 19,000 units in the Amrapali housing scheme, providing homes and hope to countless families. Our significant projects in Kerala further underscore our dedication to transforming landscapes and lives. As we continue to build the future, we invite you to join us on this inspiring journey of growth and innovation. In the 2023-2024 annual report, Taparia Tools Limited has truly set a remarkable benchmark. With a net revenue of Rs 83,766.86 lakh, we've seen an impressive 8.95% growth compared to last year. What's even more striking is the 37.88% surge in profit before tax, a clear indicator of our enhanced operational efficiency. We're not just focused on growth, we're committed to our shareholders as well. This year, we've maintained consistent dividends and announced a 4.1 bonus share issue, reinforcing our dedication to delivering value. Additionally, our strategic investments in mutual funds showcase our prudent cash management approach. It's a strong message that we're not just about numbers, We're about sustainable growth and shareholder satisfaction. In 2023-24, CB marked a transformative year for India's capital markets. Resource mobilization soared to an impressive Rs 11.8 lakh crore, reflecting a robust 20% growth. We witnessed 272 IPOs that collectively raised Rs 68,972 crore, showcasing a vibrant investment landscape. The mutual fund industry also made significant strides, doubling its assets to Rs 53.4 lakh crore, a testament to growing investor confidence. Innovations like the T+1 settlement cycle and the introduction of the social stock exchange highlight SEBI's dedication to enhancing market efficiency and inclusivity. These milestones not only strengthen our market framework, but also pave the way for a more resilient financial ecosystem. In the 2023-2024 annual report, Arcon International Limited has truly set the stage for remarkable growth. Our revenue has soared to Rs 12,287.85 crore, marking a significant 20.72% increase. This isn't just a number, it's a testament to our unwavering commitment and strategic vision. Profit before tax has reached an impressive Rs 155.54 crore, reflecting a robust 30.84% rise. We're not just celebrating these figures, we're sharing in the success of our stakeholders. With a total dividend of Rs 291.56 crore declared, we're ensuring that our investors reap the rewards of our hard work. Securing new contracts and achieving Navratna status positions us for even greater achievements ahead. In FY 23-24, Suzlon Energy Limited has truly set a benchmark in the renewable energy sector. We achieved an impressive 20% increase in revenue, reaching Rs 6,497 crore, while our EBITDA soared to Rs 1,029 crore, showcasing robust margins. The highlight? Our profit after tax skyrocketed by 428%, a testament to our exceptional financial recovery. With a record order book of 3.8 GW, we are not just participants but leaders in India's wind energy market. Our commitment to sustainability is unwavering, as we contribute to reducing over 53 million tons of CO2 annually. We're transforming our manufacturing units into eco-friendly buildings, embodying our vision for a greener future. This journey has not gone unnoticed. We've been honored with multiple awards, reflecting our dedication and innovation. Garuda Construction and Engineering Limited is making headlines with its upcoming initial public offering. Founded in 2010 and based in Mumbai, the company plans to raise capital by issuing 1.83 crore fresh equity shares, along with an offer for sale of 95 lakh shares, all at a face value of Rs 5 each. Mark your calendars. The bidding opens on October 8, 2024 and closes on October 10th. While this could be an exciting investment opportunity, it's important to remember that this is their first public offering. Active trading post-listing isn't guaranteed, so proceed with caution. Make sure to do your research before diving in. Pidilite Industries Limited has delivered an impressive financial performance for the year ending March 2024. Net sales reached Rs 11,118 crore, marking a solid 5.4% increase. Even more remarkable is the EBITDA, which surged to Rs 2,550 crore, reflecting a staggering 37.4% growth. This robust performance is further highlighted by a 42.6% jump in profit after tax, now standing at Rs 1,792 crore, showcasing the company's strong operational efficiency. Earnings per share have risen to Rs 35.39, while the book value per share has improved to Rs 163.9. Additionally, Pidilite has announced a notable dividend increase to Rs 16 per share, underscoring its commitment to enhancing shareholder value. Grasim Industries Limited has truly showcased remarkable growth in its 23-24 annual report. Total revenue surged to Rs 65,649 crore, fueled by a robust 16% increase in net sales. The cement segment, Ultratech, led the charge with an impressive Rs 38,460 crore, while our VSF and chemicals divisions also made significant contributions. With a profit after tax of Rs 4,289 crore and earnings per share at Rs 3150, Grasim continues to demonstrate a strong financial position. We're rewarding our investors with a Rs 10 dividend per share, reflecting our commitment to shareholder value. Additionally, our substantial investments in expansion underscore Grasim's leadership in responsible industrial practices, positioning us for sustainable growth in the future. Bharat Electronics Limited has delivered an impressive financial performance for FY 23-24, reporting revenues of Rs 20,720 crore, marking a robust 14% increase from the previous year. The profit after tax surged by 17% to Rs 3,700 crore, fueled by high-margin projects that are driving profitability. With an order book of Rs 65,000 crore, BEL is strategically positioned for sustained growth in the coming years. Shareholders are reaping the benefits too, with an earnings per share of Rs 15.25 and dividends declared at an impressive 140% and 80%. Moreover, BEL's commitment to innovation shines through its investments in AI and IoT, alongside significant projects in both defense and non-defense sectors. SBI Life Insurance Company has truly outdone itself in FY 23-24, with a gross written premium soaring to Rs 814.3 billion. That's a remarkable 21% increase year on year. New business premiums have surged to Rs 382.4 billion, reflecting a robust 29% growth. Our assets under management have reached an impressive Rs 3,189 billion, marking a solid 27% rise. The value of new business stands strong at Rs 55.5 billion, while our embedded value has climbed to Rs 582.6 billion. We've achieved a profit after tax of Rs 18.9 billion, showcasing our resilience in a competitive market. With a solvency ratio of 1.96, we ensure stability for our stakeholders. Holding a 24.6% market share in new business premiums, SBI Life is not just growing, we're positioned for sustained success. LTIMindtree's annual report for FY 23-24 showcases remarkable financial growth, with total revenue soaring to Rs 35,517 crore, reflecting a solid 7% increase. Our profit after tax has also risen impressively to Rs 4,584.6 crore. A standout achievement this year is our record order inflow of USD 5.64 billion, underscoring our strong market position. While we experienced slight dips in profitability margins, our unwavering commitment to innovation and sustainability sets us up for long-term success. With a dedicated workforce of over 81,000 employees across 38 countries, we are focused on enhancing shareholder value through strategic initiatives and digital leadership. Trent Limited, Tata, has truly outdone itself in FY 2023-24. Can you believe a staggering 54.6% surge in revenue, bringing it close to Rs 12,000 crores? That's not just impressive, it's a testament to their robust business strategy. And get this, profit after tax has doubled, soaring to Rs 1,135 crores. This kind of growth isn't just a flash in the pan. It signals a company that knows how to capitalize on opportunities. With a solid dividend payout and smart debt management, Trent is not just surviving, it's thriving. For investors looking for a promising opportunity, Trent Limited is definitely a name to watch. The future looks bright, and this could be the right moment to jump on board. Solar World Energy Solutions Limited is stepping into the public market with an ambitious IPO aiming to raise Rs 6,000 million. This company is entering a thriving solar energy sector in India, which is experiencing significant growth, fueled by strong government support for renewable initiatives. While there are inherent risks, such as market volatility and increasing competition, the management team brings a wealth of expertise that instills confidence in their strategy. For those who believe in the future of renewable energy, this IPO presents a compelling long-term investment opportunity. Investing in solar world could mean being part of a sustainable future while potentially reaping financial rewards. Punjab National Bank's annual report for 2023-24 is nothing short of remarkable. With a staggering 228% increase in net profit, reaching Rs 8,245 crore, PNB stands tall as the leader among public sector banks. Their gross business has soared to an impressive Rs 23 lakh crore, reflecting robust growth and expansion. What's even more exciting is the improved asset quality and a solid capital adequacy ratio of 15.97%. This positions PNB as a strong contender in the banking sector, especially for investors looking for stability and growth. And let's not overlook their digital transformation journey. UPI transactions have surged by 56%, placing PNB at the forefront of digital payments. Skoda Tubes Limited, established in 2008 in Gujarat, is gearing up for its first IPO, aiming to raise Rs 2,750 million. They specialize in seamless stainless steel tubes, catering to industries like power and pharmaceuticals. While the stainless steel market shows promise, it's also highly competitive. One key point to consider is the lack of detailed financials, which makes assessing their financial health a challenge. This introduces a level of market risk for potential investors. However, if you have a positive outlook on the industry and can navigate the potential volatility, this IPO could present an intriguing opportunity. Keep an eye on Skoda Tubes as they enter the public market. Dr. Agarwal's Healthcare Limited IPO is intriguing for those eyeing the healthcare sector. With a strong focus on ophthalmology, it operates renowned eye hospitals across India and beyond. The IPO is aimed at expansion and debt reduction, signaling growth potential. As a first-time public issuer, they face market volatility and competition. The healthcare sector is evolving, particularly in eye care, driven by increasing demand. The brand's reputation is solid, and potential investors should scrutinize financial details. Kumar Archtech Limited, established in 1998, is making a significant leap by transitioning to a public company in 2024. They're aiming to raise $7,400 million through their IPO, with a substantial portion of that capital dedicated to growth and reducing debt. Specializing in manufacturing plastic and PVC products for the construction sector, they're positioned well as the industry continues to expand. However, potential investors should tread carefully. Market volatility and competition are real risks to consider. This IPO could represent a strategic investment opportunity, but it's crucial to conduct thorough research before diving in. Indigo has shown strong growth, with a 26.6% year-over-year revenue increase to $689,043 million. Their highest ever net profit of Rs 81,725 million reflects a significant turnaround, supported by an 18.3% EBITDA and EPS of Rs 212. With an 85.9% load factor and a fleet of 367 aircraft, Indigo is set for expansion with 985 new aircraft ordered. A cash balance of Rs 203,769 million shows financial stability. They are operating 2016 daily flights to 121 destinations. While fuel price volatility and competition are risks, their strong fundamentals make it a promising outlook. Bank of Baroda has truly outdone itself in FY 23-24, with net profit skyrocketing by an impressive 168%. This surge is a clear testament to the bank's improved asset quality and a significant reduction in bad loans. Total income has also seen a remarkable rise of over 28%, primarily fueled by strong net interest income. What's even more exciting is the bank's success in lowering its non-performing assets, which enhances its financial stability. With a robust capital adequacy ratio and a keen focus on digital banking, Bank of Baroda is strategically positioned for future growth. However, as potential investors, it's wise to remain vigilant about macroeconomic conditions and competitive pressures. Investing in VMS TMT Limited presents an intriguing opportunity, especially with the surging demand for TMT bars in India's thriving construction sector. The government's initiatives are driving significant growth, making this a potentially lucrative investment. However, we must tread carefully. This is VMS's first IPO, which inherently brings volatility risks. The competition in the market is fierce, and fluctuations can impact performance. It's crucial to conduct a thorough analysis before diving in. Weigh the potential rewards against the risks and ensure you're making an informed decision. The landscape is promising, but due diligence is key. Vikram Solar Limited is making waves in India's solar energy sector with its upcoming IPO, aiming to raise ₹15,000 million. This funding will significantly boost their manufacturing capacity and enhance their technology, positioning them as a leader in high-efficiency solar photovoltaic module production. The renewable energy market is on the brink of explosive growth, fueled by strong government support and an increasing demand for clean power. However, potential investors should tread carefully. The landscape is not without its challenges. Price volatility and fierce competition could impact returns. It's essential to weigh these risks against the promising outlook for sustainable energy. Indogulf Crop Sciences Limited is stepping into the agrochemical sector with an ambitious IPO aiming to raise Rs2,000 million. This company is focused on developing crop protection products, which are crucial for enhancing agricultural yields. The market potential is certainly appealing, especially as global demand for sustainable farming solutions grows. However, it's essential to keep an eye on potential risks, such as regulatory hurdles and fierce competition in the industry. Before considering an investment, take a close look at their financial health and growth strategies. Understanding these factors will help you make a more informed decision in this promising yet challenging market. Aditya Infotech Limited, established in 1995, is set to launch an IPO aiming to raise Rs13,000 million. Their financial highlights are impressive, showcasing strong revenue growth and solid profitability. However, as an investor, it's vital to dive deeper into key metrics like profit margins and return on equity. While the company has potential for expansion, we must remain cautious of market uncertainties and competitive pressures that could impact performance. Conducting thorough research and seeking professional advice is essential before making any investment decisions. This IPO could be a significant opportunity, but informed choices are crucial for success. Mori Tech Limited, established in 2005, has transformed into a public company with a significant focus on IT services. With an IPO offering of Rs15,000 million, they are poised to drive growth through digital transformation, cloud services, and artificial intelligence. This is their first public issue, and while the growth potential is exciting, it's essential to consider the risks involved. Promoter divestment and increasing market competition could impact performance. If you believe in the future of IT and can navigate these uncertainties, investing in Mori Tech could be a strategic move worth exploring. Varundhara Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Varundhara Constructions Limited IPO, established in 1987, is stepping into the public arena with its initial public offering, aiming to raise a substantial Rs12,000 million. This funding is set to fuel their expansion plans, bolster working capital, and reduce existing debt, which is a promising indicator of growth potential. However, as with any first-time public issue, there are inherent risks to consider. Market volatility and fluctuating industry cycles can impact performance. It's crucial to conduct a thorough analysis before making any investment decisions. Understanding these dynamics can help you navigate the opportunities and risks associated with this IPO. Investing in Rahi Infratech Limited's IPO could be a promising opportunity, especially with the government's strong push for railway infrastructure in India. They're looking to raise Rs 4,200 million, which will be directed towards expansion and reducing debt, ultimately enhancing their financial health. However, it's important to remember that this is their first public offering, so we should brace ourselves for potential volatility in the stock price. Before making any decisions, take the time to thoroughly review their financials and the current market conditions. Look at their revenue growth, profit margins, and how they stack up against competitors. The railway sector is poised for growth, but like any investment, it comes with its risks. Sambhavi Steel Tubes Limited is making a significant shift from sponge iron to steel tube production, a move that could redefine its market position. With an IPO size of Rs 5,400 million, the company aims to enhance its manufacturing capabilities, boost working capital, and reduce existing debt. As investors, it's crucial to analyze the profitability trends. How has the transition impacted margins? Additionally, we need to scrutinize the debt levels. A reduction here could signal financial health. Finally, consider the market risks in this competitive sector. Understanding these dynamics will be key to making informed investment decisions as Sambhavi embarks on this transformative journey. Prostarm Info Systems Limited is gearing up for its IPO, marking a pivotal moment in its journey since 2008. This company has navigated through various name changes, demonstrating remarkable adaptability in the tech and power systems sector. As they aim to raise capital for growth, it's essential for potential investors to tread carefully. With no prior market history, the risks are significant. Scrutinizing their financials is crucial, as is assessing the credibility of the promoters behind the scenes. Understanding the market dynamics will also play a key role in your decision-making. While there are opportunities to seize, a cautious approach is vital. Investing is not just about potential gains, it's about informed choices. Midwest Limited is on the brink of an exciting IPO, aiming to raise Rs 2,500 million through fresh equity shares. Operating in the thriving natural stone sector, they specialize in granite and quartz, with ambitious plans to establish processing facilities in Andhra Pradesh. This growth potential is enticing, but it's crucial to recognize the uncertainties that come with an IPO. Investors must weigh the promise of expansion against risks like market dependence and liquidity issues. The natural stone industry is booming, yet a careful evaluation of Midwest Limited's financials and risk factors is essential before making any investment decisions. The opportunity is there, but due diligence is key. Globe Civil Projects Limited is set to make a significant move with its upcoming IPO, the first since 2002. This company has been a key player in the civil construction sector, focusing on essential infrastructure projects that drive economic growth. The IPO aims to raise capital for expansion and to tackle existing debt, which could position them for a robust future. However, potential investors should approach with caution. The market can be unpredictable, and execution challenges in large-scale projects can pose risks. It's crucial to weigh these factors carefully. As Jaro Institute of Technology Management and Research Limited prepares for its IPO, the excitement in the online education sector is palpable. With a fresh issue of Rs 1,700 million and a significant offer for sale from promoter Sanjay Salunki, they're aiming to raise capital for growth. However, we must tread carefully. The online education market in India is fiercely competitive, with giants like BYJU's dominating the landscape. While the proceeds could enhance their technology and help reduce debt, the risks are substantial. Investors should weigh the potential for growth against the uncertainties that lie ahead. Proceed with caution. The path to success is anything but guaranteed. Investing in Niva Bupa Health Insurance Company demands a meticulous approach. First, let's dive into their financial performance. Analyzing profit margins and revenue growth reveals their operational efficiency and market viability. Are they consistently improving? Next, we must evaluate their market position. Are they gaining market share in a competitive landscape? This is crucial for long-term sustainability. Now, let's not overlook the risk factors. Regulatory challenges can significantly impact their operations, so understanding these risks is essential. Finally, we should scrutinize their management strategies and future growth prospects. How are they positioning themselves for the evolving healthcare landscape? Knowledge is indeed key in making informed investment decisions. Viney Corporation Limited is making waves with its IPO, marking a significant milestone since its inception in 1992. Specializing in auto ancillary components, the company is now poised to tap into the booming electric vehicle market. This IPO features a fresh issue aimed at raising $500 million, alongside an offer for sale by existing shareholders. While this move signals growth potential, the reduction of promoter stakes raises some eyebrows regarding their long-term commitment. As an investor, it's crucial to delve into the company's financial health, assess market risks, and evaluate the competitive landscape. With the electric vehicle sector on the rise, Viney Corporation could be a compelling opportunity, but thorough analysis is key to making an informed decision. All Time Plastics Limited is gearing up for an IPO, offering a fresh issue of up to $3,500 million. Operating in the consumer plastics sector, they specialize in essential kitchenware and household items that are always in demand. This steady demand is certainly a positive sign for potential investors. However, it's crucial to weigh the competition in this space, as well as the company's reliance on key promoters who have been pivotal in its growth. Additionally, investing in a first-time public offering carries inherent risks. While the prospects look promising, a thorough analysis is essential before diving in. Understanding these dynamics will help you make an informed decision. Vikran Engineering Limited is on the brink of its initial public offering, aiming to raise $9,000 million to fuel its growth and expansion. As a family-run business, it specializes in engineering, procurement, and construction contracts, perfectly positioned to benefit from India's ongoing infrastructure push. However, this being their first public issue, it's essential to consider the inherent market risks and uncertainties involved. While the sector outlook is promising, potential challenges in project execution could impact returns. Investors must carefully weigh these factors, balancing the excitement of a burgeoning industry against the realities of navigating a public market. Ajax Engineering Limited is gearing up for its IPO, offering 22.8 million equity shares, primarily through an offer for sale. While the construction sector is thriving, it's crucial to note that this IPO seems to favor the promoters more than the company's growth. As retail investors, we need to dig deeper. Look closely at the financial health of Ajax. Are they generating consistent profits? And pay attention to the promoter stake sales. These can significantly impact our potential returns. In a booming market, it's easy to get swept up in the excitement, but informed decisions are key to navigating this IPO landscape wisely. ETFs, or exchange-traded funds, are fascinating investment tools that allow you to buy shares representing a collection of assets, like stocks or bonds. They trade on the stock market just like individual stocks, which makes them incredibly easy to buy and sell. What's great about ETFs is that they track an index combining the benefits of mutual funds and stocks. This means you get lower costs, transparency, and flexibility. You can see daily holdings and trade anytime during market hours, which is a huge advantage. However, while most ETFs are generally safe, it's important to remember that specialized ETFs can carry specific risks. So, as you explore this investment option, keep in mind the balance between potential rewards and risks. ABB India Limited's 2023 annual report reveals an impressive financial trajectory, with revenues soaring to 10,147 crore, marking a remarkable 21.96% increase. This growth isn't just numbers, it reflects our commitment to excellence and innovation. Profit after tax climbed by 22%, underscoring our robust profitability in a competitive market. The demand for electrification, motion, and automation is stronger than ever, positioning us perfectly for future opportunities. And let's not overlook the proposed dividend of Rs 29.3 per share, a testament to our dedication to delivering value to our investors. With these solid fundamentals, ABB is not just keeping pace, we're setting the stage for sustained success. HDFC Life Insurance Company Limited has showcased remarkable financial growth for the year ending March 31, 2024. Premiums earned have risen by 9.63%, totaling an impressive Rs 630,858 million. This growth reflects our strong market position and customer trust. Investment income has surged to Rs 383,631.56 million, highlighting our effective asset management strategies. Net profit has also seen a significant increase of 15.34%, which enhances shareholder value and boosts earnings per share. We're proposing a dividend of Rs 2, a testament to our robust cash flow. While cash equivalents have decreased, our liquidity remains strong, ensuring we can navigate future challenges effectively. Power Finance Corporation has truly set a remarkable benchmark in FY 2023-24, with total income soaring to Rs 46,034 crore, that's a 16% increase, and profit after tax reaching 14,367 crore, up by 24%. Their loan portfolio is expanding, particularly in renewable energy, reflecting a 14% growth. Even more impressive, NPAs have dropped to an 8-year low of just 0.85%. This solid capital base, combined with strategic international expansion, positions PFC as a compelling investment opportunity. For those focused on infrastructure and energy transition, PFC stands out as a robust choice in today's market. Avance. Financial Services Limited is making significant strides in the education financing sector. With a remarkable 22.2% growth in assets under management, it's evident that this market is thriving. The company's recent report of a 14.2% increase in net profit showcases their effective cost management strategies. Their strategic focus on education loans, particularly for international studies, positions them favorably for future expansion. However, we must also consider the rising borrowing costs and the implications of key investor exits through the IPO. These factors warrant careful attention as we navigate this dynamic landscape. Dev Accelerator Limited is stepping into the thriving co-working space market with its upcoming IPO, aiming to raise capital for expansion. Since 2017, this sector has gained significant traction in India, especially post-pandemic, as the demand for flexible workspaces has surged. This presents a remarkable opportunity for growth. However, as a first-time public offering, investors should be aware of the inherent risks, particularly in a competitive landscape. The company plans to enhance its network and technology, which could position it well for future success. Understanding the financial details is crucial for making informed investment decisions. Keep an eye on this IPO. It could be a game changer in the evolving workspace industry. Godrej Consumer Products Ltd has demonstrated impressive growth in FY 2023-24, achieving a 6% increase in revenue and an outstanding 21% rise in EBITDA. This growth is largely driven by their commitment to innovation and sustainability, including a bold goal of reaching net zero emissions by 2035. Their strategic focus on expanding into rural markets and launching new products positions them strongly within the competitive FMCG landscape. However, while the outlook is promising, investors should remain vigilant about economic sensitivities and the challenges posed by market competition. Overall, GCPL's proactive initiatives suggest a solid foundation for long-term success. Tata Power's FY 2023-24 report showcases impressive financial growth, with a 10% increase in revenue and a remarkable 26% rise in EBITDA. This performance underscores the company's commitment to sustainable energy, as it aims for a 70% green portfolio by 2030. Their strong credit ratings and effective debt management not only enhance their financial stability, but also make them an attractive option for investors. While regulatory risks exist, the long-term outlook for Tata Power remains promising, especially as the world shifts towards clean energy solutions. Investing in Tata Power could be a strategic move for those looking to support a greener future while benefiting from robust financial growth. Hindustan Zinc Limited's integrated annual report for FY 2023-24 paints a compelling picture of financial strength. The company has achieved significant revenue growth, showcasing remarkable market stability. Key metrics reveal a net profit that underscores operational efficiency, while the earnings per share reflect a solid return for investors. The robust EBITDA margin indicates strong profitability, and substantial dividend payouts highlight impressive cash flow management. Moreover, the company strategic investments in ability commitment to future seeking steady returns and responsible operations. Hindustan Zinc is a promising, compelling investment opportunity. With its diverse revenue, the company demonstrates remarkable recent ROI to share on market dynamics and raw material costs, as these factors can impact profitability. With strong leadership and a strategic focus, Hindalco is well positioned for long-term growth in the metals sector. This is a company that not only adapts but thrives, making it an attractive option for investors looking for stability and potential in their portfolios. Sunshield Chemicals Limited has showcased remarkable financial growth, with its net worth climbing from Rs 367.22 lakhs in 2022 to an impressive Rs 219.02 lakhs in 2024. This surge is underpinned by a revenue increase to Rs 337.54 lakhs, highlighting strong market demand for its products. However, it's essential to note that the company's borrowings have also risen, now standing at Rs 8,547.33 lakhs. This increase in debt raises some caution flags. As investors, it's crucial to balance the excitement of growth with the potential risks that come from operating in this specialized sector. Careful consideration will be key to navigating these dynamics effectively. Andhra Cements Limited presents a mixed financial landscape for FY 2024. While the equity share capital remains steady, it's encouraging to see a significant improvement in net worth, bouncing back from negative figures in FY 2022. Revenue generation has resumed, signaling a much-needed operational recovery. However, the company is still grappling with losses, which underscores ongoing challenges in profitability. For investors, this scenario is a double-edged sword. On one hand, there are clear signs of recovery. On the other, the persistent losses remind us to tread carefully. It's essential to weigh these recovery indicators against the underlying risks before making any investment decisions. Tech Mahindra Limited's FY 2023-24 report is truly impressive. With a revenue of Rs 61,080 crore, we've seen a solid 5% growth from last year. This isn't just numbers. It's a testament to the company's resilience in a competitive market. The net profit stands at Rs 5,390 crore, showcasing our strong operational efficiency. What really excites me is the dividend payout of Rs 40 per share, reflecting our commitment to rewarding investors. Plus, with a low debt-to-equity ratio, Tech Mahindra is proving its stability and financial health. This combination of growth, profitability, and prudent financial management makes it an attractive investment option. Investing in Tech Mahindra feels like a smart move for a bright future. Ambuja Cements Limited has truly excelled in FY 2023-24, achieving a remarkable revenue of Rs 33,960 crore, fueled by an 8.1% increase in cement sales. Their operating EBITDA of Rs 6,400 crore showcases an impressive 22% margin, highlighting their operational efficiency. What stands out even more is their zero gross debt, which underscores their financial stability in a competitive market. With ambitious expansion plans on the horizon and a strong commitment to sustainability, including a target of net zero emissions by 2050, Ambuja is strategically positioned for long-term growth. For investors, this is a compelling opportunity to consider, especially in light of the evolving competitive landscape. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indi app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. IndusInd Bank Limited's FY 23-24 results are impressive, showcasing robust financial growth. Total income soared to Rs 55,144 crore, with a net profit of Rs 977 crore, reflecting a remarkable 21% increase. The bank's net interest income reached Rs 20,616 crore, highlighting its strong lending performance. With a capital adequacy ratio of 17.23%, IndusInd maintains a solid financial cushion, ensuring stability and resilience. Digital initiatives, particularly the Indi app, have significantly boosted customer engagement, while retail loans surged by an impressive 23%. Additionally, the bank's non-performing asset ratios remain low, reinforcing its commitment to quality lending. Cipla Limited's integrated annual report for FY 2023-24 is truly impressive. Total income soared to Rs 26,249 crore, reflecting robust growth. The net profit of Rs 356 crore and an EBITDA margin of 20.3% highlight our operational strength and efficiency. This isn't just numbers, it's a testament to our commitment to excellence. With a dividend of Rs 13 per share, we're rewarding our investors while strategically investing in R&D to drive innovation. Cipla is not just keeping pace, we're setting the stage for future success. The outlook is bright, and I'm excited about what lies ahead for us and our investors. In FY 2023-24, GAIL India Limited has truly set a benchmark in financial performance, achieving a remarkable total income of Rs 144,198 crore and a net profit of Rs 7,937 crore. This translates to an earnings per share of Rs 17.65, showcasing our commitment to enhancing shareholder value. Our dedication to rewarding investors is evident with a dividend declaration of Rs 6.50 per share. With a robust debt-to-equity ratio of just 0.23, GAIL stands strong in its financial health. We are not just resting on our laurels. Our focus remains on expanding our natural gas infrastructure and investing in sustainable energy solutions. This strategic direction positions us well for future growth and stability, making GAIL a compelling choice for investors. In FY 2023-24, REC Limited has truly set a benchmark for financial excellence. Our total income has surged to an impressive Rs 47,214 crore, marking a remarkable 20% increase. Even more inspiring is our net profit, which has risen by 27% to reach Rs 19 crore. This isn't just growth, it's a testament to our unwavering commitment to robust performance. What excites me the most is our strategic focus on renewable energy financing. We've achieved an astounding 539% growth in project sanctions, positioning us as a leader in sustainable development. This is not just about numbers, it's about paving the way for a greener future. Together, we are not only driving financial success, but also making a significant impact on the world. Britannia Industries Limited's FY 2023-24 report showcases a solid 3.6% revenue growth, reaching Rs 16,986.08 crore. This growth is complemented by a 9.9% rise in operating profit, indicating strong operational efficiency. However, it's worth noting that profit after tax dipped by 2.7%, a point of concern amidst rising costs. The proposed dividend of Rs 1,770.38 crore underscores the company's commitment to its shareholders, reflecting confidence in its financial health. Strategic expansions and a focus on sustainability are positioning Britannia well for future growth, even as it navigates competitive market pressures and fluctuating raw material costs. Union Bank of India has truly outdone itself in FY 2023-24, achieving a remarkable total business of Rs 21.26 trillion, reflecting a solid growth of 10.31%. What's even more impressive is the net profit surge of 61.84%, reaching Rs 13,648 crore. This is a clear indicator of the bank's robust financial health. Asset quality is on the rise too, with gross NPAs down to 4.76%. This improvement showcases our commitment to maintaining a strong balance sheet. Our strategic investments in digital technology are paving the way for future growth, ensuring we stay competitive in a challenging economic landscape. With a solid capital base and a forward-looking approach, Union Bank is not just weathering the storm. We are positioning ourselves for exciting opportunities ahead. Macrotech Developers Limited, or LODA, is on an impressive trajectory for FY 23-24. We've achieved a remarkable revenue from operations of Rs 10,320 crore, marking an 8% year-on-year increase. Our pre-sales have soared to Rs 14,520 crore, showcasing the strong demand in the market. Profitability is also on the rise, with adjusted profit after tax climbing to Rs 1,610 crore, a significant 19% growth. What's more, we've successfully reduced our net debt from Rs 7,070 crore to Rs 3,010 crore, which greatly enhances our financial stability. Our commitment to sustainability is unwavering as we aim for net zero emissions by 2050. This is not just about growth, it's about building a sustainable future. Investors can feel confident in our direction and the robust foundation we're laying for continued success. Adani Energy Solutions Limited has reported impressive financial growth for FY 2023-24, with revenue from operations soaring to Rs 14,217 crore, marking a 17% increase. This robust performance is underpinned by a significant investment of Rs 17,000 crore in infrastructure, positioning the company for future expansion. They've also secured contracts for smart meters worth an impressive Rs 27,195 crore, highlighting their commitment to innovation. With improved debt metrics and a strong liquidity position, they are well equipped for growth, particularly in the renewable energy sector. However, it's crucial for investors to remain vigilant about potential regulatory and execution risks that could impact their competitive edge. Eicher Motors Limited has truly outdone itself in FY 2023-24, showcasing remarkable financial growth. Revenue from operations soared to Rs 16,535.78 crore, marking a solid 15% increase. But that's not all. Profit after tax skyrocketed by an impressive 37.31%, reaching Rs 4,001 crore. This isn't just about numbers. It reflects our unwavering commitment to innovation. With exciting new motorcycle launches and a strategic entry into the electric vehicle market, Eicher is not just keeping pace, but setting the standard. This growth story is a testament to our dedication to enhancing market presence and delivering value to our investors. The future looks bright, and I'm thrilled to be part of this journey. Tata Consumer Products Limited has delivered impressive financial results for FY 23-24. Consolidated revenue reached Rs 15,206 crore, reflecting a solid 10% growth. The EBITDA saw a remarkable surge of 24%, climbing to Rs 2,323 crore, showcasing our operational efficiency. Even more encouraging, the group net profit increased by 29%, highlighting our strong profitability. Our commitment to innovation is evident, with over 100 new products launched, significantly enhancing our market presence. We're also prioritizing sustainability, aiming for leadership in the FMCG sector. Additionally, our expanded distribution network now reaches an impressive 4 million outlets, positioning us for continued growth and success. TVS Motor Company has showcased remarkable growth in FY 2023-24, reporting total revenue of Rs 31,925 crore, a 20.5% increase from the previous year. With a profit after tax of Rs 2,083 crore, up 40% and strong cash flow, the company is financially robust. Their two-wheeler sales surpassed 4 million, while electric vehicle sales soared by 101%. Strategic investments in EV technology and global expansion, coupled with a commitment to sustainability, position TVS as a leader in the automotive sector. Dr. Reddy's Laboratories Limited has shown significant financial growth for FY 23-24, with revenue reaching Rs 27,916 crores, marking a 14% increase year over year. The company demonstrates strong operational efficiency, reflected in an EBITDA margin of 29.7%. The profit after tax stands at Rs 7,187 crore, translating to an earnings per share of Rs 73.50. Investment in research and development is robust, with Rs 2,290 crore allocated, emphasizing innovation in biosimilars and complex generics. The company maintains a low net debt-to-equity ratio, ensuring financial flexibility. Strategic initiatives include partnerships with global firms. Adani Total Gas Limited has truly made a mark in FY 23-24, reporting a remarkable revenue of Rs 813 crore and a 23% surge in profit after tax. This growth is not just a number. It reflects their strategic pivot towards clean energy solutions, particularly in compressed biogas and LNG. By focusing on these sustainable alternatives, ATGL is positioning itself as a frontrunner in the city gas distribution sector. What's more impressive is their ability to maintain low debt levels, which is crucial for financial stability. However, as potential investors, it's essential to keep an eye on regulatory risks and the competitive landscape that could impact profitability. Despite these challenges, ATGL's commitment to sustainable solutions makes it a compelling option for those looking to invest in the future of energy. Cholamandalam Investment and Finance Company Limited has remarkable financial performance in FY 2023-24, with revenue soaring to Rs 19,680 crore, marking a 22% growth, and a net profit of Rs 3,173 crore, up 27%, showcasing robust profitability. Assets under management have surpassed Rs 53,618 crore, reflecting strong lending growth. The focus on digital transformation, with 98% of transactions now digital, enhances efficiency. Cholamandalam's diversified portfolio positions it as a solid investment opportunity. Zydus Life Sciences Limited has truly made waves in FY 2023-24, reporting a total income of Rs 19,550 crore, marking a solid 13% increase. The standout performer? Their U.S. formulations business, which surged by an impressive 17%. Even more striking is the net profit, which skyrocketed by 97%, reflecting their robust profitability. This growth is underpinned by a strong commitment to research and development, particularly in the biosimilar sector, positioning them for sustained success. However, as potential investors, it's crucial to weigh these achievements against the backdrop of regulatory challenges and fierce market competition. This balance will be key in assessing the long-term viability of this promising company. Havells India Limited has reported impressive financial results for FY 23-24, achieving total revenue of R19,680 crore, marking a remarkable 22% growth. Their net profit surged to R504 crore, translating to an earnings per share of R23.15. While there has been some margin pressure, the company remains committed to its shareholders, declaring a total dividend of R9.0 per share. Strategic expansions in smart home solutions and a strong focus on sustainability initiatives position Havells favorably for future growth. However, it's essential for investors to stay vigilant regarding competitive pressures and fluctuations in input costs. Overall, Havells is navigating the market landscape effectively, showcasing resilience and a forward-thinking approach. Dabur India Limited's FY 2023-24 report is nothing short of remarkable. We've achieved a consolidated revenue of Rs 12,404 crore and a net profit of Rs 1,543 crore, reflecting our robust growth trajectory. Our international business is thriving, contributing Rs 3,046 crore, which underscores our global presence and strength. Sustainability is at the heart of our strategy. We're committed to achieving net zero emissions by FY 2045 and have already recycled over 40,000 MT of plastic waste. This is not just about numbers, it's about making a positive impact. We're also expanding our footprint with 14 new product launches and reaching out to 122,000 villages in rural markets. Hero MotoCorp is on an incredible journey of growth in FY 23-24, achieving a remarkable total income of Rs 37,456 crore, marking an 11% increase. Our EBITDA has surged by 32%, driving a net profit of Rs 3,968 crore, an impressive 36% growth that underscores our resilience and market leadership. With a commanding 30.9% market share, we're not just participants in the industry, we're pioneers. Our commitment to electric mobility shines through with the Vita electric range and our zero waste initiatives, positioning us for a sustainable future. Strategic partnerships are fueling our innovation, ensuring we stay ahead of the curve. For investors, our consistent dividends reflect our dedication to delivering value. Shree Cement Limited is on an impressive growth trajectory in FY 23-24, with revenues soaring to Rs 19,586 crore, marking a remarkable 16% increase. Our EBITDA has surged by an astonishing 46%, reaching Rs 4,925 crore, while net profit after tax stands strong at Rs 2,468 crore. We're proud to maintain a cash-positive position and a robust market cap of Rs 92,741 crore. With a cement production capacity of 53.4 MTPA, soon to expand to 56.4 MTPA, we're not just growing. We're leading the industry in sustainability with 55.9% of our energy coming from green sources. Our strong dividend payout reflects our confidence in the future as we embark on ambitious plans for digital transformation and expansion into ready-mix concrete. Mankind Pharma Limited has truly outdone itself in FY 2023-24, achieving a remarkable total revenue of 10,135 crore, an impressive 18% increase from last year. Our EBITDA has surged to 2,550 crore, reflecting a phenomenal 33% rise, while profit after tax has soared to 1,942 crore, marking a staggering 48% growth. This robust performance is backed by a strong balance sheet and net cash of Rs 260 crore, positioning us perfectly for future investments. We're strategically expanding our respiratory and cardiac portfolios, all while staying committed to sustainability. With these solid foundations, Mankind is not just growing, we're thriving and ready to seize new opportunities. Bajaj Holdings and Investment Limited has truly outperformed expectations in FY 2023-24. Total income skyrocketed to Rs 3,075.69 crore, a significant leap from Rs 1,937.01 crore. This impressive growth is mirrored in our profit before tax, which reached Rs 3,2082 crore, showcasing our robust operational performance. We're also pleased to announce an interim dividend of Rs 110 per share, reflecting our dedication to rewarding our shareholders. With substantial investments in Bajaj Auto and Bajaj Finserv, we maintain a cash-positive status and a debt-free balance sheet, which not only enhances our stability, but also positions us strongly for future opportunities. This is a testament to our strategic vision and commitment to sustainable growth. Divi's Laboratories Limited has demonstrated a robust financial performance in FY 23-24, reporting a total income of Rs 8,002 crore. While the profit after tax saw a dip to Rs 1,576 crore, the company remains debt-free, underscoring its financial stability. Notably, 52% of its revenue comes from Europe, highlighting its strong global presence and export capabilities. The commitment to sustainability is commendable, with significant reductions in greenhouse gas emissions. However, challenges persist, particularly with shrinking profit margins and reliance on specific markets. Overall, Divi's Laboratories is strategically positioned for future growth, making it an intriguing prospect for investors. Apollo Hospitals Enterprise Limited has truly set the stage for remarkable growth, reporting a total income of Rs 19,680 crore for FY 2023-24, marking an impressive 22% increase. The improved EBITDA and a solid 20% return on capital employed highlight the company's operational efficiency and profitability. What's more, the digital platform Apollo 24/7 has engaged over 33 million users, significantly enhancing healthcare accessibility across the nation. With a strong commitment to sustainability and substantial capital investments, Apollo is well positioned for continued success. However, as potential investors, it's wise to keep an eye on regulatory changes and market competition. The future looks bright, but staying informed is key. NHPC Limited's FY 2023-24 report shows a total income of 10,024.99 crore, a slight dip from last year. While profit after tax has decreased to Rs 3,143.94 crore, the company continues to demonstrate resilience, generating an impressive 21,679 million units of power. NHPC's commitment to renewable energy and strategic projects positions it well for future growth. Investors should appreciate its solid financial standing and dedication to sustainability. However, it's crucial to remain vigilant about potential risks, including regulatory changes and challenges in project execution. Balancing these factors will be key for anyone looking to invest in NHPC's promising journey ahead. Shriram Finance Limited has showcased remarkable growth in FY 23-24, with total income soaring to Rs 34,998 crore, up from Rs 29,803 crore. Net interest income reached Rs 19,687 crore, fueling a PAT of Rs 7,190 crore, a 20% increase. With assets under management at Rs 24,062 crore and improved asset quality, the company is positioned for sustained success. Digital initiatives like the Shriram One Super App enhance customer experience, while a commitment to sustainability focuses on electric vehicle financing. Bosch Limited's performance for FY 2023-24 is nothing short of remarkable. With total revenue soaring to Rs 16,727 crore, we've achieved a robust 12% growth. Even more impressive is our profit before tax, which surged by 24.2%, showcasing the strength of our core operations. Our commitment to innovation shines through as we invest in cutting-edge digital solutions and sustainability initiatives, proudly achieving carbon neutrality. While we navigate global economic uncertainties and regulatory changes, our focus remains on leveraging our strengths to drive future growth. This is an exciting time for Bosch, and I'm thrilled about the journey ahead. Torrent Pharmaceuticals Limited showcased impressive financial growth in FY 2023-24, with total revenue reaching Rs 10,728 crore, a 12% increase from the previous year. Operating EBITDA grew by 19%, and profit after tax surged 33%, highlighting strong profitability. The company's strategic focus on product expansion and sustainability positions it for future success. IDBI Bank Limited has delivered impressive results for FY 2023-24, with net profits skyrocketing to R5,634 crore, an astonishing 55% increase. This growth is mirrored in their total business, which has reached R4.66 lakh crore, reflecting a robust 12% rise. The bank's improved return metrics highlight its operational efficiency, making it an attractive option for investors. Additionally, a solid capital position and strategic digital initiatives further enhance its appeal in the market. However, it's crucial for potential investors to stay vigilant about regulatory challenges and competitive pressures that could impact future performance. Overall, IDBI Bank is positioning itself strongly, but awareness of the broader landscape is essential for informed investment decisions. ICICI Prudential Life Insurance Company stands out with its robust financial health, showcasing impressive premium income growth and a stable net profit. Their high persistency ratios are a testament to excellent customer retention, which is crucial in today's competitive landscape. What's particularly exciting is their commitment to digital transformation, enhancing customer engagement and making services more accessible. Coupled with a diversified investment strategy, they're well positioned for long-term returns. However, as potential investors, it's essential to remain vigilant about regulatory and competitive challenges that could impact performance. JSW Energy Limited has truly demonstrated impressive growth in FY 2023-24. With total revenue soaring to Rs 11,941 crore, marking a 10% increase, and an EBITDA that has skyrocketed by 53% to Rs 5,837 crore, the company is clearly on a strong trajectory. Their commitment to renewable energy is not just a buzzword. They're targeting a robust 20 GW capacity by 2030. This ambitious goal is complemented by significant investments in energy storage and green hydrogen technologies, positioning them as innovators in the sector. However, while the outlook is bright, investors should remain vigilant about potential regulatory changes and the competitive landscape. Jindal Steel and Power Limited has truly demonstrated remarkable financial strength in FY 2023-24. With gross revenue soaring to Rs 58,115 crore and a profit after tax of Rs 5,943 crore, the numbers speak volumes. Their operational efficiency is highlighted by an impressive EBITDA of Rs 10,131 crore. What's particularly noteworthy is their commitment to sustainability and digital transformation, aiming for net zero carbon by 2047 while expanding their steel capacity. For investors, the manageable debt levels and robust cash flow are encouraging signs. However, it's essential to remain vigilant about potential market volatility and regulatory risks. In FY 2023-24, the Indian Hotels Company Limited demonstrated remarkable growth, achieving consolidated revenue of Rs 6,952 crore, marking a 17% increase from the previous year. This impressive performance is underscored by a 20% rise in EBITDA, showcasing our strong operational capabilities. What sets IHCL apart is our robust financial health, no net debt, and over Rs 2,200 crore in cash reserves. This positions us strategically for future expansion and sustainability initiatives. As we look ahead, our focus remains on leveraging these strengths to capitalize on emerging opportunities in the hospitality sector. BHEL's FY 2023-24 report shows a revenue of Rs 22,921 crore, reflecting a steady growth from last year. While we see a slight dip in EBITDA and PAT due to accounting changes, the order book has surged to an impressive Rs 131,598 crore, indicating robust demand in the market. The company's strategic focus on renewable energy and digital transformation positions it well for future growth. However, investors should remain vigilant about regulatory risks and increasing market competition. Balancing these factors is crucial for making informed investment decisions in this evolving landscape. Cummins India Limited's FY 2023-24 report is nothing short of impressive. Revenue has surged to an astounding Rs 9,958.60 crore, marking a robust 16% increase. Even more remarkable is the profit after tax, which has soared by 40% to Rs 1,720.58 crore. This growth isn't just a number. It reflects a strong balance sheet and a commitment to sustainability that sets Cummins apart. With no significant debt, the company is in a prime position to capitalize on future opportunities. For investors looking for a solid and promising venture, Cummins is clearly a compelling choice. The future looks bright, and I'm excited to see where this journey takes us. ICICI Lombard General Insurance Company Limited has impressive financial growth in FY 2024. Net premium earned rose to Rs 168.66 billion, reflecting a 13.8% increase. Profit after tax also grew by 11%, reaching Rs 19.19 billion. Investment income surged 19.6%, enhancing overall stability. However, operating profit saw a decline, raising concerns. Despite this, the total assets climbed to Rs 633.09 billion, indicating robust expansion. The company declared a Rs 11 dividend per share, offering value to investors. CG Power and Industrial Solutions Limited has truly outdone itself in FY 2023-24. Standalone revenue surged to an impressive Rs 7,710 crores, marking a remarkable 16% increase. Even more exciting, profit before tax grew by 24%, showcasing their improved margins. With a debt-free status and a robust order book of Rs 6,276 crores, CG Power is not just stable, but primed for future expansion. Their strategic move into semiconductor manufacturing opens up new avenues for growth. While there are always risks with new ventures, the company's strong financial health and clear growth strategy make it a compelling investment opportunity. This is a moment to watch closely. Max Healthcare Institute Limited has remarkable revenue growth in FY 23-24, driven by improved occupancy rates and higher average revenue per occupied bed. Stable profit margin and a recommended dividend of Rs 1.50 per share, the company showcases its commitment to shareholder value. The balance sheet remains robust, reflecting strategic investments in healthcare infrastructure. Expansion efforts and a focus on specialized services enhance market positioning, while digital initiatives aim to elevate patient care. Solar Industries India Limited has showcased impressive financial highlights for FY 2023-24. Revenue reached Rs 6,070 crore, while profit after tax grew to Rs 875 crore. With a solid net worth of Rs 3,306 crore, the company maintains a low debt profile. Proposed dividends of Rs 8.5 per share reflect shareholder value. Strategic investments in R&D and manufacturing expansion position Solar Industries favorably in the defense sector, bolstered by a robust order book of Rs 2,600 crore. United Spirits Limited reported impressive financial performance for FY 2023-24, with consolidated net sales reaching Rs 11,321 crore, a 14.2% increase. The focus on premiumization is evident as the prestige and above segment grew by 11.9%, generating substantial brand loyalty. Profit after tax stood at Rs 312 crore, reflecting a healthy 12.3% margin. Investors should note the significant sustainability initiatives, achieving 98.6% renewable energy usage. Growth prospects are strong. Motherson Sumi Wiring India Limited has truly excelled in FY 2023-24, reporting a remarkable revenue of Rs 8,328 crore, which is an impressive 18% increase year-on-year. The company's profit after tax stands at Rs 638 crore, showcasing its robust profitability. What's even more striking is the return on capital employed at 48%, indicating exceptional efficiency in resource utilization. Being debt-free not only reflects strong cash flow, but also allows for a generous 55% dividend payout to shareholders. MSWIL continues to lead the wiring harness market while strategically venturing into the electric vehicle segment, positioning itself for future growth. Indus Towers Limited has demonstrated impressive financial growth in FY 23-24. Total revenue reached Rs 86,006 million, marking a modest increase of 0.77%. However, the real highlight is the EBITDA, which surged to R 146,939 million, a remarkable 50% rise. Profit after tax nearly tripled, soaring to Rs 60,262 million. This growth is underpinned by a substantial investment of Rs 96,975 million in network expansion, adding around 27,000 macro towers. With a low debt-to-equity ratio of just 0.16, Indus Towers showcases strong financial stability. As a key player in the 5G rollout, the company is also committed to sustainability, having installed over 14,000 solar sites. In FY 23-24, IRCTC delivered impressive financial results, with revenues soaring to Rs 4,270 crore, a remarkable 20% increase. The EBITDA reached Rs 1,630.68 crore, showcasing a robust margin of 38.2%. Profit after tax climbed to Rs 170 crore, reflecting strong operational efficiency. Shareholders reaped the benefits with a total dividend of Rs 6.50 per share, a clear sign of the company's commitment to returning value. With a market capitalization of Rs 74,396 crore, IRCTC remains a formidable player in the market. Key growth drivers included catering, internet ticketing, and rail near, with notable advancements in e-catering and digital ticketing enhancing customer experience. Colgate-Palmolive, India Limited has delivered impressive financial results for FY 23-24. Net sales reached Rs 5,644 crore, marking an 8.8% increase from last year. The EBITDA surged by 22.9% to Rs 1,901 crore, while profit after tax rose by 20.1% to Rs 1,320 crore. With a gross margin of 69.5%, the company showcases strong profitability. They've declared a total dividend of Rs 58 per share, reflecting their commitment to shareholder returns. Innovations like Colgate Max Fresh with Ultra Freeze technology highlight their dedication to product development. Plus, their sustainability efforts, including the transition to recyclable tubes, demonstrate a forward-thinking approach. Polycab India Limited has reported growth for FY 23-24. Revenues surged to Rs 180,394 million, marking a 28% rise. EBITDA grew by 35% to Rs 24,918 million, and PAT increased by 41% to Rs 18,029 million. Strong EBITDA margin of 13.8% and dividend payout of 25.4%. Net cash position of Rs 21,408 million and Rs 8,580 million in capital expenditure for future expansion. Controls a 25-26% share in the wires and cables market and focuses on sustainability, recycling 87 million liters of water and using renewable energy. Lupin Limited's annual report for the year ending March 31st, 2024 showcases remarkable financial growth. Total income surged to Rs 16,384 crore, marking a solid 9% increase. Even more impressive, EBITDA soared to Rs 2,737 crore, reflecting a robust 20% rise. Our net profit jumped to Rs 1,068 crore, a testament to our operational efficiency and strategic initiatives. In a strong commitment to our shareholders, we proposed an Rs 8 dividend per share. Additionally, with Rs 1,566 crore invested in research and development, we are doubling down on our focus in pharmaceuticals and specialty drugs. This investment not only enhances our product offerings, but also strengthens our global footprint, particularly in the US and Europe. Oracle Financial Services Software Limited has reported impressive financial results for FY 2023-24. Their consolidated revenue has reached Rs 63,129.61 million, marking a robust 12% increase from the previous year. Even more noteworthy is their net profit, which stands at Rs 22,993.62 million, reflecting a remarkable 23% growth. This strong performance underscores the effectiveness of their strategic focus on cloud solutions and innovation, driving both profitability and shareholder returns. Additionally, the company has declared an interim dividend of Rs 240 per share, demonstrating a solid commitment to rewarding investors. SRF Limited's FY 2023-24 report paints a challenging picture. Revenue has dipped to Rs 13,139 crore, reflecting a 12% decline driven by market pressures. The EBITDA has also taken a hit, falling 26%, while profit after tax has plummeted by 38%. However, it's not all bleak. Segments like technical textiles are showing resilience amidst these challenges. SRF's commitment to sustainability and its global reach remain crucial assets. As investors, it's essential to weigh these risks against the potential for growth in a complex landscape. The question is, can SRF navigate these turbulent waters and emerge stronger? Tube Investments of India Limited has shown solid financial health for FY 23-24, with revenues reaching Rs 7,611 crore, up 5% from last year. Profit before tax also saw a slight rise to Rs 970 crore. Notably, their return on invested capital remains robust at 54%. Free cash flow decreased to Rs 376 crore due to increased capital expenditures. It declared a total dividend of Rs 350 per share, reflecting shareholder value. Engineering division excelled, while the mobility division faced revenue challenges. In FY 2023-24, Indian Bank has truly outdone itself, achieving a remarkable total business of Rs 12.22 lakh crore. Can you believe it? Gross advances have surged by 13%, and our net profit has skyrocketed by an impressive 53%, reaching Rs 8,063 crore. This isn't just growth, it's a testament to our robust strategy and commitment to excellence. What's even more exciting is our improved asset quality, with gross NPA dropping to 3.95%. This reflects our dedication to maintaining a healthy balance sheet. And let's not forget about innovation. 87% of our transactions are now digital, showcasing our commitment to staying ahead in the tech-driven banking landscape. Berger Paints India Limited has delivered impressive financial results for FY 2023-24. Revenue surged to Rs 11,199 crore, marking a 6% increase. Even more remarkable, EBITDA soared by 25% to reach Rs 1,925 crore, while profit after tax jumped 36% to Rs 1,170 crore. This strong performance is further underscored by the declaration of a Rs 6.50 dividend per share, showcasing the company's commitment to enhancing shareholder value. In terms of market expansion, Berger launched 43 new products and established over 14,500 new retail touchpoints, significantly broadening its reach. Sustainability remains a core focus, with initiatives aimed at promoting low VOC products and renewable energy. Yes Bank Limited has demonstrated impressive growth in FY 2023-24, with a total income reaching Rs 13,209 crore, marking a 13.8% increase year-on-year. What's even more striking is the net profit, which surged by 74.4% to Rs 1,251 crore. This remarkable performance is underpinned by a significant improvement in asset quality, as evidenced by the GNPA ratio dropping to just 1.7%. The bank's strategic focus on digital initiatives and its commitment to sustainability are not only enhancing operational efficiency, but also positioning it as an attractive option for investors. While there are potential macroeconomic risks to consider, Yes Bank's robust fundamentals and forward-thinking strategies make it a compelling investment opportunity. Torrent Power Limited's FY 2023-24 report highlights a robust revenue of Rs 27,183 crore, reflecting a solid 5.8% growth. This impressive performance is underscored by a remarkable 27% surge in profit after tax, showcasing the company's resilience in a competitive market. With a strategic focus on renewable energy, Torrent Power has invested Rs 3,855 crore in capital expenditures, positioning itself for sustainable growth. Their balanced debt structure not only supports ambitious expansion plans, but also enhances financial stability. For investors, this combination of growth, profitability, and commitment to renewable energy makes Torrent Power a compelling investment opportunity. SBI Cards and Payment Services Limited has released its annual report for FY 2023-24, and there are some key financial highlights worth noting. They've declared an interim dividend of Rs 2.50 per share, which is a positive signal for investors looking for returns. However, what stands out is the projected related party transactions with the State Bank of India, estimated at a staggering $28,000 crore. This raises important questions about compliance and transparency. As investors, understanding these financial dynamics is crucial for making informed decisions. The interplay between dividends and related party transactions could significantly impact the company's future performance, so it's essential to keep a close eye on these developments. Marico Limited's FY 2023-24 report is truly impressive. Revenue surged to Rs 11,199 crore, marking a solid 6% increase. Even more remarkable is the EBITDA, which climbed 25% to Rs 1,925 crore. Profit after tax soared by 36%, reaching Rs 1,170 crore. This strong financial performance is further highlighted by an interim dividend of Rs 9.50 per share, reflecting their commitment to shareholders. With an earnings per share of Rs 11.5 and a return on net worth of 38.8%, Marico demonstrates exceptional management efficiency. Their strategic focus on digital engagement and sustainability is noteworthy, showcasing significant water savings and a commendable 67.40% renewable energy usage. Aurobindo Pharma Limited's FY 2023-24 report showcases remarkable financial growth. Revenue has surged to Rs 29,002 crore, marking a 17% increase. Even more impressive, profit after tax has soared by 64%, reaching Rs 3,169 crore. This robust performance is backed by a strong balance sheet and minimal net debt, positioning the company favorably in the market. Investments in research and development, particularly in biosimilars, indicate a commitment to future growth. However, it's essential to remain vigilant about regulatory risks in key markets. Overall, Aurobindo Pharma is not just thriving today, it's strategically poised for sustained success in the coming years. UCO Bank's annual report for FY 2023-24 presents a mixed bag of financial highlights. Operating profit has seen a commendable rise to Rs 4,576 crore, marking a 5.43% increase. However, it's important to note that net profit has taken a hit, declining by 11.2%, primarily due to higher provisions. On a positive note, the bank has made strides in asset quality, with gross NPA decreasing to 5.53%. This improvement, coupled with robust digital initiatives and strategic lending, positions UCO Bank for future growth. Yet investors should remain cautious considering the risks associated with net profit declines and broader macroeconomic sensitivities. The Bank of India's annual report for FY 2023-24 is truly impressive. We've seen a remarkable net profit surge of 57%, reaching Rs 6,318 crore. This growth is a testament to our robust revenue performance, primarily driven by enhanced asset quality. Our capital adequacy ratio stands strong at 16.96%, ensuring stability for our stakeholders. Moreover, we're distributing a 28% dividend, reflecting our commitment to returning value to investors. One of the standout achievements is the reduction in our gross NPA ratio to 4.98%, showcasing our effective asset management strategies. Additionally, advances have grown by 13.52%, fueled by our strategic investments in digital initiatives. This solid performance positions us well for future growth and reinforces our commitment to delivering value. Persistent Systems Limited has achieved remarkable financial milestones for FY 2023-24, reporting a revenue of $1.186 billion, reflecting a robust growth of 14.5%. This impressive performance is further underscored by our profit after tax, which surged to Rs 10.9 billion, marking an 18.7% increase. Our commitment to delivering value to our stakeholders is evident in our decision to raise the total dividend to Rs 52 per share, up from Rs 50. These results not only highlight our strong financial health, but also reinforce our dedication to sustainable growth and shareholder returns. As we navigate the future, we remain focused on innovation and excellence, ensuring that we continue to create value for our investors and stakeholders alike. Muthoot Finance Limited has shown remarkable growth in FY 2023-24, largely fueled by its robust gold loan services. The company's decision to declare dividends underscores its dedication to rewarding shareholders. With strong asset quality and a commitment to prudent lending practices, Muthoot is not just expanding its branch network, but also investing heavily in digital initiatives to elevate the customer experience. While the focus on gold loans provides a solid foundation, it's crucial for investors to remain vigilant about potential risks, such as fluctuating gold prices and evolving regulatory landscapes. Staying informed is key to navigating this dynamic market. Alchem Laboratories Limited financial highlights for FY 23-24. Revenue of R$126,676 million. That's a 9.2% growth year-on-year. Profit after tax soared to R$17,958 million, an 82.5% increase. EBITDA margin improved to 17.7%, showing efficiency. Rs 40 dividend per share, reinforcing shareholder value. Its R&D investment of R$5,229 million focuses on biosimilars and generics, aligning with global healthcare trends. Indian market remains strong, contributing 68.4% of revenue, while non-US markets saw a remarkable 33.3% growth. PI Industries limited growth in FY 23-24, with revenue hitting Rs 6,235 crore and a profit after tax of Rs 992 crore. Their EBITDA margins reflect effective cost management. A Rs 4.5 dividend per share underscores their commitment to shareholders. Notably, Rs 300 crore was invested in R&D, enhancing their innovation in crop protection. Expansion efforts in Gujarat and Hyderabad bolster production capabilities. The company is focused on sustainability, aiming for reduced emissions and increased renewable energy use. MRF Limited's FY 2023-24 report showcases remarkable financial growth. Total income surged to Rs 24,186 crore, marking a 9.5% increase. Profit before tax soared to Rs 2,739 crore, while profit after tax reached Rs 241 crore. This impressive performance is further highlighted by a final dividend of R194 per share, reflecting MRF's commitment to its shareholders. The company's strong export performance and efficient operations are commendable, as MRF continues to invest in technology and sustainability. However, it's essential for investors to remain vigilant regarding potential raw material price fluctuations and competitive pressures in the market. Balancing optimism with caution is key in navigating this dynamic landscape. Jindal Stainless Limited has demonstrated remarkable financial growth in FY 2023-24, with a consolidated revenue of Rs 38,562 crore. That's an impressive 8% increase from last year. Their EBITDA has surged by 31%, reaching Rs 4,704 crore, while profit after tax climbed 29% to Rs 2,693 crore. This robust performance is complemented by a stable debt-to-equity ratio of just 0.2, showcasing their strong capital management. Moreover, JSL is leading the charge in sustainability with India's first green hydrogen plant, significantly contributing to CO2 reductions. This commitment not only enhances their operational efficiency, but also positions them as a responsible player in the industry. Tata Communications Limited has reported a remarkable revenue growth of 21.9%, reaching Rs 20,969 crore for FY 2023-24. This is certainly a strong performance, particularly in the data segment, which alone contributed over Rs 17,000 crore. However, we must address the decline in profit after tax, which fell to Rs 968 crore from Rs 1,482 crore. This juxtaposition raises important questions about profitability trends amidst impressive revenue figures. The company's strategic acquisitions and emphasis on digital services signal a commitment to long-term growth potential, but investors should remain cautious. While the revenue surge is encouraging, the drop in profits suggests that operational efficiencies may need to be prioritized. General Insurance Corporation of India, or GIC Re, has showcased impressive financial performance for FY 2023-24. Gross premiums have surged to Rs 37,181.76 crore, a clear indicator of robust market demand. The profit after tax stands at Rs 6,497.30 crore, reflecting the company's stability and effective management strategies. Additionally, GIC Re's solvency ratio has improved to 3.25, signaling strong capital adequacy, which is crucial for investor confidence. However, it's important to note the increased underwriting losses, primarily driven by catastrophic events, which pose potential risks. This dual narrative of growth and caution is essential for investors to consider as they evaluate GIC Re's future prospects. L&T Technology Services (LTTS) growth in FY 23-24, reporting revenues of Rs 96,473 million, a 9.4% increase YOY. PAT of Rs 13,037 million, reflecting a 7.6% rise. It maintains an EBIT margin of 17.1%. Dividend of Rs 33 per share highlights a 41% payout ratio. Its strategic focus on mobility, sustainability, and high-tech segments positions it well in emerging markets. Investments in AI and digital technologies, alongside a global footprint with 22 design centers and 1,296 signal innovation and commitment. Understanding differences between exchange-traded funds really empower your investment choices. Mutual funds are and are traded. This means you even more flexible with higher fees and minimum investments, while ETFs typically offer lower expenses and greater accessibility. Plus, if tax efficiency is on your mind, ETFs usually manage capital gains better than mutual funds. If you value professional management and are okay with higher fees, mutual funds might be your go-to. But if you're looking for flexibility and lower costs, ETFs could be the smarter choice. Understanding these differences can help you make informed decisions that align with your investment goals. Hyundai Motor India Limited is set to launch its initial public offering on October 15, 2024. This is a significant opportunity, with up to 142 million equity shares available, all coming from its parent company, Hyundai Motor. As an investor, it's essential to dive into the prospectus and scrutinize the detailed risk factors outlined there. The shares will be listed on both the BSE and NSE, catering to various investor categories, which adds an interesting layer to the investment landscape. Remember, understanding the financial and operational details is crucial before making any decisions. This IPO could be a pivotal moment in the automotive sector, so stay informed and ready to act. India's tax and regulatory landscape for cryptocurrencies has seen some major shifts recently. In 2022, the government imposed a hefty 30% tax on gains from virtual digital assets. And here's the catch: no loss offsetting is allowed. So if you make a profit, be prepared to part with a significant chunk of it. Additionally, there's a 1% tax deducted at source, or TDS, on transactions exceeding Rs 10,000. While trading in cryptocurrencies is legal, remember they aren't considered legal tender, meaning you can't use them for everyday transactions. On the horizon, the government is also exploring the introduction of a central bank digital currency, which could reshape the entire landscape. Staying informed is crucial, as these policies are likely to evolve further. Welcome to our overview of the Waaree Energies Limited Red Herring Prospectus. Waaree is a significant player in India's solar energy landscape, specializing in the manufacturing of solar modules and offering EPC services. Their upcoming IPO, set to kick off the bidding process on October 18, 2024, aims to boost production capacity and improve working capital. As investors, it's crucial to consider the potential risks, including market volatility and increasing competition in the sector. The prospectus provides a comprehensive look at Ware's financial health, showcasing their management expertise and necessary legal disclosures. This is an exciting opportunity in a rapidly growing industry, but due diligence is essential to navigate the landscape effectively. Anlon Healthcare Limited, established in 2013, is making waves in the pharmaceutical sector, particularly with its focus on active pharmaceutical ingredients. Their upcoming IPO is set to raise funds through a fresh issue of 1.4 crore equity shares, which presents an intriguing opportunity for potential investors. The healthcare sector is on a growth trajectory, driven by increasing demand and innovation. However, it's crucial to dive deep into Anlon's financial performance, assess market risks, and understand their competitive positioning. Evaluating these factors will empower you to make informed investment decisions. As the healthcare landscape evolves, staying informed is your best strategy for navigating this promising yet complex market. In FY 2023-24, Steel Authority of India Limited achieved gross sales of Rs 1.04,545 crore, marking a modest 1% increase. This growth was fueled by higher sales volumes and favorable pricing. Notably, EBITDA soared to Rs 12,280 crore, up from Rs 9,379 crore, while net profit climbed to Rs 2,733 crore. However, total debt rose to Rs 36,315 crore, pushing the debt-equity ratio to 0.67. On a positive note, the company maintains a healthy interest coverage ratio of 2.64. With record crude steel production at 19.24 million tons, sales showcases robust growth. Yet it's essential to keep a close eye on that rising debt. Linde India Limited's annual report for FY 23-24 shows a robust total revenue of Rs 27,187 million, marking a solid 6.4% increase. The gases division led the charge with an impressive 10.2% growth, fueled by soaring demand in the market. While the project engineering division faced a slight decline, the overall EBITDA still rose by 7.2%, showcasing resilience in our operations. The company has declared a generous 120% dividend, reflecting our commitment to shareholder value. With a keen focus on digital transformation, Linde is set to enhance both operations and customer experience. Although we remain optimistic about India's economic outlook, we must stay vigilant regarding potential revenue pressures in certain divisions. Oberoi Realty Limited is showcasing a robust financial performance for FY 2023-24, with consolidated revenue climbing to an impressive Rs 4,49,578.53 lakh, marking a solid 7.23% growth. While standalone revenue faced a setback, the overall profit before tax surged by 11.32%. It's intriguing to see that despite a 30.80% drop in standalone profits, the company remains undeterred. Their commitment to expansion and the increase in dividends reflect a strong belief in long-term growth. This resilience and strategic focus make Oberoi Realty a compelling option for investors looking for stability and potential in a dynamic market. The future looks bright. Supreme Industries Limited has truly showcased remarkable financial strength, reporting a total income of Rs 10,251.98 crore for FY 23-24, a notable increase from Rs 9,283.35 crore. Their profit before tax stands at Rs 1,351.83 crore, and with a generous dividend of 1,500%, they are clearly prioritizing shareholder returns. What's particularly impressive is their commitment to sustainability, especially their initiatives towards renewable energy, which positions them well for future growth. However, potential investors should remain vigilant about the risks associated with fluctuating plastic demand and evolving regulatory landscapes. Balancing these factors is essential for making informed investment decisions. At IDFC First Bank's AGM for FY 2023-24, several key insights emerged that investors should note. While revenue and profit figures were not disclosed, the absence of a dividend signals a strategic focus on internal growth. This suggests that the bank is prioritizing reinvestment over immediate shareholder returns, which could bode well for long-term value. The appointment of experienced directors and auditors underscores a commitment to robust governance, ensuring that the bank is well positioned to navigate future challenges. Furthermore, the proposed Rs 5,000 crore debt issuance indicates ambitious plans for expansion, hinting at potential new projects or initiatives on the horizon. In FY 2023-24, Rail Vikas Nigam Limited achieved a remarkable turnover of Rs 21,132.58 crore, reflecting a solid 7.15% growth from the previous year. Profit before tax soared to Rs 1,939.40 crore, marking an impressive increase of nearly 18%. This robust performance is further underscored by a net worth rise of over 21%, showcasing the company's strong financial health. The board has proposed a dividend of Rs 2.11 per share, reaffirming its commitment to shareholders. With significant project execution, including 666 km of railway sections and 810 km of electrification, RVNL is not just maintaining, but expanding its infrastructure footprint. This growth trajectory positions RVNL as a key player in the railway sector, making it an attractive prospect for investors. Bharat Forge Limited has truly set a benchmark in financial performance for 2024, achieving consolidated revenues of Rs 15,682 crore. A standout highlight is the defense sector, where revenues surged fourfold to 1 crore, underscoring our strategic expansion in this critical area. Order wins totaling Rs 6,300 crore, of which Rs 4,494 crore comes from defense. Our growth prospects are exceptionally strong. Moreover, our executable order book currently stands at Rs 5,192 crore, providing robust earnings visibility for the next 3 years. This positions Bharat Forge not just as a leader, but as a formidable player in the defense landscape, ensuring sustained value for our investors. JSW Infrastructure Limited is on an impressive growth trajectory, showcasing a total income of Rs 4,032 crore, marking a remarkable 20% increase year-on-year. The net profit has surged by 55% to Rs 161 crore, reflecting our robust financial health. We've made significant strides in reducing our net debt from Rs 216 crore to a mere Rs 65 crore, positioning us for a strong future. As India's second largest private port operator, we currently manage 170 MTPA and have ambitious plans to expand to 400 MTPA by FY 2030. Our third-party cargo segment has also seen a phenomenal growth of 36%. Plus, our recent IPO raised Rs 2,800 crore, further boosting investor confidence. The Central Bank of India's Integrated Annual Report for 2023-24 showcases remarkable financial performance. With a net profit soaring to Rs 2,549 crores, that's a staggering 61.13% increase year-on-year. Total business growth stands at an impressive 10.34%. This bank is not just surviving, it's thriving. What's more, the improved asset quality and reduced NPAs signal a robust financial health, making it an attractive option for investors. The bank's commitment to digital transformation and sustainability further enhances its appeal, positioning it well for future growth. With these strong fundamentals, the Central Bank of India is definitely a contender worth considering in today's investment landscape. Welcome to our overview of the 16th Annual General Meeting of PB Fintech Limited, scheduled for September 27, 2024. Key highlights include the adoption of audited financial statements for the year ending March 31, 2024, and the reappointment of Mr. Alok Bansal as a director. Additionally, Mr. Dhruv Shringi is proposed as an independent director for 5 years. The meeting will also discuss the new employee stock option scheme, aiming to incentivize and retain talent. The Phoenix Mills Limited's 119th Annual General Meeting reveals remarkable financial performance for FY 2023-24. With operating revenues soaring to Rc 3,978 crores and a net profit of R1 333 crores, our financial health is robust. Retail consumption has exceeded Rs 11,000 crores, reflecting a strong market demand. Our strategic expansion continues with the Phoenix Mall of the Millennium in Pune, enhancing our footprint. Additionally, we are committed to sustainability, sourcing 23% of our energy from renewable sources. This positions Phoenix Mills not just as a market player, but as a leader committed to growth and responsible business practices. Welcome to our overview of the 43rd Annual General Meeting of Thermax Limited, taking place on August 1st, 2024. This year, we're excited to announce a proposed dividend of Rs 12 per share, reflecting our commitment to delivering value to our investors. We'll also be discussing the reappointments of key directors, ensuring strong leadership as we navigate the future. A significant focus will be on sustainability, as Thermax aims to enhance its commitment to renewable energy and innovative water treatment solutions. Our goal is to drive growth while prioritizing environmental responsibility, making us a forward-thinking choice for investors looking to make an impact. In FY 2023-24, Ashok Leyland achieved remarkable financial growth, with sales revenue reaching Ra 38,367 crores, marking a solid 6% increase. Our EBITDA surged to Ra 4,607 crores, a staggering 57% rise, showcasing our operational excellence. We recorded a net profit of Rs 2,618 crores, reinforcing our market leadership in the bus segment. Despite global challenges, our international sales thrived, demonstrating resilience and adaptability. We're also committed to sustainability, investing in green mobility solutions like electric buses and hydrogen trucks, aligning with our ambitious goals for 2030 and 2048. GMR Airports Infrastructure Limited has truly outdone itself in FY 2023-24, reporting a remarkable revenue of Rs 754.56 crores, a staggering 31.18% increase from last year. This growth is driven by a surge in air traffic and our strategic diversification of revenue streams. While we acknowledge the net loss of Rs 27.50 crores, it's important to recognize the ongoing investments in our infrastructure and the commitment to sustainability. Achieving net zero certification for Delhi Airport is a significant milestone, showcasing our dedication to a greener future. Despite the challenges of rising finance costs, our expansion plans are robust, positioning us for long-term success. Tata Elxsi Limited's integrated annual report for 2023-24 showcases remarkable financial growth, with revenues soaring to Rs 3,552.1 crores, marking a solid 13% increase. Profit before tax has also seen a significant rise, reaching Rs 1,248.7 crores. What sets Tata Elxsi apart is its commitment to sustainability, with a bold goal of achieving carbon neutrality by 2030. The company is not just focused on the present, it's expanding its global footprint and driving innovation in automotive technologies. This combination of strong financial performance and a forward-thinking approach makes Tata Elxsi a compelling investment opportunity for those looking to align with a sustainable future while capitalizing on growth. Patanjali Foods Limited has reported a total income of Rs 31,962 crores for FY 2023-24, reflecting modest growth in a competitive market. Notably, the FMCG segment has surged to account for 30% of total revenue, showcasing the company's strategic shift towards diverse product offerings. Edible oils remain the cornerstone of their business, contributing Rs 22,038 crores. However, net profit saw a slight dip to Rs 765 crores, a point of concern for some investors. Despite this, Patanjali emphasizes sustainability and product expansion, positioning itself for future growth. This focus not only aligns with consumer trends, but also enhances their competitive edge in the FMCG landscape. Investors should keep a close eye on how these strategies unfold in the coming quarters. Buying a Rolls-Royce is more than just acquiring a vehicle. It's an affirmation of your journey, a tribute to your accomplishments. Each model, whether it's the majestic Phantom or the adventurous Cullinan, is a masterpiece of bespoke craftsmanship, tailored to reflect your unique style. The moment you slide into the sumptuous leather seats, you're enveloped in a world where luxury knows no bounds. The innovative engineering ensures a ride that is as smooth as it is powerful, a testament to a legacy that has stood the test of time. Owning a Rolls-Royce isn't merely about prestige. It's about celebrating the milestones that define you, embracing the extraordinary, and driving into a future that is as limitless as your ambition. Buying a Rolex transcends mere acquisition. It's a celebration of milestones. Each tick of the watch echoes the achievements, birthdays, or weddings that define our journey. It's not just about financial readiness. It's about recognizing the significance of this investment. A Rolex embodies unparalleled quality and craftsmanship, often becoming a treasured family heirloom passed down through generations. It's a symbol of success that not only enhances your confidence, but also opens doors for networking opportunities. Ultimately, it's about personal satisfaction, a well-deserved reward for your hard work and dedication. Wearing a Rolex is a reminder that you've earned every moment of success. Owning a Lursen yacht transcends mere acquisition. It's a statement of triumph. Each vessel is a masterpiece, meticulously crafted to reflect your unique journey and aspirations. Imagine celebrating a significant business milestone or a personal achievement aboard a yacht that embodies the pinnacle of luxury. With cutting-edge technology and unparalleled craftsmanship, every detail is tailored to your desires, ensuring an experience that redefines life at sea. This is not just about sailing, it's about creating a legacy, a sanctuary where every moment is infused with elegance and sophistication. A Lursen yacht is more than a vessel. It's the ultimate expression of your success. In FY 2023-24, SJVN Limited reported a total revenue of Rs 2,076.96 crores, a decline from Rs 3,282.50 crores. This drop reflects the challenges we faced this year, with profit after tax also decreasing to Rs 911.44 crores. However, amidst these hurdles, we generated an impressive 8,489 million units of power. This achievement underscores our unwavering commitment to renewable energy. Our expanding project portfolio and sustainability initiatives demonstrate our resilience and dedication to a greener future. We remain focused on overcoming obstacles and delivering value to our investors and shareholders. In FY 2023-24, Prestige Estates Projects Limited achieved an impressive revenue of Rs 94,253 million, a solid 7.5% increase that showcases our resilience and growth. Our EBITDA soared to Rs 40,466 million, reflecting a remarkable 59% growth, an indicator of our operational efficiency and strong market demand. Net profit before tax climbed to Rs 21,223 million, and earnings per share reached Rs 34.28, highlighting our commitment to delivering value to our shareholders. With record sales and a robust pipeline of ongoing projects, we are well positioned for a bright future. The momentum is undeniable, and I'm excited about what lies ahead for Prestige Estates and our investors. In FY 2023-24, ACC Limited reported a revenue of Rs 19,959 crores, reflecting a decrease from the previous year. However, the silver lining is the impressive surge in profit after tax, which reached Rs 337 crores, highlighting the company's operational efficiency. ACC is on an ambitious path, planning to expand its cement capacity to 140 MTPA by 2027-28. This growth is not just about numbers. It's coupled with a strong commitment to sustainability, aiming for net zero emissions by 2050. For investors, this dual focus on profitability and environmental responsibility positions ACC as a forward-thinking leader in the cement industry, ready to tackle future challenges while delivering value. In FY 2023-24, Nika achieved remarkable financial growth, with consolidated revenue hitting $63,856 million, a 24% increase from last year. Our gross merchandise value soared to $124 billion, reflecting a robust 28% rise. EBITDA grew by an impressive 35%, and profit after tax surged by 90%. The beauty segment truly thrived, crossing the $1 billion mark, while our fashion division captured 20% of the premium women's market. On the international front, we launched NISA in the GCC, significantly enhancing our global footprint. These milestones not only demonstrate our strong market position, but also our commitment to delivering value to our investors. Adani Enterprises Limited is set to launch non-convertible debentures worth Rs 800 crore, and this could be a noteworthy opportunity for investors. With a credit rating of CARE A+ positive, these secured debentures offer a level of safety that's hard to overlook. Adani's robust presence in renewable energy and infrastructure further enhances their attractiveness. However, potential investors should tread carefully. The company faces legal and regulatory challenges that could impact its reputation and operations. It's essential to dive deep into the complete prospectus before making any decisions. Balancing opportunity with caution is key in today's financial landscape.
Welcome to our in-depth analysis of Southern Petrochemical Industries Corporation Limited, or SPIC, as we explore its investment prospects for the fiscal year 2023-24. In this video, we'll provide a comprehensive overview of SPIC's financial performance, potential risks, and opportunities, helping you make an informed investment decision. Let's begin with SPIC's strengths. Despite a challenging year, SPIC has maintained its commitment to shareholders by declaring a dividend of 1.50 per share. This move reflects a degree of financial resilience and a commitment to returning value to investors. Additionally, SPIC's strategic shift towards natural gas operations is a forward-thinking approach, aligning with global trends towards cleaner energy sources. However, it's crucial to acknowledge the weaknesses. SPIC reported a revenue drop to 1,962.66 crore and a profit after tax of 87.91 crore, both significantly lower than the previous year. These figures highlight the financial hurdles SPIC is currently facing, which potential investors should consider carefully. Now, let's explore the opportunities. The transition to natural gas, while challenging, presents a significant opportunity for SPIC to modernize its operations and potentially reduce costs in the long term. This shift could position SPIC favorably in the market as environmental regulations tighten and demand for sustainable practices increases. On the flip side, we must consider the threats. Production issues have been a persistent challenge, and the transition to natural gas operations introduces additional risks. These factors could impact SPIC's ability to meet production targets and maintain profitability in the short term. In conclusion, investing in SPIC requires a balanced perspective. While there are clear challenges, including financial performance and operational risks, there are also promising opportunities through strategic shifts and dividend declarations. As always, assess your investment goals and risk tolerance before making a decision. Thank you for joining us in this analysis. If you found this video helpful, please like and subscribe for more insights into the financial world. Stay informed and happy investing. Welcome to the annual report presentation of Geo Financial Services Limited for the fiscal year 2023-24. Today we embark on a journey through JFSL's remarkable achievements, strategic initiatives, and future aspirations, all underpinned by our unwavering vision to lead in digital financial services. At the heart of JFSL's success lies a robust financial performance. This year, we proudly report a consolidated profit after tax of 1,605 crore, with earnings per share reaching 2.53. Our strong capital base, with a net worth of 1,039,148 crore, positions us as one of the most capitalized financial service platforms globally. These figures not only reflect our financial health, but also our commitment to delivering value to our stakeholders. Strategic partnerships have been pivotal in our growth narrative. Our joint venture with BlackRock Inc. marks a significant milestone in democratizing investment and wealth management services in India. This collaboration is set to unlock immense growth potential in the asset management sector, leveraging BlackRock's global expertise and JFSL's local insights. In our pursuit of innovation, JFSL adopts a digital-first approach, harnessing cutting-edge technology to offer seamless financial services. This strategy aligns perfectly with India's burgeoning digital economy, positioning us to capitalize on the vast opportunities it presents. As we look to the future, our market potential is vast and promising. JFSL is expanding its footprint across key sectors such as lending, payments, insurance, and wealth management. Our mission is to drive financial inclusion by offering accessible and affordable financial solutions, particularly targeting underserved markets in India. This focus not only broadens our reach, but also aligns with our vision of inclusive growth. However, navigating the financial services landscape is not without its challenges. The competitive market, with established players like HDFC, SBI, and ICICI, demands constant innovation and agility. Moreover, as a systemically important financial services company, we are subject to stringent regulatory requirements. These factors necessitate a proactive approach to risk management, ensuring that we remain resilient and adaptable. Despite these challenges, JFSL stands as a compelling investment opportunity. Our robust financials, strategic joint ventures, and clear focus on digital financial services underscore our potential for growth, particularly in the asset management and lending spaces. Our commitment to financial inclusion further enhances our appeal, promising substantial returns for our investors. In conclusion, JFSL's journey is one of visionary leadership, innovation, and growth. We are poised to redefine the financial services landscape in India, driven by our mission to empower every Indian with accessible financial solutions. As we move forward, we invite you to join us in this exciting journey, confident in our ability to deliver sustained value and growth. Thank you for your attention and continued support. Together, let's build a future where financial services are not just a privilege, but a right for all.
Investing in HUDCO could be a promising opportunity. Their latest revenue figures show a robust rise to Rs 7,784.29 crore, with a profit after tax of Rs 116.74 crore, an impressive indicator of solid growth. They've sanctioned loans totaling Rs 386.55 crore, which is a staggering 235% increase. This kind of expansion is noteworthy. Plus, with an 8IA rating, the risk seems relatively low. However, it's essential to keep an eye on their rising debt levels. As an investor, it's crucial to align this potential with your own investment goals. Balancing risk and reward is key to making informed decisions. TGV SRAAC Limited's 2023-24 annual report presents a mixed bag for potential investors. Revenue has dipped to Rs 1,545.96 crore, and net profit has taken a significant hit, falling to Rs 60.29 crore. While the company has declared a Rs1 dividend, the declining profitability raises red flags. On a brighter note, their expansion into chloromethanes and solar initiatives could signal future growth. However, the risks associated with these ventures cannot be overlooked. It's essential to assess your risk appetite carefully before making any investment decisions. Balancing potential rewards against these challenges will be key to navigating this landscape. Ashoka Buildcon Limited is at a pivotal moment, showcasing impressive growth through major projects like a $150 million solar power plant and significant highway expansions. Their recent win of a Rs 662.55 crore contract for a link road to Navi Mumbai International Airport highlights their potential in a booming infrastructure sector. With the Indian government's strong focus on renewable energy, Ashoka Buildcon is well positioned to capitalize on this momentum. While we await detailed financials, their consistent project wins signal a robust stability and growth trajectory. For investors, this is a company to watch closely as it navigates the evolving landscape of infrastructure development in India. Jio Financial Services Limited presents a compelling investment opportunity. With a profit after tax of Rs 605 crore and a robust net worth of Rs 148 crore, JFSL is making waves in the financial sector. Their strategic partnership with BlackRock aims to democratize wealth management in India, tapping into a rapidly growing market. What sets them apart is their digital-first approach, which enhances accessibility for underserved segments of the population. This positions JFSL not just as a financial player, but as a catalyst for change in wealth distribution. With strong fundamentals and significant growth potential, investing in JFSL could be a smart move in today's dynamic market. Gallant Ispat Limited, or GAL, has truly made waves in the financial landscape for FY 2023-24. With an impressive 23.8% increase in EBITDA and a staggering 62.5% rise in PAT, GAL is clearly on an upward trajectory. This growth is driven by the surging demand from infrastructure projects, positioning GIL as a key player in the steel sector. What sets GIL apart is its unwavering commitment to sustainability. The company prioritizes clean energy and adheres to robust ESG practices, ensuring that growth does not come at the expense of the environment. With ongoing investments and a positive outlook, GIL presents a compelling opportunity for investors looking to capitalize on a company that not only excels financially, but also champions responsible business practices. Vodafone Idea Limited's FY 2023-24 report paints a nuanced picture for investors. Revenues have reached Rs 426,517 million, indicating slight growth. But the stark reality is that net losses have surged to Rs 312,184 million. This raises significant concerns, especially with debt now towering at Rs 276,298 million. The company is expanding its 4G services and gearing up for 5G, which is promising, yet the competitive landscape is fierce. Financial instability is a major red flag. As investors, we must tread carefully, weighing the potential of technological advancements against the backdrop of high debt and ongoing losses. This complex investment landscape demands a thorough evaluation before making any commitments. Investing in Southern Petrochemical Industries Corporation Limited requires a careful look at their recent performance. With revenue dropping to Rs 1,962.16 crore and profit after tax down to Rs 87.91 crore, the numbers raise some red flags. They did declare a Rs 150 dividend, which is a positive sign, but we must consider the underlying issues. Production challenges and a heavy reliance on natural gas could pose significant risks moving forward. However, there's a glimmer of hope. Potential efficiency improvements might stabilize their operations. As you weigh these factors, think about how they align with your investment goals. It's a balancing act between risk and reward, and every decision counts. Madhav Infra Projects Limited has encountered significant hurdles in FY 2023-24. Standalone revenues have plummeted to Rs 363.09 crore, while consolidated revenues are down to Rs 466.51 crore. This sharp decline in revenue is mirrored by a notable drop in profit after tax. In light of these challenges, the company has opted not to declare dividends, instead choosing to retain earnings to fuel future growth. With a CARE BBB credit rating, the risks are becoming increasingly apparent. Although MIPL boasts a diverse project portfolio, external economic factors pose a real threat to project execution. Investors should remain vigilant as we navigate this complex landscape. Hyundai Motor India Limited is on the brink of a significant milestone with its first initial public offering over 142 million equity shares. This move is backed by Hyundai Motor Company, a global automotive leader, which adds a layer of credibility. However, potential investors should tread carefully. The absence of an existing market means future price movements are uncertain and inherent risks are involved. On the upside, HMIL has established a robust presence in India's automotive sector and is making strides into the electric vehicle market. This expansion could position them favorably as the industry evolves. Balancing these factors will be crucial for anyone considering this investment opportunity. Lemon Tree Hotels Limited has demonstrated remarkable growth, with a 23% increase in revenue, now reaching 1,076.8 crore. Their profit after tax has surged by 29%, even as they continue to invest in renovations. The company is strategically expanding, targeting over 120 hotels by FY25, all while emphasizing sustainability and inclusivity. However, it's important to note that high debt levels could pose risks. As the hospitality sector rebounds, Lemon Tree Hotels presents a compelling investment opportunity. Yet, potential investors should carefully weigh these risks against the promising growth trajectory. Investing in National Aluminium Company Limited, or NALCO, demands a thorough analysis of its 2023-24 annual report. Revenue has dipped slightly to Rs 13,149.15 crore, but here's the silver lining. Profitability has surged to Rs 2,059.95 crore. This indicates a remarkable resilience in challenging market conditions. The company has achieved record production levels and impressive export figures, showcasing its operational strength. However, we must remain cautious. The revenue decline and ongoing market volatility present notable risks. It's crucial to assess your investment strategy carefully, weighing these factors before making any decisions. Balancing potential rewards against risks is key in navigating this investment landscape. Shipping Corporation of India Land and Assets Limited has demonstrated remarkable financial growth, with revenues skyrocketing from a 12.34 lakhs in 2021-2022 to an impressive 9,894 lakhs in 2023-2024. While there was a dip in profits during 2022-2023, the rebound to Rs 6,330 lakhs showcases effective cost management strategies. The company's valuable real estate assets and commitment to maritime training position it strategically for long-term growth. Additionally, the declared dividend of Rs 0.66 per share reflects a strong commitment to returning value to shareholders. This trajectory not only highlights the company's resilience, but also its potential for sustained success in the maritime sector. Considering investing in Oil India Limited, let's break it down. For the fiscal year 2023-24, we saw a slight dip in standalone revenue to Rs 24,514.28 crore, while consolidated revenue fell to Rs 37,646.48 crore. Profit after tax also took a hit, landing at Rs 5,551.85 crore for standalone operations. Despite these short-term revenue concerns, the company remains profitable. What's particularly interesting is their strong dividend payouts and a growing focus on renewable energy, which could signal long-term potential. While the immediate numbers might raise eyebrows, the strategic shift towards sustainability could position Oil India Limited favorably in the evolving energy landscape. Keep an eye on this one. NPR Finance Limited's latest annual report paints a complex picture. Revenue has dropped significantly from Rs 1,274.33 lakhs to Rs 946.61 lakhs, primarily due to a decline in income from share sales and the closure of its wind power segment. However, amidst this decline, the company has managed to turn a profit of over 108.63 lakhs, marking a notable recovery from last year's loss. This turnaround suggests that cost management strategies are taking effect. Yet, we must remain cautious. The loss of Rs 258.23 lakhs raises red flags about sustainable income. Investors should carefully consider these dynamics, as the declining operational revenue could signal potential challenges ahead. Investing in Saj Hotels Limited's IPO could be an intriguing opportunity, especially with the tourism sector bouncing back post-pandemic. Their operational resorts, like Saj on the Mountains and Saj by the Lake, seem poised to generate steady revenue from bookings and dining. However, it's essential to approach this with caution. The financial data available is limited, and without any prior stock performance to analyze, we're stepping into somewhat uncharted territory. They're offering 50,000 shares, but we must consider the risks involved. Market acceptance is uncertain, and economic fluctuations could impact their growth. While the potential is there, it's crucial to weigh the excitement against the reality of these risks before diving in. Investing in Divyadan Recycling Industries Limited presents an intriguing opportunity within the expanding recycling sector. The company specializes in recycled polyester staple fiber, a product that meets the rising demand for sustainable materials. While we lack specific revenue and profit after tax figures, the potential for growth in this eco-conscious market is significant. However, it's crucial to approach this investment with caution. The absence of detailed financial data and the inherent uncertainties of the market could pose risks. Therefore, a thorough evaluation of both the opportunities and challenges is essential before making any investment decisions. Manba Finance Limited presents a compelling opportunity in the expanding non-banking financial company sector. Their draft red herring growth in vehicle financing and personal loans, which is promising. As the market is well positioned to capitalize on this trend. However, it's important to approach this first public offering with caution. Investors should be mindful of the inherent risks, including market volatility and the lack of historical trading data. Balancing the potential for growth with these risks is crucial for making informed investment decisions. Investing in KRN Heat Exchanger and Refrigeration Limited is a decision that requires careful thought. The company is positioned in a growing sector focused on energy efficiency, which is promising. However, the absence of detailed revenue and profit after tax data raises some red flags. This lack of transparency can make it challenging to gauge the company's true financial health. The upcoming IPO certainly presents potential opportunities, but we must remain cautious. Market volatility can significantly impact new offerings, and it's essential to weigh the risks against the potential rewards. Staying informed and analyzing the available data will be crucial as we navigate this investment landscape. Proceed with caution and ensure you have all the insights before making any decisions. Hyundai Motor India Limited has truly set a benchmark in the automotive sector with its remarkable growth trajectory. In just 9 months ending December 31st, 2023, the company reported a staggering revenue from operations of Rs 21,579.11 million, largely fueled by robust vehicle sales. Looking at fiscal year 2023, total revenue soared to Rs 603,075.80 million, a significant leap from Rs 473,184.32 million in 2022. This impressive growth is a testament to Hyundai's strategic expansion and unwavering commitment to innovation. The strong demand for their vehicles underscores their focus on customer satisfaction, positioning them as a formidable player in the competitive automotive landscape. It's clear that Hyundai is not just keeping pace, but is actively shaping the future of the industry. Ola Electric Mobility Limited is truly making waves in the electric vehicle sector, and I couldn't be more excited about it. Their focus on eco-friendly transportation is not just a trend, it's a movement towards a sustainable future. While we may not have specific revenue figures from their draft red herring prospectus, the ambition to raise Rs 55,000 million through their IPO speaks volumes about their growth potential. The electric vehicle market is booming, and investing in Ola could be a golden opportunity for those who believe in the future of sustainable technologies. With their innovative approach and commitment to green mobility, Ola is positioning itself as a strong contender in this dynamic landscape. The future is electric, and Ola is leading the charge. Investing in Diffusion Engineers Limited requires a careful approach. While we lack specific revenue and profit after tax figures, the company operates in welding consumables and heavy engineering, suggesting a diverse revenue stream. Their recent IPO signals potential growth, particularly in the booming infrastructure sector. However, the absence of historical stock performance means we should tread cautiously. It's essential to analyze industry trends and wait for detailed financial data before making any commitments. Remember, informed decisions are key in navigating the investment landscape. Proceed with diligence and patience. Investing in Western Carriers, India Limited presents an intriguing opportunity. Their IPO is offering over 28 million shares at R172 each, aiming to raise nearly Rs5,000 million. This company operates in the rapidly growing logistics sector, providing a range of services that cater to diverse needs. However, it's essential to note that they lack a market history, which introduces potential volatility. While the promise of infrastructure developments is enticing, it's crucial to weigh these risks carefully. Are you ready to explore this opportunity, or will the uncertainty hold you back? The decision lies in balancing potential rewards against the inherent risks. Ola Electric Mobility Limited is set to launch its IPO, offering 808 million equity shares and aiming to raise around Rs6,145 crore. This move comes at a pivotal time in the electric vehicle sector, which is experiencing rapid growth, fueled by government incentives for green energy. While the potential for growth is substantial, it's crucial to consider the risks involved. The EV market is competitive, and stock volatility can be a concern for investors. If you believe in the future of electric vehicles and are prepared to navigate the inherent risks of an IPO, Ola could be a valuable addition to your investment portfolio. Just remember to keep a close eye on their financials after the listing to ensure it aligns with your investment strategy. Investing in Orient Technologies Limited could be an intriguing opportunity. They're offering over 10 million equity shares at Rs206 each, aiming to raise funds for expansion in the rapidly growing IT infrastructure and cloud computing sector. This is an area that's booming, and their focus here is promising. However, it's essential to tread carefully. The lack of prior performance data raises some red flags, and the competitive landscape is fierce. While the potential for growth is enticing, it's crucial to conduct a thorough analysis before diving in. Balancing optimism with caution could be the key to making a smart investment decision. ECOS, India Mobility and Hospitality Limited is set to launch an IPO of 18 million equity shares, aiming to raise Rs6,012 million. While the mobility sector is on the rebound post-pandemic, it's crucial to note that this offering primarily benefits existing shareholders rather than fueling new growth initiatives. As an investor, you need to weigh the potential gains from a recovering industry against the inherent risks of a first-time public offering. The market is buzzing with optimism, but remember, the IPO landscape can be unpredictable. Ensure your investment strategy